are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The U.S. is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source, in the academic literature, and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. Without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
We're talking about superpowers, Clash of the Titans sort of stuff. It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy, we're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US, I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, it's talent that drives, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, it's still really important to be physically proximate to other people who, are working with you in the office. I mean, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? China restricted gallium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. We're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, can you tell, because we're all friends here.
Sure, go for it.
Do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years time, those kinds of AIs are set loose on the open web in, a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking, we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors, but what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
how does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost, it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is just very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's
That's
not
right.
the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China. in terms of what you're saying?
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to, opt in to different uses. Of course, in China, there's always the exception, unless the security services, think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving ththese very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Diplomatic disconnect. Washington and Tehran give conflicting accounts of planned talks in Doha, with President Trump declining to say whether negotiations could lead to a breakthrough. Crude reality. Morgan Stanley warns of an oil surplus as Hormuz traffic rebounds, even as Iran insists it wants to maintain control of the strategic waterway. And historic slide, the yen halts a 4-decade low against the dollar, putting Tokyo on intervention watch. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. It is the last trading day of the quarter, and global equities are heading towards a good one, actually the best quarter in 6 years. But this morning, U.S. futures are trading sideways. This is after a close in the S&P yesterday that was positive for the first time in 5 sessions. Now, one stock that we're keeping a close eye on is Microsoft, one of the Mac 7. It is headed to its worst month since the year 2000, about an 18% drop in Microsoft as traders start to look about how it will fare when it comes to the AI trade and the new AI reality. But a good day for Asian equities. The MSCI Asia Pacific is 1%, almost 1% higher, and it's having a good month as well. It's led by gains that we're seeing in South Korea's Kospi. The past quarter has seen Samsung gain about 98% and SK Hynix gain about 225%. Those are the two biggest constituents in the Kospi in South Korea. And gains across the board as investors look at the tech trade, the AI trade, and really pile into the names in Asia. Brent crude prices are about 1% lower. Now, some conflicting statements about these talks supposed to happen in Doha later today. We still don't know if Iran is going to participate. We'll talk about this a little bit later in the show. But the movement through the Strait of Hormuz continues despite some caution when it comes to ship owners deciding to go in or go out. This is after skirmishes that we've seen over the past couple of days. And we await yet another set of key economic data by the end of this week. On Thursday, before the 4th of July holiday in the United States, that is the payroll data. We'll see what that means for the Fed, a hike, a cut, or holding rates higher for longer. The yield on the 10-year notes not doing much today, less than a basis point lower. But again, we await that key economic data. Now, if we flip the board, we take a look at some of the stories that we're looking at this morning, and that's the U.S. dollar. It is gaining. The Bloomberg Dollar Spot Index is gaining, and that's against the yen, which Winnie will talk to us a little bit in a little bit. The yen has fallen to the level of 162 against the U.S. dollar. That is the lowest level since 1986, and that's plugged against gold as well, which is around the $4,000 an ounce level now, while the euro and the pound have found a level overnight to cap the Bloomberg Dollar Index overall. 162, that level on the yen, and the 4,000 level in gold are still in play this morning. There is very likely or little on the docket this week that will see this pressure alleviated. So we keep an eye on these asset classes, particularly the yen, and whether an intervention is looming, whether it be helpful at all, or it will happen. And then we also keep an eye on gold. Now, for the performance of Asian equities and Asian markets this morning, we've got Winnie Su in Hong Kong for us. Winnie.
Good morning, Abir. It's been a pretty positive session in Asia today, with the MSCI Asia rising for a second day, with gains led by technology shares as investors reposition their portfolios at the end of the quarter, which is likely going to be its best quarter in 17 years. Now, we can see that leading gains today, Taiwanese TAIEX index up more than 3%, tracking those gains from the U.S. overnight, and also seeing a bit of a rotation into these hardware names in Taiwan, away from some of these Korean memory chip stocks, which have been doing very well, as you just mentioned, so far this year. However, we are still looking at the Kospi here, down up almost 2%, also headed for its best quarter since 1998, while Hong Kong shares continue to struggle for a third quarter due to the lack of AI exposure. Now, flip the board, we take a look at the Japanese yen, because all eyes on the yen as we finally reach that level, 40-year low, breaching that 161.95 level. But for now, yes, we are closely watching out for potential intervention risks. But given just overall how authorities have been talking up that potential bold action if needed, so far due to the pace of the yen weakness, we are not seeing that sign of authorities intervening just yet. And that is exactly why we are seeing the yen sliding past that 162 level, and now traders watching out for potentially 164 to 165. Back to you, Abir.
164, 165 for the yen, something to keep an eye on. Winnie, thank you as always. Now let's turn back to the geopolitical story. There is a fresh confusion over the next round of U.S.-Iran talks, with conflicting messages over whether talks will actually take place in Doha today. Tehran insists there are no plans for direct negotiations with Washington, but President Trump says a meeting is on the agenda.
Well, there'll be a meeting on that tomorrow in Doha, and to go into Qatar. I think they've already left, or they're just about getting ready to leave. So we'll see how that goes. But we're doing very well on that front. But the meeting in Doha is going to be perhaps important, perhaps not. We're going to find out.
Joining me now is Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, starting with the plans in Doha today, yet another set of conflicting statements between the two sides. Are the talks happening? Are they not? Is one party joining and one party not?
Yeah, I mean, I think it's pretty clear. We can't overstate this, because I think the expectation that the two sides would sit down and it all be premeditated and carefully planned out was somewhat naive. So what seems to be happening this time, and we've had confirmation from the Iranians that they are sending a delegation to Doha, but it looks like they're probably not going to talk to the American delegation directly. So it'll be via the Qatari mediators and maybe some other mediators if they show up. But, you know, the thing to stress here is that was perfectly standard up until Switzerland. So Switzerland, in some respects, was an anomaly in this entire process in that they spoke directly to each other. Typically, the format has been, we're going to speak through mediators even if we're in the same city. So the fact that it's happening again now, I wouldn't say it's a huge positive, but I wouldn't also take it as, you know, some huge symbol that things are breaking down. I don't think that's the case.
And we're still keeping an eye on the Strait of Hormuz. We're seeing the trickle of movement still happening through the Strait of Hormuz, but Iran is really doubling down on its position on tolling it. What's the latest thing?
Yeah, doubling down again. And that's something we saw, you know, tail end of last week into the weekend. They are making it very clear that they will take forceful action if anyone uses this so-called southern route that hugs the coast of Oman. And what they're trying to enforce, in effect, is their total dominance over that waterway. And then from there, you can extrapolate that what they're trying to do, or their aim ultimately, is to extract some huge source of revenue from all the shipping that goes through there. With enormous resistance from the other sides, and to some extent Oman kind of stuck in the middle, not quite sure which way to go, because you saw that meeting in France with Macron. The statement that came out at the end of it was marginally ambiguous, I would say, but it was sort of strongly suggesting that the Omanis were on the side of not having set fees. But look, we'll see what happens over the next couple of months. The Iranians clearly have their eye on more or less total control over that waterway going forward.
Yeah, and they said through the deputy foreign minister they'll do it with or without the help of Oman, so that remains to be seen. Stuart, thank you as always. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, global stocks are on track for their best quarter in almost 6 years. This is as investors pile into companies seen as key beneficiaries of the AI build-out. Markets are now turning their focus to U.S.-Iran talks happening later today and U.S. jobs data on Thursday, which may offer clues on whether the Fed will keep rates higher for longer. Joining us now is Haig Bathgate, CEO of Kalnish Capital. Haig, thank you for your time this morning. Let's carry on the conversation with Stuart into the geopolitical impact of things on stocks. The question that we've been asking everyone is, are markets becoming too complacent too quickly?
Yeah, well, look, I think the markets are very strong, obviously, coming into this period. What we do know from the Ukrainian-Russian war is that supply chains can adjust pretty fast, and I think, a lot of the emphasis where obviously the Iranians are saying that the US begged for a deal and all the rest of it, they also know that the time period for their leverage is somewhat limited. And this is exactly what we're seeing. The sort of squeeze in the supply chains hasn't been nearly as significant as we thought. So you've had markets pretty strong. Obviously, we're seeing good quarter-on-quarter numbers at the moment because of base effect, because obviously we're coming into quite a weak quarter as the war started, and we're just seeing the rebound effect from that now. And then it's back to the things that were worrying the markets before then. So are the hyperscalers that are putting all this money in, is that actually going to generate a return? We're seeing some second-order effects of real money coming in from the hyperscalers, as we're seeing in the sort of semiconductor space and RAM and so on.
And so speaking of hyperscalers, I don't know if we can quantify it as such, but SpaceX, does the performance of SpaceX over the past couple of weeks or so, does it worry you about those that are upcoming to the market, like OpenAI, Anthropic?
Yeah, I think so. Look, there's always risk with IPOs, isn't it? Because IPOs are always going to be the most fashionable areas. And it's a very small free float, so we can't really see the true effect on the market. And obviously some investors have lockups and so on as well. So we're not really seeing a true market. Obviously saw a euphoric start and then it sort of collapsed after that. I think SpaceX is quite different to Anthropic or OpenAI. OpenAI and Anthropic are right in the sort of epicenter of it. SpaceX actually has proper real revenues, and there's a whole story about, are they going to merge with Tesla? But, fundamentally they have a much more real business than maybe Anthropic or OpenAI do.
So you mentioned that euphoric rise and then the collapse will lead the market or will lead investors to other names that have been there for a while, like Microsoft. But we've mentioned at the top of the show that Microsoft is set to have its worst month since 2000. How do you square those two up?
Well, actually, bizarrely, we're now starting to think that these sort of large incumbent tech companies are the value stocks of tech. And this is what we're seeing. Obviously, they're stuck in this sort of no man's land of, are you going to invest? Are you going to keep up with the AI race? Microsoft obviously have a big stake in OpenAI anyway. You have to be careful of anecdotal evidence, but the amount of overall IT spend that a company like ours is pushing towards Microsoft has never been higher, because we have to have everything in one place to put the AI tools into it properly. So I think these things are a pretty low risk way now to play the whole AI movement.
And so, continuing with the AI theme, if it continues to lead the market over the next, the way it has been over the past or since the start of the year, what is the biggest, in your opinion, valuation risk when it comes to the AI trade and rally? Yeah,
so I think the biggest AI risk is definitely around the forthcoming IPOs, and you can see they're obviously now looking at that and maybe thinking that they're going to push them back. How are companies like Anthropic or OpenAI going to continue to monetize? And what's the competition going to be like? Because we know from history you'll have 2 or 3 key players in that area. We don't even know what the monetization model is. Are we going to go down a Google route, like ad subscription, so on, or will it be the Anthropic, which is more focusing on the business end? So we still don't have certainty around that. So that's definitely the biggest risk area. But then now you're looking, with the incumbents, the Microsoft, have you mentioned, the Metas, they all look quite cheap now. And then if you look at Asian AI, companies like Tencent, they're sub-10 price-earnings ratios. So we're expecting sort of bumper reporting seasons, and at some point people have to start moving back into these names.
And so it wouldn't be a normal conversation without bringing up the Fed, the payrolls data coming out later this week. Do you think it will solidify the Fed's position on hiking, cutting? Are we staying the same for the time being?
Yeah, it's obviously a political hot potato, this one. The futures market are pointing to one increase before the end of the year. Historically, when we look at the Fed, they're very reluctant to get involved in politics. We've got the midterms coming up. We've also got a very vocal president on monetary policy. So I think, they're going to wait, and they're going to be data-driven, and they will react if the data tells them to, because they've got to be extremely robust. I don't think they're going to be too preemptive in anything. So if the job numbers come in extremely strong, I think they're more inclined to do it. If they're not, I don't think they're going to do anything preemptively.
All right, Haig, thank you so much for your time this morning. As Haig Bathgate, CEO of Kallanish Capital. Up next, Iran ratchets up talk of controlling the Strait of Hormuz ahead of fresh negotiations with the United States. We'll discuss what it means for the critical waterway with Control Risk's Victoria Mitchell next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Iran's deputy foreign minister has signaled Tehran remains firm on maintaining control over maritime traffic in the Strait of Hormuz, raising the stakes ahead of fresh negotiations with the U.S. on ending the war. For more on the impact on critical waterway, we're joined by Victoria Mitchell, senior analyst at Control Risks. Victoria, good to have you on this morning. I guess with the latest developments in the region, in the Middle East and in the Strait of Hormuz, are we seeing a new reality for how this waterway in particular is going to be ruled going forward?
So we're still in a state of fragility and uncertainty, and that is going to continue to be tied to the trajectory of the talks between the US and Iran. Whether these happen today, how they happen, is all going to play into the maritime impact, particularly on the Strait of Hormuz. What the reality is going to look like is as yet unclear, and we are seeing continued short notice changes. As you've mentioned earlier in your program, we saw increased strikes in the last few days. We saw a pause on the IMO's evacuation plan, and all of these things really change the way that shipping responds to things. So definitely at the moment, we're seeing a lot of changes at very, very short notice, and that means that we can't really yet say what the reality for the Strait and the region's waterways looks like.
But Victoria, over the past couple of days since those attacks or those strikes, the back and forth strikes happened, we're seeing the traffic continue with a little bit more caution. But do you think ship owners are going to be more reluctant in a way going forward, and not just, throughout the duration of this conflict, but even in the aftermath of all of this, that this is, again, the new way of doing things?
Yeah, so certainly shipping operates not necessarily as a block, but everyone's making their own individual corporate decisions about the risk tolerance and the way that they approach shipping through these waterways. This means that now and in the future, shipping is going to be continued to monitoring the situation geopolitically and what that looks like for how they can transit. What will change calculations will be things like whether we see any return to escalation, whether we see changes in how the Strait is controlled and what it means to transit the waterways. But these decisions will be made by shipping on an individual level.
So that actually brings me to my next question. Do you think that going forward, the bigger risk will be this persistent uncertainty or another flare-up happening?
Whilst we're still waiting for a complete cessation of hostilities on the water, the security situation on the water is going to be continued priority for shipping, where they assess how to go through the waters or not at all. ongoing is also the security situation on the water with respect to how you transit. We've got no use of the traditional route through the centre of the strait, but rather the northern and the southern corridors, which make a difference to your operational planning as well, in terms of how much you can send through these particular channels, and who you're speaking to when you go through that, whether you're working with Iran or you're working with Oman if you're going through the southern route. So certainly how shipping operates will be dictated both by the geopolitical situation and also lots of operational considerations. And these are going to continue for months, because things like the assumption of mines in the central channel of the strait, for example, are going to take a lot longer to resolve.
And speaking of Oman and Iran and the tolling system that's coming up more and more over the past couple of days, just speaking about the legality of it, how does Iran square up the legal aspect of tolling the Strait of Hormuz when it's a natural waterway, and that's a precedent, I would say?
Yeah, so under the law of the sea, transit passage is not tolled, so you don't you can charge specific fees for certain services. That would be things like navigation, pilotage, these kind of things. So what we need to see is actual text and like clear statements on what this would be a charge for and how it would be administered and what is agreed. But certainly the precedent is for toll-free passage through international waterways like the Strait of Hormuz. So at the moment, this is yet another layer of lack of clarity that we're seeing as we await the outcome of negotiations and see the respective positions of the parties, because of course this has an impact for both Iran and Oman and the states in the region, but also it's a global question because shipping is a global industry and the vessels going through that waterway come from all over the world and serve countries all over the world as well.
All right, Victoria, we're going to have to leave it there. Victoria Mitchell, Senior Analyst at Control Risks. We thank you for your time. Now, coming up, Dubai's stock index is set for its best quarter in a year. We'll discuss why investors are flocking back to the market next. This is Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. The U.S. Supreme Court has rejected President Trump's bid to fire Federal Reserve Governor Lisa Cook without proof of wrongdoing in a split ruling. Chief Justice John Roberts says the narrow decision leaves open the possibility of Trump trying again. In a separate ruling, the U.S. Supreme Court expanded the president's power to fire top government officials, overturning a 91-year-old precedent. Italian energy giant Eni and ADNOC's investment arm have agreed to buy stakes in a liquefied natural gas production and export project in Argentina. XRG and Eni will each acquire 32% in 3 upstream blocks in the South American country's Vaca Muerta basin, according to a company statement. Argentina's YPF will retain 36% of the assets, which will be part of an integrated LNG development. And authorities in Taiwan have raided the offices of Supermicro as part of an investigation into the alleged smuggling of NVIDIA chips into China. In a statement, prosecutors say the operation targeted the residences of 6 individuals and the sites of 3 affiliated companies. Supermicro shares ended the U.S. session more than 8% lower. And coming up, we'll discuss China's factory non-manufacturing PMI. That is coming up next.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Diplomatic disconnect. Washington and Tehran give conflicting accounts of planned talks in Doha, with President Trump declining to say whether negotiations could lead to a breakthrough. Crude reality. Morgan Stanley warns of an oil surplus as Hormuz traffic rebounds, even as Tehran insists it wants to maintain control of the strategic waterway. An historic slide, the yen hits a 4-decade low against the dollar, putting Tokyo on intervention watch. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. It's the last trading day of the quarter, June 30th. S&P futures are now tilting higher, 0.1% higher. Now, the S&P 500 did have its first positive close in about 5 sessions yesterday. But one particular name we're keeping an eye on is Microsoft. It is not having a great month. Its June drop is set to be about 18%, its worst month in 26 years, since the year 2000 almost. And this is as markets really look into it and see how it will fare when it comes to this AI rally, the AI boom, especially against other names. But when we look at Asian equities, the MSCI Asia Pacific is tilting higher by the minute. It was just under 1% higher. It's now 1.4% higher, led by the Kospi overall. Its quarter has been phenomenal. The Kospi is still the best performing equities gauge year to date, over 100% gain year to date. SK Hynix and Samsung, the biggest two constituents, are also doing incredibly well. We're also keeping an eye on Brent crude prices, about 1% lower, $72 a barrel. We're keeping an eye on those ships trying to make their way through the Strait of Hormuz with caution, albeit, especially given the events over the past couple of days or so. And we're also keeping an eye on those negotiations set to happen later today in Doha. And then the yield on the 10-year Treasury is 4.37%. We await the payroll data on Thursday ahead of the 4th of July holiday happening on Friday, and that is set to either solidify the Fed's hawkish tilt or keep rates where they are for the time being. Now, for what is happening in Asian markets across the board, we've got Winnie Su in our Hong Kong bureau. Winnie, what do you have for us?
Good morning, Abir. Asian stocks extending those gains for a second day, supported by the gains in technology shares as investors reposition at the end of the quarter. Now, it's been a spectacular quarter for Asian stocks. Specifically, we have MSCI Asia here headed for its best quarter in 17 years. And with that, even better, we have South Korea's Kospi index headed for its best quarter since 1998. And Taiwanese stocks here also headed for its best since 2001. However, when you look at the flip side, in fact, the ones that really don't have much AI exposure, the likes of Hong Kong stocks here sliding more than 1% today, and in fact is down for a third quarter. Now you flip the board and take a look at the Japanese stocks, because for Japan, Nikkei 225, which is a tech-heavy gauge in Japan, up about 1.6%, also taking its quarterly gains to the best on record, 38% of gains for this quarter, and outperforming the broader topics gauge here. Now, when it comes to the Japanese yen, as you just mentioned, we are at that 40-year low, and in fact, already sliding past that 162 level and still weakening a bit today. Now, we are, of course, on intervention watch, but we did hear these narratives from authorities keeping still that tone of potentially taking bold actions if needed. But just given how slow the pace has been and just the yen grinding lower, the risk of intervention for now is still looking a bit less right now. When it comes to the 2-year yield, we did have pretty strong demand for the 2-year bond auction coming through just now, and that's an indication of investors potentially seeing the Bank of Japan to move more slowly and more steadily after that recent rate hike. Back to you, Abir.
All right, Winnie, keeping an eye on that possible intervention for us in Hong Kong. Now, turning to regional stock markets, Dubai Stock Index is set for its best quarter in a year after a truce in the Middle East conflict drew investors back to the market. The Dubai Financial Market General Index has gained about 11% in the April to June quarter, erasing its losses for 2026. Even so, the index remains well below levels it was trading at before the war started. Joining me now is Bloomberg's Srinivasan Sivabalan to discuss the story. Srini, good to have you on.
Hello, thank you.
What is the significance of this rally we're seeing in the DFM?
Yes, the significance is not really how much it has rallied, because it has not rallied much. The rebound is 11%, as you said, this quarter, only the best in a year. If you look at global markets, many indexes are posting the best quarter since 2009. But the significance lies in the resilience that is being demonstrated, because we had a 300% rally in the 6 years through February this year. Total returns were 412%. Great rally. But no one knew what Dubai would do if there was a crisis. Would it lead to an economic crisis? Would migrants leave the city? Would investors come back? Nobody knew Dubai's resilience in the case of a systemic shock. Well, now we have had a systemic shock. Oil exports plunged. The aviation sector came to a sudden stop. And, the safety of residents was threatened by missile attacks. But still, people have stayed here. The economic activity continues and the market is rebounding. So essentially, this is a demonstration of resilience as against earlier when we had a 300% rally, when Dubai was doing well under benign conditions.
And so, Srini, what are the sectors that are driving this boom? Can we call it a boom, 11%, this upside?
Yes, this upside, yes, absolutely. That's the most interesting part. Earlier, it was all real estate and banks and so on, right? Now it's not like that. Investors are broad-basing their purchases of stocks. Now you have a company like Air Arabia or Do or Talabat, which was a laggard in the previous rally. All these stocks leading the gains, which means that the current rally is no longer about the previous hype narratives we heard about real estate and banks and so on, but now a more substantial, broad-based economic growth. And that is also the signal that investors want new businesses to come here, and they are looking for newer themes.
All right, Srini, keeping an eye on all those interesting Dubai details for us. That was Bloomberg's Srini Sivabalan with his insights on Dubai stocks. Now, China's factory and non-manufacturing activity fared better than expected in June as booming exports offset cooling growth in the domestic economy. The official Manufacturing Purchasing Managers Index climbed to 50.3, and the measure of activity in construction and services rose slightly to 50.2. Joining us now from Singapore is Erica Tay, Macro Research Director at Maybank. Erica, thank you for your time this morning. These figures that have come out earlier in our time this morning, are they broadly in line with what you had expected?
Hi, Abir. Yes, we were expecting the PMIs to be slightly above water, which they are, at 50.3. This was a little bit better than what we saw the previous month for manufacturing, which was just at break even. But if you look beneath the hood, actually, we are still facing a two-speed economy in China. So you have consumption and investment being dragged down quite substantially by the ongoing weakness in the domestic property market. And you see export really being the only game in town. So we see that the manufacturing growth is actually being supported by strong exports, particularly of tech hardware, things such as semiconductors and robots.
Yeah. And so it's interesting that you bring up the property, the fall in the property trend in China. Now, if it becomes structural rather than cyclical, what would you say is the next the next growth engine in China? Is it AI? Is it something else?
Yes, so I think everyone is looking to the government to juice investment growth in the next couple of months with this new push worth 7 trillion RMB called the 6 networks push. So essentially, this is the government's blueprint to supercharge China's next stage of growth by building next generation infrastructure, including in digital infrastructure that's needed for China to grow its computing power. So we are looking at, among the 6 networks, things like 5G advanced and 6G telecoms, as well as data centers, and also a huge upgrading of the electricity grid. So all these is supposed to not just drive GDP growth in the next half year, but also set the stage for China's high productivity growth in the next 5 years.
And I have to bring up the war in the Middle East, or what's left of it, Erica. And we've been talking about the cooling demand from China over the past 4 months or so. But this war has brought up the need for countries to diversify their energy sources, China as well. How realistic is it for China to do that diversification, and what timeline would it require?
So indeed, I think the Middle East conflict earlier, so far this year, has really brought home the importance of supply chain resilience and really vindicated China's efforts over the years to build self-sufficiency. So you see China trying to diversify the sorts of energy it uses, the types of sources of this energy away from its traditional sources, as well as the channels through which this energy, this fuel is transported. So you see China trying to diversify away from seaborne shipments, for example, in terms of channels, and then obviously in terms of the uses of energy. You see China ramping up its usage of electric vehicles, so that has greatly reduced its need for oil and gas. And then secondly, you see China ramping up its clean energy supply. So a lot of the clean energy is produced in the western and northern parts of China, the remote provinces. And now the challenge is really to build a next generation electricity grid to feed that abundant supply of clean energy to the more prosperous eastern and southern parts of the country where demand is greatest.
All right, Erica, we're going to have to leave it there. Erica Tay, Macro Research Director at Maybank. Thank you for your time. Now, coming up, South African police are preparing for anti-migrant demonstrations planned across the nation. We'll have the details on that next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
South African police said they're fully prepared for anti-migrant demonstrations planned across the nation and warned they would not tolerate intimidation or violence. The demonstrations are the culmination of weeks of protests that have displaced thousands of mainly African expats, led by the March and March organization. Our chief Africa correspondent, Jennifer Zapasaja, joins us now from Johannesburg. Jen, can you give us a little bit of background to these planned demonstrations?
Well, Abir, as you were just mentioning there, this is really the culmination of anti-illegal migrant sentiment. So this has really been weeks, it's been months, it's been years for some people who have been following this. And the concern really for today, which has been an arbitrary deadline set by this March on March movement, which you were just mentioning, is for all foreign nationals to leave the country based on what this group is saying. But some of the organizing groups that have been speaking out over the past few months have really called on the government for stricter enforcement of immigration laws, tighter border controls. But when you talk to investors and businesses, which we've been doing over the past few weeks, the concern is bigger than that. The concern really, and based on the pictures that you're seeing here, is instability. There could potentially be, the concern is instability in various parts of the country that are the economic engines of South Africa. Of course, Gauteng being one of them, which is where I'm sitting. There's also KwaZulu-Natal. And so we're seeing the government spending upwards of $37 million by some estimates just to ensure that there's no widespread violence. But even when you talk to economists, our Bloomberg Africa economist just says that the broader risk is South Africa's investment story, and whether or not, if there is instability, if there seems to be the government not having a handle on some of these enforced actions, which are technically the responsibility of the government, potentially you have investors then being a bit concerned about whether or not they can invest long-term in the country. And so that is why we are watching very closely for how this story develops, not just today, but longer term.
Yeah, and Jen, just how much of this is actually about immigration policy versus broader frustrations about the economy?
It depends on who you speak with. Of course, South Africa has for decades been a magnet for a number of foreign nationals who have come to the country for better prospects. And we see that globally around the world. There's better job prospects, there's better education and healthcare sectors. And so on the one hand, there is frustration among domestic South Africans because they see increasing competition and pressure because of what they see as more and more people coming in and trying to compete for the few jobs that they see that they have. And we should point out unemployment here has been north of 30% since COVID. And so it is an economic story on the one hand. But I think you also, Abir, have to take a look at what we've been seeing globally with this immigration story. It's not just centered here in South Africa. We know, of course, in the U.S., President Trump has made mass deportations in his second term, sort of a pillar of the second term. term. We know in Germany, the far-right AfD party has also focused in on this, as well as it's been a part of the rhetoric in the UK as well. And so it is a bit complicated when you dig beneath the surface. But I think really when we get to the heart of it here, it seems to be an economic story of frustration, but you can't separate from the fact that a lot of the economic story ends up being entangled with a lot of the workers who are working domestically.
Yeah. All right, Jen, thank you for that update. Jennifer Sapasaja, our chief Africa correspondent, on top of that story for us in Johannesburg. Now on to some other stories we're following. President Donald Trump will temporarily lift duties on phosphate fertilizer from Morocco to aid a struggling farm economy and address consumer fears over food inflation. The suspension will last for 8 months or until the emergency is terminated and is intended to improve fertilizer availability and help reduce input costs for farmers. And cobalt miners in the Democratic Republic of Congo will be required to surrender unused export quotas for the first half of the year to a government regulator. The world's dominant supplier of the battery metal has imposed strict limits on shipments since early last year, replacing an all-out ban with quotas in October. And coming up, Andy Burnham vows to enforce the biggest rebalancing of power in the UK that it has seen if he succeeds in becoming the next Prime Minister. The key takeaways from his speech in Manchester next. This is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Andy Burnham has pledged to radically evolve fiscal powers away from Westminster if he succeeds to his bid to replace Keir Starmer as Prime Minister. In a speech in Manchester, the man who served as the region's mayor until last week said he would swap trickle-down economics for, quote, the biggest rebalancing of power our country has seen.
All parts of the UK should now be given the chance to develop their own version of the same, focusing on the things that matter most to them. Good growth in every British postcode. What a sea change that would be in the way UK government thinks about our own country.
For more on that speech, let's bring in Bloomberg's Lizzie Burden. Lizzie, good to have you on. What are the key takeaways that you have seen from the Burnham speech?
Well, I'd say, Abir, that if Keir Starmer thrived anywhere, it was on the global stage, but Andy Burnham's being much more local in his focus. And this was a speech to explain what Manchesterism means to him. As you say, he's the former mayor of Greater Manchester. He had a huge emphasis on devolution, moving power away from Westminster into the regions. He talked about the biggest house building programme in the post-war period. He talked about easing the cost of living for ordinary Britons. But frankly, these are all pledges that we've heard before, to level up Britain and to ease the cost of living, to build more homes. They're all goals that Brits have been promised before by previous prime ministers. So we're waiting for more detail on how he'll actually make it happen. It was vibes heavy, detail light. And frankly, it was quite frustrating because this was billed as the first look at his economic policy. But he said that we're going to have to wait several weeks till the conclusion of the Labour Party leadership contest for us to find out who that Chancellor is going to be.
And Lizzie, the risks to investors, what are they at the moment?
Well, Bloomberg Economics has done some research into this, and they say that the main risk is that while Burnham's at the moment trying to focus on a 10-year plan, 10-year goals, because of the looming need to call a general election by the latest 2029, he's going to get tempted into short-term giveaways, and that actually that means he has to juice the economy over the next few years. And we've seen so many prime ministers devoured in short periods of time. What's to say that Burnham won't be weak to that pressure as well? But they did flag that his focus on a 10-year window could suggest that he also wants to change the fiscal rules, move the goalpost a bit, so that they're achieved over a 10-year period, over the longer term rather than the medium term. That could worry markets. On the positive side, though, our economists saying that perhaps this devolution agenda makes sense because you need to even out regional inequality, and the UK is the most fiscally centralised in the G7.
All right, Lizzie, we're going to have to leave it there. Lizzie Burden in London, anchoring Daybreak in just a couple of minutes. Now, that's it for Horizons Middle East and Africa. I'm Abir Abu Ahmed in Dubai. Stay around with us for Daybreak Europe. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Asian stocks climb into the half-year finish, on track for their best quarter since 2009, as the yen sinks to a 40-year low, raising the prospect of intervention. Iran, meanwhile, vows to maintain control of the Strait of Hormuz ahead of talks with the United States, with oil set to end a volatile quarter in the red. And Christine Lagarde says Europe has become less vulnerable to economic shocks as she kicks off the ECB's Sintra Forum. We'll speak to top central bankers throughout the day. Well, welcome to the last trading day of the quarter and the half. Asian equities on track, as I say, for their best quarterly gain in 17 years, fueled by tech stocks. You see the MSCI Asia Pacific Index up 1.3% right now. And in fact, global equities are on track for their best quarter in almost 6 years, thanks to that AI trade. The S&P gaining 20% from its March low to its June peak. That's one of the fastest rebounds this century. And this morning, futures pointing higher on both sides of the Atlantic. Now, flip the board cross-asset. We've got traders now turning their focus to the US-Iran talks today. Markets really looking for clues as to whether the Fed's going to keep rates higher for longer. Brent slipping by more than 1% at $72 a barrel this morning. And indeed, oil heading for, as I say, the biggest quarterly decline since the pandemic, as flows through the Strait of Hormuz accelerate. Morgan Stanley even warning of a potential glut. Gold dropping below $4,000 an ounce as the tensions between the US and Iran nonetheless raise inflation risks. And on the right there, you have the yen sliding to its weakest level against the dollar since 1986, the year of Top Gun. This even after the jawboning from the chief cabinet secretary, subsequent comments from the finance minister likewise doing little to move the needle. So traders on high alert for yen intervention. Let's have a look at the risk events on the docket for today. At the top of the next hour, we'll be getting Sainsbury's sales numbers expected to have slowed given the difficult consumer backdrop. From 7:45 a.m. London time, we also get European inflation data. Economists seeing a drop to 3% as the ECB mulls whether to hike again. And then at 9:15 p.m. London time, it's Nike earnings. How is that turnaround going around under the new CEO, Elliott Hill? And how much of a boost has the World Cup given to the company? Plenty ahead. Let's set you up for the day ahead. We begin in Asia with stocks heading for their biggest quarterly gain in more than 15 years. We can go straight to Winnie Su in Hong Kong for an update. Winnie, what's catching your eye this morning?
Yeah, morning, Lizzie. A very positive session in Asia today with the MSCI Asia extending gains for a second session. And in fact, as you just mentioned, headed for its best quarter in 17 years. Now, it has been a spectacular quarter for Asian stocks and specifically for the AI-driven markets. We have the Taiwanese stock gauge here up more than 3%, as well as the Kospi index. And both of them, Taiwanese stocks here, headed for its best quarter since 2001, while the Kospi headed for its best since 1998. And on the flip side of things, you are actually seeing that the markets with the lack of exposure to AI really continue to struggle. Hang Seng Index here down more than 1% and in fact has been down for the past 3 quarters. Now you flip the board and take a look at Japanese assets because we also have stocks higher led by the tech gains, and that's why we are seeing the Nikkei 225 outperform outperforming the broader Topics index. And we can also see that gauge is in fact up about 1.6%, headed for its best quarter on record. And that has been again driven by the AI gains as well as the weak yen. Speaking of the weakness of the yen, you are just mentioning how it's at its 40-year low. We breached that 161.95 key milestone. But for now, when it comes to the intervention, yes, we are watching out for the risks. But given how the narratives from the authorities have been pretty stable, saying that they might take bold actions if needed, but the slide of the yen, the pace of that has really been quite steady, and hence traders not seeing an immediate act from the authorities to step in just yet. And that's exactly why we are seeing the yen sliding past that 162 level, and for now they are watching out for 164 or even 5. When it comes to the yield space, we are seeing 2-year yield. In fact, we had that bond auction seeing pretty strong demand, stronger than the 12-month average. And that is coming as investors turn a bit more cautious in terms of the next potential move from the Bank of Japan, as they expect the Bank of Japan to be a bit more slow and also more steady after that recent rate hike. Back to you, Lizzie.
Winnie, thank you for that update. That's Bloomberg's Winnie Su. And I want to continue with the currency focus because, as Winnie says, the yen has hit its lowest level against the dollar in 40 years, extending declines despite a warning from Japan's finance minister that the country is ready to act in response to develops in the forex markets. We can go now to Ruth Carson, Bloomberg's chief FX and rates correspondent out of Asia. Ruth, good morning to you. Just talk us through how real this risk of intervention is for traders.
Yen at the lowest level against the dollar in 40 years. Yeah, the risk is definitely live. Now, what's interesting, though, when you look at the dollar-yen level, it's actually been grinding higher. The pair has been grinding higher. So we know that one of the key things that authorities really latch onto when it comes to deciding whether or not to intervene on the yen is, in fact, the pace of declines. Now, again, dollar-yen has been grinding higher. It is not catapulting higher. So in other words, there hasn't been a plunge in the yen. So if you're sitting in Tokyo and one of the authorities there, you've got to ask, is this when we conserve firepower or do we actually go in? Needless to say, though, investors are still on high alert, 162 per dollar, at a time when the BOJ is raising rates, at a time when growth is healthy in Japan. Like, something's broken here, and in fact, it comes down to rate differentials. And until that gap between Japan and US rates narrows, you're still going to see the yen bears dominate.
Well, we're looking at the Bloomberg Dollar Spot Index up 0.2% this morning, Ruth. But the big story is the dollar back to being the most dominant currency in FX markets right now. Just talk us through what investors will be watching out for when it comes to the greenback going forward.
Well, there is a reason why it is called King Dollar as we know it. It does dominate 80% of all FX trades every single day in a $9.5 trillion a day FX market. And yes, at the moment, Tina is real again for a lot of investors out there. There is no alternative to the dollar. We know it has benefited from that haven bid during the Iran war. We know that it's actually benefited from the petrodollar bid as well. But right now, Kevin Walsh is someone that a lot of macro investors are latching on to, and markets have judged him to be more hawkish than expected at the last FOMC meeting. So, is there an alternative to the dollar right now? If you type in WCRS over the past 2 weeks on the terminal, you would see that the dollar is up against every major currency in the world. It's not just a yen problem, it's not just a pound problem or Aussie dollar problem, it's a dollar dominance problem.
Love it. Ruth Carson, appreciate the analysis this morning. Thank you very much. Well, let's also turn to the geopolitical story this morning, of course, affecting the commodities market. Iran insisting that it plans to retain some sort of control over traffic through the Strait of Hormuz. It raises the stakes ahead of talks, which the US says are going to take place in Doha today. Does Iran agree? Well, let's get more now from Bloomberg Horizon's Middle East and Africa anchor, Abir Abu Omar. Morning, Abir. Do you think that these talks are going to get stuck if Tehran insists on controlling traffic through the Strait of Hormuz? And how have other nations reacted to this stance from Tehran?
Good morning, Lizzie. That's if the talks happen. According to Iran, they're not sending anyone, that the Americans are free to meet in Doha today, although this is according to the deputy foreign minister in Iran, conceding eventually that some delegates will speak through mediators in Qatar. So we keep an eye out on whether these talks in Doha are going to happen later today. But when it comes to Tehran's stance on the Strait of Hormuz, they've really been doubling down, Lizzie, on this toll that they are wanting to charge once the 60-day negotiation period between them and the United States is over. They said, with or without the blessing of Oman, which has emerged as this other key country, that they will toll the Strait of Hormuz alongside with Oman. Sultan Haytham bin Tariq met with Emmanuel Macron of France yesterday, and both had agreed that the Strait of Hormuz should remain free of charges, though, an ambiguous statement came out regarding whether actually or not it will be tolled. But when it comes to the Iranian side, they're pretty adamant that the strait should be tolled. This follows statements from officials over the past couple of weeks, Lizzie, saying that the Strait of Hormuz will never go back to the state that it was at before the war. So we're seeing this again doubling down on the fact that they are planning on tolling the waterway going forward. And our countries in the region, but also the EU and the US, have come out and said that this is an extremely dangerous precedent if implemented. Countries in the GCC are quite worried about that, albeit both the United Arab Emirates, Saudi Arabia, Kuwait have tried over the past couple of months or so to reroute their export strategy. The UAE, for example, is doubling down on the Fujairah port. Saudi Arabia has been quite active in the Red Sea, but EU officials say that this will create an energy crisis. The U.S., through Secretary of State Marco Rubio, said that it is completely unacceptable for Iran to even think about tolling the Strait of Hormuz. But this is yet another sign of the conflict we're seeing between the two countries, Lizzie. And the Strait of Hormuz is not the only contentious point. We're talking about the oil sanctions, we're talking about the frozen assets, and we're talking about, most importantly for President Trump, the nuclear component of this MOU. So I wouldn't say we're going back to square one, but we're definitely seeing some skirmishes along the MOU and what it means for the wider negotiations.
And yet contrast those warnings of an energy crisis, Abir, with the warning from Morgan Stanley of a potential glut when it comes to oil, and oil on track for its biggest quarterly fall since the pandemic.
Yeah, and we're seeing Brent at around $72 a barrel. Morgan Stanley, for the second time in about 2 weeks, bringing down its average price estimate for the third quarter and the fourth quarter to $75 a barrel. That's $15 lower than previously estimated for the third quarter, and $5 lower than previously estimated for the fourth quarter. They're also pricing in some weakness for Brent futures, or the prices on those forward-looking levels. They're estimating about $70 a barrel for 2027. So going down quite a bit to levels that we've seen pre-war. And Lizzie, this really tracks with what we're seeing happening actually in the Strait of Hormuz. Now, the trickle of shipment is still going through the waterway, albeit with a little bit more caution over the past couple of days, with those strikes back and forth between Iran and the United States. Our Bloomberg energy teams have reported that they spoke to ship owners. 5 of them at least are saying that they're still going through the waterway, but with a little bit more caution than previously as in the past couple of weeks since this MOU was signed. So we're seeing a trickle of movement from Gulf supertankers, for example, Saudi-linked supertankers. We're seeing a trio of tankers making their way inbound to the Strait of Hormuz. That is on Monday, and we're seeing at least a couple of tankers making their way out. So we're seeing the movement still going on. Ship owners are saying they're treading with a little bit more caution with those strikes over the weekend or over the past couple of days or so. But that really factors in what Morgan Stanley has been saying, that the movement in the Strait of Hormuz has happened at a faster pace than they expected, and that is why the average price was brought down to about 75 for the remainder of the year, Lizzie.
Abir, thank you so much. That's Bloomberg's Abir Abu Omar, who'll be back with Horizons Middle East and Africa at 5 a.m. London time. Well, still ahead on Daybreak Europe, global policymakers gather at the ECB's annual forum in Sintra, with day one expected to focus heavily on artificial intelligence. Can they look past the geopolitics, you might ask? But first, Fed Governor Lisa Cook keeps her job, but US President Donald Trump's power over federal agencies grows stronger. We'll get you the details next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe. Now, the US Supreme Court, in a closely divided vote, has ruled that Fed Governor Lisa Cook can keep her job while she battles against unproven mortgage fraud allegations. The ruling reinforces the Fed's independence from the White House, but the court also expanded the president's power to fire top officials at other federal agencies. Let's get some analysis now. We can speak to Bloomberg's Jill Desis for more. Jill, good morning. How much of a win is this for Fed independence? Is Trump likely to keep trying to fire Cook in another way?
Well, Lizzie, good morning. I think we heard it best from an academic who told us that this was good for the Fed, but not great. I think the really important things to keep in mind about this ruling is that it was a 5-4 decision, so very narrowly decided, with Chief Justice John Roberts writing that majority opinion. It was him along with Justice Kavanaugh joining the 3 liberals on the court, and ultimately sort of shielding Lisa Cook in this specific circumstance. But one thing that came with that opinion was that it was very narrowly ruled here. At least that's exactly how Roberts was sort of framing it. So what that does do is leave open that possibility for Trump to return and try to remove Lisa Cook in another way. Maybe there's something else that ends up back, before the courts. But I do think, again, that it's important to keep in mind that this was a fairly narrow decision, very, very close in terms of that sort of distinction with the 5-4 ruling here. So I don't think this is necessarily the end of the story, but certainly, obviously, good news for Lisa Cook right now.
So the vote on a knife edge, but also coming alongside a parallel decision to expand the president's power to fire top officials at other federal agencies. How significant is that, Jill?
Yes, that's right, Lizzie. And I mean, that one is incredibly significant. So again, while the Fed may be insulated from these types of decisions at the moment, that other Supreme Court decision overturned a 91-year precedent. So ultimately giving Donald Trump, as president of the United States, pretty broad power to remove the heads of agencies like the Federal Trade Commission, like the Security Exchange Commission, like the National Labor Relations Board. So you've got all of these other federal agencies that are pretty heavily impacted by those kinds of decisions. This was after Trump removed the head of the FTC that ultimately led to this case being brought before the Supreme Court. So you do have a pretty significant decision handed down by the Supreme Court there. And again, just brings it back to that idea that, perhaps the Fed is preserving some of its independence now. But with that narrow ruling, it does open the door for whether or not that's something that ultimately holds well into the future if another case were to end up back before the Supreme Court.
OK, plenty to watch out for in the future then. Jill, thank you for that. Bloomberg's Jill Desis. Well, coming up on Daybreak Europe, South African police brace for a wave of anti-migrant demonstrations. We'll get you more from Johannesburg next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
Things have started to pick up in this economy based on the jobs number.
But there is a lot of concern about why the labor market is not keeping pace with what we're seeing right now in the AI space.
This Thursday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The unsaid thing is that we're basically at full employment.
Apparently the labor market right now, not a problem.
The June Jobs Report, Thursday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:22 a.m. here in London. Now, turning to South Africa, where police say that they're fully prepared for anti-migrant demonstrations and have warned that they will not tolerate intimidation or violence. Weeks of protest across the country have displaced thousands of mainly African expats. And our chief Africa correspondent, Jennifer Zabasaja, joins us now for more from Johannesburg. So good morning to you, Jen. Just give us a background to these demonstrations for anyone who hasn't been following it in our international audience.
Well, Lizzie, this is really the culmination, as you say, of weeks, months, years, in some cases, of anti-illegal immigrant sentiment. Organizers, including one group called the March on March movement, have designated June 30th, this arbitrary date, as the date for foreign nationals to leave the country. So when you take a look at some of the requests that they're asking for the governments, it's some things like tighter border controls. They're also calling for stricter enforcement of immigration laws. And so this has been something that South Africa has dealt with for a number of years. From an investor perspective, though, Lizzie, and we've spoken with a number of investors, the concern here around this day and any sort of instability that comes is how far does it spread, especially when you talk about parts of the country that are really the economic output and economic engine of the country, including the province of Gauteng, which is including Johannesburg, and KwaZulu-Natal. We also have spoken with Bloomberg Economics that have done some assessment and talked about really the broader underpinning of this, which is the risk to South Africa's investment story. We talk quite a bit about how this country has really, for a number of years, tried to convince investors that some of the weak economic growth that we have seen over the past few years, sub 1% for a number of years, is going to turn around. So if we do, in fact, see these demonstrations getting out of hand, turning to violence that we have seen in past years and decades, what does that mean for the investment story and for any sort of investment that the country is seeking for the private sector, which is why we are seeing the government investing north of $37 million, they say, by some estimates, to ensure that these demonstrations don't get out of hand.
Yeah, so it could have investment ramifications, but it comes back to a question. Is this really, these protests, are they really about immigration policy, or are they more actually about broader economic frustration at the root, Jen?
Yeah, it depends on who you speak to, really, Lizzie. I think if we look at South Africa, there has been weak economic growth. There also has been unemployment, which has been north of 30% since COVID. And so a lot of these groups are frustrated by what they see as a number of foreigners who have come in some cases put pressure on the scarcity of jobs that are here. South Africa has for a number of years been a source where it's actually been an attraction for a number of foreign nationals around this country, but also across sub-Saharan Africa. And so there is the concern around access to jobs. There's concern around access to things like healthcare and education. And so there is an economic factor of it. But Lizzie, you know, to your question, there also is this broader question and debate around illegal immigration. We know that has been a story not just here in South Africa. In the U.S., President Trump has made it a factor in his second administration. We know, of course, in Europe, that has been an underpinning and a thread really for a number of governments to deal with as they are out and speaking with voters. And so, you know, the question, it's a bit intertwined, I think, when you talk to people, because how do some of these foreign nationals then affect some of the economic prospects and the economic growth of the country? And so that is why investors, at least here in South Africa, are very fixated on what this means moving forward, if in fact we do see this contributing to any sort of instability for the government and as a factor then for the private sector.
Okay, Jen, thanks for bringing this story to us. That's Bloomberg's Jennifer Zabasajja.
Yes.
Well, now to some other top stories we're following for you this morning. The World Bank is dropping a key climate finance target after criticism from the United States, its largest shareholder. The lender will retire its goal that 45% of financing deliver climate-related benefits while continuing to support countries' own climate plans. The move follows pressure from the Trump administration. And here in the UK, food inflation fell to a 15-month low in the UK in June, with prices rising 2.4% on the year, according to details from the British Retail Consortium. The trade association said that bumper crops and strong competition had kept prices lower in the month. Well, those are some of our top stories this morning. But coming up, ECB President Christine Lagarde celebrates Europe's resilience to economic shocks. That's her narrative anyway. We'll go live to Sintra, to the ECB Forum next. Stay with us. This is Bloomberg.
geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Asian stocks climb into the half-year finish on track for their best quarter since 2009, as the yen sinks to a 40-year low, raising the prospect of intervention. Iran, meanwhile, vows to maintain control of the Strait of Hormuz ahead of talks with the United States, with oil set to end a volatile quarter in the red. And Christine Lagarde says that Europe has become less vulnerable to economic shocks as she kicks off the ECB's Sintra Forum. We'll be speaking to top central bankers throughout the day. Well, a very good morning. Welcome to Tuesday. If you are just joining us, 6:30 a.m. here in London. This is the picture in markets on the last trading day of the quarter and the half. You've got Asian equities on track for their best quarterly gain in 17 years, fueled by tech stocks. The MSCI Asia Pacific Index still up over 1% this morning. And in fact, global equities on track for their best quarter in almost 6 years, thanks to the AI trade. So futures on both sides of the Atlantic, in fact, up in the green this morning. Now, flip cross asset, and we've got traders turning their focus now to the US-Iran talks today. Markets looking for clues about whether the Fed is going to keep rates higher for longer. Brent slipping this morning, down 1.2% at $72 a barrel. And indeed, Morgan Stanley warning of a potential glut. Oil heading for its biggest quarterly decline since the pandemic. Gold, though, is still below that $4,000 an ounce level as those US-Iran tensions raise inflation risks. And as I say, we've got the yen sliding here to its weakest level against the dollar since 1986, even after the jawboning from the chief cabinet secretary, even after comments from the finance minister. So we keep an eye out for yen intervention. 162 per dollar is where we trade right now. Now let's turn to the front pages this morning. We'll kick off with the Financial Times. It writes about Andy Burnham's first major speech since Keir Starmer announced his plans to resign. The Makerfield MP pledging more state intervention, more regional control, as well as support with the cost of living. We'll see when the details come out of how he will implement that. But let's turn over to the Wall Street Journal as well now, focusing instead on Comcast's decision to spin off its media businesses under the NBC Universal brand. This is a piece which says that the company's created the next big deal magnet in an entertainment industry poised for consolidation. And then let's turn to Europe. Handelsblatt out of Germany leading with a story describing concerns among the country's governing coalition over relations with China and calls for a tougher trade policy. It says that Chancellor Merz is facing a delicate balancing act. And we'll be diving into that story later on in the programme. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which, as always, terminal subscribers can find by going to DAYB Go. Now, the European Central Bank President Christine Lagarde has said that the euro area has grown more resilient to external economic shocks. She's been speaking at the ECB's annual forum on central banking in Sintra, Portugal.
The euro area has also weathered the largest US tariff increase in almost a century, as well as what the International Energy Agency has called the largest oil supply disruption in history. That didn't go without a significant cost. It has been substantial, but the economy has not been derailed.
Let's go to Bloomberg's Francine Lacroix now, who's on the ground for us at that forum in Sintra. Morning, Francine. So rather positive messaging there from Christine Lagarde. Do you have a sense that Sintra's going to lead to more hikes from the ECB in the future? Is that what you're hearing from policymakers?
Well, that's definitely what participants here will want to know over the course of the next 2 days. Lacey, so yesterday we had the speech by Christine Lagarde. Again, it was in front of 11 new governors from around the world. It's really one of the few occasions that these central bankers have a venue all to themselves to talk, to meet, to discuss ideas, and to look at the problems ahead. Now, what I thought was very striking in Christine Lagarde's speech over dinner last night was, first, it was quite positive because she did decide not to speak really about interest rates, but really to focus on what Europe had achieved in terms of financial stability and the fact that it could grow from here. There was also a moment where she talked about the fact that it was almost impossible now to talk about forward guidance, so that the ECB, and she repeats this almost every quarter, will not look at forward guidance because it's simply too unpredictable given everything that's happening in the Middle East, but they're looking at scenario planning. So that could give us a good indication of what they see next. But also that hike in June that was fully priced in and anticipated by the markets was not an insurance policy. There was this idea in the markets that given the uncertainty with the energy price and future shocks, they wanted to hike a little bit in case inflation grew out of control. And yesterday, she really put the record straight, saying, look, she looked at the data together with her committee, and it was the right thing to do. So it didn't give us that many clues on what happened. Or September, we have a couple of heavy hitters that we'll try and press on. And then, of course, we'll hear from the Bank of England governor in the panel. And then maybe the star of the show is Kevin Warsh. This is the first time he's at an international gathering with other central bankers since being appointed by, of course, President Trump. And so we'll look at body language. We'll see how he gets along with the others and whether he gives us any clues about future hikes.
OK, really interesting to hear that commentary on forward guidance from Christine Lagarde, given what Kevin Warsh has already said. But, Fran, you've got some fantastic guests coming up throughout the conference. What do you think are going to be the key themes that will dominate it?
Well, it's interesting, Lizzie, because this year, actually, in Sintra, the theme is on growth, but also innovation. And that really clearly sits on AI. So we have the chief economist of OpenAI. He'll be in a good panel discussion a little bit later on. And if you look at central banks, or if you look at research from economists, we're just at the beginning to try and figure out when you have an impact in the real world. So, yes, we talk about productivity. We talk about, how a lot of these models will help us to have agents, to be much more productive, to possibly read emails for us. But it's unclear what kind of impact this has on inflation expectations. In the longer term, in the medium term, it's probably inflationary because of all this CapEx spending. And it was also interesting a couple of days ago hearing from the central banker of Canada talking about possible valuation concerns. That's more on the financial stability side. So, innovation, I think, will be a large part in trying to understand how central banks look at innovation, how they look at productivity, and what that means for future interest rate hikes or cuts ahead.
OK, Francine, looking forward to all your coverage today for us. Thank you so much. That's Bloomberg's Francine Lacroix, of course. And we'll bring you that coverage from Sintra throughout the day. So Fran will be speaking to guests, including the ECB's chief economist, as well as central bank heads from the Netherlands, Belgium and Finland. Well, the European Union and China have set an October deadline to make progress on trade disagreements, as tensions between the two economic powers rise. Contentious issues include a growing trade deficit and WTO reforms, but senior EU trade officials are trying to sound positive.
Today's discussions were intensive, focused and constructive. My objective from the outset has been clear. To begin balancing the trade relationship between the European Union and China. The gap is widening. China's export to the EU keep rising, while our market share in China keeps shrinking.
Bloomberg's Richard Bravo is in Brussels with more. Richard, good morning to you. So is this October deadline a sign of progress, or have they just kicked the can down the road?
Hi. Additional dialogue is definitely preferable to the alternative, but one really needs to keep within context, what's happening in this broader trade relationship. And the EU really does finally accept the fact that the current economic relationship with China, as Šefčovič said yesterday, is unsustainable, and he said the status quo is not an option. And the 27 EU leaders got together at a meeting about a week ago, and they agreed they need to take additional measures to protect their economy from the overcapacity and the influx of Chinese goods. So the EU leaders will meet again later this year, and the European Commission will bring concrete measures to the table that the leaders will discuss to further protect EU industry. And we'll just have to see whether or not this dialogue can make any tangible progress before those leaders meet and have to decide on whether or not to institute those new trade measures.
Well, what are those key issues that need to be ironed out before the autumn, Richard? How far apart are the two sides on those issues as well?
They're pretty far apart. The biggest issue, probably, as Šefčovič alluded to there, is the trade deficit. In 2025, that was about 360 billion euros. And so that's a massive gap to make up. Also, the EU is not happy with state subsidies that China provides its industries, and means that European companies aren't really playing on a level playing field. So those are the two main issues that the Europeans want to discuss in these consultations, while the Chinese side wants to make sure that they have access to the massive European market, and they are also pretty upset about the tariffs that the EU now imposes on Chinese electric vehicles going into the bloc. So they're very big, very key systemic issues that they need to overcome. These are not new issues. They've discussed these before, and they've made very little headway. So whether or not they can make progress by October is a very tall order.
Okay, Bloomberg's Richard Bravo, thank you very much for that update. Now, let's turn to how this is playing out in the corporate sphere. Some of our top corporate news this morning. Stellantis has announced plans to sell Chinese-made Jeeps in Europe by the end of the decade. A new SUV will be jointly manufactured at Dongfeng's factory in Wuhan. The two companies also setting up a venture that will allow Dongfeng to make its own vehicles at a Stellantis plant in France. Elsewhere, Maersk has upgraded its profit outlook for the year, helped by solid demand, especially in Asia. The world's second biggest container carrier now sees global container volumes growing by about 4% this year, above its previous forecast range. It says underlying earnings and free cash flow will also be stronger than expected, as shipping lines benefit from a recent jump in spot container rates. Well, we've got plenty more coming up on the programme. Don't go anywhere. Good morning from London. This is Bloomberg.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:44 a.m. here in London. Well, the FIFA World Cup has delivered its biggest upset so far, with Paraguay sending four-time champions Germany home in a dramatic penalty shootout after they finished at 1 goal each following extra time. It was Germany's first appearance in the knockout round since they last won the tournament in 2014. Paraguay's government declared an impromptu public holiday in the country after the victory. Well, staying with the football, a Bloomberg investigation has discovered how legitimate websites from small businesses to government agencies are getting caught in the crosshairs of the Spanish Football League's fight against illegal sports streams. Thousands of websites are being taken down every weekend as La Liga steps up efforts to combat websites that illegally stream matches. And looking into this for us has been our company's reporter, Clara Hernandez Lizarraga. She joins us now this morning. Good morning to you, Clara. So this is a fight worth billions of dollars. Maybe not everyone's heard about it, but just explain for us how so many small businesses end up in the middle of this global football piracy battle.
So that's the turn that the fight against football piracy has taken in Spain. La Liga, the Spanish Football League, is trying to stop illegal football streams by blocking internet addresses used by pirate websites during live matches. The problem is that those addresses in today's internet are shared, and so a legitimate business can end up sharing that same infrastructure and be blocked during a game. That's what's happened to an online nice store that we spoke to, and all kinds of mom and pop shops across the country. So customers try to visit those online stores, and instead they see a warning saying the site might be streaming illegal football, and so customers walk away from potential purchases. According to research that was shared with Bloomberg, at least 5.8% of the world's most visited sites, or more than 500,000 domains, have been affected by this clampdown in Spain. And that doesn't even count the thousands of small businesses that report having been blocked during the games.
So that's the kind of collateral damage. But fundamentally, are these locks justified?
Well, it's one way to deal with it. There's no question that piracy is a huge problem. Broadcasters pay billions for the right to show live sport, and illegal streams undermine that business. And for football, the value is in the game. So as soon as the game is over, that money's gone. So in Spain, La Liga says that these measures were authorized by a court and that they're necessary to protect the value of these matches, but critics argue that the technology is too blunt and that it's affecting businesses and charities and even government websites that are being caught in the crossfire.
So, coming back to the World Cup that's on at the moment, what's at stake now?
The World Cup raises the stakes dramatically. FIFA expects billions of viewers and has assembled a dedicated anti-piracy team to hunt down illegal streams. The thing with this problem is that Spain is being closely watched because it's testing one of the most aggressive approaches to real-time blocking. And so the question is whether those tools can stop piracy without affecting the wider internet, and if they would be launched elsewhere than in Spain.
Clara, thanks so much for bringing us this story this morning. Bloomberg's Clara Hernandez Lizarraga. Thank you. Well, let's turn to another story now. The US has long been a top destination for talented migrants, but that calculus is changing. Skilled workers who were educated and built careers in the United States are increasingly wondering whether the opportunities they sought in America can be found elsewhere. The US visa crackdown is the subject of today's Big Take.
This story is all about the American dream. It used to be that coming to the US was this beacon of opportunity for skilled immigrants who wanted to pursue their fortune, and in turn the US received all the innovation that comes with having top talent. But now, with all the administration chaos and the visa back and forth, that calculus is changing.
The trend we're seeing is that immigrant workers who feel like they've done everything right to stay in this country are now wondering if the country wants them at all. This could affect the competitive advantage that America's held for decades. Each year, the government issues 400,000 F1 visas for foreign students who want to come to an American university. At the same time, they offer 85,000 H-1B visas for international talent that want to come and work at American companies. The H-1B visa has been seen as the most viable way to secure a green card and eventually have a life in the U.S.
2/3 of tech workers in Silicon Valley are foreign-born. Even though the US is now a powerhouse of the AI-fueled economy, it's relied for years and years and years on a lot of skilled immigrants coming from countries like India and China.
Making matters more complicated for skilled immigrants, the Trump administration is flip-flopping on immigration policy.
All the 50 skilled immigrants that we spoke to, that was a sticking point for them. That was a moment where the path that they had charted would not be possible anymore.
You can watch the full documentary and get more on that Bloomberg Big Take on the terminal and at Bloomberg.com. Well, turning now to the UK, Andy Burnham has pledged to radically devolve fiscal powers away from Westminster if he succeeds in his bid to replace Keir Starmer as UK Prime Minister. He's also committed to setting up a branch of the Prime Minister's office in Manchester, a major house-building programme on the cards as well.
I am going to do things differently. I am going to break with the more of the same approach that has got us here. I am going to give Britain the circuit breaker it needs. By building a more collaborative politics in Westminster, by taking power out of the centre and putting it in the hands of the people and places who can use it best.
Let's get some analysis now with Bloomberg opinion columnist Rosa Prince. Hey, Rosa. So I wonder if this idea of making devolution central to Burnham's policy is actually smart, both economically, is it going to deliver growth fast enough, and also politically, what if reform take over the local moralities and councils even more?
Yeah, great question. It does sound like this will involve quite a lot of upfront money, of which there isn't a lot around, a lot of organisation. And will the rewards come soon enough for Andy Burnham? You know, Labour have only got 3 years till that general election, and everyone had assumed they would want growth fast. Is this the proper blueprint? Now, Andy Burnham thinks it is. He thinks that he can get the wheels moving. But as you say, investing a lot of money and power in local authorities can have downsides if they're held by your opponents. Also, is there a risk that transferring money from the south to the less wealthy north will upset people in regions that are being overlooked for that cash investment? And also, you know what? There are pockets of poverty in the south. Are they going to get enough of a look in all this? So I think it's really exciting that there is a big strategy finally coming out of the centre. Will it work? Not quite sure yet.
Well, he did mention areas of the south as well, to be fair, but I feel like we've heard it all before. We've heard about the cost of living, levelling up Britain and, you know, promises to build more homes. We need to see how he's going to implement it all. But that's Burnham. We've still got Keir Starmer in number 10, Rosa. He is outgoing, of course, but he's going to publish the Defence Investment Plan later. Just for our international audience, explain for us why this has been so difficult for the Keir Starmer government.
Again, it's all comes down to the money. There just isn't enough money to match the rhetoric. Keir Starmer was saying for months, years even, that he was going to get spending on defence up to that NATO target of 3%. When this defence investment plan came around, it just wasn't there. And that meant that his defence secretary, John Healey, walked out of the government a couple of weeks ago. Kind of a fatal blow to the Starmer administration. So, yeah, very politically fraught. A little bit more money, we're told, has been found tomorrow, but still not at that 3%.
OK, Rosa, thank you for your analysis. That's Bloomberg opinion columnist Rosa Prince, whose columns you can find at OPIN Go on the terminal. Plenty more ahead. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Welcome back to Bloomberg Daybreak Europe. Well, we just want to show you some of the moves that we've been seeing out of Japan. Of course, we've reported earlier on about the yen sliding to its lowest level against the dollar since 1986. Commentary from the Chief Cabinet Secretary and from the Finance Minister not doing much to move the needle. And now we've had a hotline headline crossing the terminal when it comes to JGB yields. At the long end, the yield rising to 3.93%, so up 10 basis points. We'll keep an eye on this throughout the next couple of hours of trading. The opening trade is going to be coming up next, and they will take you all the way to the start of the European cash session. Of course, we've got the geopolitics in mind. We've also got the ECB summit in Sintra, so plenty ahead for you. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. It is Tuesday, June the 30th. Here's what's on the agenda. The Supreme Court gives Fed independence a boost. As central bank chiefs convene in Portugal, the yen hits a 4-decade low with traders on intervention watch again. And oil falls ahead of expected Iran-US talks today.
OK, let's talk about these equity markets and figure out exactly what is happening here. Really choppy session in Asia once again. Momentum's been struggling, picks up a little bit today. Euro Stoxx 50 futures are up by 0.6%. US futures not by quite as much. The story today surrounding what is happening with the yen. Tom talking about it there. We're at 84 levels, seeing a massive move at the long end of the JGB curve. And the Iranians are saying they will charge tolls in the Strait of Hormuz. They will do it with or without the Omanis. The Americans are saying that's not happening. Talks are taking place in Doha today. We'll look for the result on that one. But Brent crude is down by 1%. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. 7:01 here in London, Tuesday the 30th of June. So lots to talk about when it comes to long-end rates. The Japanese market putting that front and centre, the weakness of the yen, the weakness of the oil price, in fact, also with a 72 handle on Brent, as we've just been hearing. So lots to discuss when it comes to market moves. But let's take a moment to set the stage for the ECB and for Sintra, because this is going to be a big feature of our show this morning. It's going to be a big feature of programming over the next couple of days. And we have heard from the ECB's Christine Lagarde already. And going into this, I suppose one of the key questions that journalists were going to try and get a sense of is whether the ECB itself or others, ECB watchers, thought that the ECB had made a mistake, a policy error in hiking in June. And she's perhaps trying to get in front of that, saying that she's defended the hike in June, saying there's nothing she's heard since that would call it into question. And she seems to be trying to add a bit of nuance to the conversation about whether you look through geopolitical shocks or whether you don't. She says we expect more shocks and we expect more often to be in this intermediate zone between the shocks that you look through and those you respond forcefully to. And so maybe this is a continuing theme that we'll return to during the Sintra coverage.
64% chance to begin a rate hike in September. The market's still pricing the possibility that we do see further hikes coming through. Lagarde's toning it down a little bit, but still, rate hikes are still coming. That's the market estimate.
She expressed confidence in the framework, the data framework that they're looking at. She expressed confidence, relative confidence in the resilience of the Eurozone economy. We're going to get inflation data, of course, from France and Spain and others throughout today, and then the overall number tomorrow. But also really interesting, in the context of this gathering in Sintra, is this huge decision by the Supreme Court on multiple fronts.
In the US.
For our sake, in the US, absolutely. But for our sake, the focus when it comes to central banking is on that decision to essentially carve out some level of independence still, because they've given the president huge powers over other regulatory bodies and other institutions in the US. But when it comes to the Fed, at least for now, allowing Lisa Cook to continue to serve. But the broader takeaway is that Fed independence, at least for now, has been reinforced by this ruling. It was the one institution to which the president has not been given those additional powers, at least for now, and that is hugely significant.
Yeah, you wonder if this reinforcing then of Fed independence, what does that do to the conversation around Kevin Walsh when he's there? What does it do to his reception? Fed independence was from a slightly different dynamic, but was a big topic of conversation at Sintra last time around with a different man at the helm of the Fed.
Walsh looks at this, he goes, independent central bank, I can do whatever I want, I'm in the seat now, let's go.
Tick.
Hawkish. Yeah. Like 50-50 chance we get rate hikes this year. Bank of America thinks we get 3 this year, I think. So maybe that's the narrative, that Walsh is stronger as a result of this.
So all of that factoring into how you think about the Bank of Japan then, and what is happening with the yen. So the Bloomberg Dollar Index is surging today up 0.2%. The yen currently at those 4-decade lows. And you were talking about the sell-off, particularly at the 30-year when it comes to JGBs. But across the curve, you're seeing that right now very pronounced on the 30-year, with yields up close to 10 basis points at 394. So again, it puts the BOJ back into focus. Officials from the finance minister down have come out and talked about the currency again, but not with the most forceful language that we've heard previously. What is the new line for the finance ministry? What is the new line for the BOJ? We're at 162. Is it 163? Is it 164? How far do they let this go? It's helpful for the equity markets.
Yeah.
Exports have been booming, but clearly the inflation challenge is there, and the authorities of the BOJ as well in focus.
Yeah, and the weakness in the yen has us return many times to the question about how quickly or very slowly the BOJ will hike rates. And as you say, Tom, the language, our colleagues pointing out, the language is not like last time. It's not like April. It's not saying this is a last warning. Don't put your phones down, traders. Those are the things we heard in April. We're not hearing those now. And so there is this suggestion that maybe they're not setting us up for intervention. But I'll point out it is another US holiday on Friday, and sometimes that's been a time where you get bang for your buck.
Is the risk, and people are pointing this out, that we get a big explosive move to the upside on the US dollar? That seems to be a factor that you could certainly kind of put in. If you get multiple rate hikes coming through from the Fed, ECB sounding a little bit more dovish, BOJ standing to the sidelines. You've got to remember, in 84 we were at these kinds of levels. In 1980 we were at 250. So you've got a long way to go potentially in terms of where this dollar move could take us. So maybe there's still actually significant upside here for the dollar. And maybe that's going to be the thing that the market hasn't priced in. Where do the risks lie in the market at the moment? A much stronger dollar could certainly be the risk.
We're certainly hearing a lot of people linking the dollar and commodities and talking about the links between the two, and some commodities feeling the pressure from the strength of that dollar. Thinking about where we go on the commodities conversation then, have we learned anything new overnight when it comes to Iran?
The Iranians want to exert control over the Strait of Hormuz. The Omanis may or may not play ball. We don't know yet, but the Iranians are going to do it anyway. The Americans are saying they will not have that. That seems to be the game at the moment. The kind of the nuclear issues sidelines on this one kind of certainly feels like it. Talks are going to be taking place. We think today. There has been some speculation the Iranians may not show up, but yeah, that's where we are at the moment.
The only new thing I took away from that, our reporting around this overnight, was that actually the Omanis were meeting with President Macron in France yesterday, and Oman seemed to suggest, in that conversation at least, that they weren't supportive of the idea of working with the Iranians on tolls. So met with Macron in Paris and confirmed freedom of navigation with no conditions.
Yeah.
So does that tell us something about what the Omanis, the lengths to which the Omanis are prepared to go to get money out of this situation?
But again, is this the new normal for the Strait of Hormuz? So you're going to get this friction. You're still going to get tankers, including super tankers, trying to make their way through the Straits. The US Navy is there and other navies to assist. Morgan Stanley saying you only need to get a return of 65% to pre-war levels to potentially get a glut in the oil markets. Morgan Stanley revising their target for Brent lower in the third quarter. 65%. I don't know how close we are to that, but you are seeing tankers continuing to go through the Strait with that assistance, with that aid. Are the oil markets, energy markets now set up for that?
They're probably not. But how short-term is that? Yes, you're going to get a glut as tankers return and we get loadings coming through, and that's going to be a story. But if you put friction into the system, are you going to get a higher oil price? Even if it's $5, $10 a barrel on the longer-term story, is that going to be the narrative that we're going to have to work with? Higher energy costs coming out of the Gulf, higher energy costs at the petrol, gasoline tank. Maybe that's the narrative. Again, we're still up on oil, and you've still got that inflationary impulse coming through from it. Yes, we are down from the highs, but we are still up from the lows.
Yes, I wonder which theme dominates at Sintra. Back to where we started. Will it be, slight relaxation and slight satisfaction with the fact that we've got a 72 handle on Brent now, which is a lot lower than it was a few months ago?
Europe's got massive issues in terms of making sure it's got enough gas for the next winter. We are coming into this very, very low. We're going to have to probably pay higher gas prices. That's going to be inflationary. Sintra is coming up. We are going to be speaking with Philip Lane, ECB's chief economist. Olaf Slijpen is going to be joining us, the Dutch central bank governor. The Dutch are out after last night's football, as are the Germans, as are the Japanese. I'm just going to point that out as well. Pierre Wunsch, National Bank Belgian governor, is going to be joining us. And in London, Fabiana Fedeli, M&G Investments, Equities and Multi-Assets CIO. We'll get her take on what is happening.
Let's look ahead to what else we are watching throughout this Tuesday. Later, it is the US-Iran talks expected in Doha, both sides at loggerheads leading into those conversations, but they are expected to take place in the Qatari capital, of course. The UK will finally announce its defence investment plan announcement, delayed, but we will finally get that later today, so some scrutiny on that. At 10 a.m. UK time, Italian June CPI inflation and Germany's June CPI later as well at 1 p.m. 3 p.m. Meanwhile, we're going to US consumer confidence, and with the gauge on the labour market, jolts, so job openings data coming out stateside, and on the earnings front, we get earnings and numbers from Nike.
Yes, we do. We get numbers from Nike. We'll certainly remember that. That'll be a story for us tomorrow, certainly, won't it? We have Eurozone CPI. Yep. You've already mentioned this, Tom. We are expecting it to come down, so if that sets the mood at all for Sintra, expecting, I think, the overall Eurozone number tomorrow to come down from 3.2 to 3%, but we'll get the French number, we'll get German numbers, we'll get other numbers today. So that's the inflation story. I'm thinking about the defence story as well in the UK, because it's been such a topic of conversation over the last few months and weeks, and has resulted in, changes in cabinet, which then arguably led to the downfall of a prime minister. So, certainly worth thinking about.
We're going to get new numbers announced today. Burnham appears to have signed off on it. It's going to be up, but it's still not going to be as high as the military wants it to be. We're going to see more being spent on drones. This is still a struggle for the UK to fund defence at an adequate level without making cuts elsewhere.
How are they going to join the dots between 2.6% in 2027, that's of GDP, and 3.5% in 2035?
Some reporting over the weekend. We
looked to this report to join some of those dots.
Yeah, so Dan Jarvis, the new Defence Secretary, relatively new, of course, has managed to squeeze some more money out of the Treasury. We know that negotiation has been incredibly tense. There was some reporting over the weekend that maybe Burnham is in favour of defence bonds, so we'll see if that becomes more part of the narrative as well when he becomes, if he becomes the Prime Minister.
Coming up. Shipping giant Maersk boosts its profit forecast for the year. We will discuss what's driving the improved outlook. Plus, is the SaaS apocalypse over? We'll be speaking to Mike Cannon-Brooks, the CEO and co-founder of software company Atlassian. That conversation is coming up a little bit later. Up next, we go live to Sintra, where policymakers are meeting for the ECB's forum on central banking. Philip Lane, the ECB's chief economist, joins the programme after the break. If you want to get involved in that conversation, or indeed any of the others around this desk, IB plus BBTV Go. That is the function to use. As the sun rises here in London, it's a little cooler this week, isn't it? This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. You U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back. This is the opening trade. Just coming up to 15 minutes past 7 here in London. And the European equity market picture looks like this. Fairly muted, actually, for London. Elsewhere, including over on the DAX, we do see some positivity, up by 0.6%. Tech stocks, no doubt, in focus there. NASDAQ futures up by 0.3%. The Asia session up by 0.9%. And the US session, Guy, we saw it continue to gain after European markets had closed.
Absolutely. So we'll factor all of that into our open as we get to it very shortly. Before we do that, we've got some great guests coming out of Sintra, which kind of kicked off last night. European Central Bank President Christine Lagarde kind of kicking it off, saying the euro area has grown more resilient to external economic shocks. She spoke at the annual forum of the central banking group that is the ECB. It takes place in Sintra, Portugal.
The euro area has also weathered the largest US tariff increase in almost a century, as well as what the International Energy Agency has called the largest oil supply disruption in history. That didn't go without a significant cost. It has been substantial, but the economy has not been derailed.
OK, that was last night's Lagarde kicking things off. Today we get down to business, real business, and figure out exactly where this European economy is going. To answer that question, I hand it over to Francine Lacroix.
Thank you so much, Guy. I'm delighted to be joined by Philip Lane, Chief Economist, of course, and member of the Executive Board of the European Central Bank. Mr. Lane, thank you for joining Bloomberg this morning, bright and early, to get us started.
Indeed. Good morning.
When you look at the economy, what's changed since the last time you decided to raise interest rates?
Well, for the economy, it's only been, a few weeks. So clearly what's changed is the oil market. And that is moving quite a bit in the weeks since we've made our decision. And so let's see how that percolates across the economy. So what we have seen is in terms of confidence indices, there has been some improvement, but not a return to the pre-war levels. So it's not the case that there's been this very rapid rethinking of how investors and consumers feel. I mean, I think probably they need to see this current peace agreement convert into something more durable. And as you know, every day there's plus and minus signals. And that needs to settle down, I think, before consumers and investors take a more decisive revision of their views.
I mean, this is really the concern, right, is that we're not really sure what these ongoing talks will bring. Madame Lagarde yesterday was really talking about no forward guidance, but scenarios. So with these ongoing talks, are we closer to the milder scenario or base scenario?
So I think the most important fact that we see is right now the oil prices reverted to pre-war levels. But the view of the market in terms of 2027 and 2028 is that it will be well above pre-war levels. So in other words, over the next couple of years, maybe because around the world energy firms, governments will want to rebuild inventory, that maybe demand for oil for restocking purposes will keep the oil price high compared to the pre-war level. So from our point of view, it's very welcome that we see this decline in the price of oil, but in terms of the overall inflation impulse, the fact that we do have maybe for a couple of years oil prices above the pre-war level, that essentially is a cost increasing impulse to the economy.
So it's very clear that the ECB wants everyone to know that the last hike was not an insurance hike. Will the next hike be an insurance hike?
So I think it's important that we are clear on our terminology, if you like. So as President Lagarde said last night, we feel that the June decision was a robust decision, that we looked at it from every angle, and even from the angle which we did anticipate of having, if you like, this more rapid decline in oil prices. Even under that kind of more rapid normalization, it made sense because of 4 months of high oil prices to raise the rate from 2 to 2.25. What I think it's important to say is as we go forward, as we evaluate the kind of pros and cons of different rate decisions, we will be, if you like, mainstreaming the concept of how does this decision look like under uncertainty. Now, for me, I would reserve the phrase insurance hike to a situation where there's a tiebreaker, that maybe you could stay where you are, maybe you could hike, and the risk considerations will push in one direction. But that was not the June decision. That was a clear decision, robust across a wide range of scenarios.
Yeah, I mean, given the wide range of scenarios and the uncertainty and the second round effects, is it better to hike in July or September?
Well, again, the way you phrase that question is maybe overly narrow. So what I would say is, before we get to the second round, I mean, for me, the second round effect is probably going to take some time. What I'm really focused on is the indirect effects. So even though now, like fuel prices are falling, what we need to look at is how the 4 months of energy cost increases percolate into food inflation and into services inflation in particular. And that channel is maybe where there's still uncertainty. And it's essentially the tension between these many firms have been absorbing higher cost increases for a number of months. Whether they can recover those cost increases by raising prices, or whether, especially in the context of now the fuel prices reversing, it's absorbed in profit margins and there's less by way of the indirect effect. And only after that can you start to have a vision of how strong the second round effects on wages might be, which would be later this year and into next year.
So you're telling me my question is too narrow because you could not hike at all?
I think, as you very well know, we're very much committed to basically going one meeting at a time, to not boxing ourselves in by kind of speculating about rate decisions, and essentially focusing on, at the time of the meeting, when we look at everything, what makes sense.
Do you have a preferred inflation gauge?
So, I mean, in the end, of course, we need to focus on headline inflation in the medium term. So in order to get to 2% headline inflation medium term, indeed, we try to emphasize this framing of underlying inflation. So what is underlying inflation? It's basically the measures which probably give us a guidance about where inflation might be a year from now. Some of those measures, like I know also in the US debate, can be exclusion type measures like trimming the inflation data. But we also quite like, and indeed the best performing measures are essentially filter measures, which kind of try to use our kind of econometrics to look at the underlying common factor. So President Lagarde last night highlighted what's called the PCCI, the permanent common component of inflation, which has moved up a little bit because of the high energy prices. And essentially, we look at a whole battery of these measures. But this phrase, underlying inflation, that's really the guide.
How do you see AI actually filtering through inflation expectations and productivity?
Right. So this is one of the big topics we're going to talk about the next day or two here at Sintra. We are seeing AI take up more and more in the European economy. Our firm surveys, our consumer surveys do see quite rapid adoption compared to previous, general purpose technologies. Now, of course, that is global, but Europe is in many ways well placed to adopt AI. So I'm optimistic. We do think it's a positive factor for productivity, for investment, but it's still early days.
Philip Lane, thank you so much for joining us today. That was, of course, the Chief Economist and member of the Executive Board of the ECB. With that, Tom, I'm going to send it back to you in London. And, of course, we'll have plenty more from Sintra, Portugal.
OK, really important conversation. Francine Lacroix on the ground for us, of course, in Portugal. Lots more guests coming up, of course, with Fran through the next few hours. And there's a lot more we're going to be updating you on as well in terms of the news flow above and beyond Sintra.
A robust hike is how you described it. Didn't seem to want to be drawn on September. Anyway, let's talk about what else you need to know this Tuesday morning. Maersk has upgraded its profit outlook for the year, helped by solid demand out of Asia. This as US retailers rush to beat President Trump's new tariffs, which are due to kick in over the next few weeks. The world's second biggest container carrier now sees global container volumes growing by around 4% this year, above its previous forecast range. China's factory and non-manufacturing activity fared better than expected in June. The official manufacturing purchasing managers index climbed 250.3 after slipping in May 250. Figures point to a rebound in economic momentum, but it may be coming too late to avoid a slowdown this quarter. And the European Union and China have set an October deadline to make progress on trade disputes as Brussels pushes to address its widening trade deficit.
Focused and constructive. My objective from the outset has been clear, to begin balancing the trade relationship between the European Union and China. The gap is widening. China's export to the EU keep rising, while our market share in China keeps shrinking.
OK, so that conversation, setting themselves, the Chinese and the Europeans, a deadline of October to move this forward. But clearly, with the trade deficit as acute as it now is, this is a key concern. The Europeans saying, Sefcovic saying this trend is not sustainable in terms of the trade deficit with China. The status quo is not an option. The question is, how do they respond?
Yeah, and pressure from Europe to China, one assumes, being applied around the domestic demand story in China. We had data out just overnight, didn't we? Which, yes, the export machine continues, but the domestic demand story is still the area of weakness from a global, from somebody from the outside of China looking in. That seems to be the area that should be focused on.
It's a massive imbalance. Trump has decided he wants to solve this via tariffs. How does the European Union deal with it? Doesn't look like it's going to go down the same route, but ultimately you do need to find a way. These things have a way of resolving themselves eventually, usually violently. You don't want to get to that point.
Let's see if they make progress. I mean, this has been a years-long debate, hasn't it, in terms of the imbalances seen in the domestic economy of China and the global ramifications of that. We're going to turn our attention to the UK after the break because the country is about to unveil its long-delayed plan to transform its ageing military using drones and AI.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Morning, how you doing? 30 minutes to go until we start trading here in Europe. Looks like it's going to be a fairly positive session. We've seen certainly a very choppy session out in Asia. Market feels very whippy. Remember, coming into quarter end, which is another factor. Funding costs remain very, very elevated for equities. Momentum struggling as the market gets whipped around. And this morning, we're going to see more of that as well. The Euro Stoxx 50 up by 0.6%.
Yes, indeed. Let's move on to the bond market story then, where we don't see quite so much activity. We do see some buying of bonds across the European space. I can see certainly at the 10-year tenor. Where we do see some activity, though, Tom, is over in Japan, where we see yields are higher. At the 10-year horizon, only 3 basis points, but out to 20-year and 30-year, you're up by 10 basis points on the Japanese bond market. And that seems to be something worth keeping an eye on, given what's going on with the yen.
It ties in exactly to the FX story, doesn't it, in Japan at 162 right now. The yen has hit its lowest level against the dollar in 40 years. 40 years, a milestone that will generate unease in Japan and put traders on high alert for authorities wading into the market. For more, let's turn to today's markets in 3 minutes on the opening trade with Paul Dobson, standing by, Bloomberg's executive editor for Asia markets. Paul, what's going on? How much concern is there? Does Japan intervene again?
Yeah, hi, good morning, Tom. It's an impressive length of time, isn't it? 1986, the last time that we were this weak for the yen against the US dollar. You're probably too young to remember Crocodile Dundee, Tom. Top Gun, Ferris Bueller's Day Off. Those sorts of films were knocking around then. It's a different time to where we are now, but the yen is resetting at those levels. And it's interesting to see whether this is going to be a concern for the authorities or not. Yes, we've passed that milestone, but actually we're not that much weaker today than we were yesterday. I think what you've heard from the Japanese authorities in terms of the scale of rhetoric they're using, they're talking about they're willing to intervene in appropriate amounts. Not red alert yet. You know, if they were talking about bold or emphatic intervention or telling you to keep your phones on, which they did last time, then we'd be more worried. But at the same time, you know, it's sort of good for the economy from the exporters' point of view, bad, of course, for importers, bad when you've got high energy prices as well. And so those are the sorts of decisions that Japanese lawmakers need to juggle and balance when they're deciding whether to intervene or to allow the currency to keep on going.
Memories of 1986. Thanks for that. Let us talk about what's going on more broadly then with the yen, because is it just the yen that's weakening? Is it actually a dollar strength story? What impact is this having on other currencies in Asia then?
You're absolutely right. And I think since we had the pivot from Kevin Walsh to a slightly more hawkish stance at the Fed, that's definitely added pressure to Asian currencies because it's been supporting the dollar. It's been lifting US yields relative to Asian yields, which are very low, and that draws cash towards the US. So we've also seen, like you said, the Korean won under pressure, for example. That's got an extra dimension, which is quite interesting because the equity market there is rallying so hard. Funds that own those companies are seeing the weight of the holdings within their portfolios hitting up against their buffers and forcing them to sell. So we've got overseas funds selling out of South Korea, and that's been adding to pressure on the won over recent days and weeks, as well as that turn of the Fed.
OK, Asia's had a pretty good quarter. Paul, what are people saying about what comes next? Can the momentum continue?
Yeah, it's the best question, Guy. There will be volatility. I think we can say that with a lot of certainty. You know, you see the Kospi bouncing up and down more than 5% intraday all the time now. Very large swings, but there's still a lot of confidence and belief in the growth story. You know, we've seen that they've announced their very large investment plans this week. That tells you that they're confident they can continue to deliver growth. It tells you that there's a strong amount of belief in the AI story. So it's the best quarter as for the Nikkei for Japan on record, the best quarter in Korea since 1998. And there's still plenty of sell-side analysts telling you that continue buying. I think JP Morgan has a particularly bullish forecast looking for further gains throughout this year.
Paul, thank you very much. Paul Dobson, Bloomberg's executive editor for Asia Markets, diving into some of the Asia themes. And I noticed that the Korean won up by just 1% today, which doesn't seem to stand out as any kind of move based on very recent history.
Well, the Korean won's been... the Korean won has oddly been...
That was the Kospi, sorry, I was referencing. Yeah.
Yeah, sorry, the Kospi. Different story. OK, let's talk about what we're seeing in the UK. The UK will seek to upgrade its ageing military kit by investing in drones and AI, alongside more traditional deterrents such as next-gen fighter jets and nuclear weapons. The plans are being laid out today by the current Prime Minister, Keir Starmer, after months of delay and a funding round that led to the resignation of his Defence Secretary. Lizzie Burden is here with more. How different is this announcement going to be than the one that we were anticipating?
Well, of course, that's the one that John Healey resigned over, and yet £1.5 billion more funding has been added since Healey quit, but we don't know whether that's actually new money or if it's just clever accounting. The big number in this is the £5 billion that's going to be spent on drones, and the new Defence Secretary Dan Jarvis is saying that that's what you need in modern warfare. But then look at what's not getting spent here. What's been ditched is, as you say, the plan for a Type 83 destroyer, the purchase of new jets to carry new nuclear weapons delayed, and then programmes to recruit new cadets and improve military housing have been decelerated. So you have to look into the detail of this. And also, what's odd is the idea that this has been pushed through by Keir Starmer before the NATO summit. Yes. It's Andy Burnham who's likely to inherit it, and he hasn't had a say about it.
Did he have a look at it? Was he involved at all? Did he get a sign off? I mean, we're still working through the speech that he made yesterday.
We are, yeah.
And so if we think about it in the context of what is on his in kind of his plate, essentially, what's top of the list for him in terms of priorities? Maybe defence is there. He didn't talk about it in any detail yesterday. What's the reaction been to that speech? And what for you were the takeaways?
Yeah, defence was not the focus. Devolution was the focus, and he did this speech up in Manchester. So talking about giving more fiscal power to the regions, also talking about building more council houses, the biggest programme for that in the post-war period, easing the cost of living when that's possible. But we've heard all of this before, haven't we, from previous prime ministers, levelling up Britain, all sorts of promises that have never fully been fulfilled. So we need to wait for how it'll be implemented. And even though this was billed as the biggest economic speech, the biggest speech to set out his economic agenda, we didn't find out who his chancellor is going to be. So a lot of frustration, actually. But I would say, just from some really great analysis that we got from Bloomberg Economics, there is a case to try and even out regional inequality in the UK. They point out that the UK is the most fiscally centralised in the G7. They're just worried. They say the main risk is that while Burnham's here talking about a 10-year mission, What have we learned from recent history? Prime ministers end up getting sucked into a shorter cycle and then having to look at more expensive giveaways in the short term.
So he hopes that number 10 in the north will do something different to the other plans. We got a hint as to the idea of not holding another election, didn't we?
Yeah, we did.
You didn't have to look too hard for it either.
Yeah, so he was talking about how Labour's 2024 manifesto is consistent with all that he outlined yesterday. I agree. I took that as a hint that a general election isn't coming. You could argue, who wants a general election at this point? Do the Conservatives really want it? Kemi Badenoch was speaking yesterday ahead of Burnham's speech. She said she's up for the fight, but really, does Burnham want it? Does Badenoch want it?
The problem, I think, with yesterday was he wants to cool London down. Hey, apparently London's overheating. It's not aside from the weather. Yeah, there doesn't appear to be.
London was really overheating last week.
Yes, precisely. There doesn't appear to be that much kind of evidence for that.
Well, he was saying though this is about devolving power everywhere, including London, and you're wondering whether so that's a message to the mayor of London, maybe get more powers rather than.
But he still wants to cool it down. Here is a part of the economy that is functioning. Which bits? The danger here is that you slow down the bits that are working. And you get a sort of duration mismatch where you don't get the bits that need to fire kind of picking up.
That was always the argument against levelling up, that you would get levelling down. But I'd agree with Anna, that was not the point that he was making, that you would also give more power to London so that it can be in charge of its own growth.
Why did he say he wants to cool down London, then?
I think it's about tackling regional inequality, guys.
OK, fine.
OK. Lizzie Burden, thank you very much indeed with the details there. The analysis, of course, coming through on the back of that speech from Burnham. And as we look ahead to the announcement of the Strategic Defence Review, finally. Meanwhile, in the defence space, European manufacturers are moving ahead with expansion plans amid unprecedented interest in their weapons.
A really steep demand for our missiles. And that has made us being aware of this, so that we have built up capacity both in Europe, also factories in US and Australia is under construction. So we are actually able to secure that we are able to deliver on the demand we see now in our order backlog, but also looking into the prospects going forward in the next few years.
That was Eirik Lie, President and CEO of Norwegian defence firm Kongsberg, speaking to Bloomberg from Brussels. There's a lot more coming up. Stay with us. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's Jobs Day, and Bloomberg has the report under surveillance.
Things have started to pick up in this economy based on the jobs number.
But there is a lot of concern about why the labor market is not keeping pace with what we're seeing right now in the AI space.
This Thursday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The unsaid thing is that we're basically at full employment.
Apparently the labor market right now, not a problem.
The June Jobs Report, Thursday on Bloomberg.
Welcome back, everybody. This is the opening trade. It's Tuesday morning, 7:44. The futures picture looks like this, pretty flat for London. Elsewhere, though, in particular the Xetra DAX, we are seeing some positivity coming through, so expect that tech theme perhaps to be to the fore. Nasdaq futures, interestingly, up by 0.2%. We're focused on Sintra. We're focused on the inflation fight that has been in the month of June. Over at the ECB.
We're going to get French data very, very shortly. I thought Philip Lane was fascinating. Yeah. He talked about it being a robust hike. That's the hike that we've just seen. He would not, though, be drawn on whether or not we get another hike in September. The market's pricing 64% as the latest kind of chance of that happening. So is he pushing it beyond that before we can see the second round effects?
He said one clear focus for him was indirect effects, and he was looking at food inflation, services inflation. He says that channel is where there is the most uncertainty, which was interesting.
I took away an acronym, PCCI, persistent and common component of inflation. There you go, that's now on my to-do list, something to put on the radar.
French inflation data hits our screens. Month on month comes through at negative 0.3. That is down sharply and well below forecast. That takes the year-on-year number to 2%, bang in line with where I suspect the ECB would like it to be, down from 2.8, for a sharp slowdown in the French inflation data. And if you look at the PPI numbers, also, maybe some stabilisation in the PPI numbers, but a sharp slowdown, certainly, in the data that we are getting out of France. Remember, we get more data today, and then we get the complete number that is going to be coming through tomorrow. This, of course, will be, in some ways, music to the ears, you could argue, of some of those ECB central bankers that are gathering in central Portugal for the meeting that is taking place there. Let's carry on our conversation and throw it back to Francine Lacroix, who is there.
Thank you so much, Guy. Well, joining us now is Olaf Slijpen, Governor of the Dutch Central Bank and, of course, Governing Council member at the European Central Bank. So, Governor, thanks so much for joining us, and congratulations. I think tomorrow is, to the day, a year since you've been in top job.
Exactly. It's going to be my first anniversary. Yeah.
And there's been a bit of roller coaster, given everything that we've seen with energy shocks.
Yeah, you can say that, indeed. And I knew that when I started the job that there would be surprises along the way, and and I was right. I didn't know exactly what was going to happen, but unfortunately we are living in a world that's characterized by quite a few shocks.
Indeed. How do you see inflation developing from now? So we have a memorandum of understanding between Iran and the US, but unclear how much the ceasefire holds, and so what happens to oil prices? Yeah, I mean, it's first of all, of course, it is good that there is a memorandum of understanding, and I truly hope that it will lead to a structural agreement between the two countries. Indeed, as a reaction to that, oil prices came down quite a lot. At the same time, we also have to acknowledge that there's still a lot of uncertainty around there. So let's see how it will develop. Obviously, energy prices coming down will have an impact on prices. At the same time, we see that
the previous rise in oil prices already has its impact on the price level.
So how worried are you about second round effects? That without, even if oil prices go down, that these second round effects are here for longer?
We have to see. You know that we always say we are data dependent. We have our next Governing Council meeting end of July. Then we will have new data again. We will look at how the situation looks like. Decline in the oil prices now, of course, is from an inflation point of view definitely good news. But yeah, it remains to be seen what is still in the pipeline.
Is there a case actually for a hike in July?
I mean, I would like to refer to President Lagarde's speech that she gave here in Central last night, where she said we're not into forward guidance, but we are into framework guidance, which means that it's important that the markets, the analysts, the people understand our reaction function. And I think markets understand the ECB's reaction function pretty well. So we look at inflation outlook, underlying inflation, and the strength of the monetary policy transmission process. And I think that's the best guidance I can give. And if people understand our framework, then I think they will also understand what we are doing.
But given the uncertainty in geopolitics, is there a case of saying, look, even if second round effects of inflation goes a little bit higher, it's just better to wait and see what happens in September for a hike?
We will see. We will see how the data looks like, and then we will take the right decision.
When you look at the economy right now, where are the main forces that you see on growth, but also jobs data?
Yeah, I think one of the things that we are seeing, and that we have been seeing a lot actually last couple of years, being confronted with these kind of shocks, is that the economy is pretty resilient. So we can weather storms. We are pretty flexible. I think another positive thing is that if you look at the situation of in particular the banks, they have buffers, they're much better shape than they were a couple of years ago, and the financial sector actually is supposed to absorb shocks, and that's what the financial sector did. Having said that, I mean, if you look at growth numbers, in particular in Europe overall, and structural growth, it's pretty low. It's not very impressive. We have to do something about it, but this is not a monetary policy job. This is a job for policymakers, for politicians.
But Governor, when can you see that hike in June? When can you see the real effects on the economy?
Yeah, as I said, in the end, it's not like one number or one little thing or big thing you're looking at. We have to look at the bigger picture. As I said, we will always look at what's going to be the outlook for inflation, what are the underlying inflation dynamics, what do we see developing there, and are our actions doing what they're supposed to do, so the monetary policy transmission process. That's really how we look at it, and on that basis we will take a decision.
The market is expecting one other hike this year. Are they right?
Some people say the market is always right. Some people say the market is always wrong. As I said before, the most important thing is that we are able to convey our reaction function. And we are not following the market, but we also don't want to surprise the market. And I think from that point of view, we are, and one shouldn't be too complacent, but I think we're doing a good job.
When you look at energy prices, where do you see, is there a part of the economy that you take particular attention to? It's, is there an inflation gauge or an inflation number that you watch more than others?
It's not one particular number that we watch, let's say, more than others. But of course, what is always interesting in this point of view is services inflation. In my own country, the Netherlands, we saw services inflation going up. There apparently is a link with jet fuel, for instance, and traveling. And of course, so far, so good. But of course, and then we are talking about second round effects. We haven't really seen them yet, but wage developments is a very important factor to look at. We know that wages are lagging. So let's see when the first trade unions will come with their demands. what they will be. So that's another thing that, at least personally, I will definitely be looking at.
Is AI undoubtedly inflationary in the short term?
Yeah, I think the jury is still out, but I think one can say that at least in the short term, AI is inflationary because of there's a lot of spending going into it, which is supporting the economy, and we see that in investments. It's probably also boosting consumer confidence to some extent, or at least avoiding it from going much lower. But of course, the productivity gains are not there yet, and the idea is that when those materialize, that indeed would be disinflationary. So let's see. But at the moment, I would say what we're seeing and the huge investments going in there, they support the economy, but indeed they are somewhat inflationary.
Governor, thank you so much for your time today.
You're welcome.
That was
Pleasure.
Olaf Slijpen, the governor of the Dutch Central Bank and ECB Governing Council member. With that, Anna, I'm going to send it back to you in London, and we'll have plenty more throughout the day here in Sintra.
Francine, thank you. Bloomberg's Francine Lacroix, of course, live at Sintra, and coverage from Sintra continues. We'll be bringing you a conversation with the Belgian Central Bank Governor, Pierre Wunsch, also speaking to Francine. That's at 8:15 a.m. That's London time, so 9:15 if you're actually in Sintra. We have European equity markets then looking a little bit positive. US futures looking a little bit positive right now. So we are expecting a little tick upwards at the start of trade. A few individual names to keep in focus. Maersk, some new guidance coming through there. Abivax, some real positives around one of their test results, and Sainsbury's also could be in focus. We had some news out of that particular grocery business. So those three stocks could be ones to watch.
Some interesting individual corporate names. We're going to watch the energy story again. Oil prices are down. Gold, interestingly, has just picked up 0.3%. It had crossed below 4,000, so watch the miners as well on that. Dollar strength is clearly a factor there for the yellow metal.
Gold's been getting crushed recently, which is fascinating to watch in terms of that whole saga that we went through in terms of...
Was it all Fed expectations then? And is that seems to be what's shifted, hasn't it, with that hawkish commentary from the Fed? We'll be back with the opening trade. Futures are pointing then a touch higher, certainly more than a touch higher over in Germany. This is Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets.
I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Okay, here we go. A couple of minutes to go until the opening trade this Tuesday morning. Europe looks like it's going to have a fairly good day. Part of that is down to what we see here. We went out here, we finished up there over in the United States. Very choppy session out in Asia. And remember, of course, we're coming into quarter end, Tom.
The tech story was back for the US, and it's been back for Asia as well. So the hyperscalers performing very well yesterday. So we'll see if there's a read across, because it was flat yesterday, to your point, across the European stock story. But ASML performed very well, and some of the other tech names as well. Right now, futures pointing up by 0.6%. You're looking at a pretty strong session over in Germany. The DAX looking to add 162 points. The FTSE 100 looking a little flat. Energy is a story there, as is miners as well. But generally, across the board, you're looking at gains of around 0.6% potentially. Anna.
Yeah, let's have a quick look at some of the stocks that are in focus this morning. And I also, thanks to Guy for correcting me, I correct the fact that I said that Sintra is an hour ahead of us. Of course, it is not. Portugal is on the same time zone as London. That important business over. Let's have a look at these individual names that we are watching. Maersk is certainly in focus, because this is a business that has been out with some new guidance for the market, so we'll keep that one in focus. Abivax is also of interest, this in the pharmaceuticals space. Abivax shares, they could be higher as a result of positive results from obefazimod and some of the testing around that one. And Sainsbury's is also a key area of focus. The overall numbers, were they a little bit lackluster, but is there something else to be said about the retail performance of the business? Those two dynamics I have seen mentioned by various houses this morning. So we'll keep those in mind then. Guy.
OK, here we go. Last session of the quarter. Let's take a look at what it's going to bring for Europe. We're expecting a positive performance out of the gate first thing this morning for Europe. Decent session out in Asia, very whippy. Decent session yesterday in the United States. OK, here we go. Let's get the Tuesday session underway. This is what we are looking at. A positive performance is expected from the get-go. London is in the green, not expected to actually be the kind of the heavy lifter of today's session, but it is up by, let's call it 0.1%. We're approaching maybe 0.2%. I'm being generous here. The Stock 600 is up by 0.3%. We are expecting European markets to do a little bit better today as we come in to the end of the quarter, but by no means have they been outperformers over the last quarter. Does that give us maybe a little bit of a better look forward when it comes to what could come next? OK, that's the picture at the moment. The AEX is up by 0.6%. It is the outperformer. Elsewhere, reasonably muted, but the Stock 600 up 0.4%, Tom.
The tech sector was amongst the best performing yesterday, the top performing sector yesterday across an otherwise flat story. Right now, tech is near the top again. So that sector performing relatively well, up 1.3%. The gains coming through for basic resources, currently up 2%. So that sector is currently top of the list. Majority of sectors, bar 4, are in positive territory so far in the opening few seconds, of course. So 4 sectors in negative territory. The biggest losses coming through for consumer products right now, down 0.7%, Anna.
Yeah, that move in basic resource stocks is quite out there, isn't it? I mean, the copper price is up 1%, but nothing else is standing out as particularly extraordinary. Aluminium actually up by 0.8%. But yeah, we're seeing some quite substantial moves on basic resources. I suppose we have seen quite a lot of volatility in gold and in silver of late, and gold is back above the 4,000 mark, I noticed this morning. But certainly keeping those in mind. But most sectors are in positive territory then. In terms of the individual movers, SAP is an interesting one. We're going to talk about software as a service a little bit later on in the programme. The other side of that tech story, though, ASML moving to the upside, up 3.5% as we continue our focus on tech this morning.
That's a lot of points.
So that's a 5% move for ASML over the last 2 days. I mean, if this holds.
So at the moment, the stock 600 is up by what, 3 points. a third of that is coming out of ASML. So the chip story is definitely back on the front foot this morning. Schneider's up quite nicely, Nokia's up, ASIA Brown Boveri's up. So there's a theme running through this market in terms of the kind of the AI build-out story that looks pretty strong.
So that's the story around technology this morning, and that is leading to some outperformance for some of the markets like the AEX, for example. Possibly the DAX too, but it's not open yet, but we will keep an eye on it. Let's speak to Fabiana Fedeli, CIO for Equities, Multi-Asset and Sustainability at M&G Investments, on set with us this Tuesday morning. Fabiana, good morning to you. So you've been saying recently that you think these are the most complex markets that we've seen in a while, and you characterise them as, you know, different assets being driven by different drivers. Where does that leave you? What does that leave you assuming as we head into the second half of the year? Can't believe we're quite there, but the second half of 2026 looms.
Yes, time has gone fast, hasn't it? So what you're seeing in markets right now is a very narrow trade on AI stocks in equities. You're seeing a trade on inflation or lack thereof on the bond side, and you're also seeing very erratic moves in stocks. I mean, we were just talking about it earlier. You're seeing stocks going up or down by, you know, percentage points within 1 or 2 days. So this is not an easy market for investors to invest in. And I'm also very concerned about the amount of leverage in this market. Those erratic moves are most likely driven by either quant strategies that are driven by news flow, or retail investors are becoming a bigger part of this market and very levered.
Yes, and is that concern around retail investor participation or leveraged retail investor participation? Is that specifically that thought triggered by what's going on in South Korea right now, or is this a global theme that you're concerned about?
I think it's a more global theme, but it's clearly concentrated in markets where there is if you want, a deeper culture of retail investment in equity markets. So in the U.S. now, about 20% of the volume, or 21% of the volume of equity markets are retail investors. Interestingly, 28% of the option volume are retail investors. So you see what their exposures are. And also in Korea, you know that many retail investors are actually exposed to the market through levered strategies. And that is creating significant erratic behavior in the stocks.
You have a modest underweight on equities then, Fabiana. Good morning. What changes and what gives you a more constructive view? What do you want to see that would change you and change that view to a more constructive view on equities, a more positive view?
So actually, we've been always very balanced between equities and duration and fixed income. And just recently, we have taken some profit out of markets such as Korea because we felt that it was very exuberant in its behavior. Do we still think there is value in equity markets? Absolutely, yes. Is the value everywhere? No. I mean, there is a whole host of stocks which are the AI losers, the stocks that have been forgotten by the AI trade, that I still think are very worthwhile investing in.
Does that take you to software stocks?
It does take me to software stocks. You know, the SaaS-mageddon, the belief that all software stocks will be replaced by AI, that, in our opinion, is not true. Some of them host data of clients. Clients are not going to go to an LLM to host precious client data or other type of data. But it also takes me to other areas of the markets. It takes me to those companies that are utilizing AI in different sectors. And I've heard some interviews that you have had with CEOs where they were actually pointing out to the productivity gains that they were getting from the AI implementation.
If the Fed raises rates, does the equity market come down?
Well, not for just one raise, and it depends also why that raise is happening. Okay. If you think about the higher for longer than we had a couple of years ago, equity markets were completely fine because they were still driven by other thematics.
So we get nominal growth, that's high.
Nominal
Fed
growth
can raise
is
rates
high.
in that kind of environment.
Yes.
Labour market looks good.
what can slow some areas of equity markets is a slowdown in demand if we continue to have elevated energy prices. I know now the trade on energy prices is to the lower side, but probably there is some speculation on the news flow around the Middle Eastern conflict. But you would expect like more investment in rebuilding the pipelines and rebuilding the facilities, and that could bring higher energy prices. If that's the case, then you might have some impact on some areas of demand.
A few months ago, this conversation would have started with gold. Need to have gold in my portfolio. If I've still got gold in my portfolio, what am I doing with it?
Well, I still believe in the structural story of gold. We talked about it in the past where we said, again, there's a lot of exuberance. There was a lot of exuberance in that gold trade. Some of it was retail driven, and then the more structural side was driven by central banks. So that exuberance had to come out of the gold trade. Structurally, gold is still an alternative to dollar for many central banks. And so I would see that part of the structural trade continue.
Fabiano, if we find these markets complex then, but we're looking for themes that we understand, are you thinking about investment themes right now? I mean, low carbon energy, sovereignty, those kinds of things, are they drivers that you can get behind?
Absolutely, follow the money. So there is going to be still significant capital expenditure in areas such as infrastructure, in areas such as energy independence and security. Think about Europe, think about Asia, what we've all learned from the conflict in the Middle East, and then innovation. Innovation applied to not only technology, but healthcare and frankly, any other sector.
Fabiano, you sat down during the break with us and you said, I'm worried about AI and jobs. What part of that story are you concerned about?
I'm worried about the news on cutting entry-level jobs. I think that is short-sighted. I mean, if you're cutting entry-level jobs, you're cutting the possibility of having senior-level jobs in the future, the senior-level jobs that are going to drive your strategy, that eventually in the future will embed AI in your operations.
So would you want to avoid companies where you see that happening?
When I see that happening indiscriminately, where I see that happening at the entry level, then yes, I would reconsider that and speak with management.
Do you think there'll be shareholder pressure on those businesses to not do that? Because I suppose there might be some shareholders who like the look of that because it might flatter margins in the short term.
I hope there will be some questioning. I mean, some jobs will be replaced by AI. We know that. But cutting entry-level jobs just because it's easy, I think that's a dangerous road.
I'm going to leave that thought for another day. I'm going to come back to it. Fabiana, thank you very much indeed. Fabiana Fazeli, CIO Equities, Multi-Asset and Sustainability at M&G Investments. The Core 6 looks like this. You're certainly seeing a pickup in ASML today. It is pushing overall markets higher. When ASML goes up by 3%, it has a big points effect into the stock 600. But defence stocks are higher as well. Let's get the latest on what we need to know. Chloe Melly here in the grocery aisle.
Good morning, Guy. Indeed, we are up for Sainsbury's. We're up a little bit stronger earlier, but now it's pared some of those gains, and we're up about 1%. And so we had earnings, we had a trading update from Sainsbury's, and the sales actually came in slightly below expectations. But what was reassuring for investors is that guidance was actually confirmed, even though that was quite a wide range. There were some potential concerns that the impact of the Iran war on shoppers might really affect that guidance. But it seems that Sainsbury's is holding firm. And so this is quite reassuring, quite encouraging from investors' perspectives. And so we are up in the green this morning. We are also in the green across tech stocks, AI-related stocks here in Europe. We had a Wall Street rally in the technology stock that spilled over into Asia. Now we can see that spilling over as well into Europe. And we are seeing quite strong moves actually there, especially Siemens Energies that provides those gas turbines that are then used in data centers. And then, of course, in the chip making sector, we've got ASML, BE Semi and ST Micro up all in the green here this morning. We're also in the green for Genmab, which is a biotech company and has had some positive trial results with its partner AbbVie, and that was a drug that is used for lymphoma. And so we're up very strongly there, about 5%. And finally, Musk is also in focus today and is also up in the green, about 1.5% after it raised its outlook. There seems to be very strong demand for that container shipping market, especially from Asia. And so we're up about 1.5% there for Musk this morning on the back of that outlook boost.
Chloe, thank you on some of the stocks on the move this morning. Chloe Melly with that update. Coming up, we are heading back to the ECB's annual forum to hear from the Belgian Central
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative. Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. It is Tuesday, 8:15 here in London, 8:15 also in Sintra, same time zone. European equity markets up by 0.5% right now on the Stoxx 600. The FTSE is underperforming. The DAX outperforms. Abivax is also in focus for us. Let us just have a quick mention of this French pharmaceutical company. Shares up by 25% right now. They were up 28%. They've had some positive results on their obefazimod. This is a treatment that they have been working on for a while. I won't read what it treats because it gets complicated, but there we are. Positive news, up by 22% on that one.
OK, what kind of medicine does the European economy need right now, the Eurozone economy? Does it need more rate hikes? We've just seen French data coming in, inflation data signalling actually a significant slowdown. So let's get back to Sintra in Portugal and Francine Lacroix.
Guy, good morning. That's $1 million question. Does the Eurozone need another hike? I'm delighted to be joined by the Belgian Central Bank Governor and ECB Governing Council member, Pierre Wunsch. Governor, thank you for joining Bloomberg early in the morning to talk interest rates and inflation. So does the Eurozone actually need another hike?
Maybe, maybe not. I mean, if you would have asked me after our June meeting, I would have said, if this conflict goes on, and oil prices stay at a high level, I probably would have told you, I believe we need another one. The market is still pricing one. But the way I would put it is, the origin of the shock being higher oil prices, to the extent you believe that there is now a truce and the prices will go down. So the origin of the shock has disappeared, more or less, before we see second-run effects. There will be some. So that makes it, I think, relatively easy. We might need another hike, but in all likelihood, and that's of course what the market is pricing, but not as much as we thought in June.
But so if the Eurozone does need another hike, is it easier or better to do it, quicker, so July rather than September?
I would rather, if we believe we need another one, move quickly. It doesn't mean July, but there is always value to it because you have more information. But if we believe that now it's going to be less pressure in the economy because oil prices go down. If you wait too long and then you have one surprise in one direction, one surprise in another one, you end up doing a hike, and then maybe you have 3 surprises on the downside. Now we know inflation is going to be above target for a number of quarters. So if we need to do another hike, if the data show that it's required, then I would not wait for too long, but I'm not committing to any specific date.
Governor, do you think that the ECB needs to see almost like a hike fully priced in to act?
If we are aligned, and the thing is, I think for the last few meetings or the market was aligned to us, or we were aligned to them with the markets, but I didn't hear colleagues saying, hey, where is the market going? So when you are in those circumstances, indeed, it makes it easier. In a way, you have always this trade-off. Do I wait for more information? Now, if the market is moving in a direction you're not comfortable with, the cost of waiting is maybe higher. If the market is moving in a direction which you feel is making sense, then of course it makes it easier to wait for more information. That's the way I would frame the discussion.
What's your most important data point that you're looking at? I know, of course, it's headline inflation, but given it's different if you're looking at Spain or France.
It's very difficult just to point at one data. I mean, over the medium term, I guess. We care a lot about wages, of course, because at the end of the day, that's really the one variable that is going to drive a lot of things. But you cannot look at only one variable in isolation. And actually, what we've been doing over the last few years is adding more data, because we have realized that our models have been calibrated. Maybe for another type of environment. Now we have more supply side shocks. So we've added many more data points outside the model, or to just inform the models. Sometimes the problem is then that you have so much information, you would want to have a heat map, maybe telling you, okay, this data moving in that direction, it's above or below what you had in the model. So you're starting to have those kinds of discussions. So over the medium-term wages, and that's one reason why I believe we should be going in the right direction. The developments on that front are really benign.
Governor, when are you expecting actually the impact of the June hike to have an impact on business and the economy?
Well, we know it unfolds over a relatively long period of time, over 1 year before it completely unfolds. We have estimates for that, but there are worse what there are worse. I mean, the impact is already starting today, or was started, and actually in a way started before our decision June meeting, because the market curves had already moved, not over very short-term durations, but for 3 months and more horizon, it had already moved.
Is there a case for the next hike to be an insurance hike that Madame Lagarde was pushing back against for what happened in June?
Yeah, the way we qualify those, the way I look at it, it's where we are having to take decisions under uncertainty. So insurance hike, what does it mean? I mean, sometimes you need, if you're not comfortable with where the market is going and you feel you need to do something, it's dependent on where you believe the world is going, and there are, the fact that a hike would be robust under all scenarios was the case this time, but we might have situations where we have to hike, and we know that if the world moves in another direction, it might be a hike too much or too little. So yes, it's a world that we have to deal with. It's an uncertain world.
And Governor, I understand, of course, your job is to look at the Eurozone and therefore its energy, but we're in this world where there's a lot of different forces from around the world. You have China, you have the competition with the US, we have Kevin Warsh for the first time here. How much will a change in Fed policy impact your thinking on the Eurozone?
Oh, well, first, we don't comment on neighbor, others' monetary policy, but it's also too early to even, the answer I typically give is what we see in the market, in one way or another is going to impact how we interpret or even how we conduct our projections, and that's the way we look at it.
So what do you see in the European economy right now that you could be worried about? Is there anything?
I'm more, in a way, is it being worried? 6 months in this world has become sort of an eternity there. We've been confronted with so many shocks. It's more like the new shock that we haven't seen coming, because essentially, if oil and gas prices are going down as priced by the market, we should be okay.
But in the longer term, you have these second round effects, which don't seem that they could be going anywhere. Or do you think they'll adjust?
I mean, on the inflation front, the second round effects, considering that oil and gas prices are going down, that wage developments are benign, we are going to have some, and that's where we're going to have to calibrate our rate path. But I'm not concerned. I mean, I think this is more than doable.
If things go the way that the market is pricing at the moment for the price of oil, and there's no hike in July, could you see the ECB not moving this year?
It's a possibility. I mean, again, I mean, if we have surprises on the downside, inflation is going down faster than we thought. If we don't see less second round effects than we have in the projection, then in a way, by definition, we're not going to hike more. I don't really have a base case at this stage. Also because, honestly, oil and gas prices could move again. I mean, it's not like the geopolitical situation is clearly at equilibrium or fixed, or whichever way you want to present it.
How do you look at AI in terms of impact on how it changes our economies, productivity, inflation, but also growth going forward in Europe?
That's probably what we don't have in the model and in the projection. I mean, we discuss a lot about AI, and if you read what the AI people, Amadei and others are telling you or telling us, they say the world is going to be completely different 3 years from now. We don't have that in the projection. Some people say it's going to be deflationary. Some people say it's going to be initially inflationary because you first have the investment and then the impact on productivity, which I guess is what we have today. But it seems to be moving extremely fast, and I think we're more in discovery mode. We don't have the tools to translate quickly what people say, given the uncertainty in our models and projections. So if something would happen, I don't exclude a positive surprise on growth. Of course, Europe is less positively impacted. We are not on the semiconductor part. We're not producing the models. But if these models lead to productivity gains in many sectors, at some point it will benefit our economy as well. And of course, if it adds, and that's what we have in the literature, say 0.5 percentage point to growth, it's a game changer in terms of fiscal policy, in terms of debt dynamics, in terms of the possibility to increase wages. It creates some room. And then you have the concern that on the labor front it could destroy some jobs, and that's what people are worried about.
Pierre Wunsch, thank you so much for joining us today. That was, of course, the Governor of the National Bank of Belgium. With that, Guy, I'm going to send it back to you in London.
Francine, thank you very much indeed. Francine Lacroix in Portugal, covering the ECB conference. We're going to continue with that conference throughout the day. Torsten's going to be with us a little bit later on. Follows Torsten Slok. We've also got the Bank of Finland Governor. Olli Rehn is going to be there too. Got some great guests lined up coming out of Sintra.
We're still hearing all of these voices from the European Central Bank giving themselves optionality, but talking around the risks of second-round effects, and certainly the Belgian Central Bank governor there not closing the door on another hike, and of course that is what's priced by the markets right now, another 25 basis points.
Is Sintra all about different versions of just being data dependent? The Europeans have more maybe words to go around that with scenarios, and then the Americans in the shape of Kevin Walsh. What will he say if he doesn't want to say too much?
Well, does he sit there and just say nothing? How does Walsh say nothing and still be on a panel? I'm waiting. I'm waiting to see how this one works.
How does the moderator cope with that?
Yeah, there's the panel, and then there's the being a fly on the wall. Any of those conversations with his counterparts would be fascinating as they try and size him up.
Yep. Okay.
Coming up, we were hearing there about one of the central bank governors talking about potentially AI for added 0.5% to growth. That would be a game changer. Well, fears about software will be left in the dust as investors pile into the companies that seem benefiting from the AI build-out. That's not necessarily the view held by everyone. We're going to speak exclusively to the CEO and co-founder of Atlassian. That's coming up. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
This is the opening trade. We're 30 minutes into today's session. A positive handover then from Asia and the US, setting the euro up for 0.6% is a gain across the benchmark. A strong session over in Germany. The DAX adding right now 220 points. Tech is playing its part as well in the European equity story today. 0.4% gain is what you're seeing over in France. The CAC currently adding 33 points. Here in the UK, a bit of a laggard by comparison. FTSE 100 up just 0.2%. Guy.
OK, let's talk about what the internals look like. 3-2 basically is the story in terms of what we're seeing up and down. I appreciate my maths is a little bit off. Volume's a little bit light, but not much. Let's talk about where we're seeing some gains this morning and where we're seeing some of the losers. Abivax is certainly a standout story. More reassuring data coming through with its new bowel treatment. The market likes what it is hearing. It is a reassuring narrative that is coming through, and the market is rewarding that with a 26% gain. We're getting quite significant volatility at the single stock level right now. The AI trade is back on. Nokia is up by 4.5. ASML is up by 3.3. You get ASML moving by 3%. You're going to see a big points performance coming through at the top line on the stock 600. Downside, you've got a few notes out this morning that I think are moving things around. Logitech is certainly one of those. You've got Teleperformance. I think you've got Caring as well. All on the move this morning. Let me show you those losers and show you what is happening. Logitech is down by 4.22. We've got an unchanged right in the middle, so I'm going to move straight on to Caring, and it is down by 2.96%. Anna, what do we need to know?
Let's get an update then on some of the other stories we're following this morning, Guy. Iran is insisting that it plans to retain some sort of control over traffic through the Strait of Hormuz. It raises the stakes ahead of talks, which the US says will take place in Doha today. US Secretary of State Marco Rubio has said any tolls or fees for ships passing through the strait would be unacceptable. The yen slid to its weakest level against the dollar since 1986, a milestone that is generating unease in Japan and putting traders on high alert for authorities wading into the market. Finance Minister Satsuki Katayama says Japan will respond to developments in foreign exchange appropriately at any time. And French inflation has slowed for the first time since the Iran war broke out as energy costs have fallen. The data alleviates some pressure on the European Central Bank to keep raising interest rates as they discuss the policy outlook at their conference currently taking place, as we know, in Sintra.
OK, meanwhile, global equities are on track for their best quarter in almost 6 years, driven by optimism, of course, around the AI build-out. But when it comes to the software industry. Valuations have been under severe pressure as investors worry about the sector's future. Joining us now for an exclusive conversation is Mike Cannon-Brookes, co-founder and CEO of Atlassian. Mike, great to have you on set with us. Thanks for coming in. What are investors misunderstanding about the AI impact on software as a service, on enterprise software?
Sure. Thank you all for having me. Look, I think software companies in general are putting up great results and continuing to be so. You can see last quarter, we had north of 1.8 billion in revenue, grew over 30%, with RPO, so our long-term revenue growing at north of 40%. So as a business at scale, continuing to grow fast, I think you'd have to say that our current results over the last few quarters have been very strong. So investors presumably are looking forward and saying, but what is the long-term future of the business, right? Very biased position, but I completely disagree with the narrative. Our demand has never been higher at the moment. Having spent all week with customers here and across Europe, they're incredibly bullish on our future, and they continue to consume far more of our applications as their teams and businesses get more complicated. Okay, so the earnings story is there. You're seeing that demand, and yet I'm looking at the likes of Microsoft set for potentially its worst month in since about 2000. That stock is down about 20% this month. Your stock is down about 60% in the last 12 months. Is it the economic model and the pay for seat model? Is it a question mark for investors about whether or not you can sustain margins? It's been software as a service has been very rich on margins historically, but that's now being challenged. How can you convince, are the margins going to remain as robust as they have been historically? I believe so. There's obviously a concern that the cost of delivering great AI applications, the intelligence underneath will continue to rise, so our cost of goods sold will get more complicated, margin will compress. We haven't seen that so far. We don't see that in our future. We've done a very good job of delivering amazing AI solutions to our customers. We have tens of millions of people that use our AI tools every single week, and we're still maintaining our margins where they are, and I believe it will only get better as you go forward, actually, as the...
margins will expand from here?
I think margins will continue to be strong. It's up to us to manage that, but we can certainly deploy a lot of great AI technologies. The cost of managing AI is changing every quarter, but I don't think that's an unmanageable problem. At the same time, you have questions about, are seat counts going to remain strong? Are businesses going to continue to grow? Again, I'm incredibly bullish that AI will actually grow the total number of white-collar workers, the creativity, the outcomes that have continued to be shown. I don't see a lot of people sitting around saying, thanks to AI, I'm only working less hours in every day. I have less need for my team, etc.
Is the market just lacking nuance at the moment? It seems we've got this kind of big bucket of software companies, and we're just kind of leaving it as a big bucket, and we're treating everything in that bucket as the same. Is that do we go through a process at every kind of major pivot point? You kind of see this happening. The market finds it difficult to target winners and losers. How long do you think that phase lasts for?
Look, I couldn't tell you how long it's going to last for, but I think it's totally true. I think you see the entire sort of sector trading as one, despite there being, I would argue, pretty significant differences between different software companies in terms of how they are taking on AI. It's an amazingly powerful technology transformation that we're going through, and every software company is challenged to take this new intelligence, this new electricity, if you want to call it, and how they deploy it to their customers to help them solve the problems that presumably they were solving beforehand in new and innovative ways. Some are going to do that very well. I think we've shown amazing results in all of our AI statistics, and some are probably going to struggle with that. But it'll take time to differentiate the winners from the losers.
More white-collar workers. You just said that. That's not what we're seeing at the moment. Why do you think that's going to be the case? Like if you are a 22-year-old kid at the moment and you're looking for a white-collar job, they're quite hard to come by.
I think you're seeing the existing ways of working changing really rapidly as we see any major technological change. The creativity, the unleashing of potential that comes with AI in terms of doing white-collar work, the ability to process information in new and innovative ways is only going to lead to many more jobs, right? If you look at it in terms of how we think about the world, we enable our customers to manage teams, to collaborate, to run workflows across their organizations. We can do that in ways that we never could have beforehand, which will unleash a lot of possibility for them to make their businesses more competitive.
Good morning, Mike. So does that, I mean, I thought that you had also, just like some other companies, been cutting jobs not that long ago. There is no connection with AI there then when you cut jobs?
Not in the way that people point out. We continue to try to adapt our skill mix, right? We are doing very well in the AI area in terms of our investments and very well in enterprise sales as we grow continually in the enterprise. We're now north of 600 customers of over $1 million a year in revenue. And so we needed to adjust our skill mix to having more people in those areas for sure. You could argue that's driven by the AI transformation. It's partly true, but it's not in the way that people sort of apply this very simple lack of nuanced view of what AI is doing in terms of affecting jobs.
And so, I mean, in terms of what, are we just going to see more churn in labour markets? And it's not for you to sort of speak to the whole labour market story, I suppose, but given that you say there's going to be more white-collar jobs, and that's not an argument that we hear from a lot of people, is there just going to be a lot of churn, but in the end, higher numbers?
I think you will see some amount of churn. Again, we've seen increasing job figures, like if you look at software development jobs around the world, if you look at product management jobs, design jobs, there's quite a lot of robustness and strength in those job numbers.
So even in software development, which is sort of
Absolutely.
the epicentre of where you think you can take headcount out if you're so minded to?
I mean, I might argue it's not the epicenter of where you would take headcount out if you were looking for, if you were so minded to. But certainly if you look at the US figures, right, those the job openings in those areas are very, very strong over the last quarter or two. AI makes certain things far cheaper to do, but that also means you can do far more of that. And you still require quite a lot of smarts to power it, right? I think it depends on whether you think of AI as mechanistic or like an instrument that you have to learn to play, and does it make a great software developer even greater? I would argue it does.
Mike, in the conversation about margins earlier, you talked about the cost of AI. Where are we in that story? Are you model agnostic? Are you looking to more open source models? Frontier is becoming too costly. How do you think that dynamic changes? Do you think you adopt more open source? Do you think that becomes more of a trend to try and drive down costs of AI?
Great question. Look, we are, I wouldn't say we're model agnostic. We have great relationships with all of the large foundation labs. It is our job, I would say, to deliver outcomes for our customers. And so as we're delivering those outcomes from customers, often in the early times, the foundation model is the easiest way to achieve that. Once you understand what it is the customer's trying to achieve at some scale, you can go look at managing your costs, as we always have done with storage, with compute, with anything else. So we blend models. We run about 75 different models in production now to tens of millions of people. But it's our job to deliver the outcome, right? They want an answer, they want quality, they want speed. We constantly are blending models in different ways to give them the best answer that they can within their customer parameters. So some customers will have very strict parameters about what models they're allowed to use. And it's up to us to do that and to deliver that value to them.
Just what we're hearing from a lot of companies, though, is that we started off using a lot of tokens, and now we're being more careful in the tokens that we're using. Is that fair to describe what you're seeing as well?
Absolutely, yes. More tokens doesn't mean a better result. I think we go through different phases, right? So if you think about the talent problem here, we have to encourage people to use AI. They have to see value in that. That is most trivially measured as the number of tokens they use.
Yeah.
And then we run into this problem of, well, these tokens are really expensive, so use less tokens. Neither of those is correct, right? It's about what answers are you getting for the amount of tokens you're using, the amount of spend you're giving. If you think of it as economics. We have the best knowledge graph in the world of enterprise SaaS. It's one of the things that we're doing really well at the moment. It's a very strong story for our customers. The more context you give to any model, the better answers you'll get, the higher quality of answer or the faster answer or a far cheaper answer. So we continue to demonstrate to our customers how we can reduce their token costs while giving themselves better answers. And this is the optimization that we're just going to see in technology continuing, as it's our job to help them get the best answer in the quickest time for the least amount of money across all of the knowledge they have in their organization.
Can I ask you about AI agents and what that does to the workforce, Mike? Because so we talked about the white-collar workers and managing those and what you think the dynamics will be there. But you also talk about how enterprises are really changing because AI agents are entering the workforce. What does it mean to manage AI agents? Give us some insight into how it changes the thinking about the talent pool and the resources that you have at hand.
Look, you have lots of different types of AI agents, right? I think the ones we're seeing the most at the moment are in two different categories. First is what I would call personal agents. So things that let somebody do their job far better than they could have ever done it beforehand, right? So an individual managing a small team of agents, if you like, that enable them to do their existing job at a far higher quality or with more speed, more output. often doing things twice so they can check that it happens. So there's a personal agent category. And then you see a lot of agents in sort of automated workflows where they're helping move work around or along an organization. They tend to be pretty different. In both cases, you're getting hopefully a better quality outcome, and you're enabling the human beings to do their job at a higher level of creativity or output, focus often on less of the boring things they don't enjoy about the job. And one of our parts of our mission as a company is to help that human-AI collaboration. Like, we don't believe in the story that AI is just going to do the job for you. I think it's going to help you to do that job. It's going to drive you in certain directions. It's going to help you get towards the destination. And we focus very much on how we help the human and AI collaboration to happen to enable the team of people to be more successful.
Mike, very briefly, before we let you go, there's an argument that teams across enterprise and smaller companies can just vibe code their software. Do you think vibe coding is reaching a ceiling, or is there a ceiling to vibe coding?
I think vibe coding is enabling the creation of technology to be at a far greater rate, which is wonderful. Technology comes in lots of different places, though, right? I'm not going to vibe code my core application set. I'm going to use a lot of that with highly skilled engineers to enable me to be more productive in building out those core applications. That said, I have lots of people in finance and HR, for example, who are vibe coding solutions to the problems they have. They are technically writing software, but it's software to help them do their job, run a more complex financial model than they could have done in Excel or something. There's a great solution set there. I'm not sure I would call those people software engineers per se. They're not getting woken up at 2 a.m. when something's down by a pager. But it does increase the breadth. It's what we're seeing with it. The amount of technology being created is going up at a massive rate.
You're still using pages?
We're not still using technical pages. No. We still think of them as pages, but
maybe
it's a mobile phone they have nowadays.
Maybe you just wake the AI agents now at 2 a.m. I feel
That's
like
right.
they might be a lot more understanding. That's the kind of resilience your system needs.
They might help you do a little bit of that job, but again, in terms of collaboration, if they can solve the problem, it's probably pretty trivial. And then they don't wake people up for the trivial ones. That's great.
Okay, Mike, I'm just reaching for my pager. Thank you very much indeed. Really great to get you in the studio and for your insights. Mike Cannon-Brookes, of course, Atlassian co-founder and CEO.
Coming up, Iran is doubling down on its plans to control shipping through the Strait of Hormuz. What does this mean for peace talks and the future of this critical waterway? We will discuss that next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
The meeting in Doha is going to be perhaps important, perhaps not. We're going to find out. But we're winning militarily. It's almost won militarily, I would say. And it's really very simple. It's the denuclearization of Iran.
President Trump speaking in the Oval Office just yesterday, talking about the conversations that will take place in Doha then. Those comments come amid confusion over the next round of US-Iran talks, with conflicting messages over whether negotiations will actually take place in Doha today or who will talk to whom. Iran has reiterated its determination to maintain control over maritime traffic moving through the Strait of Hormuz. For more, let's bring in Bloomberg's Brendan Murray, who leads our global trade coverage. And we've got a number of trade themes to work through with you this morning, Brendan. But let's start with the impact of the war in the Middle East and how things are in the Strait. We see constant reference from Iran to their wanting to impose some sort of tariffs after the 60 days are over. But how do things stand at the moment? Are things moving through?
Yeah, exactly. So President Trump, believes that militarily that the U.S. has been victorious against Iran, but economically Iran is still clinging to this idea that it can control shipping flows through the Strait of Hormuz, and we've seen over the past week that they can fire some projectiles at ships and cause traffic to shut down. And so we are seeing oil tankers starting to flow through again over the past couple of days. But if Iran can control this idea that it has a say over the amount of supplies that get in and out of the Persian Gulf, then we're in for a longer-term sort of cloud over the economic implications of the region. And we've seen some container ships come out recently, but they're much more reluctant. And so there is just a general sort of a cloud of uncertainty that we don't know how this is going to play out and get back to normal anytime soon.
Who's reluctant? Is it the ship captains? Is it the ship owners? Is it their insurers?
Well, it would ultimately come down to their insurers and whether they can cover the potential damage that they would be exposing themselves to. Obviously, the shipping companies are concerned about their crews and the multi hundreds of millions of dollars sometimes that are on board. So it will that calculus is playing out on every single vessel, and of course it depends on, do you have U.S. Navy escorting you. So there are a lot of variables here, and none of them are lining up yet to suggest that we're going to see normal flows through the Strait anytime soon.
Brendan, thank you very much indeed. Brendan Murray with the trade flow story, of course, and the continued tensions around the Strait of Hormuz. Those talks expected, of course, in Doha later today between the U.S. and Iran. Let's look at So what else we are thinking about today? Those talks then, as I've mentioned, in focus. We'll bring you any lines as they cross. Meanwhile, the UK's defence investment plan will be announced at 10 a.m. UK time. We're going to get Italian June CPI inflation and Germany's June CPI later at 1 p.m. and at 3 p.m. US consumer confidence. And on the labour market, the JOLTS data, so the job openings data. And on the earnings story, we're going to get in numbers and an update from Nike with a touch there on the US and global consumer.
OK, what's going on in the markets? Scarlett's here to tell us. Quarter end, which is quite interesting. And you've got technology stocks on the move once again. What are you watching this morning?
Yeah, I mean, I think maybe the most interesting thing is the move in dollar yen, actually, because we've broken that kind of
multi-decade high in dollar yen. And I really think it can go higher, particularly in the next couple of days, because when you think about what the incentives are from the monetary authority's perspective, it's you don't have an unlimited amount of foreign FX to sell, right? So you want to get bang for your buck, and you know there's a couple of event risks in the next few days, including Warsh's speaking tomorrow. You have non-farm payrolls on Thursday that are expected to be quite strong, and those could be quite dollar bullish. And so you don't want to have to come in multiple times to defend that line. You want kind of one big move that hopefully squeezes short sellers. So I'd rather wait till Friday when it's a U.S. holiday and there's thinner liquidity.
What else do you make from what we're going to play some Philip Lane sound shortly, but before we get to that, as we think about how other central bankers size up Walsh, and particularly the Supreme Court ruling, is Fed independence now assured? Is that story now behind us? And what does that do to the dollar going forward?
Yeah, I mean, it's completely in the rearview mirror is what I would say in terms of you didn't get a big reaction whatsoever to Lisa Cook. The market's telling you that we're not worried about inflation in the long term, and perhaps in a concerning way in terms of you have break-evens so low further out, or even 2 years, 10-year break-evens. They're at levels that are quite low even for the inflation that we've had in the past 2 years. And the market's telling you that we're going to get hikes this year, that they believe in the inflation-fighting credibility of the Fed, particularly with Warsh at the helm, because that yield rise has been driven by reals rather than inflation. So the idea being that you get curve flattening with the front end rising as you hike, that weighs on growth and inflation at the long end. And that's very much the messaging you're getting across markets, especially too from debasement trades like gold, like Bitcoin.
As Tom suggested, we've been hearing a lot from Sintra, so let's get to recap a little bit of what we heard there. We've been hearing from the ECB in many guises this morning, but the chief economist Philip Lane spoke to us earlier and he shared his outlook on inflation.
I mean, for me, the second round effect is probably going to take some time. What I'm really focused on is the indirect effects. So even though now, like fuel prices are falling, what we need to look at is how the 4 months of energy cost increases percolate into food inflation and into services inflation in particular. And that channel is maybe where there's still uncertainty.
Skylar, we've been hearing a lot from Sintra. Is anything moving the dial? I mean, one of the conversations going into this is, was it one and done from the ECB? And if so, was that the right move? Maybe that's a bit too backward looking. I should be looking forward. What's catching your eye out of Sintra?
Yeah, I mean, I think the bias from policymakers is to go with this idea that we still have quite a lot of uncertainty around Hormuz opening, how that feeds into actual flows. But what we've seen is that commodity prices are much lower now than they were a month ago. And so I'm looking for that commentary. You know, are we recognizing that? I think particularly for the ECB, Lagarde shifted more that way. And you have very sticky pricing for the ECB in terms of one more hike expected this year. And so I think, you know, if the bias is to not move against that, particularly from a policy perspective for the speakers that you're getting, then you need to be watching the data. And inflation data is already coming in lower because gasoline prices are coming down. And we'll watch the headline print for Europe tomorrow, but that's what I'll be watching, data rather than speakers.
Skylar, thank you very much indeed. Skylar Montgomery-Koning from our Markets Live team as we continue to keep across what's happening, of course, in Sintra in Portugal. Walsh there tomorrow, as Skylar was saying. Let's switch focus right now to the upsets coming through from the World Cup, arguably the biggest beast to fall. And this is pretty historic for Germany. Yeah. Of course, losing to Paraguay on penalties. This is the first time in World Cup history that Germany has lost on penalties out in the last 32.
I always get nervous when Germany's involved in a penalty shootout. I have sort of history.
PTSD.
We all have, yes, with that. So it's a holiday in Paraguay today. They've called it a national holiday because of the fact that they beat Germany on penalties. Yeah. But the Netherlands is out as well. Japan got knocked out.
Yes, although at least Japan was spared the penalties. I don't know if that's good or bad. Very late goal. Maybe that feels unfair. Maybe they would have liked the extra time. They didn't get a chance.
All the goals are coming at the end of the games. So you've got to stay up to the end of the game to get the kind of the action.
France plays today, don't they? Which,
we're playing tomorrow at 5 o'clock.
Very late. And the England game is much earlier, so that's excellent news for us. Very selfishly.
Yes, 5 p.m?
Yeah, I think it's 5 o'clock, yeah.
Democratic Republic of Congo.
Yes.
Versus England.
Yes.
Please don't get to penalties on that one.
No, we're not sure we've got it in us. We're not strong enough. Right, 8:56 here in London. That is it for the opening trade. The Pulse is up next. Lots of
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets.
I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here at the ECB Forum on Central Banking in Sintra, and these are your top stories. Christine Lagarde says the ECB is becoming more resilient to economic shocks, while Philip Lane, its chief economist, tells us the central bank will not lock itself into a path for rates. As central bankers gather in Sintra, inflation concerns remain over the Iran war, with the top official from Tehran saying the country wants to retain control over the Strait of Hormuz. Plus, we speak to Jim O'Neill, former UK government minister, on his role as advisor to Andy Burnham, the man set to become the next prime minister. Now, first thing is first, we check the markets, as always, and we're seeing a little bit of a reprieve. Certainly when you look at the things that we're watching out for, U.S. stocks set to finish the best quarter in 6 years. Now, global stocks seem to have shrugged off any kind of concern about this armed conflict in the Middle East and the biggest oil supply shock on record. They're rallying back to this war-driven lows reached towards the end of March. I'm looking at Brent crude 72.51, NASDAQ futures gaining 0.2%. Now, after gaining some 14% since April off the back of this historic rally in chips, if you look at futures, they're still rising, and I think there's also a similar gain on the S&P 500 futures. Now, monetary policy and discussions on reviving the European economy, of course, are set to dominate the agenda here in Sintra. We repeatedly heard business and policy leaders talk about two realities. One is the AI revolution, with U.S. stocks heading for their best quarter since the pandemic. The other, the supply shock from the Iran war and increased trade tensions. Well, opening the forum last night here in Sintra, Christine Lagarde, the ECB president, said the region, the Eurozone, has become much more resilient to a range of economic challenges.
The euro area has also weathered the largest US tariff increase in almost a century, as well as what the International Energy Agency has called the largest oil supply disruption in history. That didn't go without a significant cost. It has been substantial, but the economy has not been derailed.
Well, a little earlier, I also spoke to Philip Lane, the ECB's chief economist, and he told me knock-on effects from higher energy prices will actually take a while to show up. He also says policymakers won't lock themselves into a path for interest rates.
I mean, for me, the second round effect is probably going to take some time. What I'm really focused on is the indirect effects. So even though now, like, fuel prices are falling, what we need to look at is how the 4 months of energy cost increases percolate into food inflation and into services inflation in particular. And that channel is maybe where there's still uncertainty.
Well, we're now joined by Torsten Slok, chief economist at Apollo. Torsten, thank you so much for joining us.
Thank you.
Look, it's very clear the ECB keep on repeating they're data dependent. It's meeting by meeting. What are you expecting from them this year?
Well, the key issue also to what Philip Lane just said, and of course also what Lagarde said yesterday evening, is that now, of course, oil prices have actually come down quite substantially from even when they had their last meeting. And this is, of course, changing the outlook a bit, because this was a very important reason why they did do the hike at the last meeting. So the ECB, of course, is now looking at a situation where what they will pencil in terms of energy prices is probably quite different from what they looked at when they put together the forecast before the last meeting. So a very important backdrop is that energy prices coming down has changed the outlook quite substantially.
Yeah, so do you think, but actually you still have these second round effects. I know Philip Lane was saying, look, we're not exactly sure until when they last or how long they last, but do you think the ECB is now done with hikes?
So I do think that they will probably still think about hiking rates in September, and I still think that there is a highest likelihood that they will hike in September, because it is indeed the risk that the second round effects or the second order effects coming from companies that now are adjusting to the higher energy prices that they saw in the spring, that now they are going to be implemented, and that of course runs the risk that core inflation could be under some upward pressure.
But Torsten, why wait? Why not do it in July and then see?
Well, I think that she also made at the dinner yesterday evening here a big deal out of exactly saying that this was not an insurance hike. This was indeed a real hike, trying to keep inflation under control, try to limit inflation expectations, and implicitly also try to limit wage expectations. So that's why I think that they are proceeding very, very cautiously here by saying we don't quite know what the second order effect would be, and therefore let's just take one step at a time, and therefore one meeting at a time.
Look, the star of the show is really Kevin Warsh, because this is the first time that we get to meet him. It's his first travel abroad since being appointed as chair of the Fed. What are you expecting from him?
Well, the interesting thing about his last press conference is this was actually much the same as what we just heard from Philip Lane and Christine Lagarde, because he's also saying we don't know exactly how the shocks, especially from energy prices, is going to play out. So for that reason, I think he's going to proceed also very cautiously. Markets are pricing that the Fed will be hiking rates in September. But at this point, if energy prices are now coming down very substantially, which they are and may continue to come down, then of course that will also change the calculation for them in terms of how worried should they be. So at this meeting, of course, he is going to talk at the panel tomorrow afternoon. It will be very interesting to see, especially now he's on the stage together with Christine Lagarde, how he talks about monetary policy in the US relative to Europe, and especially this issue about what is his communication. He has clearly said he does not want to give forward guidance. The ECB is still cautiously giving some forward guidance, but at the same time not providing much guidance in terms of exactly how they will think about the second order effects, because it could be that the second order effects are going to be small or big, and they will act correspondingly. So in that sense, it's consistent what Kevin Warsh is saying, and also what Lagarde and Philip Lane have been saying.
Are market participants still trying to figure out whether he's really a Trump man and a yes man?
Yeah, I think he very clearly told us at the last press conference that he is certainly a man that is going to stick to the Fed's mandate. And the Fed's number one mandate, of course, is price stability. That's also a secondary mandate, of course, of full employment. But he clearly said that his priority was we need to get inflation down. We need to fix it. Inflation in the U.S. has been above the 2% target for 5 years in a row. And he clearly was committed to keeping inflation at 2% or keeping price stability in the U.S., which was and continues to be the main target of the Federal Reserve.
Torsten, I'm a big fan of your research also, because you go back, to historical charts that we hadn't thought about to kind of give us an explanation of what's happening now. How do you look at energy? Because it's unclear to me why we're expecting such a big fall when you have a memorandum of understanding, but actually militarily you don't really know what happens next.
That's true, and that's also why the news today, of course, also is now bringing back to the table that maybe energy prices are coming down, but of course there is a risk that if we suddenly have another closure of the Strait of Hormuz, that then energy prices, of course, could begin to go up again. But it's very clear the market has made up its mind here and said said, this is going to be a situation where this will all be fading more and more into the background. That's why energy prices have been coming down. So for that reason, it must also be the case for both the ECB and the Fed that they begin now to plan with the view that energy prices are probably on the other side of the big hump that we have seen here for the last several months.
So how quickly are we, or how close are we to a possible cut from both the ECB and the Fed?
Yeah, so now that also becomes a function of the general economic backdrop. And of course, in the US, we have an AI spending boom, which is very strong. We also have the One Big Beautiful Bill, which is also contributing significantly to GDP growth. Those forces of growth are not really sensitive to interest rates. That's very different from in Europe. In Europe, we have that there are some other forces that are sensitive to interest rates, namely the auto sector and the housing sector. And that's also the case in the US. But in Europe, we have more defense spending. We're also spending on energy transition or renewable energy. So in some sense, the outlook is actually quite strong, both for the US and Europe. And that's, of course, why you begin to ask, well, why should the Fed and ECB then cut interest rates if we still have strong tailwinds to growth overall? So the bottom line is we still expect that interest rates will be higher for longer. And we still therefore expect that both the US economic outlook will continue to be good and the European economic outlook also in particular helped by spending on long duration assets such as defense and also energy transition, which require long-term financing and are very important reasons why the US outlook and European outlooks continue to look well, because we have these tailwinds at the moment.
Torsten, I mean, tomorrow we also hear from Governor Bailey, of course, on the panel. This is a tricky time for the UK, given everything that's going on with the Premiership. We expect Andy Burnham to become the next Prime Minister. How do you look at how tricky it is currently, given not only market pressure, but actually what the government is doing to set monetary policy for the UK?
And I think also for the UK and the Bank of England, this is also a situation of wait and see. In some sense, the Wash is saying wait and see for how big is the AI boom, what's going on with inflation. The ECB is saying wait and see because how big are the second round effects. And the Bank of England is also seeing, well, let's wait and see because we now need to understand what are the implications of the political changes that we're seeing in the UK. If we, of course, get a political change that's going to have fiscal policy in a different place, well, then the Bank of England also needs to think about how do they want to calibrate policy in response to that backdrop.
Can the AI boom in the US be infinite? I know you were also looking at, you had a great chart looking at margins, that companies outside AI couldn't grow their margins that much in the US.
Yeah, and this has become a very important part of the conversation about the sustainability of the US economic outlook that we had. At the moment, US GDP growth is normally 2%. About 1 percentage point in the US comes from the AI spending boom. So the AI spending boom is a very important reason why the US is doing so well. So that's why this discussion around token optimization, model routing, and what are the costs of using AI for companies has suddenly become very important, because now the question, of course, becomes, well, what are going to be the revenues and where the revenue is going to come from, who will pay the bills, and if you at the same time have Chinese models that are coming in at a much lower cost, in some cases 50 times less than the cost of US models, then this raises questions about do you want to upload your stuff into Chinese models relative to US models. So there's a lot of things that are still uncertain, but at the end of the day, let's just agree that the demand for compute is, in my view, basically unlimited. So that's why we do need to build the data center capacity, we do need to build the computing power that's required for the future in AI. But the question is, are the implicit earning assumptions in the AI companies, are they going to be met, or is it going to come slower? In other words, the revenue is coming slower relative to what's priced into markets at the moment. So we may have a bumpy road ahead when it comes to AI valuations, but there can be no doubt about it that AI will be a revolutionary technology, not only for the US economy, but also ultimately for the European economy.
But Torsten, how do you look at that? Because actually we're also hearing a lot of chief executives saying, look, my staff are spending so much money at the moment on digital tokens that I'll have to put a stop to it. When does that come, and is that when we could see a reversal of some of these stocks and valuations?
That's exactly right. The conversations at the moment are a lot around this issue of how much money are we spending on tokens, because before the models did not require payments for individual tokens, but now suddenly here starting in April, several of the models are now saying, well, now you need to pay for tokens. So that's why companies are beginning to realize that the spending on tokens has been very, very high. The good news is that token prices are coming down, so that's of course helping, but at the same time this also begins to raise questions around, well, what is then the revenue source if companies are no longer paying for tokens to the degree that they were before? So these are exactly the discussion points around this issue of what is the trajectory of AI. The number one premise is AI will absolutely, again, revolutionize so many different things for households, for businesses, in so many different ways. But the key question becomes, are the market prices in terms
Right.
of assumptions about what's assumed about earnings for AI companies. Will it come as quickly, or is there maybe a scenario where it might actually be coming slower? And that will then begin to raise questions about not AI as an asset class as such, but really about individual parts of the AI spectrum, namely who are then the winners, who are the losers, if the revenues end up coming a bit slower, as per the discussion about tokens at the moment.
But Torsten, if you have a big market correction, you can also feel it in the U.S. consumer.
Very importantly, because a key driver of the consumption at the moment in the US is the high-end consumer, and the top 20% of incomes in the US, they account for 40% of consumer spending. So that means that given stock prices have gone up, home prices have gone up, and also the cash flows you get in fixed income when interest rates are higher for longer has also been the best it's been in decades. So high-income households are making money not only on equities and on home prices, but they're also making money on their cash flows in private credit, public credit, fixed income. So for that reason, high-income households have done really well and continue to do really well. So that's why if the stock market were to see some correction, as we're seeing in the Magnificent Seven at the moment, then we would potentially see some problems for the U.S. consumer. That's why, to your point, Francine, earlier, that the S&P 493, meaning outside of the Magnificent Seven, it's really important we see profit margins go up. It's really important we see earnings growth continue to go up, because then that could hand over the baton coming from the Magnificent Seven to the S&P 493. And that's what's very important for the economic outlook in the U.S., namely we need to see AI spread so that it's not only a part of the AI and tech sector, but it's also a very important part of the broader economy.
Torsten, thank you so much, as always, for joining us. That was Torsten Slok, the chief economist at Apollo. Now, coming up, Andy Burnham, likely to be the UK's next prime minister, makes big policy promises, but says he'll stick to the fiscal rules. Well, we'll talk to one of the most senior economic advisors of Mr. Burnham. That's Jim O'Neill. He's coming up next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I am going to do things differently. I am going to break with the more of the same approach that has got us here. I am going to give Britain the circuit breaker it needs. By building a more collaborative politics in Westminster, by taking power out of the centre and putting it in the hands of the people and places who can use it best.
Well, that's, of course, Andy Burnham, the man who wants to be the UK's next Prime Minister. He's pledged to devolve fiscal powers away from Westminster and the big house-building programme while adhering to the current fiscal rules. Well, Jim O'Neill is a former chairman of Goldman Sachs Asset Management. He worked alongside Andy Burnham at the government's Northern Powerhouse Economic Initiative and is now one of his key economic advisors. And I am delighted to be joined by Jim O'Neill. Jim, thank you so much, as ever, for joining us. What are some of the things that Andy Burnham is thinking right now? I know there's a lot of policy to get through. What do you think will be his biggest challenge in getting things done when he gets to number 10?
I can't resist in saying, Fran, looking at where you are, one of the things he might be thinking, if you're watching this like me, is he wishes he was there. It looks like you're in some very exotic location. Anyhow, listen, what Andy unveiled just today is a sort of dream for people like me and those who were on the Cities Growth Commission I led in 2013-14, probably for the likes of Michael Heseltine, Greg Clark, George Osborne, of course. This should be thought about as almost constitutional economic devolution. I emphasise that seeing a lot of people making reference to the devolution in Scotland and Wales and their economies haven't done very well. That's because they don't really have any powers in big places like Glasgow and Edinburgh and Cardiff. This is all about economic devolution, and I've tried to talk to you and many others about it for many years. Greater Manchester, who led it in terms of pushing for some, has demonstrated it can work. That Manchester's grown, Greater Manchester's grown at 3 times the rate of London for 15 years. And if you can replicate that across 3 or 4 other big urban places, it's enough to, from a weighted population and GDP size, to boost the national growth trend. So I don't understand why the skeptic, I guess the skeptic's always about everything these days, but if you can replicate the same thing in more places, it's going to definitely improve the economic performance of the country.
How could funding, for example, more infrastructure in the regions work?
So one of the other things I've been talking about for quite a while, trying to persuade the Treasury under the current Chancellor, Rachel Reeves, about this, is this entity NISTA, which is the merged body from the old Infrastructure Commission and the Infrastructure Project Authority inside the Treasury. That should be not in the Treasury. It should be a sort of infrastructure version of the OBR, in which we have this transparent body that is telling the whole population and all the financial markets about the infrastructure projects that are likely to have very strong positive multipliers on the long-term economic performance of the UK, and with it, importantly, therefore reducing our debt levels and raising the OBR's long-term growth projection. And the government of the day, whether it be one that Andy leads in a few weeks or others in the future, choose to borrow or not to implement and fund project X or Y. Right. And I think the bond markets would be extremely happy with that, as would probably be the equity markets.
Jim, I mean, Andy Haldane had this idea also of splitting Treasury into a separate growth or a department of growth. Would you be behind that idea?
No, I don't really. I think this criticism that I've heard from a lot of members, various factions, are typically more left of centre, about the Treasury. From my own experience, it demonstrates a lack of awareness of the realities of how the Treasury functions inside and across all the other departments. And for that matter, as I've said to a couple of people when I've been in this discussion in the past week, tell me an economics ministry anywhere else in the world that actually has any influence on our growth rate. You know, I know from my own experience, if you get a leader of the country and a chancellor that's aligned with them on making it clear what their priorities are, the Treasury immediately jumps to, as they should do as civil servants, to delivering what is expected of them. And I saw it when I went in to deliver on the Northern Powerhouse under George Osborne. The devolution department that didn't exist before became one of the most favourite places for aspiring civil servants to work at. And that's exactly how it should be. So you just need to give clearer confident mandates and leadership to the civil service staff, including the Treasury. But breaking it up is, from what I can see, pointless.
So who's the right person to be Chancellor?
Like I keep saying to everybody, Fran, and I might have said it to you before, I don't think that is the right question. Andy gave a hint of a strong flavour of where he wants to go. Between now and whether he, when and whether he becomes PM, he's got to really clear up on all those priorities, make it very, very clear to anybody that's going to be in his government, including the Chancellor, that is what he wants to have delivered. And then he decides to find the right people to deliver it. All this sort of obsession as to who's going to be Chancellor, when, importantly, by the way, he's not in a position to appoint anybody, is sort of madness. And I think it's the wrong question people are asking.
I know, Jim, but as you said, it's important that actually it's a two-person team, right? The Prime Minister and his Chancellor. And so what is there a specific type of person that needs to reassure the markets, that needs to reassure, the bond traders that they're ready to act, but, don't do nonsense with fiscal? It's the two of them that need to reassure the world in this, that they can achieve growth whilst, not have a market event.
Kind of, but as I sort of said at the start, I think a lot of your viewers and listeners, that they're going to have to go through a mindset change here. That Andy is going to introduce pretty significant changes, as he talked about yesterday. And there's going to be a lot of devolved powers, and it's going to change the nature of things that influence what's going on in the country. And with it, and certainly through my adult lifetime, we've had a pretty reoccurring history of the Prime Minister of the day and the Chancellor never really seeing eye to eye. And the key thing, and by the way, in the 5 weeks now since the Makerfield by-election, the UK gilt market has actually outperformed virtually every other market. Now, there could be other reasons for that, and of course it started from a weak position. But I think that relates to the credibility at the centre. And if you've got a Prime Minister that's really going to change things and be successful in raising our growth trend, then of course the Chancellor is probably the second most important person. But he's got to have everybody in his cabinet, and for that matter, ministers below and all the civil service machine, all understanding the sense of direction which is being set at the top and is credible. And yeah, of course the Chancellor's important, but you can't have a choice of somebody that the financial markets love just because of some notional view they love him or her, and it not being in line with what the Prime Minister of the day is trying to do. It just, it's the wrong question that I see so many people talking about all day long and constantly asking me, even though, of course, as a cross-bench peer, I've got absolutely no influence on any of those decisions.
Yeah, and I want to get to that in a second, but Jim, do you see wealth taxes or some kind of, equalizing of capital gains tax to income tax being good ideas?
I think these are choices that Andy's going to have to make. Let me make that clear. In my own opinion, and I've made it pretty clear elsewhere, to really improve things beyond the excitement to do with devolution, Andy's got to deal with some of the tough spending issues. And very importantly, and it's not really been picked up yet, he made some pretty clear comments about tackling welfare reform yesterday. And I know from my significant involvement with the Greater Manchester team that's going to be an important part of Number 10 North, that's front and centre of how they're going about things. And so if the markets start to really understand that, and we get more of this credibility that seems to be creeping back into the gilt market, I don't really see why there would be any need for further tax increases. We've had a lot of tax increases. And I do not believe, the one area in particular that I strongly oppose is the so-called equalisation of capital gains tax, especially for venture capital. I'm heavily involved in that in the chairing of Northern Gritstone, which, by the way, Greater Manchester Combined Authority is an investor in. And venture capital investing is an exceptionally risky thing, and people can lose all their money. So to regard that as the same as income tax is just not very wise at all.
All right, Jim, as always, thank you so much for joining us. Jim O'Neill, their economic advisor to Andy Burnham, and of course, former chair of Goldman Sachs Asset Management. All right, we're here in Sintra, Portugal for the ECB Forum. Coming up, we'll speak of stability, financial stability with the IMF. This is
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Sintra, and these are your top stories. Christine Lagarde says the ECB is becoming more resilient to economic shocks, while Philip Lane, its chief economist, tells us the central bank will not lock itself into a path for rates. As central bankers gather in Sintra, will inflation concerns remain over the Iran war, with a top official from Tehran saying the country wants to retain control over the Strait of Hormuz. Plus, Andy Burnham vows to radically devolve fiscal powers from London if he becomes the next prime minister. His advisor, Jim O'Neill, tells us there will be a mindset change under Burnham. Now, the ECB remains concerned about inflation despite oil prices slumping on progress towards peace between the U.S. and Iran. Well, officials raised rates by a quarter point this month, the first hike since 2023, and markets are betting that they'll do so again by the end of the year. But the bank's chief economist, Philip Lane, has told us officials are not boxing themselves in a path for monetary policy. I asked him what's changed since the ECB's recent hike.
For the economy, it's only been, a few weeks. So clearly what's changed is the oil market. And that is moving quite a bit in the weeks since we've made our decision. And so let's see how that percolates across the economy. So what we have seen is in terms of confidence indices, there has been some improvement, but not a return to the pre-war levels. So it's not the case that there's been this very rapid rethinking of how investors and consumers feel. I mean, I think probably they need to see this current peace agreement convert into something more durable. And as you know, every day there's plus and minus signals. And that needs to settle down, I think, before consumers and investors take a more decisive revision of their views.
I mean, this is really the concern, right, is that we're not really sure what these ongoing talks will bring. Madame Lagarde yesterday was really talking about no forward guidance, but scenarios. So with these ongoing talks, are we closer to the milder scenario or base scenario?
So I think the most important fact that we see is right now the oil prices reverted to pre-war levels. But the view of the market in terms of 2027 and 2028 is that it will be well above pre-war levels. So in other words, over the next couple of years, maybe because around the world energy firms, governments will want to rebuild inventory, that maybe demand for oil for restocking purposes will keep the oil price high compared to the pre-war level. So from our point of view, it's very welcome that we see this decline in the price of oil, but in terms of the overall inflation impulse, the fact that we do have maybe for a couple of years oil prices above the pre-war level, that essentially is a cost-increasing impulse to the economy.
So it's very clear that the ECB wants everyone to know that the last hike was not an insurance hike. Will the next hike be an insurance hike?
So I think it's important that we are clear on our terminology, if you like. So as President Lagarde said last night, we feel that the June decision was a robust decision, that we looked at it from every angle, and even from the angle which we did anticipate of having, if you like, this more rapid decline in oil prices. Even under that kind of more rapid normalization, it made sense because of 4 months of high oil prices to raise the rate from 2 to 225. What I think is important to say is, as we go forward, as we evaluate, the kind of pros and cons of different rate decisions, we will be, if you like, mainstreaming the concept of how does this decision look like under uncertainty. Now, for me, I would reserve the phrase insurance hike to a situation where there's a tiebreaker, that maybe you could at least stay where you are, maybe you could hike, and the risk considerations will push in one direction. But that was not the June decision. That was a clear decision, robust across a wide range of scenarios.
Yeah, I mean, given the wide range of scenarios and the uncertainty and the second round effects, is it better to hike in July or September?
Well, again, the way you phrase that question is maybe overly narrow. So what I would say is, before we get to the second round, I mean, for me, the second round effect is probably going to take some time. What I'm really focused on is the indirect effects. So even though now, like, fuel prices are falling, what we need to look at is how the 4 months of energy cost increases percolate into food inflation and into services inflation in particular. And that channel is maybe where there's still uncertainty. And it's essentially the tension between these many firms have been absorbing higher cost increases for a number of months, whether they can recover those cost increases by raising prices, or whether, especially in the context of now the fuel prices reversing, it's absorbed in profit margins, and there's less by way of the indirect effect. And only after that can you start to have a vision of how strong the second round effects on wages might be, which will be later this year and into next year.
So you're telling me my question is too narrow because you could not hike at all?
I think, as you very well know, we're very much committed to basically going one meeting at a time, to not boxing ourselves in by kind of speculating about rate decisions, and essentially focusing on, at the time of the meeting, when we look at everything, what makes sense.
Philip Lane there, the ECB's chief economist, speaking to us a little bit earlier. Now, beyond inflation, the impact, of course, on AI on productivity, another key theme here at Sintra. Well, the International Monetary Fund is warning that AI-related cyber attacks pose risks to financial stability. So let's discuss all of this with Tobias Adrian, financial counselor and director of the Monetary and Capital Markets Department at the International Monetary Fund. Tobias, thank you so much for joining us. We'll talk a little bit about financial stability, AI, and maybe some of the cyber attacks and monetary policy as well. I mean, when you talk about cyber attacks, does it have to increase spending of companies, but also institutions, to try and make sure that this doesn't happen?
Yeah. So let me make 2 points. So the first one is that we have already seen a compression of time in between the discovery of a vulnerability and the exploitation of the vulnerability via an attack. So this used to be several months. Now it's within the first day. The majority of the attacks are happening, within minutes. So a tremendous increase in the speed of attacks. New AI models basically accelerate that further. So the question is, yes, you can use it for defense, but it can also be used for attacks. And what's the balance?
I mean, this is the problem with Mythos, right? And I know a lot of the European banks, a lot of the smaller US banks are also a little bit mad that they haven't been able to look at the models, so they don't really know what defenses they need to put in place to make sure that they don't have these attacks.
Yeah.
Does this level out?
Yeah, absolutely. I mean, it's hard to see how this is going to level out across the world, right? I mean, there are some companies that don't have the same capacities of major banks or major technology firms. They wouldn't be able to afford this cutting-edge technology, and they may not have the capacity to translate it into effective defenses. So I do think, from a global point of view, there's certainly a rise in the cyber vulnerabilities.
Well, what do you think is the single most important issue for financial stability across the world?
Today, the one thing that worries me, and that's more of a medium-term issue, is the interconnectivity between fiscal fragility and financial stability, right? We have seen debt to GDP go up globally, not in any one country, but across the world. It's approaching 100% debt to GDP. And so the question is, how fragile is if adverse shocks hit?
We've been talking about this for years, right? We've been waiting for some kind of market event in treasuries. We've been waiting for the same in the UK. Is there someone that's more at risk given the market functioning?
I think countries in general are more at risk from having some sort of dysfunction in longer-term bond markets. The financing of the longer-term bond markets has shifted from banks and insurance companies towards non-banks, other non-banks, leveraged investors in particular. And, this can be good for market discipline on the one hand, right? They are very active and they may put pressure on governments, to get their house in order. But on the other hand, they can also amplify downside shocks and become fragile.
But Tobias, we also need to find growth. And I we just had a good conversation with an advisor to Andy Burnham in the UK. So if you have a new prime minister, president, we have elections in France, what's the right way of looking at this? It's fiscal discipline, but at the same time, you need your country to grow. So maybe you need to be bolder.
Absolutely. And I think what works are structural policies, right? I mean, what works to enhance growth, enhance the outlook are structural policies, but these are painful, right? This is reforming the pension system, reforming the labor markets, making the economy more flexible. Clearly, we're in the midst of a technological revolution, and we need to get countries ready to adjust to this new technology.
Tobias, if there's a kind of correction, right, amongst these big AI companies that are mainly in the US, would this be a risk to financial stability, also given the amplitude they have on the markets?
I will give you an on the one hand, on the other hand answer, typical economist.
So diplomatic.
Exactly. On the one hand, a lot of the investment of those firms is financed out of equities, right? And so when equity markets go down, of course, it has an impact on financial conditions. It does have some macro impact, but it's not like the collapse of a highly leveraged shadow banking system, right? Now, there is some leverage that is going up, so more companies are financing via debt, and there's some maturity transformation. So, there's a worry, but it's primarily equity for the moment. On the other hand, of course, we do see quite a bit of concentration, right? And I think the key question is about profitability. So is the profitability that has been very strong, has been outperforming expectations consistently, going to persist going forward?
But is there a danger that, central banks across the world don't really have a template for how this AI will impact inflation, productivity, even jobs, and so it could lead to policy mistakes?
So I think central banks, I have more faith than you in central banks. I think
it's just a question. I have faith.
So central banks have very powerful tools and they have very clear mandates. And they are looking at the world in real time. Of course, how the world is going to look like in 5 years, nobody can tell. But as time evolves, are we going to be equipped to sort of deploy our tools in order to meet our mandates? I think central banks are well equipped for that.
How do you think it will change our economies, AI?
So, it is very transformative and it is work in progress. I think the word I would use here is enhancement, right? So we're getting enhanced via artificial intelligence. We're all getting more productive. And the economic processes have to readjust to this new technology. If markets are flexible, that can create a lot of opportunities. But you need to have the right backdrop in terms of the economic policy setting, particularly structural policies.
Tobias, thank you so much for joining us today. That was Tobias Adrian, Financial Counselor and Director of the Monetary and Capital Markets Department at the IMF. Now, coming up, a $10 billion economic weapon to help Ukraine as the EBRD readies new funds for the country's reconstruction. We'll be talking to their Chief Economist, Beata Jafrocic. That's coming up next, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My objective from the outset has been clear. To begin balancing the trade relationship between the European Union and China. The gap is widening. China's export to the EU keep rising, while our market share in China keeps shrinking.
Well, that was the EU Trade Commissioner, Maros Sefcovic, speaking there after talks with the Chinese Commerce Minister. Now, a little bit earlier, I spoke to Olaf Slijpen, the Dutch central bank governor. He told us there's still uncertainty despite falling energy prices. He says policymakers will act accordingly based on the data.
The oil prices came down quite a lot. At the same time, we also have to acknowledge that there's still a lot of uncertainty around there. So let's see how it will develop. Obviously, energy prices coming down will have an impact on prices. At the same time, we see that the previous rise in oil prices is already has its impact on the price level.
So how worried are you about second round effects? That without, even if oil prices go down, that these second round effects are here for longer?
We have to see. You know that we always say we are data dependent. We have our next Governing Council meeting end of July. Then we will have new data again. We will look at how the situation looks like. Decline in the oil prices now, of course, is from an inflation point of view definitely good news. But it remains to be seen what is still in the pipeline.
Is there a case actually for a hike in July?
I would like to refer to President Lagarde's speech that she gave here in Central last night, where she said we're not into forward guidance, but we are into framework guidance, which means that it's important that the markets, the analysts, the people understand our reaction function. And I think markets understand the ECB's reaction function pretty well.
Well, that was Olaf Slijpen, governor of the Dutch Central Bank, speaking with me earlier here at the ECB forum in Sintra. And actually, tomorrow will be 1 year since he's been in the job. Now, this morning, we've been discussing the need for further rate hikes in the euro area with the leading member of the ECB Governing Council. Well, the Belgian Central Bank Governor, Pierre Wunsch, gave me his thoughts on the need for action to fight inflationary pressure following the Iran war.
The market is still pricing one. But the way I would put it is, the origin of the shock being higher oil prices, to the extent you believe that there is now a truce and the prices will go down. So the origin of the shock has disappeared, more or less, before we see second-run effects. There will be some, so that makes it, I think, relatively easy. We might need another hike, but in all likelihood, and that's of course what the market is pricing, but not as much as we thought in June.
But so if the Eurozone does need another hike, is it easier or better to do it, quicker, so July rather than September?
I would rather, if we believe we need another one, move quickly. It doesn't mean July, but there is always value to it because you have more information. But if we believe that now it's going to be less pressure in the economy because oil prices go down, if you wait too long and then you have one surprise in one direction, one surprise in another one, you end up doing a hike, and then maybe you have three surprises on the downside. Now we know inflation is going to be above target for a number of quarters. So if we need to do another hike, if the data show that it's required, then I would not wait for too long.
That was the Belgian Central Bank Governor and ECB Governing Council member Pierre Wunsch. Now, the war in Ukraine is well into its fifth year. While the fighting goes on, the European Bank for Reconstruction and Development says funds pledged to the bank for Ukraine's resilience and reconstruction have now surpassed $10 billion. Well, Beata Jarkovic is chief economist at the EBRD, and she joins me now. Beata, as always, thanks so much for joining us. So tell us where we are exactly on Ukraine and what the EBRD has pledged so far.
So we have pledged extra €500 million at the Ukraine Recovery Conference a few days ago. That brings the financing we deployed since the beginning of the war to €10.5 billion. We are supporting energy sector. The new funding will go for repairs of some of the substations, but also for improving governance at Ukrenergo, including strengthening anti-corruption efforts. We are also going to finance additional wind generation of electricity, some battery storage, and of course support for micro, small and mid-sized enterprises through our risk-sharing facility.
Beata, we've been talking about inflation, of course, the volatility in the price of oil, and the fact that even if oil prices are expected to come down, we don't really know what comes next. How does that complicate things for some of your funding projects?
Well, so in Ukraine, the situation is challenging not only because of the destruction of infrastructure, energy infrastructure, but also high prices of energy are putting pressure on the real economy. And that's why we are focusing our efforts on the real sector, on supporting small firms. We also offer some subsidized insurance, and some of firms that will receive these credits will be eligible for debt relief if the assets supported by us are destroyed through war efforts.
The concern is actually how far away are we from rebuilding, because there's no real end in sight for the fighting. How do you, I guess, speak to investors about that?
Well, that's why our risk-sharing facility is designed to help micro, small and mid-sized firms to invest in sort of longer-term assets. And it's also done with an eye on helping them use more renewable energy, comply with future European norms with an eye on future accession to the EU. So it's about taking a long-term view under very difficult circumstances.
I mean, how's it going in Central Europe right now? We were both in the dinner last night where Christine Lagarde gave a speech that was actually fairly optimistic about the prospects for the Eurozone, talking about financial stability, but also opportunity. But then it's underlaid with, again, all of this geopolitical concern,
as well as energy costs. And in Europe, the story is about high prices of natural gas. These prices are multiples of prices in the US. And it's the second energy shock we are experiencing after 2022. And what you see is decline in output of energy-intensive industries in Europe. And you already see it clearly in the data in Germany, in Western Europe, in Eastern Europe as well. And of course, high electricity prices do not bode well for setting up data centers in Europe. There was just a talk where the figure of 5% was mentioned. Europe owns 5% of global data centers, while our economic weight suggests it should be more like 20%.
What do you see as the biggest barrier for the EU right now? I know we've talked about energy prices in general and the fact that there's also not a really common energy policy in Europe. Does that need to change for Europe to grow?
So I think what we need is to focus on long-term issues. So there are many challenges we are facing in Europe. High energy prices are one, innovation, competitiveness and pressure from trade, and of course, demographic trends. Now, all of these challenges can be addressed, but they cannot be addressed fast. And that's why we need to act now.
But this is a problem of Europe, Beata. I mean, in a crisis, usually Europe gets together. Do you see that moment now?
I hope that's what will happen, because the uncertainty, the series of shocks we have been experiencing create an overload. Policymakers need to deal with the news of yesterday, with the prospect of another change in policies tomorrow. And that means that there is little time and, frankly, bandwidth for focusing on solving long-term problems.
Do you see, I mean, some European countries coming together? I don't know whether you focus a lot also on regulation. Certainly Europe has stuck together to deal with Ukraine.
Indeed, and I think the Draghi agenda is being implemented, perhaps not as fast as we could have wished, but I think the second energy shock has also focused mind. We need to do something. We need to do something about grid, about storage, about speeding up permitting. We need to think about not being left behind in the AI race. And that means faster permitting for data centers, for instance.
Beata, everything's changed actually with Germany spending, but we're not really seeing the benefits until I think 2027. Does that also change the fortune of Central Europe?
Of course. What happens in Germany is affecting demand for exports from Eastern Europe, and it's not only the supply chains, automotive and machinery, it's also demand for software, it's also demand for consumer products. If the German economy is doing worse, there's less demand for anything from food to furniture. So the economies in the region that are doing well are economies like Poland that are more diversified, that can also benefit from their own demand. And of course, the big question everybody is asking is, we had European RRF funds. There is investment in security, in defense. Now, what kind of public investment will drive growth going forward?
Beata, as always, thank you so much for joining us. It was Beata Javorczyk, we'll get it right, the chief economist at the European Bank for Reconstruction and Development. Now, we'll have plenty more, of course, from Sintra throughout the day. Don't miss our interview a little bit later with Olli Rehn, the Bank of Finland governor. That's at 3:40 p.m. London time. And the Pulse is back in Sintra. Also, tomorrow, we'll be speaking to Joachim Nagel, the Bundesbank president, plus our exclusive conversation with Leseya Kanyago, the South African Reserve Bank governor. Up next, it's Bloomberg Brief, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back. It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures steady as U.S. stocks look to close out their best quarter of gains since the pandemic. Iran standing firm on its control over the Strait of Hormuz ahead of more peace talks. And the U.S. Supreme Court blocks President Trump's bid to exert influence on the Fed, a decision on birthright citizenship on deck. Let's get a check on markets around the world now. It's been a volatile quarter. Let's get straight over to Asia. Winnie Su, what is the latest?
Morning, Bonnie. Well, we are finally here with the yen at its 40-year low. Now, we are seeing the yen, in fact, sliding past that 162 level against the dollar. And that is because, in fact, while authorities keeping their tone pretty steady and with the pace of yen weakening being also relatively gradual, investors are not seeing much of an immediate risk for an yen intervention. And now watching out the levels at 164 or even 65. Now, when it comes to bond yields, also also seeing longer-term yields spiking on further concerns that Takaichi is rolling out this massive spending plan for its AI investment. Now, that's worsening the overall fiscal concerns. However, you do have the Japanese Nikkei 225 surging and actually hitting its record gains. Now, that is supported by the overall strength in technology shares. As you flip the board and see how that's also spilling over to the broader strength in the Asian stocks, we have the MSCI Asia, in fact, set for its best quarter in 17 years. Kospi, of course, also had its best quarter since 1998, while Hong Kong shares continue to struggle for a third quarter due to the lack of AI.
Yeah, it's fascinating, Winnie. There is a history of the MOF intervening in weeks where there is a US holiday on the Friday, so we'll be watching the yen very closely this week. That's Winnie Su in Hong Kong. Now let's get over to London for a look at Europe with Justina Lee. Justina.
Good morning, Vonnie. Now, we're seeing the Stocks Europe 600 rise today, supported by some of the more cyclical sectors, and wrapping up what is really a really good quarter for, European stocks and, of course, also global stocks worldwide. Now, if we look at the euro here, it's declining today, I think just broadly reflecting some of the dollar strength that we're seeing here. And when it comes to, the fixed income market, German 10-year bond yields falling a little bit. We got state inflation figures from Germany earlier today, and they were a little bit cooler than expected. Same when it comes to France. Now, we flipped the board here. I just talked about the great quarter European stocks have had, but I think there's kind of a pretty notable trend here, which is a really stark contrast between the broader index and the auto sub-index. And that's kind of reflecting a lot of the woes and competition pressures, the tariffs, the war, and I think that is something to watch out for in the coming quarter.
Absolutely. Justina, thank you so much. Justina Lee there in London. And it's interesting in the United States, if you take a look at the quarter, because of course we're at quarter end, half end and month end. For the quarter is obviously the memory chip makers that have stood out, rallying more than 200% for SanDisk, Micron, some of the others. But if you look at month to date, because we've seen that rotation, we also have Moderna in the top three, for example. Fifth Third Bank is up there in the top three performing stocks just for the month of June. Now, when it comes to today, we look to be fairly stable. Of course, we're waiting on the jobs data Thursday, but we did eke out another record for the Russell 2000 and the equal-weighted S&P 500 yesterday, and that is a trend that we've been seeing just since this huge volatility started in the last couple of weeks. As you can see, look to be aiming for at least a steady open today. In terms of bond yields, well, we have a stronger dollar for the first day in 4. The 2-year yield really unchanged, and you've got that same picture across the board, down another basis point though on the 30-year yield. And then when it comes to oil, of course, we're looking at our biggest drop in a quarter for years at this point, as you might anticipate, given that we had such a run-up. But there's actually talk now of a potential glut. Morgan Stanley now has lowered its forecast for the third and fourth quarter, so essentially the rest of the year, to $75 a barrel on Brent, and talking about potentially weakness out of China, weak demand, and inventories from the US and exports contributing to what could become a glut. All right, let's get to some individual movers now this pre-market. And Chloe Melly in London.
Good morning, Vonnie. The defense company AeroVironment is soaring this morning. We're up more than 20% after results topped expectations. And there's been actually particular strength in its drone business. And analysts have said that this is a company that is very well positioned for that continued government spending in those space-related and defense-related projects. So up very strongly there. On the other hand, on the flip side, we've got Concentrix, the call center company, plunging this morning after slashing its 4-year forecast. And we've actually seen that read across over to its European peer Teleperformance, which has also been sinking on the back of that. And so this shows that perhaps it doesn't bode very well for that call center sector in general. So down almost 24% there. And finally, Abivax, the French biotech company, is up very strongly this morning in Paris after coming out with some clinical trial results that have really reassured investors that that cancer will not be a potential side effect of its very promising experimental drug to treat inflammatory bowel disease. And so this could potentially revive takeover rumors that had been circulating around that company prior to those results actually being released. But we are up almost 34% there in France for Abivax.
Yeah, what a difference a day makes. Chloe, thank you so much. Chloe Melly there in London. And coming up this hour, on track for the best quarter in 6 years for US stocks, we'll wrap up Q2 with Jack Caffrey of JP Morgan Asset Management. A peace agreement between the US and Iran again in the air. An Iranian official telling state TV of their plans to maintain control over shipping through the Strait of Hormuz. Plus, President Trump posting that Iran requested a meeting for today. But that same official saying Iran will have a delegation in Doha, though they do not plan to hold talks with US officials. Abir Abu Omar joins us from Dubai. Hard to make sense of the conflicting cross currents, essentially, Abir. Are there talks between the US and Iran or no, or can we tell?
Good morning, Vonnie. Good question. Remains to be seen. We're getting conflicting statements yet again, as you have mentioned, from both the American side and the Iranian side. What we know is that an American delegation is set to be in Doha today. We understand that Jared Kushner is set to be there, as well as Steve Witkoff. Those are Trump's two top negotiators. Now, the deputy foreign minister from the Iranian side suggested that we may see Iranians there as well, that they will not be holding talks with Americans, but that they will be present with Doha, one of the key mediators in this conflict, present there. Now, Vonnie, this comes at a time where we're getting conflict not just in the state of the negotiations, but also the state of the Strait of Hormuz. We've seen skirmishes over the past couple of days or so in the strait with back and forth strikes between Iran and the United States. But perhaps the most important thing here, and what's supposed to be a contentious point over the next couple of months or so, is that Iran says it maintains its hold over the Strait of Hormuz and that it will tolerate it with or without the help of Oman, which holds power over the other side of the Strait of Hormuz. Now, the Sultan of Oman met with Macron, the French president, yesterday, and they both agreed that it is a free waterway, that it should not be tolled. But Iran, through its deputy foreign minister, again saying it will do so once the 60-day period of negotiations between the U.S. and Iran is over, with or without the blessing of Oman. And so that's really created some ships treading with caution through the waterway, and something remains to be seen there. The U.S. side obviously says this is completely unacceptable, that the Strait of Hormuz has to remain a waterway that is free of charges. But Iran seems pretty adamant at this point, so perhaps something to be discussed in those talks that are supposed to happen today at some stage in Doha. We keep an eye out on their state, Vonnie.
All right, Abir, thank you so much. Abir Abu Omar in Dubai. Let's turn to Japan now. The yen hitting its lowest, weakest level in 4 decades, its highest level since 1986 versus the US dollar. Long-end bond yields climbing as much as 10 plus basis points, with Prime Minister Takaichi's spending plans deepening investor concerns about fiscal expansion. Joining us now is Bloomberg's Morwenna Conium. It all started with the yen above 162. That precipitated that spike in long-end yields. Morwenna, what are yields expressing here?
Well, there's quite a lot going on at the moment in Japan. I think one of the things with the longer dated bonds is concerns about the amount of fiscal spending from the Japanese government. This comes at a time of quite a lot of growth, but also high inflation. And there is a concern that there's going to be pressure on the Bank of Japan to stop hiking rates or slow the pace, and that's actually seeing those shorter dated bond yields fall, while longer dated ones are continuing to rise. Of course, all of this is against the backdrop of the weakening yen, which is really, we're seeing these sort of 4 decades records met. We're at levels where previously we've seen government intervention. And of course, the government would like to stabilize the currency, because otherwise that damages the country's trade prospects.
So there is a question over whether, if the MOF were to even intervene, it would help, given that what markets are essentially waiting for is the BOJ to move, right, Morwenna? So would there be any point, even if we do hit 164 or 165, in intervention in yen purchases?
Well, yes, and that's a really good point, because this is also seen in the global context. A lot of the currency pain that we've been seeing across Asia is down to broader movements based on the war in Iran, its impact on commodity prices and inflation. And it also comes at a time of, dollar strengthening, and forecasters are expecting that to continue if we see these rate differentials continuing to be pronounced. So it's not necessarily a sort of easy fix. And I think they need to be very, very careful there.
All right, Morwenna, thank you so much. Bloomberg's Morwenna Conium there with all of the context. Now to other top stories trending on the terminal this morning. The death toll from Venezuela's twin earthquakes has reached 1,719 so far. Almost 23,000 people are being treated in hospitals. Nearly 16,000 people have lost their homes. Search and rescue operations continue. China has lifted some restrictions on oil product exports. The limits were introduced shortly after the Iran war to safeguard domestic supplies. Bloomberg sources say Beijing has told certain state refiners they can now export gasoline and diesel to more countries. The new policy will affect shipments loaded from July onward. Taiwan government agencies raided the offices of Supermicro and several of its affiliates, expanding its probe into the alleged smuggling of NVIDIA AI chips to China. Supermicro says it's cooperating with investigators. Coming up, Fed Governor Lisa Cook keeps her job. More on the Supreme Court's decision that expands President Trump's power, though perhaps not at the Fed. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Brief, I'm Bonnie Quinn in New York. The Supreme Court has expanded presidential power, allowing President Trump to fire top agency officials that have traditionally operated independently. In a separate ruling, though, the court allowed Federal Reserve Governor Lisa Cook to remain in her position while she challenges the president's efforts to remove her. Joining us now is Bloomberg's Alistair Bull. So if we separate the other agencies where the president does seem to have more executive power now from the Federal Reserve, what exactly, Alistair, is the decision regarding any executive efforts to change staff or governors at the Federal Reserve?
Morning, Bonnie. So it's a big win for the Federal Reserve and central bank independence. The Supreme Court ruled somewhat narrowly. It didn't take a view on whether the allegations of fraud that the White House has leveled against Governor Cook was sufficient cause. It just said that the president had not given her sufficient time to answer those charges and that a court would be the right place to review them. So this defends the at-cause sort of protection for governors serving at the the Board of Governors in Washington. And that's very important because the administration had argued essentially that the president had the right, the prerogative to dismiss governors at will. And the Supreme Court said that was not the case. It was very important to protect monetary policy independence. That was at the forefront of the thinking of Congress when they set the Federal Reserve up over 100 years ago. And their decision yesterday preserves that protection, Bonnie.
Yeah, so how much does that decision actually preserve Fed independence in totality, or is this just exclusively on staffing?
Well, I mean, that's really the nub of it. If the court had gone the other way, it would have given President Trump the prerogative to remove any or all of the governors and replace them with governors he thought would bend more to his will. That goes to the very heart of central bank independence. This raises the bar. It says he can replace governors for cause, but that's got to be a good reason. It can't just be his whim or what he views as a good reason. It's a good reason. So, I mean, that makes it pretty difficult. And then this may all go back to the courts because the administration said that they plan to continue proceedings against Lisa Cook. It's not gone to court yet, but she'll then get her day in court. She will be able to argue, and her position is that these allegations are false. Her lawyer arguing before the Supreme Court earlier in the year said this, amounted to nothing. At worst, nothing more than an administrative oversight. So she'll get her day in court. She'll have an opportunity to defend herself. And that means that going forward, that pathway would be intact for all of the governors. And that raises the bar for removing them.
Yeah.
Bonnie.
New precedent here. Alistair, thank you so much. That's Bloomberg's Alistair Bull. Coming up, the Supreme Court ruling on mail-in ballots. More on that and a look at what else is making headlines in your front page news. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The euro area has also weathered the largest US tariff increase in almost a century, as well as what the International Energy Agency has called the largest oil supply disruption in history. That didn't go without a significant cost. It has been substantial, but the economy has not been derailed.
ECB President Christine Lagarde, they're speaking at the Sintra Forum, and for more from the annual summit, Bloomberg's Francine Lacroix joins us now. Almost defensive in tone, might you say, Francine? There's definitely been a sentiment in markets that perhaps the ECB didn't need to hike and may have made a mistake.
Mm-hmm. Yeah, it was really interesting, actually, hearing to Christine Lagarde yesterday, and then we had a number of governors from the ECB Governing Council member speaking today. And actually, the way she was saying it is, first, the markets kind of interpreted that hike in June as an insurance hike, and she said, hold on, no, this was not an insurance hike. We looked at the data, we looked at inflation, we looked at projections and trajectory, and it was the right thing to do to hike. But again, it was only 25 basis points. So I think a lot of the chatter here, Vanya and Sintra, will be, look, can we have any clues from the ECB and others whether they will hike or not? And it's undoubtedly Kevin Warsh, the star of the show. So he arrived mid-speech of Christine Lagarde yesterday. A lot of people were curious just to get to know him a little bit because it's his first overseas trip since becoming chair of the Fed. And then he's on a panel tomorrow where, again, we'll try, and market participants here, other central bank governors, we'll look for language and tone to try and figure out what this could mean for interest rate hikes, but also to understand the proximity that he has to President Trump and whether he can take a little bit of a backstep and be a little bit what Jay Powell was. He has market credibility at the moment, but again, you hear in the corridors in Sintra, they just want to meet the man, one of the most powerful men in the world.
Absolutely, and many of them, of course, met him in a previous life too, right, Francine? Curious as to your conversations with Pierre Wunsch and Philip Lane, next steps for the ECB. Philip Lane a little more circumspect than the Belgian.
Absolutely, Vani. When you look, so if you think at the European Central Bank, a lot has changed in the last 3 weeks because we now have the Memorandum of Understanding between Iran and the US, which means that direction-wise, the market are pricing in an oil price and a gas price that are lower now than they were 3-4 weeks ago. Now, what this means is actually for inflation, does the ECB wait and see to see what happens if there's second-round effects? I thought it was very interesting to speak to Philip Lane because he says, look, second-round effects could take a long time. So if you have inflation staying at these levels, and for the moment, projected inflation at the European Central Bank level is around just above 2% for quite some time, which is why markets are pricing in another interest rate hike this year. And then the question, which we asked the Belgian Central Bank governor, is like, look, do you go in July? So do you preempt, do something now, and then see these hikes have, how they play out on the economy? Or do you wait for September? Because by then the world could be a little bit different. You could have geopolitical shocks really being abated. And so they're, as you were, scot-free. So, it's nuances. There's a lot of data from now until that July meeting, which is at the end of July for the European Central Bank, that they will come through. I know when you speak to every central banker, they look, they say we don't look at what the Fed does or the US. They also say, look, we're data dependent and we're meeting by meeting. But Vani, they're all here to try and understand each other and really trying to understand what the best way to look at modeling going forward is.
Absolutely. Francine, thank you. And those interviews, of course, available on your Bloomberg. That is Francine Lacroix at Sintra. She'll be there tomorrow as well. And we'll hear all about Kevin Warsh's speech and panels. Now, it is time for your front page news. First up, the New York Times on the Supreme Court ruling that state laws allowing ballots to arrive after Election Day are legal. The Times says the decision is the latest in a series of setbacks for President Trump's efforts to regulate elections. Next up, the Wall Street Journal reporting Warren Buffett has decided to skip his mid-year donations to the Gates Foundation for the first time in 2 decades. He's waiting for the results of that review into the organization's links to the late sex offender Jeffrey Epstein. And finally, the Financial Times reporting companies investing most heavily in AI are adding workers faster than their peers. Gains were across occupations and seniority levels. The FT citing new research from US tech startups Ramp and Revelio.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back. It had that kind of detective story feel to it. Exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them. You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures steady as U.S. stocks look to close out their best quarter of gains since the pandemic. Iran standing firm on its control over the Strait of Hormuz ahead of more peace talks. And the U.S. Supreme Court blocking President Trump's bid to exert influence on the Fed. A decision on birthright citizenship on deck. So let's take a look at these markets then. If you were to look at futures, you would think not much had been happening, but in fact, it's been an incredible quarter. If you look at the quarter, best performers, obviously memory chip makers, Micron, followed by SanDisk. But if you just look at the month of June, because obviously it's the final trading day of June as well, you have other kinds of sectors mixed in there. So like Moderna is one of the better performers, Fifth Third Bank. We're going to be talking about all of that in a moment with our guest Jack Caffrey of JP Morgan Asset Management, this rotation that we've seen just in the last few days. That said, the Philly Sox Index was up 3.8% yesterday, and it was a fourth straight win for the Russell as well. Let's take a look at bond yields. Not too much movement there. Waiting on jobs data. We're down a basis point at the back end, unchanged at the front end for 10 and change. We have seen that massive drop in oil. Morgan Stanley now saying for the whole second half of the year, its average forecast is down to $75 a barrel now. That's the second downgrade to its price target for the rest of the year that we've seen in as many weeks. The team citing strong U.S. supply and also weak Chinese demand for the potential for an actual glut. We also have the dollar index rising. That's weighing on precious metals and crypto. Gold did try and break through 4,000 once again, but we are above that. Let's get to some stocks to watch now with Chloe Melly.
Good morning, Bonnie. Digital Realty is buying Blackstone stakes in 3 data centers across Northern Virginia for $3.5 billion. And so this, of course, increases data center exposure for this company. But it might be that the price tag is raising some worries among investors. And so we are seeing the shares down this morning. A little bit of weakness there, down about 5% for Digital Realty. Moving on to Concentrix, which is also down after the call center company slashed its outlook, really raising those concerns that AI might be really hurting demand for services provided by call center companies. And we have seen that also that read across to the European peer Teleperformance. So a bit of worries around that call center sector. And finally, Abivax, the French biotech, is up this morning very strongly after its clinical trial results reassured investors that the cancer cases that were found in a prior trial were not actually side effects of the drug, were not related to the drug that it was testing. And so this is now a very promising drug, and so we are seeing a lot of enthusiasm around that, and also potentially reviving some takeover rumors there for Abivax. So we're up more than 35% this morning.
A lovely run there for Abivax after that data and decision. Chloe, thank you so much. Chloe Melly there in London. The S&P 500 on track for its best quarterly gain since the COVID rebound in the second quarter of 2020. That's while the Magnificent Seven stocks lagged the benchmark the most in 4 years. Joining me now at the desk is Jack Caffrey, Equity Portfolio Manager for JP Morgan Asset Management. Jack, characterize this quarter for us. It's been a strange one because it feels like we are changing to something new at the end of the quarter, but that doesn't stop us looking back and seeing a huge semiconductor run, a huge memory chip run, and basically cyclicals just outdoing everything.
I mean, I think looking back over the course of not just the quarter, but the first half has been one of a series of rotations under the surface. You saw a shift from growth, secular growth, to value, particularly kicked off by the excursion in the Middle East. And then ultimately, I think we've gone from an environment where they were the Magnificent Seven to more recently the malign Seven, where you've actually seen how they've had to increase their spending, even looking to borrow money in order to sustain their spending, has actually turned to the beneficiaries of some of the semiconductor companies, the memory companies, as you mentioned, and more recently, even some more stable growth names in the healthcare space, where investors are looking to try to, how can I find growth that isn't necessarily fully tied to artificial intelligence?
Yeah, absolutely. Torsten Stock writing this morning, there's no sign yet that profit margins are rising outside the sector, the tech sector, thanks to AI, and that's what we're waiting for. Are we going to look back and say that moment when Apple came out and said it was going to raise its prices, that was the moment everything changed?
Well, I think that was, in some senses, telling about where there is pricing power. When you think about an economy where we have been told that inflation was on the mend and was transitory, and hopefully getting back closer to what the Federal Reserve was targeting in that 2% rate. And yet, then we're looking at a 20% price hike, primarily justified by the fact that you've had massive concentration and a lack of spending effectively in the physical world versus the digital world. And that revenge of the physical is, I think, very much first and foremost on investors' minds when they start thinking about where profits might be evolving towards. Looking to the back half of this year, certainly we've had a nice kick from energy. That effectively is going to be, working to the benefit of the consumer, working to the benefit of corporations that rely on transportation, and probably take some of the wind out of some of the earnings estimates that were so powerful going through the first quarter, and will likely be very powerful when we get the data coming out in the next 2 to 3 weeks.
So last time we spoke to you, you said that your team of analysts are looking at, profit margins expanding and something like, what was it, high teens?
22% growth this year, turning to 15%
Do they
growth
still
next year.
think that?
Yes. I mean, ultimately, I think we're going to be paying a considerable amount of attention to what companies are offering. I do think we should talk it less about earnings season and more about guidance season, because it's really the guidance under which stocks are going to be trading. And yet, we also might be in an interesting transition away from quarterly reporting towards semi-annual reporting. And that, I think, probably adds more volatility to the market, more opportunities for people to try to guess what may or may not be going on.
How much do your analysts put the probability of that happening at?
Well, actually, our analysts really try to focus on earnings power over, say, a 3 to 5 year period, working towards normal, and spend most of their time on annual estimates rather than quarterly, recognizing that quarterly can be so noisy. But nonetheless, I think the reality is, after 30 plus years in the industry, investors or traders prefer certainty to uncertainty. And the fewer updates you get, the more you start worrying or extrapolating things are great or bad.
Are we coming into a period where higher margins are threatening because they may also threaten the consumer pocketbook?
Certainly we're at a point where labor's share of corporate revenue generation is at near lows. And I think what's interesting about that is there's almost uniform political will to try to reverse that. So it's interesting when the politicians want one thing. They want to bring jobs back. They actually would like to see at least talk about higher wages, and yet the corporate sector continues to find ways to maximize their own profitability. I think, from my perspective, the one bet I never want to take is betting against the corporate sector in the U.S.'s ability to try to manage their operating profits once they understand what the rules are under which they operate.
Right. Okay. Do you think some of that happened this time? Obviously,
I think,
it happens every time.
You go back over time and people talked about fear of layoffs. I think in the back of people's minds, AI is that, once again, that fear under which management can lean on their workers and suggest, if you don't like it, I can try to find a way to automate what your role was doing, and so maybe don't be quite so wanty in terms of compensation adjustments.
Yes. Now, you've been looking outside of the sector and you're liking industrials and financials. Where, because especially at financials, we had an array of performances, you know, even from the majors. So you've Goldman Sachs up something like, you know, 20%, JP Morgan just 12% higher. It's still great performances, but Fifth Third is just blowing everybody away. So where would you look in financials?
Well, I think right now, I think the more interesting companies in financials are primarily the capital markets providers, because when we think back, so much of the growth we've experienced over the last several years has been out of the technology sector. That sector has largely self-funded itself, and now they're transitioning away from being self-funding. In the scale under which a large member of the Magnificent Seven can arrange an $80 billion financing on an overnight basis. So I think capital markets providers wind up being vitally important to actually facilitating that ongoing growth. I do think we're going to wind up seeing some steepening of the yield curve, particularly perhaps not by design, but effectively if we get less forward guidance coming out of the Federal Reserve. Ultimately, I think that requires a little bit more risk premium, and then lending a little bit longer winds up being positive. You get regulatory relief across many of the banks. I think that winds up being positive, and you've just gotten the stress tests. Everyone passed, and you're seeing the dividend hikes and buyback announcements coming out.
Briefly, Jack, in industrials, where would you be looking?
You know, I think transport's become very interesting here. I think that plays into the idea of a broadening theme in the overall U.S. economy, and to some extent, given the consolidation we've seen in them, you start forming what become almost irreplaceable asset bases, and that ideally gets them some pricing power over time.
All right. Jack, thank you so much. Pleasure speaking with you this morning. Jack Caffrey of JP Morgan Asset Management. Now to other top stories trending on the terminal this morning. HSBC says a sharp rally in the dollar could become one of the biggest pain trades in the second half of the year. The bank expects the dollar to strengthen gradually through the first half of 2027. It says the rally could become, quote, explosive if the Fed signals it's ready to tighten more than markets have priced in. Japan's longer bond yields jumping as Prime Minister Sanae Takaichi's spending plans fueled concerns about fiscal expansion. The 30-year yield rose 11 basis points. The 20-year yield climbed 9 basis points. Takaichi's government has unveiled a plan to mobilize more than $2.3 trillion in public and private investment through fiscal 2040. Paraguay declares a national holiday after pulling off the biggest upset of the FIFA World Cup so far. It defeated four-time champion Germany in a penalty shootout. Paraguay will face the winner of France versus Sweden on Saturday for a place in the quarterfinals. Come to think of it, we should have had a national holiday when the next one. Coming up, expanding presidential power. The Supreme Court's decision overturns a 91-year precedent. More on that next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. A divided Supreme Court has given President Trump the ability to fire the heads of independent agencies, but has kept Fed Governor Lisa Cook's job safe while she fights the president's bid to oust her. Bloomberg's Kasia Klimaszinska joins us from Washington. So what was the SCOTUS finding then, Kasia?
President Trump was very happy yesterday. He discussed the Supreme Court opinions and said they are historic because indeed the justices gave President Trump these sweeping powers to fire leaders at the federal regulators. The decision was about the FTC, the Federal Trade Commission, but its scope is much wider. It concerns about 24 federal agencies, such as CFPB, for example, or financial regulators. However, the Supreme Court was very clear that it doesn't refer to the Federal Reserve. In fact, it made a separate ruling regarding the Fed, where there was a case of Trump versus Governor Lisa Cook, and justices said that the Governor Cook can stay on the job while she's defending against allegations of mortgage fraud. She says that she didn't do anything wrong. So the justices said that the monetary policy doesn't come under the powers of the White House. It kept those two powers, the monetary powers and the executive powers, separate for now. We'll hear more from the court today.
And we'll get other decisions. Presumably Lisa Cook, now gets to at least defend herself. What about the housing bill, Kasia? Because it was about to be, sent to President Trump, and it's been in limbo for a couple of days. Does the president have any intention on signing it?
That's a very good question. This is a bipartisan bill that passed both the House and Senate with support of Democrats and Republicans. And Trump himself initially was very supportive of further action that would lower the cost of housing for Americans. But now that this bill is ready for his signature, he said he won't sign it until Senate passes another bill, completely unrelated bill regarding the voting rights, where he wants to kind of narrow those voting rights a little bit. So the bill arrived or was sent to the White House yesterday. Trump can sign it or he can veto it, but if he doesn't do anything, the bill will become law one way or the other after 10 days. Trump was asked about it yesterday by reporters, and he said he will think about it when this bill arrives at his desk. He will make the final decision.
All right, Kasia, thank you so much. Bringing us up to speed, everything DC related. Bloomberg's Kasia Klimaszinska in Washington. The traffic through the Strait of Hormuz picking back up after the latest exchange of attacks between Iran and the US. This as oil is set for its biggest quarterly decline since the pandemic. Bloomberg's Alaric Nightingale joins us now for more. Alaric, how many tankers are actually going through the Strait on a daily basis? Have any attacks occurred since the batch that we heard of at the beginning of all of this?
Well, there were two. There was one on Saturday, one on Thursday. Those are the most recent attacks that we're aware of. In terms of the numbers going through, it's still early in the day today to be getting a full handle on what's going through, but we've seen what looks like a pickup in shipping through the Strait. So there does seem to be a kind of tentative, optimistic outlook on flows through the waterway. So that's a positive for supply, and it's a step in getting the market back to normal and not being disrupted.
Now, ludicrously, we did know that this was a possibility. Morgan Stanley is now warning of an oil glut potentially. This because demand out of China weakened through this whole process, and also exports from the US strengthened, right? How did demand from China weaken? Did it replace with other substances its use of oil, or did it just get it sort of under the radar from other places?
Some great questions. It's worth remembering that before the conflict, China was stockpiling a great deal of oil. That built up over many months. So it's quite possible that there was some drawdown of inventory, maybe a little bit of just weaker demand, and then switch to EVs, and you build up those things together and you get a picture of diminished demand. So that's been helpful for oil, and one of the reasons why prices have calmed back down pretty quickly as we've started to move towards a normalization in Hormuz.
Yeah, I mean, I think plummeted wouldn't be too far from the truth. Is that going to be the same for all types of derivative fuels as well now, Alaric?
That's a brilliant question. I mean, as oil becomes more normal and supply of oil becomes normal, that can enable the refineries to process more and supply more. But we do still see a shortage of what's coming out of refineries in a kind of an aggregated sense. So that does need to be fixed as well. And if it isn't, things like jet fuel in particular would have difficulties. But it really depends on the pace and scale of the resumption at Hormuz. So that's still important for the market. It's not something that the market can necessarily just shrug off indefinitely. If it keeps going on, there will have to be adjustments either on the demand side or on the supply side to cope with the lack of what's coming out of the Strait of Hormuz.
Alaric, thank you so much. Fantastic context there from Bloomberg's Alaric Nightingale. Let's turn to earnings. Nike set to report after the market close as CEO Elliott Hill's efforts to make progress in the firm's turnaround plans continue. Now, shares have halved since Hill took the helm of the company. For more, Andrea Felstead of Bloomberg Opinion joins us now. Is there anything that Nike could surprise us with, Andrea? They need to do something in one of the upcoming quarters, right? Under Armour is just absolutely eating their lunch right now.
And Adidas, I mean, Adidas is really the one to watch. There's been so much comment about, competitors like On stealing their share in running, but actually Adidas is just unstoppable. It's really been great on the fashion side, and with its London Marathon winning shoes, it's becoming more of a force in performance as well. Now, the thing that could surprise is Nike could have done better from the World Cup. It's probably a bit early for the quarter, they're just reporting, but the campaign for the World Cup has been pretty good, and that's really the first sign of things getting back on track that we've really seen.
What could Elliott Hill tell us about the future? Because the World Cup is essentially almost over at this point. I mean, obviously the great games are still to come, but in terms of merchandising and so on, we're done.
Yes and no. There's a hope that what he's hoping is that the World Cup will re-energise Nike's football business for years to come. And there's also a hope that the more fashion-orientated part of the World Cup merchandise keeps going, because this World Cup you've obviously had the kits and the boots that the players wear, and fans like to buy those, but both Nike and Adidas have really created this kind of football streetwear crossover. Soccer core has been a fashion trend, and they're really playing into that. So the hope is that goes on for the rest of the year, but also gives this boost to Nike football going forward.
All right, Andrea, we will see what happens with those earnings a little bit later on. That is Andrea Felstead of Bloomberg Opinion. Coming up, we're going to get you set up for your trading day, the last one in June. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now look at what's ahead today, your final trading day of June, of the quarter and of the half, in fact. We do have economic data, so JOLTS job openings, also consumer confidence from the Conference Board. That data out at 10 a.m. New York time. We also then have the Supreme Court issuing its final rulings of the term. Those rulings beginning at 10 a.m. It's expected to rule on birthright citizenship. Obviously, the rulings have happened. They'll be coming out from 10 a.m. onwards. And then we get earnings from Nike, also Constellation Brands, and that's after the market close. So this is your macro picture going into your Tuesday session. Could be a regular session. It could be a massive session. Don't forget we have jobs data Thursday, so we could be looking at a little bit of a lighter session. We're looking fairly positive when it comes to futures. We did eke out records yesterday for the Russell 2000 once again, as that rotation trade seems to be continuing. Also for the equal-weighted S&P 500, but also the Philly Sox Index. It was up 3.8%, not to a record, but still nice gains for that index. Once again, we're back on track. The dollar index, its first up day in 4, up 0.2%. Where you want to be looking, though, is the yen. It's above 162. It has been. It's been sending long-end yields up by 10 basis points and really probably causing beads of sweat at the Ministry of Finance. This week, we have a U.S. holiday on Friday, and in the past, the MOF has done some purchasing on weeks where there's a U.S. holiday. Not saying that's going to happen this week. Gold has been trying to break through 4,000 and stay there. It hasn't managed to do that. It did break through again this morning, but we're back above it once again. Of course, the stronger dollar not helping gold, certainly not helping crypto either. I saw 59,000 print earlier. Brent crude, though, potentially helping everybody except for the energy companies, down to 73. So we've had our most massive decline since the COVID pandemic. New York crude as well. It is still fairly elevated there, just below $71. Nevertheless, much lower than where it's been. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
as an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
There's a bit of a schizophrenia here about what actually is the path to a peaceful place for the market.
There's finally an awakening to this shift in focus away from those early players of the AI trade.
There's likely to be a broadening of the market.
You get nervous at one point on the AI trade every single year, apparently.
There's just a lot of fragileness in the market, but the overall sentiment, I think people are still pretty bullish.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Stocks inching higher to close out the best quarter in 6 years. Chip stocks leading the pack with a near record-setting performance of 46% this quarter, raising concerns about an overheating AI trade, and European central bankers expressing concern that the inflationary shock isn't over even as oil prices go down. Anne-Marie, it seems like John has taken your advice and head over to Portugal to analyze the lay of the land. But the lay of the land right now is essentially the inflation problem is not over.
Inflation problem is not over, but it's different when you look at Europe versus when you look at the United States. When you look at Europe, and Philip Lane was talking about this, the chief economist of the ECB, to Francine Lacqua in Sintra. She's very lucky to get that assignment. Basically saying that this is the case where they need to rethink about how there's going to be knock-on effects. And Europe is, of course, so much more vulnerable when it comes to energy prices. And what Philip Lane wants to see is basically, and consumers basically want to see in Europe, that they need to see the current peace agreement convert into something more durable. In the United States, a little bit different when it comes to the inflation story. Is it really about energy or something else?
There is a similarity, though, between the U.S. and Europe right now, and that is that forward guidance is dead. And that's what we heard from Christine Lagarde. Stop trying to expect it. Inflation's a problem. That's going to be a much simpler and single mandate type of situation. And that focuses the attention on oil, despite the fact that nobody wants to focus on oil because it's a moving target. We're poised for the biggest quarterly decline in oil prices going back to 2020. Is there actually a meeting taking place today between the Iranians and the U.S. delegates in Doha?
Well, not sure if they're going to meet face-to-face, according to the Iranians, but both teams sent officials. The United States says there will be these meetings. They sent Jared Kushner and Steve Witkoff, the president's special envoy, and his son-in-law to these meetings. But the Iranians are saying, we're going to be in Doha, but we're not exactly going to be meeting face-to-face with the American counterparts.
So the great housewives of the international scene continues. Right now, we are also expecting a slew of data coming out this week, starting off with the JOLTS data coming out at 10 a.m. Eastern today. How much does the data indicate that there is going to be some sort of overheating in the underlying economy and then ISM manufacturing tomorrow. Part of the problem is, even if we're data dependent, we don't understand what the reaction function is. Do we have a better sense of that after the speech that we get from Kevin Warsh tomorrow?
Hopefully, but what has Kevin Warsh said so far? I'm not going to speak unless I have something to say. Does he have something to say in Sintra, Portugal? Will we get any sort of inkling on either his reactionary function, maybe who is leading these task force, and if we can read into anything he says about forward guidance?
Well, right now we are poised for the best quarterly gain for the S&P going back to 2020. Looking to build on that, sort of, if you can consider this anything of a move, about a 0.1% gain that could go any way. Nonetheless, led by the NASDAQ, which is notable. We saw that outperformance once again yesterday with, guess who? The hyperscalers making a turn at the top once again. When you take a look at the bond space, you can see just utter calm. I mean, really, the more that central bankers talk and the more concern there is about a lack of reaction function, the less bond yields do. We're still at 4.1% on the 2-year and still locked in there at 4.85% on the 30-year with a little bit of a dovish tilt this morning. Really, the news overnight and the action in markets was with the Japanese yen falling to the weakest going back to 1986. Over to you, Bank of Japan. Are you going to raise rates? Are you going to respond to that in the face of what globally seems to be an inflation shock that is raising concerns in central banks around the world? Coming up this hour, we've got John Stoltzfus of Oppenheimer, with equities looking to close out the quarter on a high note. Henrietta Trey's of Veda Partners as Iran seeks more control over the Strait of Hormuz. And Matt Hornbach of Morgan Stanley, with investors awaiting a busy week of data. We begin this hour with stocks holding steady following a rally in tech. John Stoltzfus of Oppenheimer, one of the bulls, writing, with S&P 500 Q2 earnings season several weeks away, news flow, eco data, and developments in the Middle East are likely to drive market sentiment. John joins us now for more. John, great to see you.
Great to see you as well.
Driving sentiment up or driving sentiment down?
Well, you know, driving sentiment up, I'd say right now, we'll have to see the way the jobs number looks at the end of the week, or well, on Thursday, a little bit early this week. But we have to say things are still remarkably good, and I think the operative word remains resilient. Resilient doesn't mean robust. It means resilient, not unchallenged. And every time we get the challenges towards that resilience, whether it's an economic data piece, a piece of information related to a setback in the negotiations in the Middle East, or whatever have you, it seems to be overcome by that resilience factor that either shows earnings better than expected, debt in better situation than it actually was thought to be when the bears and the skeptics start trying to drag things down. And fundamentals remain very positive. And that's what you got to... We watch the fundamentals. I don't go after the technicians. I respect them, but I'm intermediate to longer term investments. And, you know, we're all on the upgrade cycle in terms of tech. Whenever the drama and the headlines are against technology, I tell my team that's many years younger than I am, I tell them, I said, let's sell throw away the PC and the laptop. Let's look for an abacus, and for a slide rule, we'll be all set.
I see what you're doing.
And forget about the GPS when you get in the car. You need a yellow legal pad, write it in pencil, get a flashlight, get a map. You know, we're not going back.
I can already see the fights ensuing in the car as you try to figure out the directions, because any of us old enough to remember that, and the parents in the front. Either way, I am wondering, though, if there has been a shift in tone, and whether we've seen that with respect to a real question about how much spending there actually can be on semiconductors, given the expense, given the pushback that you're seeing in markets, and given the fact that debt investors are starting to get a little pickier.
I think without a doubt, you feel it and you see it, and it goes in this operation where you go day to day, risk on, risk off, tech on, tech off, back and forth. It's an argument, but the good thing is I think it puts players on notice that be careful what you're doing, relating what your expectations are on this. And for investors, the idea is you have to be aware that there will be failures. There will be things that will not work out in AI and other things that will. Just think back on the internet. And we don't think this is like the internet bubble. This is very different. Both business and the consumer have tech deeply embedded. We're dependent on tech in our lives. So, you know, overall, we just think uncertainty is very common in life, and it's always in the markets. There's an old adage that the markets don't like uncertainty. They love uncertainty. The traders have an opportunity to go after the next vanity plate for the next new trophy automobile. And for intermediate to long-term investors, look for babies that get thrown out with the bathwater.
Do you see this as a 2026 story? Or is this really more of a 2027, 2028 story?
I think it's genuinely 2026 story. I think we have to see how 2027 develops going forward because the changes today happen so much more quickly than ever before. Yeah, as you know, I always say when I come on the show, I've been in this business for 43 years, so I've been every boom, bust, and recovery cycle since 1983. And the markets today, because of the news flow and the accessibility of news flow on organizations like Bloomberg, as a result of that, the markets discount both bad news and good news very quickly. And it's a remarkable thing. It's actually a benefit to the markets. As I said, it keeps everybody honest. You get shaken up every so often, and you realize trees don't grow to the sky. It's like, you know, you don't feel like, well, I'm not going to mention some of the people from the other busts in the past. I don't want to fight with people from the past, some of whom are in their graves now.
listening.
But the point is the reality is this is a different world today. You have to look at structure, and the structure of everything has changed via social media, technology that's utilized in business, for pleasure, leisure, what have you. And it's a dramatic change, and but you know, there's a whole generation that believes that we never had payphones or we never had rotary dials on telephones.
So if you're concerned, though, or a little bit concerned with the AI trade, how are you hedged against this?
Well, what I'm doing is, if, for instance, we have a dividend opportunity portfolio that I'm the manager of, and I can't tell you what we own in it, but I can give you this idea. We barbell it. So we have tech. We also have telephone companies. You know, we have utility companies in it. It's all 11 sectors. It's diversified, and it has an ability so far over the 9 years that it's been in existence to weather significant volatility and bounces very well, like a healthy count bounces, not like a dead count bounce.
Do you think that the rotation that we've been seeing with the equal weight and the Russell 2000 outperforming can continue? Do you think it has to keep performing in order to reach some of your targets?
No, I don't think it's the end for large caps. I just think, and I don't think it's either the end for this run that we've seen in small caps. I think there's room on the stage for large, mids, and smalls. We believe you have to be selective. You got to look out for the junk, look out for the value traps. We like growthier value and GARP growth, which is growth at a reasonable price. So in technology, for instance, we don't necessarily, we own some of the names you think of right away in tech, but we own other names that most people don't think of that support those names.
You've been in the business for more than 40 years, as you were saying. Can you characterize this moment to give us a sense of how different it is, I mean, or how similar it is to previous cycles of booms and busts, just in terms of sentiment and in terms of novelty that a lot of people feel?
Great question. I think markets are often considered to be mostly about fear and greed. And they're not. It's fear, greed, and need, genuine need. And today, one of the things that structurally has changed the market so much is that the private investor, who for many years was treated with disregard by the institutions, today is in many ways more important than the institutions when it comes to the amount of direct investments and indirect investments that the private investor holds. It used to be if you worked for a wirehouse, as they used to call them, they would tell you if you find a qualified client, offer them 5 stocks for diversification, maybe a tax-free municipal bond or a mutual fund. Today, with the products that are available today, an experienced advisor can build a portfolio for an individual or for a family office that will rival major institutions, or that can rival major institutions. And they're investing seriously. It's not for cocktail party chatter. When the private investor used to come in, usually once the market was up 15 or 20%, they'd rise it up, they'd ride the last 5 or 10%, then get disappointed. Today, they come in much earlier and they stay. They recognize that studies that have said that it's more important to be in the market, that time in the market is more important than time in the market for intermediate to longer term investors. And they're investing because Social Security will likely not be anywhere near what it was for the prior generations. And lastly on this is the other part of this is you no longer have defined benefit retirement plans for most companies. So people need to make investment decisions that are serious.
John Solsvis, wonderful to have you. Thank you so much for being with us.
Thank you.
John Solsvis of Oppenheimer. And it's sort of the definition of how the, quote, dumb money has become the smart money from a lot of people, because ultimately that is the crowd that will set the tone.
And look at SpaceX, how much they allocated and how much these retail investors actually bought in. Similar to John's point, this is making up a huge part of the market. And it's no longer just the institutional investors.
Yeah, it's a structural shift. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. Iran's deputy foreign minister signaling Tehran remains firm on maintaining control over traffic in the Strait of Hormuz. The remarks to state television coming ahead of the next round of talks with the U.S., supposedly scheduled in Qatar today. The yen sliding to the weakest level against the dollar in 40 years, a move that has traders on high alert for authorities to intervene. The government already spent a record $72 billion from April to May defending the currency. And in sports, Paraguay delivering the biggest upset so far in the World Cup, sending four-time champions Germany home in a dramatic penalty shootout. Germany's game-winning corner kick was overturned after replay review, ending their first appearance in the knockout rounds since they last won the tournament in 2014. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. I gotta say, shootouts just are not satisfying.
I know, and there's been a bunch of them. And Netherlands lost, right? And I'm pretty sure the individual, the German economist who predicted 3 prior World Cup winners, had Netherlands winning this World Cup. So things are really just...
Way to pour salt in the wounds, Amber. You're like, you got it wrong. Right, up next, heading back to the negotiating table.
Going to Qatar. The meeting in Doha is going to be perhaps important, perhaps not. We're going to find out.
Eduardo Treyes of Veda Partners joins us next. This is Bloomberg Surveillance. Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Giving a little extra heat to what could be the best quarter for the S&P going back to 2020. We just see a little bit of a lift across the board, a really violent rotation throughout the month. We've seen, of course, semiconductors outperform dramatically. We saw the hyperscalers lose steam with potentially the worst monthly loss for Microsoft going back years. At the same time, equal weight coming back. You see really an even kind of advance this morning. NASDAQ futures up 0.2%. Russell 2000 up 0.1%. When you take a look at the bond space, really quiet, but not quiet over the past quarter. The 2-year yield has risen 31 basis points over the past 3 months. This morning, continuing to disinflate to 4.1%. On the long end of the yield curve, really quiet. That yield curve flattening has continued at 4.85%. And in the oil space, we're all watching this to understand just how much heat can be taken out of the inflation trade. A little bit of a lift here, but just amazing to see how much oil prices, Anne-Marie, have come down over the past 3 months.
Right, because the energy is moving. Even if we have some tit-for-tat attacks over a few-day period or rhetoric that seems sometimes particularly hot, either from Tehran or the White House, the fact of the matter is more vessels are getting through. And even as the world deals with drawing down inventories, the fact that oil is moving is a positive sign.
Yeah, so either way, you get, of course, job owning, you get some attacks, and then you have negotiations under surveillance this morning, heading back to the negotiating table.
They're going to Qatar. I think they've already left, or they're just about getting ready to leave. So we'll see how that goes. But we're doing very well on that front. But the meeting in Doha is going to be perhaps important, perhaps not.
Here's the latest. Peace talks between the U.S. and Iran resuming in Doha. Tehran demanding greater control over the Strait of Hormuz. Bloomberg's Tyler Kendall joins us for more. Hey, Tyler.
Hey, Lisa, good morning. Well, it is becoming increasingly clear that Iran is determined to maintain its control over the Strait of Hormuz as we head into this next round of potential talks today. New comments overnight from a top Iranian official reiterated this intent to create a structure to oversee the strait alongside Oman. But importantly, this official went on to say that Iran is determined to do so with or without its neighbor. Now, over the long term, that may be easier said than done as more ships choose to transit through the strait, through that corridor that hugs the coast of Oman in a bid to get further from Iran, because we are seeing this uptick in confidence when it comes to commercial shippers, as new data analyzed overnight shows that at least 24 commercial vessels with the potential to carry 11 million barrels of oil transited through yesterday, though this is below pre-war levels. And that's adding to the stakes ahead of these planned negotiations, as the White House says that Special Envoy Steve Witkoff and the president's son-in-law Jared Kushner are going to lead these talks, though importantly, we should mention that we haven't gotten at least public confirmation from the Iranian side, though the understanding is there is a delegation on the ground this week in Qatar. And then, Lisa, of course, we're also tracking what the potential domestic pressure looks like, because President Trump took to Truth Social last night to reiterate his threats against retail gasoline or gasoline retailers to bring down the costs at the pump, though we know that a lot goes into setting that final price. According to AAA, today's national average stands at just below $3.85 a gallon.
Tyler Kendall, thank you so much, and we'll be catching up with you throughout the day. Henrietta Trace of Veda Partners writing, negotiations are underway, but the things the White House are trading away on the sanctions front pose a very real risk to the Western financial system. Henrietta joins us now for more. Henrietta, great to see you. Thank you for being with us. What are you watching today, if there are negotiations between the U.S. and Iranian delegations, to understand exactly what the U.S. is getting in return for alleviating some of these sanctions?
You know, the sanctions front, I think, is just so critical watch, obviously, because the Western banks, the Western corporations, insurers, NATO nations, the entire Western globalized world needs to follow along the trajectory of whatever the U.S. decides is okay here. Lawmakers have to sign off on it, and it needs to be codified in a way that everybody can get comfortable with. So this is going to take a very long time. I do not anticipate that this is going to be one of the issues they can resolve right now or even in the first half of the 60-day window. We have 60 days that go till August 20th, if my math is correct, but everybody is widely expecting for this to get kicked further beyond that because these issues are just so thorny. I don't expect that we'll have a conclusion on what the sanctions or what the tax front is going to be today. And I think that's going to be the trickiest part of this whole negotiation. I mean, we know what the nuclear file should look like. The president has traded away ballistic missiles, but the sanctions stuff just has so many individual components that need to be worked through. I think it's going to be a real time-consuming component of these talks.
Henrietta, deja vu from the Biden era, but Trump on Truth Social yesterday saying gasoline retailers must get their prices down. He's saying that they're price gouging and that if they don't do something, there's going to be big problems that lie ahead. As we are in peak driving season, as of course we look forward to the midterm elections in November, is Congress still weighing potentially what they could do to ease some of these affordability concerns for consumers?
Yeah, life comes at you fast. No, Congress is not considering anything like that at all. when we talked about a gas tax holiday with staff, it was really clear that they need pain to be exponential. We saw last Wednesday how Republicans really did stand up to President Trump. And they were saying, give us a briefing on the war. Let us know what's going on. What is the agenda? What are our goals? What can I tell my constituents when I go back home? Why aren't you passing the housing bill? They are not in a, hey, let me help mode. They are not in a, let me pass a gas tax real quick and get you a holiday that'll, last 90 days. There was a bill that was introduced earlier this spring that would have suspended the gas tax all the way through November. That's not being discussed right now. Indeed, the stuff that they are talking about is an $88 billion supplemental that would provide $67 billion to the Pentagon and $11 billion for the farmers as they deal with the fallout from tariffs and also higher fertilizer costs as a result of the Strait of Hormuz. So this has become more of a localized issue, I would say. And there's nothing percolating that I've picked up on in my time on the Capitol this week or last week around gas taxes.
What will get done before the midterm elections? We know the speaker is now attaching the Save America Act to the annual defense policy authorization bill. Is that going to swing?
No, definitely not. The Save America Act, and my favorite senators to look at for that, and the favorite state that I have is really Alaska. You're effectively disenfranchising the state of Alaska, who'd have a really difficult time getting their voters back on the rolls the way that the SAVE Act is written right now. Lisa Murkowski gives really impassioned speeches on the Senate floor about this very topic. So if the House wants to send it over so Speaker Johnson can, get rid of some of the logjam in his chamber, that's all fine and well. He's done his part. But Leader Thune is not going to fire the parliamentarian, as the president tweeted about yesterday. He's not going to kill the filibuster. And the SAVE Act just doesn't have the votes. So the president is very single-minded about this topic at the expense of the housing bill, at the expense of some other things that the administration needs to see, like avoiding a government shutdown at the end of the fiscal year. But we're not going to get the SAVE Act.
Henrietta, it's amazing that we are almost a half an hour into the show and we haven't talked about the Lisa Cook case and the Supreme Court decision that allows her to stay in her seat as governor while the proceedings that the administration has brought against her continue. How significant is this in your view? Do you think that the administration is just going to back off and then we're going to see Jerome Powell just fade into the distance and allow them to have an extra seat in the Fed?
Call me crazy, but I think this is an amazing outcome for the president. I think having Lisa Cook and potentially Jay Powell staying on through the duration of his term, now that Bill Pulte has threatened her with yet another round of lawsuits and an actual try to identify cause for firing, this means that Powell could stay, Lisa Cook is there. Trump can't go after Kevin Warsh. That's his guy. But now he's got two boogeymen instead of just one. And if the Fed can't reduce inflation, interest rates because of inflation as a result of the combination of the tariffs or the trade war, the hot war with Iran, this is great news for the president. Now he's got two folks that he can continue to hammer, blame inflation on them. I think it's okay for the president if he wants to take the win here. But obviously, the Supreme Court rejected his attempt to fire the member, and I think the street really received that very positively. I know Jay Powell was pleased.
Henrietta Trays of Veda Partners, thank you so much for being with us. We've seen this before, Emery. I mean, there have been chances to take the win and just back off when it comes to a case that a lot of people said threatened Fed independence. You did see a market move, more confidence in the long end of the yield curve after this court decision was released. He hasn't in the past.
More confidence, though, potentially from Chief Justice John Roberts. He wrote this in writing for the majority. Congress has limited the president's power to remove governors for good reason. They were focused on monetary policy in this ruling.
Yeah, very much so, because it was very different than another ruling having to deal with certain federal institutions. Coming up next, we're going to be talking about the tech trade. Are things getting overheated? What do you think Dan Ives has to say of Wed Bush? Probably not. He sees tech giants continuing their war. Plus, you hire Anand with your Morning Movers. Digital realty falling. This is Bloomberg.
anything we do in Africa is going to be more risky than the US. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Just amazing to think that 3 months ago we were worried that potentially oil prices would go to $200 a barrel and suddenly that would torpedo all growth. We just are potentially poised for the biggest monthly gain on the S&P going back to 2020. On the NASDAQ, we're looking at quarterly gains of some 23%, really led by the semiconductors, a real churn under the surface of the tech trade. And the Russell 2000 hitting a record high, eking that out yesterday overnight. Today, adding to that, building throughout the morning. Session growing more bullish as we speak. 0.2% gain on NASDAQ futures. The S&P and Russell up a bit more than 0.1%. In the bond space, it's been the opposite. I mean, the rally has come despite what we have seen, which is yields substantially higher. In the quarter, up about 30 basis points on the 2-year. Suddenly, people pricing in the idea of a rate hike. We have taken a lot of heat off of that, though, and I think it is important to note that the rhetoric has been somewhat mixed from Fed officials, and a real question about what the jobs data is going to show with JOLTS and then, of course, the labor market report. Right now, on the 2-year, 4.1%, kind of anchored there. And meanwhile, this to me is catching my attention. At AMH, I don't know. You just have to wonder at what point the Bank of Japan is going to step in here. You're looking at the weakest level on the Japanese yen going back to 1986, 162 per dollar. And you just start wondering at what point they have to take action despite some of the tone from the government.
What's the new red line if they don't take action now? Are we going to see intervention like we did in 2024, or potentially are they going to let this ride? And a lot of this is coming from the prime minister and what is going on in the fiscal space when it comes to Japan. More fiscal expansion. Potentially, maybe we'll get more, press releases about a certain phone call between the Treasury Secretary in Japan and maybe try to help them verbally. I think for this market, though, they're going to have to wait and see what you just said, what JOLTS do, what we get from the non-farm payrolls report on Thursday. What does that mean for the U.S. dollar? And potentially, does that help in terms of what's going on in Japan?
Regardless, we are seeing a dollar strengthening, and that's actually a reversal of what a lot of people thought. And there are some people raising questions about how much that could be the ultimate pain trade. 3 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with Digital Realty. Those shares under pressure this morning, down 5.3% after agreeing to buy Blackstone stakes in 3 North Virginia data centers for $3.5 billion. The move itself expands its footprint in the world's hottest AI data center market, but investors are focused on the financing since Blackstone will immediately be selling at a discount the 12 million shares of Digital Realty shares it's receiving in the transaction. Turning to another name moving to the downside, this is Concentrix, plunging 23.7% in the pre-market. It's a call center company, and it cut its full year outlook, and it's yet another example of AI disrupting the industry. Bloomberg Intelligence writing that AI is shrinking demand for its traditional business faster than it's growing its newer AI services. And we end on defense with Aero Environment. Those shares soaring nearly 25% in the pre-market after the drone and defense technology company beat expectations and issued a strong sales outlook. It's saying that demand for its drones and counter drones technology is continuing to soar as governments continue to ramp up spending in that area. Lisa?
Thank you so much, Yahira. Honestly, the single-day moves in specific names has just been off the charts, whether it's the likes of Microsoft or Amazon, or whether it's some of these smaller names. I mean, that to me, that single-name volatility, really notable.
Unbelievable. Sometimes you can see the S&P 500 or the Dow Jones Industrial Average not really do much, but under the hood, you are seeing sometimes double-digit gains or losses on a single name. And to John Stoltz's point, some of this has to do with actually also what's going on with the retail traders and investors.
Yeah, who have been, in some ways, the smart money. On our radar this morning, the Supreme Court ruling that Fed Governor Lisa Cook can keep her job while fighting President Trump's efforts to fire her. The court also expanding the president's power to remove the heads of independent agencies.
Should we expect more firings as a result of this ruling?
I don't think so. It gives me the right, and not me, it gives a president the right to do what the president should have the right to do.
The ruling overturning a 91-year precedent curbing executive power. Meanwhile, the yen falling to its weakest level against the dollar in over 4 decades as Japan's bond yields climb higher. The move sending import costs soaring and putting investors on alert for another potential BOJ intervention. And meanwhile, authorities in Taiwan raiding the offices of chipmaker Supermicro in addition to several residences. The raids tied to an ongoing investigation into alleged smuggling of NVIDIA chips into China using Supermicro servers. Is this an issue of Taiwan trying to preserve their sovereignty, trying to preserve the relationship with the U.S.? Supermicro shares up 1.75% today.
I think a few things are going on here. One, re-exporting chips from Taiwan to China is not a criminal offense in Taiwan, but Taiwan has been under immense pressure from Washington really for years to try to stop some of this. The Financial Times last week had this leading paragraph. NVIDIA's AI chips have more than doubled in price on China's black market as the U.S. crackdown on illicit exports collides with strong demand from Chinese companies. So you see this insatiable demand from China for a lot of these chips and technology that has export controls from the United States. And if it's not illegal to do so from Taiwan, potentially that's where it's coming from. But you've seen this push and really a heavy hand by Washington to get Taiwan to crack down on that.
And this comes amid a huge sovereign push into AI as AI continues to perform. U.S. stocks on the verge of completing their best quarter in 6 years. Tech, however, on track for its worst month since March of 2025. Dan Ives of Wedbush writing, tech stocks have way oversold in June. They ultimately represent major buying opportunities as these bearish narratives have overshadowed the future massive growth prospects. Dan joins us now. And of course, when we're talking about tech, we're talking about hyperscalers in particular, which have been the huge losers until yesterday, where you actually saw a little bit of a turnaround. Why do you reject the notion that people are pushing back against the spending plans of some of these tech behemoths?
Look, the hyperscalers are $700 billion. I mean, that's what's funding the AI revolution. I mean, when you talk about memory chips to NVIDIA to everything else, but that's just the first phase. Because what the hyperscalers are doing is, this is the build out. It's Vegas Strip building in 1955. But ultimately, the monetization now is going to come. I mean, when you look at Meta, they're not just spending to spend. You look at Microsoft, they essentially own the enterprise. Alphabet, 5% of their customers have gone to the AI path. Same thing with Amazon. So my whole point is, you've had this tech rally, but Mag 7 right now, penalty box, essentially. I think it significantly outperformed second half of the year. And I think earnings season, as we see in July, I think that's going to be a huge validation moment for big tech.
So the Vegas Strip maybe is a decent analogy on the just actuality of it, not in the scale. I mean, we're talking JP Morgan expecting $5.5 trillion to spend on CapEx spend for AI heading out to 2030. We're talking about massive numbers that are accelerating, not decelerating. And capacity-constrained companies, right? I mean, some of these companies have said, we can't give you all the compute you're looking for. So how do you see them monetizing without raising prices enough to really trickle into the cost of what everybody is spending on an everyday basis?
Yeah, well, first off, for every dollar spent on, let's say, an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. So that's extremely important in terms of what you see in terms of, you talk about some of the single stock moves, just to broadening out what we're seeing in terms of tech. And you could argue for names like Caterpillar and others. But when it comes to hyperscalers, look, it's an arms race. That's why the question is, like, can they actually cut CapEx? They can't. In other words, like, you're diving into the deep end of the pool. because if they cut back, then they go behind others in line that will clearly go ahead of them. Anthropic, OpenAI, ultimately as they go public, they'll just have more and more cash. And I think that's the reality right now. And to those, the bears will be like, oh, it's spending to nowhere. It's the opposite. I mean, you're essentially building out a new economy for consumers, enterprises, and for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
But what about demand destruction? Does that happen, especially when you see something like Apple come out and across the entire suite having to raise prices?
Sure, look, I mean, there's going to be negatives, just like we see with memory, because there's a limited amount of memory chip players. You can't just
So there is a breaking point, though.
There is a breaking point to a point where, like, okay, if you continue at these prices, eventually there's cannibalization, there's churn. For Apple, at these levels, 100 bips of churn maybe. When it comes to iPhone, it'll be a $150, $200 price increase, but then there'll be subsidies from carriers and others. But look, now you're seeing where it's called Ramageddon, or what we're seeing in terms of memory prices. That is going to have an impact. But I view it as it's paying a small tax on the broader ecosystem that's being built out by big tech.
But if there is a little bit of a breaking point, when does it happen?
Look, I think in the next 6 to 9 months is where you need to see some sort of stabilization when it comes to prices. You need to see scale. You need to see ultimately what we're seeing in terms on the token side, where you need to see like prices start to come down. CapEx will be about $1 trillion for big tech next year, but then the monetization starts. So essentially, you start to actually now see the monetization piece, which is very important to just investors feeling like Meta, they're not just spending like 1980s rock stars for no reason.
There's one story that really caught my attention over the past couple of weeks. It's the idea of Microsoft shifting to Chinese large language models that are open source and that are cheaper. It's the idea of OpenAI pushing back their IPO, and a question of how much OpenAI and how quickly the Anthropics of the world can monetize given the cheaper competition overseas. How much do you see that as a pressure point that hasn't fully been realized or even actualized in terms of people's ideas?
Look, my view, and I think you see with OpenAI and Anthropic, the models eventually will become commoditized. And it's not just OpenAI and Anthropic. You'll have hundreds of models across the world, vertical specific. The value will be in the data, how quickly that they could penetrate enterprise. Microsoft, in terms of Nadella's seeing around the corner, understanding like you have to ultimately diversify when it comes to models, and eventually as it becomes a global sort of game. But when it comes to Anthropic and OpenAI, they understand enterprise is golden goose. That's what they're going after. Now, to some extent, part of the reason that Microsoft, that you see the stock to where it is, because there's a view like, okay, that becomes competitive. They had OpenAI, but now like where do they sit relative to enterprise? My view is on enterprise, Microsoft will continue to be the ultimate winner, but it just shows it's a convergence what's happening across the AI ecosystem.
If that's a commoditized resource, the large language models, and it really is the data providers are not OpenAI and Anthropic, well then what's the monetization prospect for some of these companies that potentially are going to IPO at $1 trillion?
Well, for them, it's all about enterprise. I mean, if you look at Anthropic's growth, it's been unlike anything we've ever seen in terms of ARR. Now, for OpenAI, it's a bullseye on their back. They have to continue to monetize in the enterprise, because enterprise, when you think about all the data centers being built and all the memory and everything, it's being built for what will be the use cases on enterprise, on the consumer. Software vendors, in my opinion, are the ones that it goes back to the second, third derivative, just like cybersecurity. So I think part of where I think investors, and I don't think it's reflected in the stocks, is like they're underestimating the scale and scope of what this is all going to look like. And I think we've talked about it. It's like party start at 9 p.m., goes to 4 a.m., it's about 11 p.m.
Can you monetize a model that's currently restricted?
No. And that's why when it comes to Anthropic, that's why they're starting to play nice when it comes to government. You're seeing some sort of, compromise, or at least some moving of the goalposts. And that's important because Anthropic right now, I mean, you're talking about the best model in the world. You cannot be on relative to what we see on the DoD and the Pentagon. That's why it's an important time for Dario and Anthropic to get to some sort of compromise when it comes to U.S. government.
Dan Ives of Wedbush, thank you so much. Always wonderful to see you. And that is the question, ultimately. And a lot of people are asking this, Emery, which is essentially...
When's Fable 5 coming back?
When is Fable 5? And if it doesn't come back, how reliable is this model? And do people head over to China because it's more reliably going to be accessible since it's open source?
And at that point, for national security reasons, you can imagine the United States would not allow that. And that would become a restrictive source. But to Dan's point about playing nice, there's an information report that apparently they called Dario Amode a weirdo, and so now White House officials, so now, and this is according to the information, White House official Anthropic is sending in their co-founder to deal with them, because I think potentially a little bit more easier in terms of diplomacy between that individual and this White House.
Can't keep up with this news flow. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, President Donald Trump refusing to commit to signing a bipartisan housing bill, saying he would make a decision once he receives it. Sources telling us here at Bloomberg the legislation has been sent to the White House. The transmission starts a 10-day period, excluding Sundays, in which the president can either sign or veto it. If he takes no action, it will become law. Venezuelan opposition leader Maria Corina Machado is trying to return to her country to help with reconstruction efforts after 2 earthquakes last week. Machado says she was unable to return because the government closed its airspace in an effort to block her arrival. Morgan Stanley is cutting its oil price forecast for the second time in about 2 weeks as flows through the Strait of Hormuz return faster than expected. The firm says strong U.S. supply and weak Chinese demand raise the risk of a glut. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Up next, taking back insurance hikes.
The risk here is we can't keep printing these payroll numbers without the unemployment rate coming down. All you need to do is take back the hikes that you did last year. You were buying insurance against an event that didn't really play out.
Matt Hornbach of Morgan Stanley joins us next. You're watching Bloomberg Surveillance. Good morning.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the 3rd floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Building on what might be the best three-month gain for the S&P 500 going back to 2020. Right now, building on that this morning with a bit of a positive tilt, really led by the tech sector. That is a new development. What we're seeing is a lift of about 0.1% on the S&P and on the Russell 2000, which yesterday hit a record high. You're also seeing it build there. Right now, tier yields flat at that 4.1%. Crude coming off just a touch. Those talks may be happening in Doha between the U.S. and Iranian delegations. And watch the yen, 162. North of that, with this level really raising concerns, the weakest for the yen going back to 1986. Under surveillance this morning, taking back insurance hikes.
The risk here is we can't keep printing these payroll numbers without the unemployment rate coming down. And if that starts coming down, then both your mandates are pointing in the same direction. All you need to do is take back the hikes that you did last year. You were buying insurance against an event that didn't really play out.
Here's the latest. Investors gearing up for a slew of jobs data this week, hoping it will give them some clues about the Fed's next policy move. Matt Hornbach of Morgan Stanley writing, should these micro pressures manifest and tighten macro financial conditions, markets will place less weight on hawkish Fed tail risks. Matt, thank you so much for being with us. Just when you take a step back, what's your takeaway about whether this Fed is actually hawkish or whether they are just simply jawboning a market to do the work for them?
Well, it's probably a bit of both. We all know that half of the committee at least is leaning in the let's hike rates direction, and the other half of the committee isn't, right? So certainly it's a divided committee in a sense, but Chair Warsh brought them together during his first meeting and got a consensus vote on a pared back FOMC statement. So I do think that the data going forward, and most importantly, its implications for the economic outlook, is what will drive Fed response in action over the next 6 to 12 months.
So we've heard it from Kevin Warsh, forward guidance is dead. We've heard it from Christine Lagarde, forward guidance is dead. It seems like everyone is chucking that out. What is the data telling us? I mean, I talked to 3 economists. They'll tell me 15 different ways to look at it and different interpretations. What exactly will be the tell about whether things are heating up or cooling down?
Yeah, well, the first thing I would say is what inflation did 5 years ago should not be a relevant part of the discussion unless it was affecting inflation expectations, and it really hasn't affected inflation expectations. So I think this idea that inflation's been above target for 5 years, that's a yesterday concept. I think going forward, it will be, well, what are the implications of what we're seeing happen in the economy today, what we're seeing happen with financial conditions to the inflation outlook, not what did inflation do 4 years ago. What we're seeing in the data from our vantage point is inflation is likely to come down, much more so than it's likely to stay up here around 3%. When we're looking at what's happening with wage growth, we're looking at what's happening with productivity growth, what's happening with labor share of income, all of them point to a forward look on inflation that is much closer to 2%, if not, in some cases, even below 2%. So I would say that a forward-looking Fed, which we think this Fed will become over time, that is a Fed that's not going to be looking to raise rates. We think they'll be looking to cut rates in 2027.
But doesn't the context matter in the sense that the prior 5 years missing the inflation target continuously? Doesn't that basically mean that the Fed has accepted a higher inflation?
Well, I mean, accepted it. In some ways, the Fed has had to deal with a lot of exogenous shocks that were not of its own making. And so I would say it's only relevant insofar as it has affected the inflation expectations of households in the country. And what we're seeing in the data is that it really hasn't affected the inflation expectations of households in the country, in part because real incomes have come off the boil. The real incomes over the past year did not grow very well. And it's really about income growth expectations that ends up determining people's spending habits, not what they think about inflation in the future based on what's happened in the past.
We're going to get Kevin Warsh's speech in Sintra. We're also going to get the jobs report. What are you looking forward to this week?
Well, we have the unemployment rate unchanged at 4.3%. The Chicago Fed, which releases a nowcast of the unemployment rate, also sees the unemployment rate remaining at 4.3%. I would say if that's what we end up getting on Thursday, the chance of the Fed hiking rates in July is slim to none.
Have you seen tightening financial conditions on the margins enough to alleviate concerns by some that maybe Fed conditions are a little bit overly easy in allowing an exuberance to build in markets?
It really depends on how you measure financial conditions. I mean, this is the $64,000 question. There's lots of different ways of measuring financial conditions. The San Francisco Fed produces a measure called the proxy funds rate, which looks at certain financial markets, integrates them back into the effective federal funds rate. And what that shows you is that policy has tightened by almost 100 basis points since the war began. Of course, if you look at the equity market, you're going to get a different story out of it. It really depends on what basket of financial market prices are you looking at to determine your financial conditions metric.
It sounds like you think that there's a good chance of no hikes at all and that potentially the Fed just remains on hold. Is that right?
This year, absolutely. Okay. We're not seeing rate hikes in the profile for this year.
So if that's the case, does this market need action to believe the rhetoric? Or are they going to say, fool me once, shame on you, fool me twice, shame on me?
Look, I mean, does it surprise anybody that the Fed is telling us that they're going to ensure inflation comes back to their 2% goal? How is that surprising to anyone? Of course, Warsh is going to double down on that message. That's one of the two main mandates of the Federal Reserve. So we weren't surprised by that, to be honest. I understand the market read it in a hawkish way, but that's just the momentum taking over. There's a lot of cognitive dissonance happening today amongst investors because look at what's happened with oil prices. Now we're just supposed to ignore the fact that oil prices have come down to a level that a month ago nobody thought, even the experts in the commodity sector, nobody thought was possible. Now we're just going to ignore that and focus on other things that happened in the past. That's not what a Kevin Warsh Federal Reserve is going to be like. They're going to look forward. They're not going to look back.
Matt Hornbach, wonderful to have you on the show. Thank you so much for being with us. Matt Hornbach of Morgan Stanley. And essentially, he was kind of maybe commenting on what the ECB officials were saying overnight in Sintra, where, you know, you got to look at the trickle-down effects of some of the inflationary inputs.
Right. What Philip Lane is talking about is the knock-on effects when it comes to oil. But his colleagues over at Morgan Stanley also just cut their forecast for the second time in about 2 weeks when it comes to where oil prices are going. But many would say that the president blinked because he knew there was going to be an upward rise when it comes to the oil prices.
Either way, oil prices have been plummeting over the past 3 months, the biggest loss going back to 2020. Coming up next, Wei Li of BlackRock, Mark Short, former chief of staff to former VP Mike Pence, Vinu Krishna of Barclays, and Bob Michael of JP Morgan. This is Bloomberg Surveillance. Good morning.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time
We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It is an uneven economy.
I don't think you get more than one hike this year.
We are in an environment where inflation is going to stay above target.
We don't know what Kevin Warsh is really thinking.
He's more the steady hand type. He'd prefer to wait and see.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance, with stocks inching higher to close out the best quarter in 6 years. Chip stocks leading the pack for the quarter with a near record-setting performance. However, people now raising concerns about an overheating AI trade with the expenses mounting. And European central bankers expressing concern that the inflationary shock isn't over. Even as oil prices recede, and recede they are over the past quarter, we are looking at massive declines, the biggest quarterly decline in oil going back to 2020.
Not quick enough, though, in terms of where oil is going in relationship to gasoline prices. The president is once again on Truth Social yesterday telling retailers need to bring prices down, and their price gouging. The fact of the matter is, when it comes to gasoline, going to be a little bit slower in terms of how that can trickle down. When you see oil prices, they are falling, even though we had some tit-for-tat exchanges in terms of attacks over the weekend. Now you still have vessels going to the Strait of Hormuz. They're still talking. Morgan Stanley cutting their forecast, second time in about 2 weeks. And this is definitely going to be disinflationary. It's welcome news for sure in the United States, but as you've been saying, different story in Europe, and Philip Lane is quite concerned about the knock-on effect.
Well, here's the tension right now. It's disinflationary in certain pockets. On the other hand, consumers are still spending, and the labor market is still okay. It's not necessarily going gangbusters like 2020. So this is why JOLTS data later this morning at 10 a.m. Eastern is going to be really interesting. Heading into ISM manufacturing tomorrow, what will the prices paid component be? And then the labor market report. Is there something else that central bankers are worried about that potentially could lift inflation expectations despite the decline that we're seeing in oil?
Well, for individuals like Austin Goolsbee, he's talked about the fact that tariffs, oil, now they can really look through all of this. But services is where they are concerned about higher inflation. Of course, Thursday is going to be incredibly important. Payroll's Thursday, not Friday, July 4th. Did you see the range, Lisa? 25,000 to as high as 168,000. Makes me think that economists are also unsure about where this economy is going.
I think that's an understatement, and I think that they all have a dartboard and they are just blindfolded and shooting darts. Right now, what you are not shooting darts with is whether stocks will go up. Yes, they have gone up. They've gone up so much, and they continue to this morning, building on gains from earlier in the morning, near session highs now. The Nasdaq leading the charge up almost 1/3%. This, to me, really the reversal with hyperscalers front and focus. We'll be talking about that after the swoon in Microsoft was the worst for the past past month, going back to 2000 actually. Russell 2000 up about 0.2%. Same with S&P. In the bond market, very quiet, although contained, and that ultimately is the story. A bid into bonds just on the margins, 4.1%, holding steady on the 2-year yield. And this, to me, really caught my eye. The Japanese yen at the weakest level going back to 1986. Will we get some sort of Treasury BOJ accord? Will we get some rhetoric coming out of the Bank of Japan to signify that maybe they're ready to hike again? Or is this okay, even though this is importing quite a bit of inflation?
We've tried verbal intervention, or maybe a verbal phone call that was trying to help in terms of verbal intervention. Will they actually move ahead with actual intervention, which we saw in 2024? And I think for this market, they need to wait and see what we get Thursday from the jobs report.
Coming up this hour, I'm so pleased to say Wei Li of BlackRock with stocks heading for the best quarter in 6 years. Mark Short, the former chief of staff to former Vice President Mike Pence, on the Supreme Court's historic rulings that came out yesterday. And Bob Michael of JP Morgan expecting the Fed to stay on hold for the remainder of the year. We begin this hour with stocks adding to gains as big tech jitters waver. Wei Li of BlackRock writing, "We seek broad AI exposure through U.S. tech, leading us to overweight U.S. equities. Even if the ultimate winners are unclear, many are likely to be found there." Wei joins us now for more. Wei, always wonderful to see you. Thank you for being here. So are you among those buying up hyperscaler stocks after the rout over the past month that have really made them some significant losers?
Well, we remain overweight the AI trade and U.S. equities. Right now, the big debate in tech and AI transformation is very much, are we in a bubble? And if you look at U.S. equity markets, the Shiller P currently is really stretched. It's just shy of 40 times, which would make it 99th percentile. But if you look at forward PE, it's just above 21 times forward PE, which would make it over the last 10 years 40th percentile. So depending on kind of your assumption of earnings durability, you can come to very, very different conclusions in terms of if U.S. equity valuations are stretched or not. And for us, we think the answer to the durability question is still very much kind of wide open, right? Because there is the possibility of AI breaking out growth and sustaining earnings momentum, but at the same time, it's also possible that it doesn't happen. But we want to play the AI theme through scarcity. It's easier to kind of focus on the bottlenecks that doesn't require us to pick winners than having to pick winners. Our study shows that up until now, if we focus on scarcity and bottlenecks, we're able to get better return with less dispersion compared to if we try to pick winners, which is what we are focused on as we think about the rest of the year.
I feel like investors have been playing chase this point of scarcity, chase the choke point. Because ultimately, first it was go to the chip sector, and semi is absolutely ripped. I mean, a tremendous quarter. We're looking at some more than 40% gains on the semiconductor index in the U.S. Then people are saying, okay, well, maybe it's memory. And they're going specifically to the memory makers, and then to the energy sector. I mean, how do you sort of gauge where we are in this sort of chase for choke points?
Well, I think finding choke points and scarcity is a good strategy because it doesn't require you to, you don't need to know which model wins to know that AI is going to need chips and data centers and energy and power and great connections. And you also do not need to know which robot wins to know physical AI is going to need memories, is going to need batteries, is going to need robotics and industrial manufacturing capabilities. So we think this is a good strategy that has brought better return versus having to pick winners. And I would also note that if you look at incremental margin of some of these AI implementation strategies, they are still higher than operating margin, which means that we're still early in this AI super cycle, which is why we're broadly overweight. Whilst finding and picking winners is very, very difficult, we do think that many of them are likely going to be found in the US equity market, which is why we are overweight, but we have trimmed our overweight in emerging market equities that we have had so far this year from overweight to neutral because of the wild volatility that we have seen in parts of emerging market.
Like South Korea? Is that what you're getting at? The volatility we're seeing in Korea?
For example,
yeah.
Yes.
So when it comes to this idea of scarcity, you write in the note, scarcity, does that lead to abundance?
So our media outlook is very much framed around this big tension, which is scarcity versus abundance. And our view is that AI is currently creating greater pressure in near-term scarcity, but then opening the door to potential abundance in the future. The biggest macro question at this point is if we're able to break out from the 150-year-old growth trend of around 2% into something higher. Right now, external forecast actually points to that we are able to break it out. It has never been done before, but hope and expectations are pointing there. And correspondingly, there are big kind of unavoidable macro questions along the lines of the cost of AI, along the lines of rate, along the lines of inflation, and that very much has conflicting narratives on both sides of scarcity versus abundance. But the bottom line is we don't need to bet everything on trying to predict the answers to this question. It's impossible to do that with high conviction. We rather build portfolios around high conviction themes that are likely to be resilient across all the scenarios. And right now that lends on us being still risk on.
We just had this technology conversation with Dan Ives, and we talked about demand destruction. Is that part of the narrative as you look at scarcity to abundance? Do you have to get to that point of demand destruction?
You mean demand destruction if the cost of AI goes higher?
Yes,
and potentially. Oh, okay, I see. Well, well, as we think about kind of AI transformation, there are three constraints that can potentially accelerate it or curtail it. One is a physical constraint, and the cost consideration is part of it. One is financial constraint, for example, the immense amount of debt issuance and now IPO coming down the pipeline. And one is social political constraint. Here we're talking about NIMBYism and all of that. Right now, I would say physical constraint is binding somewhat, but not too crazy levels. Financial constraint is starting to tense up because the starting point is very healthy, but we're seeing more issuance down the pipeline. Social political constraint is also likely going to accelerate as we head into midterm, for example. So they're starting to bind, but the demand destruction right now, I think it's still too early to say because everyone is in it, in this arms race, and they're throwing everything at it. And demand destruction as part of scarcity versus abundance is one of the big questions that have yet to be answered. But again, if we were to bet on bottlenecks and scarcity, we do not need to answer that question to be able to build a high conviction portfolio, which is what we're doing.
I find it interesting that you've trimmed some of the emerging markets exposure. South Korea, of course, the volatility there. How much does this have to do with something structural in terms of just the volatility in markets and the valuations? And how much does this have to do with a dollar that seems to be resurgent, that potentially could upend a lot of where people were overweight heading into this year?
What is really interesting is that so far this year, as we held onto our emerging market equity overweight, that has happened, the outperformance of emerging market versus developed market equities has happened alongside resilient dollar. So point being, emerging market is no longer just a proxy play to global risk, to dollar. I think there are some fundamental kind of drivers within the emerging markets themselves that are actually creating return dispersion beyond the external financing conditions and dollar strength. And our view is that dollar can hold up and emerging markets can hold up at the same time. And emerging markets are very much actually driven by mega forces along the lines of AI ecosystem, aging population, and geopolitical fragmentation.
HSBC came out and said, HSBC said that an explosive dollar rally is among the biggest pain trades this year. And I wonder how much they have Japan in their view, because what we're seeing overnight, definitely testing the Bank of Japan and policy in general. How do you sort of see that? I mean, is this something you just stay away from? It's radioactive? Or do you say, you know, this is something that you want to play given how big this dislocation is?
We have a low conviction, neutral view on the dollar.
How much can you say we have absolutely no conviction?
It's really hard to have high conviction currency view, period. But I would just remind everyone that even just 1 year ago, right, as we look at some of the tariff-related volatilities and you know, like there were talks of the demise of the dollar, and it was such a kind of big thing. De-dollarization was such a big theme. We were pushing against it because the prominence of the dollar in global financial system is not going to change, like from one day to the next. So, and lo and behold, dollar actually strengthened the last few quarters. So I think narratives can run wildly, especially on something like the dollar. But looking at fundamentals, like we think dollar is driven by real rate differentials, is driven by kind of risk appetite, perception of U.S. risk premium. We actually think that dollar doesn't need to kind of go lower from here. We have a neutral view right now.
Wei Li, thank you so much for being with us. Wei Li of BlackRock here in the studio. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. The U.S. House Committee opening an investigation into drug makers Merck and AbbVie. Reuters reporting lawmakers are looking into potential involvement in clinical trials conducted in China that may have helped fuel the country's military capability. Supermicro's offices in Taiwan raided by government authorities. Sources telling us here at Bloomberg the move widens an investigation into the alleged smuggling of NVIDIA chips into China using the company's servers. Despite being one of 23 underwriters, South Korea's Mirai Asset Securities received no stock allocation in SpaceX's IPO. Sources telling us here at Bloomberg it was due to a misunderstanding over how orders were supposed to be submitted. The company is apologizing to clients and being inspected by local regulators. That is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, expanding the president's powers.
Should we expect more firings as a result of this ruling?
I don't think so. It gives me the right, and not me, it gives a president the right to do what the president should have the right to do.
Mark Short, former chief of staff to former Vice President Mike Pence, joins next. So this is Bloomberg Surveillance. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Seeing another lift after already what could be the best quarter going back to 2020. Right now, as the session goes on, near session highs up 0.2% on S&P futures. Big tech getting another reprieve after seeing a real hit to hyperscalers over the past couple of months. Now you're seeing a rebound over the past 2 trading sessions. 10-year yields lower, just 4.37%. Crude continuing its descent. I mean, we have just seen a massive sell-off, the biggest going back to 2020. As some of the tensions cool in the Middle East.
and the Japanese yen. Watch this space squarely through that 162 red line. What's the new red line? How does the Bank of Japan respond to the weakest yen going back to 1986? Under surveillance this morning, expanding the president's powers.
Should we expect more firings as a result of this ruling?
I don't think so. It gives me the right, and not me, it gives a president the right to do what the president should have the right to do. And the president has the right to do this, and that has to do with a lot of agencies all throughout the system.
Here's the latest. The Supreme Court giving President Donald Trump the authority to fire the heads of roughly 24 independent agencies at will. Bloomberg's Tyler Kendall joins us now from Washington. Tyler, what's the latest?
Hey, Lisa. Well, this was a pair of blockbuster rulings yesterday by the Supreme Court, one of which expands the president's power to remove officials at independent agencies for any reason. It overturns a 91-year-old legal precedent designed to shield these officials from political firings. But the court essentially found that if these agencies wield executive power, they should be accountable to the chief executive. But importantly, the Supreme Court did issue a limited carve-out for the Federal Reserve, ruling in a separate case that Fed Governor Lisa Cook can keep her job for now. It's a decision that bolsters the central bank's independence. And I have to say, the Chief Justice John Roberts made it pretty clear that the majority felt that there was something larger at stake here beyond Cook's job, writing in part, quote, that monetary policy should not be subject to political interference. Now, the court faulted President Trump for not giving Cook enough notice or a chance to defend herself against allegations of mortgage fraud. We should say that Cook denies any wrongdoing. But importantly, the Supreme Court stopped short of saying whether the allegations, if true, would amount to sufficient grounds to remove Cook from her position. And Lisa, that means that this case could end up in front of the Supreme Court again, because now the legal issue of whether or not there was sufficient cause to remove Cook from her job or try to remove her from her job now needs to make its way through the lower courts.
Tyler Kendall, thank you so much for that. Mark Short, who formerly headed up the staff for former Vice President Mike Pence, writing the legislative branch has created multiple government agencies that they have deemed are independent, but they have to be accountable to somebody, and that somebody is the duly elected president. Mark joins us now for more. And Mark, this is something that a lot of people have been talking about, right? That the Supreme Court had been moving toward this ruling for a while. How important do you think this is to the tenure of President Trump in terms of what he plans to do in the near term?
Lisa, I think it's more important to just future presidents, honestly, more so than President Trump. I think the reality is that this has been something that's been growing for many years, is the giant bureaucratic state. And I think people might look at it and say, well, you know, so what? What is it? Congress can pass laws and create agencies. But our founders intended to be one executive, not to have 535 additional executives in the legislative branch telling you who you can hire and who you can't. And so they can pass laws, they can create new agencies, but they can't tie the hand of the executive branch and tell them who you can actually staff and not staff there. And I think this is the right ruling from the court. And I think the court also, though, in the Lisa Cook ruling was clear to say this is not universal, because our founders created a central bank. Alexander Hamilton wanted a national bank, and so there's limitations on this, whether they want it independent. But for all these agencies, whether it's FTC in this case or CFPB, you can't have Congress just going creating these and tying the hands of the executive branch and telling them you don't have control over actually who runs these departments.
Is it, though degrading the checks and balances we have in terms of on the executive branch? By now, this is giving the president more power than we've ever had in modern day history.
I don't know if it's giving him more power, Emery. I think it's what the founders intended, to be honest with you. And I think there are checks and balances with what the legislative branch can do. There are checks and balances with what our elections can do. And so naturally, people say, well, does that mean you'll have changes in these personnel every 4 or 8 years? Well, maybe so, but that's what the American people get to decide. They get to decide by changing the executive branch who they want to be running these agencies.
How do you see the Lisa Cook playing out now, that situation? Because she's going to fight this in lower courts. I imagine the administration will as well.
I don't know if they will, Emery. I think this was always a politically charged investigation by the administration. I think there was a double standard where there are actually people in his own cabinet that have also listed other mortgages as their primary residence. And so this was clearly a double standard where he was trying to go after Jerome Powell and change the influence of the Fed. Now that he has his own person in Kevin Warsh there, I'm not convinced they're actually going to continue to pursue this. I think that this is he wanted to do this to apply pressure to Jerome Powell. I think he was less concerned, honestly, about the mortgage fraud, or else he would have taken care of people in his own cabinet who had the same issue.
So when it comes to then Lisa Cook, she stays. what does that mean for Jerome Powell? Does he just continuously get the jawboning from this president, or do you think that he would view this as time
I don't know
to
how
leave?
much he gets jawbone anymore. I think that's going to fall on Kevin Warsh, and I think that Powell probably should stay because even though they've dropped the initial investigation, they haven't said that that's going to be permanent. And so I think he'll probably stay throughout the rest of his term. I
want to talk a little bit about the tensions that have been building between the Republican congressman and President Trump. And we've heard anecdotes about screaming matches and what was it, Matt, as a murder hornet over in the Oval Office as they discuss some of the issues. We've seen it erupt over the housing bill that was passed through to take a vote. How do you see this evolving? I mean, is this normal or is this a different kind of break, especially after the midterm elections that we just saw?
It's not normal, but I also think that there's this perception that the president is as invested in the midterm results as they are, and he's not, Lisa. I don't think he really cares. He's not as invested in what happens. And we can say, well, that's silly because maybe he'll get impeached again. But from the president's perspective, he feels like I've survived multiple impeachments. I think he feels he can do most of what he wants without Congress. He passed the one big, beautiful bill. Has there been an articulation of what a legislative agenda is beyond that? I don't think there really is. And I think the president actually enjoys having an adversary, whether not to be Jeffries or potentially Schumer, whoever Democrats select to lead them in the Senate. And so I think for him, a lot of this is like, I don't really care what's happening in Congress.
Does it make sense to you that one of the adversaries seems to be gasoline retailers right now?
That is very weird. And I think that this is a play that would typically be used by Elizabeth Warren and the left to go after price gouging and use DOJ to target private sector companies. But we have seen a continual shift from this administration to embracing more Elizabeth Warren policies, where not it's the original housing bill or it's applauding the government trying to take ownership in private sector companies. And so it's one more stretch where this administration wants to use the levers of government to involve itself in the economy, as opposed to a traditional Republican administration wanting to advance free markets and have a hands-off approach.
Well, who is going to advance that right now? Because as you just said, both sides, both tails of both parties are coming around to the same place. Where is the center at a time when we've got, preliminary elections, you've got the primary elections that tend to more heavily favor some of the people on the extreme tails? I mean, how do you see that developing heading into what we see this fall?
I think that there's a lot of Republican legislators who are uncomfortable with it but are afraid to speak out because they don't want President Trump to interfere in their primaries. But I think it's tragic that right now there is not really a voice for free markets inside our Congress, inside our Republican Party, the way there always traditionally has been.
Mark Short, thank you so much for being with us today.
Thanks for having me.
Mark Short, who formerly led up the staff for former Vice President Michael Pence. Ultimately, this was something we've talked about a lot of times, whether it's taking stakes in companies or whether it's talking about potentially levying some restraints on gasoline retailers or even the big oil.
Capping credit card interest rates. At one point earlier this year, the president called Senator Elizabeth Warren to talk about that and talk about affordability. I asked him once, is it odd? Does it feel weird? Is it awkward that you were lining up behind Senator Bernie Sanders? And the president said on some economic issues, they agree.
Guess what? Markets don't care. Right now, they just see the AI trade and they see all sorts of dynamism, and they're upgrading their expectations. Coming up, Vinu Krishna of Barclays raising his year-end price target for the S&P 500. Plus, Yahir Anand will be joining us again. Super micro rising on memory demand. This is Bloomberg Surveillance. Good morning.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Futures looking at near record highs of the day as people look toward a potential best quarterly return going back to 2020, up about 0.3% on the NASDAQ, leading the charge after really taking a beating in terms of the hyperscalers in particular. S&P futures up 0.2%. Russell 2000 underperforming today, outperforming over the past quarter. If you take a look at the why, in part it's because of the dynamism in the U.S. economy. It's not because you're necessarily going to see an accommodative Fed. In fact, you've seen yields rise more than 30 basis points at the front end of the yield curve over the past 3 months. Right now, 4.11%, just an inflection upward as the session grows older, but pretty calm. I mean, it really has been calm, despite some of the action that we're hearing overseas in Sintra and this discussion about inflation and how it could be sticky. Bond markets are kind of yawning and moving on.
Well, certainly, especially in the United States, because oil prices are coming down in the United States. Europe, of course, is going to be a little bit more vulnerable, and that's why Philip Lane is talking about these knock-on effects. Also, the fact that the consumer wants to see that this memorandum of understanding, this peace that's very fragile right now between Iran and the United States, actually is sustainable. Because right now, do the consumer in Europe really believe that? Especially when you look at what's going on in Europe, with an incredible heat wave. People don't have air condition. It's pretty dire there at the moment.
I like what Matt Hornbach had to say. It's like people are pretending that oil prices didn't go down as much as they have over the past 3 months and are simply saying, look, there are other levels that are going to increase, potentially commensurate with the labor market. 2 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with Super Micro. The stock is largely shrugging off that news that Taiwanese authorities raided the company's offices. Of course, all that tied to the alleged smuggling of NVIDIA's AI chips into China using Super Micro's servers. The company says it is cooperating with investigators, but as you can see, the tech trade is back in action today, so shares are shrugging that off, up 1.3% in the pre-market. Meanwhile, Aero Environment, this is a defense company. Shares are soaring, now up more than 30% in the pre-market after the drone and defense technology company beat expectations and issued a better sales outlook than expected. They're saying that demand for their drones and counter-drone technology are soaring as governments continue to ramp up spending in defense. And we end on Jack in the Box after Wendy's remarkable rally last week, and now this fast food name is on the move. Shares are up 8.4% after it refinanced $500 million in debt. I will also note that, like Wendy's, the stock is heavily shorted with short interest at nearly 38% of the floats, which could also be contributing to this rally. Lisa.
Thank you so much, Yahira. So evidently Wendy's and Jack in the Box could be the new GameStop. Is that what we're talking about here?
I don't understand. It doesn't make sense to me.
Well, either way,
I mean, meme stock.
Good burgers, and it is summer.
Frosties.
So there you go. I mean, if you're out west, check it out. If you're a European tourist, something you can trade. What's the Freddie can go to a Jack in the Box. On our radar this morning, peace talks between the U.S. and Iran expected to continue today in Doha.
We'll see how that goes, but we're doing very well on that front. But the meeting in Doha is going to be perhaps important, perhaps not. We're going to find out.
Tehran reiterating it wants full control of the Strait of Hormuz. An Iranian diplomat sharing the country aims to work out an agreement with Oman to oversee ships passing through the waterway. Susquehanna suing 100 John Doe defendants in an attempt to unmask the perpetrators behind an insider trading scheme. The firm claiming individuals made at least $100 million on insider information about a Chinese government crackdown on cross-border brokerages. And of course, they were on the wrong side of the trade, which is why they are seeking litigation. And the SpaceX IPO leaving one of South Korea's biggest brokerage firms empty-handed. A miscommunication at Murray Asset Securities leading to more than $1 billion worth of Korean demand not being entered properly. The firm receiving none of the intended shares of the mega IPO, even though it was selected as one of the underwriters, one of the few foreign underwriters for this deal.
Unbelievable. And you can imagine someone or some people are going to get fired. It sounds like where the miscommunication was that they went around trying to get some indication for investor demand, but that was never translated into actual order books and these actual bids. So in the end, they were left with nothing when it came to the IPO after all this work was done at this South Korean firm.
Yeah, and they talked about how they bow their heads in shame to their customers. A lot of questions there, and I'm sure that there will be more opportunities for food fights with some of the other IPOs coming down the pike. Turning back to markets, the S&P 500 on track for its best quarter in 6 years. Vinu Krishna of Barclays raising his year-end price target to 7,800, writing the equity bull case remains intact, but earnings and AI capex visibility must do more of the work as Fed support fades and positioning is less able to absorb disappointment. Vinu joins us now. Vinu, great to see you. Thank you for being here. Why just 7,800? Why not 8,150 like Lori Calvasino over at RBC?
Yeah, I mean, we can nickel and dime about the number. But I think the question is what is driving the price target upwards further?
Okay.
And I would say that, earnings are clearly so strong. We go from 321 to 337. That's 21% increase. We are shade behind consensus now. But I think we are more conservative on the multiples we're willing to pay, recognizing that compared to 3 months ago when we upgraded our outlook quite significantly in the middle of the crisis, the macro risks actually have, on the margin, increased. And so it's better to be more cautious. For example, the rates outlook has changed. We have a new Fed. The AI story is still intact, but the scale of spending is significant and at a scale where there is some apprehension about the ability to monetize it, fund it. So I think when you take all that consideration, we say, we want to be a little bit more careful about the multiples we're paying for the market and let earnings do the job. And the earnings visibility this year and next year is pretty robust.
There's a lot to unpack here, and you should get a victory lap. Every time you come on, Barclays gets a victory lap for calling and raising your outlook in the middle of a war when everybody else was cutting their outlooks, and you're right. Now you're getting more cautious because of macroeconomic potential issues, even though the war in Iran seems to have settled into an uncomfortable, uneasy sort of situation that at least has brought oil prices lower. Yeah. What potentially could drive the Fed to tighten if oil prices are lower, if potentially you still do have some pressure on that side, but not as much, and you aren't necessarily getting any holdback when it comes to the investment? I mean, why aren't you sort of discounting that hawkish reaction function a little bit more?
So first and foremost, let's start with at the macro level. The inflation picture has gone the wrong way, right? And so on the margin, we are still below in the 3% range, which is not dangerous. But equities already are in that territory of negative correlation between rates, 10-year rates, and equities. And our empirical work has shown that the 5% threshold is important. Luckily, we are a good 75 basis points roughly away from that. But the closer you come to 4.5%, that becomes an issue.
On the 10-year.
On the 10-year. And right now, inflation is not just sticky, but interestingly, the very phenomenon of AI, capex, and spending, and earnings, driving earnings, is also feeding into core PCE inflation because of the increase in memory, because of the increase in chips, because of the increase of components. The list goes on. So I think, in the short term, this AI cycle, as strong as it is actually feeding into inflation. And at the same time, the Fed is at a situation where we are no longer talking about rate cuts. We're talking about The best case is if you stay flat for a longer period of time, and most likely have fewer increases than potentially what could happen. So I think all that changes the dynamics. And when we look at our fair value model for what we think we want to pay for S&P, this outside of tech, that number has come down, right? And if I look at big tech, yeah, I mean, they're posting phenomenal earnings, 30% in Q1. The rest of tech outside big tech, 50% earnings. But for big tech, for example, multiples have come down. I like that combination. I would rather they keep pushing the earnings, the multiples slowly coming down, because the scale of spending is simply enormous. And we need to get some sense of when that starts stabilizing and tapering. We are not there yet. In fact, our fundamental analysts have bumped up their expectations yet again in 6 weeks for AI capex recently. And now we're talking about roughly 1.2 trillion in 2028, almost 250 billion more than where the consensus sits. So that's the reality.
Well, we had your colleague on yesterday who was saying how it's uncomfortable but has to upgrade because of what is going on in earnings. But if the Fed were to hike, would you have to decrease your price target?
No, I mean, listen, the question is, why are earning rates going up, right? There's a sweet spot based on the work we have done where rates can go up, but equities can also go up, which means nominal earnings are strong and the growth is contained. The Fed is vigilant and in control. But there always comes a tipping point where the risk of either inflation is very high when the rates are going up. On the reverse case, and the rates, risk of deflation picks up. So I think we have been in that sweet spot. But now there's again some queasiness about the fact that we won the initial battle, the big battle of inflation coming down from 9% to the low 2.5%. Now we're again inching back to the roughly 3% range. In this territory, that is inflation being 3% and below, the negative correlation kicks in at the 5% level for 10-year. That's empirically.
But if it's AI-driven inflation, the Fed hikes rates, is it even to say that that tool is going to help in terms of the AI inflation, or is it just going to hurt other parts of the market?
No, because ultimately equities are long duration instruments, and what is driving the market tech is especially long duration, given the AI story right now, where there is a lot of uncertainty as to when those productivity jumps will really kick in, and ultimately who is the winner and loser in terms of how it plays out. So in all that uncertainty, rates have less to do with just the impact on economic growth, or more to do with just the multiples you're willing to pay for the scale of uncertainty you're dealing with. But luckily, the spenders are posting very good numbers, are actually adopting AI in their own business models. And so that combination is something we're comfortable with. That's the reason why we continue to like big tech. I mean, if you look at the correlations between big tech itself, it's collapsed, which means that dispersion is very high. So we think either you own that basket as a safe way to play the market, or better still, you enter the derivative space and do something which takes advantage of a potential increase in dispersion, even within that small group of stocks.
Do you think that multiples have come down on the hyperscalers enough to make them more attractive than, say, some of the chip players?
When I talk about big tech, whether it's a combination of 4 hyperscalers and Apple and NVIDIA, right? We may have to change the definition now that you already have SpaceX, but that's for another day. But for big tech, the multiples have come down to about 24 times. We were at 28 times at the start of the year. The bottom, which we have tested multiple times in the last 4 years, is around 21 times, right? So I think 3 to 4 handles lower, with earnings printing still 30%. Beats continuing to be still pretty significant. That's a setup, I think, which we like. And the only uncertainty is the level of CapEx spending. So let's wait and see what happens.
Vinu Krishna, thank you so much for being with us. Always wonderful to see you. Vinu Krishna there of Barclays, expecting 7,800, which sounds like an upgrade, but when you compare it to everything else, it looks like, well, why not 8,200 like some of the bulls?
Well, when I looked at the note, I said, oh, this actually feels a little bit muted for Venue, because when you look at it compared to everyone else, actually, it is, but they got the call right at the height of the conflict. So,
and there definitely is muted expectations, especially heading into 2026, 2027, and 2028. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vani Quinn. Vani.
Lisa, thank you. Rocket Lab is buying satellite operator Iridium in an $8 billion cash and stock deal. The acquisition combines Rocket Lab's launch and satellite-making businesses with Iridium's low Earth orbit network and spectrum assets. The Trump administration is tightening federal student loan rules. The Wall Street Journal reporting that colleges that don't meet new graduate earnings thresholds will lose access to federal loan funding, with about 3,200 programs currently on track to fall short. A dangerous heat wave is spreading across much of the United States this week. Forecasters say temperatures could reach the 90s and low 100s across large parts of the country, with many places expected to challenge or break daily records. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vani. Up next, betting on a cut.
So I would say that a forward-looking Fed, which we think this Fed will become over time, that is a Fed that's not going to be looking to raise rates. We think they'll be looking to cut rates in 2027.
Bob Michael of JP Morgan Asset Management joins next. From New York, this is Bloomberg Surveillance.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Seeing a lift right now under the market, building on what could be the best quarter going back to 2020. Right now, you're seeing that gain led by the tech sector. You're seeing a more than a 1/3% gain on NASDAQ futures. A lower gain, actually, on the Russell 2000, lagging behind after outperforming over the past couple of sessions, up 0.1% in the bond space. This is interesting. We've seen a little bit of an inflection upward, although really barely. The calm in bond markets, despite the volatility and rhetoric, has been remarkable. Although we are eking higher, breaking through that 4.12% on two-year yields, up more than 30 basis points on the quarter. And a real question here, how much can the Fed remain on hold? How much are they going to hike? Could they even potentially have a chance to cut? Under surveillance this morning, betting on a cut.
the data going forward and its implications for the economic outlook is what will drive Fed response in action over the next 6 to 12 months. I would say that a forward-looking Fed, which we think this Fed will become over time, that is a Fed that's not going to be looking to raise rates. We think they'll be looking to cut rates in 2027.
Here's the latest. Investors bracing for a slew of economic data due out this week, looking for a signal on the Fed's next move. Bob Michael of JP Morgan Asset Management expecting the Fed to hold rates steady into year-end, writing, "We're watching both improvement in inflation from reduced energy prices and potential tightness in the labor market as CapEx spending accelerates." That sort of two-pronged risk that keeps them on hold. Bob joins us now, which is wonderful. Always for us to get to see you. A real question here about how much your views shifted after the last FOMC meeting and in the face of some of the rhetoric that we've heard from other Fed officials in the past week.
After the last FOMC meeting, our thinking didn't shift all that much. We thought that the Fed's bias towards easing going into the meeting was outdated. We saw a lot of CapEx underway, not only in the U.S., but globally. You can't name a sovereign that's not interested in investing in energy security, in defense of its borders, in AI. And those are multi-trillion-dollar spends for any economy, any in the world. So that will be a nice tailwind to the global economy.
What's fascinating, since the FOMC meeting, what you've seen as people increase the chance of a rate hike and actually bid into the long end of the yield curve. They've seen this as a positive for duration. Do you see it the same way based on all of that CapEx that you just talked about?
Near term, a Fed that has tilted hawkishly, and I think that's a fair assumption, even though we don't think they'll hike rates this year, should create some stability for the long end. It should allow long-duration buyers, insurance company, pension funds, to come in and hunt around for cheap bonds. It could be some of the corporate debt that's coming out of the hyperscalers. We've seen some of that. But over time, does it hold? Probably not if we're right and you see this acceleration in growth, if you see the war in the Middle East in the rearview mirror, and oil doesn't need to go back down to 60, somewhere around 70, that should also be a bit of a tailwind to the global economy.
But some members of the Fed are concerned about inflation in services. That has nothing to do with what's going on in oil prices.
No, services are going to be a hard one. We're going to see that in the labor data on Thursday because everyone's looking at leisure, hospitality, and transportation. Well, if you think about the World Cup, those are the three things where you're going to see a lot of hiring: leisure, hospitality, and transportation to get to the matches, particularly if you're coming from overseas. I don't know if it's going to be that temporary. It just feels like there's a broader acceleration underway in the U.S.
If you feel like this Fed is hawkish, Kevin Warsh is hawkish, but there's not going to be any sort of hike this year, does he need to deliver? Lisa made this point earlier. If you want to set deterrence, don't you need to act on it so people believe that it's real?
Yeah, I think that's Lagarde's mantra is, what's the point of having a reaction function if you don't react? Well, we don't know what his reaction function is. Maybe he'll detail some of that in Sintra. When you roll out 5 task forces that report back by year end, you're pretty much saying you're going to glide into year end and only move things if something dramatic happens. I don't know that anything dramatic will happen between now and year end.
We were talking with Matt Hornbach earlier. We were just playing that clip from Morgan Stanley, who said that he thinks the Fed will remain on hold. Similar call to you, but then that the Fed's going to cut in 2027. Do you think that's the path of travel? Because based on what you're saying with the reacceleration of the U.S. economy, less clear.
That's not what we're expecting. We're expecting that these underlying trends in growth, that the amount of money sloshing around the system, all the CapEx that's going on in the U.S. and globally will start to accelerate growth and inflation pressures, and the Fed will have to come back in next year and hike rates once or twice. This is not a dramatic hiking cycle like what we saw going into 2022, into 2023. This is more maintenance hikes. Other central banks are doing it. They've got some cover. Who knows what the task forces will come back with? They may get some cover from that. But for us, the balance of risks, even though the Fed doesn't talk about them anymore, is to the upside in the economy, not to the downside.
It feels like this is a sea change right now underway. And we heard that with Christine Lagarde leaning into getting rid of forward guidance also. It's not just a Kevin Warsh issue at the Federal Reserve, speaking overnight in Sintra, talking about that. I just wonder how you would frame this moment, because it seems like, and you've talked about this before, more volatility in inflation, higher yields, a bit more chop, a bit higher defaults. I mean, how different is it to be a central banker in this moment navigating through what we're seeing right now?
It's gotten increasingly complicated. I think when they look back at the last 3 years and see how well the global economy has done through a rate shock, the Fed raised rates 525 basis points, you broke the regional banking system, you had Liberation Day and tariffs, you had an oil shock, and yet the economy has done fine. They've had to go back and reassess their own frameworks. Maybe there's just more policy response that they're not accounting for. So I understand the tendency is to say, hey, we haven't exactly gotten it right. Maybe we should pull back with less forward rate guidance, less, sort of framework around what we're doing until we revise it. I just think that's wrong. I don't know how less transparency, which leads to less accountability, is the right thing for public institutions to do. I don't know how that's better for the markets or for market participants. I'm for more transparency. I'm on here. You're asking me a lot of things. I don't expect to be completely right on everything, but we're investing a lot of money. Our investors have a right to know what our decision-making framework is and the transparency around it. I don't like that the central banks want to roll that back. I do accept that no one operating model is the only right model. You can have multiple operating models work, and we've seen that in the past with the Fed. I just liked the transparency better.
What's the market response to less transparency? Is there a consequence to it?
Well, the market response is there's going to be more opportunity. And as an active manager, maybe that's what I should like, is that there will be more volatility. It will be uncertain what central banks are focused on. In the absence of central banks creating a narrative, we'll all make up our own, and we'll all choose the data which supports that. So, yeah, for me as an active manager, that's great. But I step back and say, is that really good for market participants? I don't think so.
Always wonderful to have you on the show. Bob Michael of JP Morgan Asset Management here with us. And this really ultimately is what a lot of people are dealing with. It might kind of feel bad from a theoretical perspective. At the same time, if you can make up your own theory and potentially be right, well, that's what people are going to be focused on.
If you're right. He's preaching to the choir here. I think as journalists as well, we want as much information as possible. Whether that is a lacking of a dot or lacking of forward guidance in terms of communication, we're hoping we get maybe a little more clarity from Kevin Warsh and Sintra.
We will be getting more clarity coming up from Kevin Gordon of Charles Schwab, who will be joining us, as well as Rebecca Babin of CIBC, Lauren Seidel-Baker of ITR Economics, and David Rubenstein of the Carlyle Group. All of that coming up next. This is Bloomberg Surveillance. Good morning.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
There's a bit of a schizophrenia here about what actually is the path to a peaceful place for the market.
There's finally an awakening to this shift in focus away from those early players of the AI trade.
There's likely to be a broadening of the market.
You get nervous at one point on the AI trade every single year, apparently.
There's just a lot of fragileness in the market, but the overall sentiment, I think people are still pretty bullish.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance. Futures near session highs, building on the best quarter for the S&P going back to 2020. The tit for tat in the Middle East continues, but markets are barely paying attention since oil prices have fallen, and they continued to fall earlier. Now they're just ticking up a little bit, but still the biggest decline for a quarter going back to 2020. Instead, though, the attention is turning to jobs. Jobs data later this morning with JOLTS and then ISM manufacturing tomorrow. Watch the prices paid. At a certain point, if this is a data-dependent central banking world, we are all, Anne-Marie, focused on the data.
Absolutely. And the jobs report is going to be important this week, of course, is the labor market continuously going to hold through. And what does that mean in terms of how does the Federal Reserve view the economy right now? As they're really divided in terms of inflation. Yes, they can look through oil prices now. The market has completely moved on from the Strait of Hormuz. They moved on from tariffs. But as Bob Michael and others have been talking about, what happens in terms of services? Is that going to be harder? It's a bit more sticky.
And we're going to be hearing from Kevin Warsh tomorrow, which actually should be a really important moment if he explains what he has, who he is, what his ideology is, and how it might have changed since 2011. Of course, we also are tracking a slew of earnings. Nike comes out after the bell. And a real question here about whether you start to see a broadening out. Nike's a turnaround story in particular, but as we head into the next earnings, whether we see a broadening out in terms of profitability outside of big tech and whether that rotation can continue to take hold.
And can it continue if you truly believe the Federal Reserve is going to hike interest rates, or potentially is this just verbal rhetoric to make sure they're tamping down inflation expectations? When it comes to earnings writ large, though, what have we continuously heard from strategist after strategist? We are going to lift our S&P 500 targets because of earnings. Goldman was talking about a 22% increase. That's not just the AI trade, also big energy companies.
Yeah, and what you have seen is a real dispersion that has continued, and frankly, an outperformance that has been tremendous for the equal weight S&P. This morning, big tech taking back the mantle of the outperformer, as you do see the Nasdaq up about 1/3%, S&P futures off the session highs, up about 0.1%, and you can see Russell 2000 turning negative in tandem with this. 2s, 10s, and 30s. You are seeing a bit of a lift in yields after earlier having been lower, continuing to lift throughout the session. 2-year yields climbing now steadily above 4.12%. And in the fixed income and the currency space, a real question here about what a stronger dollar will do around the world. Japanese yen at the weakest level going back to 1986. A question about red lines, a question about whether the Bank of Japan has the ammunition, the will to raise rates. Coming up this hour, Kevin Gordon of Charles Schwab with stocks holding steady, Rebecca Babin of CIBC on the hidden risks oil markets are overlooking, and Lauren Seidel-Baker of ITR Economics on why hiring should pick up across the U.S. economy. We begin this hour with stocks just inching higher after a stretch of volatility, on course for their best quarter since 2020. Kevin Gordon of Charles Schwab writing, "It's time to come up with the new acronyms that capture the two most powerful market forces today, the muses versus the ammo. The muses, memory names, who have dominated with the hyperscalers, ammo lagging. Their firepower is revealing itself given the drag it's exerting on the S&P 500 performance, effectively keeping us in a duck market." So you have Muse, you've got ammo, you've got ducks. Explain yourself.
There's a lot going on. Well, I think that, this is kind of a way to correct for what has become, I just think, this fragmented story, specifically within the Magnificent Seven. And this is something that we've been talking to you guys about, writing about for a couple of years now. Something that really started in 2024, end of 24 into 25, where you are just seeing a more fragmented and more dispersed environment in terms of returns among the Magnificent Seven. So I think grouping it now, especially with the phase of sort of this AI cycle that we're in, having different groupings for them with specifically the hyperscaler group, but then specifically within memory, just because of how sharp some of those performance divergences have been. And then you even, I think, add a third group, which just is the semiconductor group, at large. You have all three of those different groupings exerting different influences on the market, and I think last week is sort of a perfect example of this. Every single day last week, the S&P 500 at the index level fell, but breadth was net positive. So you had more members advancing versus declining, and that's kind of an example of this duck market where you can bring it back to even earlier this year, pre-Iran conflict. You had a lot of that activity where it didn't look like the index was doing much, but there was this sort of healthy activity under the surface. So it's another way, I think, to look, especially if the ammo group, if the hyperscalers are going to pull back a little bit or not participate as much, which has been the case over the past year, then you probably don't have as strong of an index gain, but you could have still strong activity under the surface.
There's a theme under the divergence that we've seen between the Muse and the ammo, I'm going to get this right, that we've seen over the past week, which is an increasing anxiety about how much money the hyperscalers are spending on the semiconductors and whether the profits are going to justify it in the near term to allow some of their shareholders to continue to stick with them. Do you think that stresses the story on both sides, right? So on one hand, you've got the hyperscalers getting punished. Does that restrain some of the capex that could be helping potentially down the road in the semis?
I think it does. But this is also not a news story. I think if you back this up, past few years, you've gone through these ruptures and these periods, especially for a sector. If you want to keep it sector specific, take U.S. tech, or even if you want to look at something like the NASDAQ 100. Much bigger corrective phases at times when the rest of the market hasn't gone through that. The fall of 23 is kind of an example. The summer of 24 is an example. Early 2025, not related to specifically Liberation Day, but there have been these sort of rolling periods associated with earnings season in particular. I heard somebody at one point call it CapEx season. Now it's not earnings season anymore. And last October was sort of the perfect example of that, where you had a lot of pushback from the broader investor base, specifically the retail investor cohort, which I do find interesting, which is kind of taken a step back in this latest leg up over the past 6 to 8 months. That cohort has sort of taken a step back, I think somewhat related to some of the skittishness around, the worries around some of that CapEx spend and how much it has been upped, how much the forecasts have been upped over time.
This is also a divergence of this because it's around the world. It's different, right? Your muses are linked heavily to what's going on in South Korea.
Absolutely.
Yeah, so how do you think about that in terms of where you invest, if it's everyone wants to go all in on the United States, but you are seeing these gains around the world.
Well, I think there's sort of two aspects to that. Number one, the idea and the notion that anything related to the AI trader living in that theme or that ecosystem is not going to be automatically biased towards the U.S. I think, of course, the U.S. still captures a lot of that upside, but some of these more extreme moves have been within, as you mentioned, the South Korean stock market. And it's another way, I think, for us to also, maybe this works in the benefit of the United States, what we try to reinforce to investors, especially when I get the question at numerous client events over the past several weeks about this sort of concentrated market and how much influence a small handful of stocks have had on the index. It's even more extreme in South Korea. SK Hynix and Samsung make almost 50% of that market. So you're beholden to two names, half the move of the index, all else equal, but you're more beholden to two names in what they are doing. Of course, it's a different economy and it's a different market altogether, but I think that the concentration risk is even more extreme in some of these other countries. Again, not to say that that's a bad thing, because when you capture that upside, it feels pretty great. But when you're on the opposite side of that, momentum takes a turn. Of course, we all know how that goes.
Lisa mentioned Nike. We're going to get earnings after the bell. Do you see a broadening out to other stories, or are you just all focused on AI?
No, I think you already have. I mean, I sort of sometimes joke that at the end of the day, when all of this is said and done and when the cycle matures, every stock becomes an AI stock because you're either a creator or you're an adopter. So I think that whether it's a consumer discretionary name or if it's a healthcare name, I could see benefits sort of trickling down ultimately to both of those sectors and really to every sector. But I think that in terms of a broader market story, some of it has actually started to improve over the past several weeks. When I look at breadth statistics, they're sort of neither great nor poor. We're kind of hovering in this middle range of 63% of members in the S&P trading above their 200-day moving average. That is more, I think, indicative and consistent with the rotational market, not necessarily a strong bull market, but of course not a market that's, I think, at risk of entering a bear market, because you're not seeing a divergence between that and price. So it has happened, but it's been in fits and starts. But I will say, though, even if you look at the first half of this year, so by the end of today, assuming we don't get some major move, you still have seen international outperform the U.S. You still have seen, participation from some of these deeper cyclical parts of the market. It has not just been U.S. tech. It has not just been U.S. or memory stocks.
At the end of last year, there was a real divergence between the tech trade and the stocks that were doing really well and the underlying economy.
Yeah.
And there was a question about how long this divergence could continue before one met up with the other. And it seems like on the margins, the U.S. economy is catching up to the tech trade. How do you expect that to show up in either the JOLTS data, the ISM manufacturing tomorrow, or the non-farm payrolls on Thursday?
I do think we need to be more attentive to some of these turns in what we have called in the past rolling recessions, but now turning into rolling recoveries. You're seeing that in the manufacturing data. It's interesting, though, because it's happening when services data is still kind of being held back a bit. If you look at the PMIs in particular, services have been more depressed, not just in the U.S., but if you have that dynamic where manufacturing is improving, but services is not, then overall growth is still being held back because of the services dominance here. But from a labor market perspective, I mean, it's unmistakable to look at some of these trends. The moving average in payroll growth over the past 3 months, the fact that the unemployment rate has been unchanged, has the potential to move a little bit lower this year. The fact that initial jobless claims have not, spiked, and actually, when you look at it seasonally compared to other summers, they're pretty low. So all of that is still pointing to, I think, a little bit of a washing out of the uncertainty that businesses had tied to whether it was Liberation Day last year, whether it was the war this year. And the labor market is going through kind of this rolling weakness, and it's not going through a full labor cycle. So I do think that we need to be more attentive. And of course, this matters most for the Fed, being more attentive to the fact that you could see a potential retightening of labor this year. Not sure how extreme it would be in terms of fanning a lot of inflation flames, at least right now, but you need to be more attentive to that as an investor.
The task force is all over it. Kevin Gordon, thank you so much for being with us. Kevin Gordon of Charles Schwab joining us here in studio as we await those JOLTS figures coming out, the job openings data at 10 a.m. Eastern. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, Iran says serious challenges remain in U.S. implementation of the Memorandum of Understanding. Tehran is saying talks with a mediator in Doha today will cover frozen assets. The Trump administration is tightening federal student loan rules. The Wall Street Journal reporting that colleges that don't meet new graduate earnings thresholds will lose access to federal loan funding, with about 3,200 programs currently on track to fall short. In sports, Serena Williams makes her return to singles play at Wimbledon this morning with her first match in almost 4 years. The 44-year-old tennis icon will also be playing in the women's doubles alongside sister Venus later this week. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, the morning calls, plus Rebecca Babin of CIBC on the ongoing uncertainty in the crude market. That's coming up next. This is Bloomberg Surveillance. Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Things are still remarkably good, and I think the operative word remains resilient. Every time we get the challenges towards that resilience, it seems to be overcome by that resilience factor that either shows earnings better than expected, debt in better situation than it actually was thought to be. Fundamentals remain very positive.
That was John Stoltzfus of Oppenheimer, who was bullish, actually. He has been bullish for quite a while, but talking about how it is the earnings, which is something that we also hear pretty much every day. Again, these are stories that have been the themes for 2026. Right now, building on those themes, you are seeing ongoing resilience in U.S. equities. Futures now actually about flat on the S&P, having come off after having been up almost 0.2% earlier, fading throughout the morning. Maybe as a result of this, 2-year yields climbing 4.12%, climbing about 2 basis points after already increasing more than 30 basis points over the past 3 months. Crude prices just inflecting a little bit higher, and that Japanese yen, just keep watching that, given the potential for some red line. Now it's a moving red line to be crossed at 162. Given the fact this is the weakest level for the Japanese yen going back to 1986. Time now for the morning calls. First up, Morgan Stanley raising its price target on Alphabet, calling this a tactical buying opportunity for, quote, one of the best positioned AI companies around. Those shares up 1/3%. Next up, Oppenheimer downgrading Citi to perform, saying it doesn't find its valuations compelling and recommends redeploying into alternative asset managers. Those shares lower by 0.8%. And finally, Wells Fargo boosting its price target on Delta Airlines, saying shares can perform even after the recent rally as fuel falls and demand holds. Meanwhile, crude heading for its biggest quarterly drop since 2020. Morgan Stanley cutting its price forecast for the second time this year. As Anne-Marie was mentioning earlier, warning of a potential glut. Bloomberg's Anthony DiPaolo joins us now. Anthony, just give us a sense of why you see these downgrades that are happening faster than people can keep up, given the fact that we haven't gotten a resolution in the Middle East.
Yeah, good morning. Well, we haven't gotten a resolution, but we do have the strait at least partially open or more open than we had it during the conflict. So we have seen a real uptick in tankers going out, and that's what's really helping the price. And again, there is this idea that potentially the glut that we were so worried about going into the start of this year is returning. Part of that is because we have seen suppliers like Abu Dhabi, like Saudi Arabia, being able to continue supplying oil via pipelines that have bypassed Hormuz throughout the conflict. Now, with the Strait open, they're able to continue ramping up their exports through the Strait. Tankers had already been sneaking through even during the conflict, using that channel closer to the Omani coast, which a lot of tankers are still using. So we are seeing that additional oil coming through. Plus, we've got that Iranian crude now available in the market with those sanctions at least temporarily lifted. That comes into a market, again, where a lot of demand has come off just in the short period that there was that active conflict. Chinese demand came way off as they used a lot from stockpiles, as they cut domestic refining. Some demand has been destroyed in countries like India, where some chemical plants stopped. So that lower demand, coupled with those higher flows coming out of Hormuz, out of the Gulf right now, that's really that cocktail that's mixed up and that's contributing to those lower oil prices right now.
Thank you so much. Anthony DiPaola coming to us. Thank you for that. Morgan Stanley, of course, cutting its oil forecast, looking now for $70 at the end of 2027. So it's not just a near-term forecast, Anne-Marie, it's also longer-term, what we could potentially be seeing.
I think the signal from the White House has been really clear. We want to make sure that oil continues to flow. They didn't want to go into peak driving season with high prices on the consumer. And even with prices dropping across the United States, the president is still annoyed they're not dropping fast enough and actually going after, per Truth Social the last few days, retail gasoline owners saying they're gouging and telling consumers that, you report them and complain.
Yeah, call President Trump with Joe from Sunoco. Rebecca Babin of CIBC Private Wealth writing, the market may be overestimating the pace of production recovery while underestimating future inventory rebuilding demand. Rebecca joins us now. Rebecca, you're one of the few who are holding on to this view that maybe oil prices are going to go up. How much pushback have you gotten recently?
So I get a fair amount of pushback, but I would say this, you keep referencing the Morgan Stanley price cuts this morning. Guess what? Their targets are still above the strip, where the strip is currently trading right now. So $70 at the end of 27 is still above where the market has crude right now, which is closer to, high 60s. So I think what's happening is some of the analysts that maybe have overshot of where they thought crude would go are coming back to where the market is now. So in terms of the comment of what I'm making is essentially we are effectively pricing in all of this supply coming back to the market in a very even and measured way, and that demand, which has been impacted due to this conflict, does not come back, right? So that's what's being priced right now. And to me, that's just a little bit overly optimistic on how quickly the supply is going to come back. We've already seen fits and starts here, and we did have a lot of Iranian crude sitting off the coast of China before the sanctions were waived. So that was immediate pressure on prompt, right? And we've also had this SPR release which has helped buffer this conflict. So we've had a lot of prompt supply, and we're anticipating that this just carries forward in a very measured way, and that the demand drop that came out of China as they cut refinery runs, and transitioned away from some of their more fossil fuel intensive petrochemical activities isn't going to rebound. And to me, that's just a little bit pessimistic. If you look at the headlines today, China has already said they're going to roll back some of their product export bans. Immediately, that is going to pull forward a little bit more crude demand. And I think that we're overestimating the downside just as we had overestimated the upside at the height of the conflict.
So where do you see prices ending the end of this year, Rebecca?
So I think we can look at the end of the year and I can kind of see Brent TI, I can see 75 TI, 80 Brent. And I just think that we don't necessarily see this even distribution of flows resumed through to 85. What I think is priced is 85% of flows resumed by the end of July is what's priced. I think that might get pushed out And we don't necessarily we are seeing this immediate reaction as ships have transited and Iranian sanctions have been waived. But if that gets pulled back, I don't think we see the acceleration of inventory builds that the market's anticipating. So I'm not drastically above the strip. I'm kind of looking 75, 80 Brent TI.
What do you make of the conventional wisdom that then next year we're going to potentially have another glut?
So that is a really interesting question. I think 2027 is shaping up to be really challenging from a forecasting perspective. Right now, estimates have a surplus of about 4 million barrels a day for 2027. Some analysts are higher, some are lower, but that's kind of the midpoint of the range there. That is going to be very indicative of how aggressively countries decide to stockpile after this event, right? If all of those 4 million barrels surplus is just kind of, we don't need to rebuild inventories and it's just considered to be excess surplus in the market, we could see pressure in 2027 and we could see the strip trend kind of closer to that $70 level in TI, maybe 65. I tend to think, having read the headlines again this morning, that India says they're going to increase their strategic petroleum reserves. China has some rebuilding of stockpiles to do. India also wants to diversify away from Middle Eastern crude. I tend to think that's a scenario we're anticipating this massive surplus, but what it's going to be is a rebuild, and the market might not reflect quite as loose as that number headline number would say. So I'm not thinking that we see this dramatic 60s, 50s crude scenario next year, which I know some analysts are pointing to. I tend to think we hover around this kind of 70, 75 level.
What has the OFAC waivers done for this market? The fact of the matter is Iranian crude could flow freely at market price.
This has been a huge factor, not just the OFAC, but the fact that you can transact in dollars, I think has opened up a lot of Iranian crude to the market. Now, what I haven't seen is a tremendous amount of buying outside of China of Iranian crude, but what that does essentially is make Iranian crude available to places like India, which has significantly reduced their imports due to the sanctions, and makes it a more competitive barrel right in the market that can press other things lower. Typically, Iranian crude traded at a huge discount because of those sanctions. It's now a free-floating market barrel, and that kind of just can press things lower. Now, this all assumes we're talking about a 60-day waiver here, so we don't know how that shakes out and if it'll get reimposed. But for now, it's certainly the reason we're seeing the weakness in the prompt market, which I don't necessarily disagree with. When I look at the risk reward here, I think we've priced in a lot of a really optimistic scenario. And should that not play out, I think we have more upside than we do downside at current prices.
Rebecca Babin of CIBC, thank you so much for being with us. And as we're talking, we are getting some commentary from Treasury Secretary Scott Bessent saying that we'll see if there's price gouging by oil companies, encouraging gas retailers to be good actors.
I feel like we heard the same rhetoric from the former Treasury Secretary Janet Yellen and the former President Joe Biden, and then the Democratic nominee candidate Kamala Harris when it came to groceries. It's interesting.
Prices are always too darn high. Coming up, we're going to be speaking on the JOLTS data coming up later this morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
We had been up, now we're down. Right now, it just essentially fluctuating around as we start a day after what could be a quarter that is the best quarterly performance going back to 2020. Just a touch lower on the S&P and NASDAQ futures. Russell 2000 taking a leg even lower, down 0.25%, as you do see yields climbing. And this could be what's behind it, given the fact that 2s, 10s, and 30s are seeing a lift after having been lower earlier, up about 2 basis points through 4.122% on the 2-year yield. Remember, that's up more than 30 basis points in the past 3 months as people start to price in rate hikes. You see less of a move at the long end of the yield curve. 30-year yields 4.87%. Nonetheless, this all coming with a backdrop of oil prices that had been lower. They have been significantly lower over the course of the past month, 2 months. You're seeing them inflect just a little bit higher as you do have a little bit more heated rhetoric coming from Iran and questions over exactly how this is going to go forward. I mean, you're shaking your head a little bit because it's sort of like, how do you gauge this out? It does seem, though, like this story hasn't been completely tied up in the way that some people would like.
Well, of course not. We don't even know, Lisa, today, are they meeting face to face? The president alluded to the fact that there will be this meeting in Doha. Jared Kushner, Steve Witkoff are going, but the Iranians are saying, well, we have officials there, but we're not meeting the Americans. So is it all being done by Qatari interlocutors? How much can actually get done in the 60-day period if that's how you're establishing how these meetings are going to go?
It always sounds like a cloak and dagger. Go to the mountains, find somebody, find a place to talk to someone who can talk to somebody else who can talk to my uncle. 1 hour away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We are seeing solar stocks catching a bid this morning with names like Enphase up nearly 12% in the pre-market on some potential policy changes. Reuters is reporting that the Trump administration is drafting a ban on imports of solar inverters made in China, and that is due to national security concerns that, of course, could benefit these domestic suppliers since it would limit competition from Chinese suppliers. Turning to Joby Aviation, this is an electric air taxi company whose aircraft are still not up in the air, but its shares are rising 6% after it announced it is establishing a joint venture with Toyota to ramp up production and get closer to commercial air taxi services. And we end on Digital Realty. These shares are down nearly 5% in the pre-market after agreeing to buy Blackstone stakes in 3 Northern Virginia data centers for $3.5 billion. This, of course, expands its footprint in the world's hottest AI data center market, but investors are focusing on the financing since Blackstone is immediately selling at a discount the roughly 12 million Digital Realty shares that it is receiving in the transaction. So some short-term pressure on the stock. Lisa?
Thank you so much, Yahira. Meanwhile, investors awaiting fresh reads on the U.S. economy. At 10 a.m. Eastern today, we get the JOLT State of the Job Openings data leading up to Thursday's payrolls report. Look out for the quits. Bloomberg, Michael McKee joins us now. Mike, we have seen some better than expected prints. What's the expectation this time around?
Well, this time around, we're expecting a little bit of a decline in job openings, but that's May data, so it's not quite as useful as maybe what we get from the Conference Board today, because the Conference Board confidence numbers are heavily influenced by what's happening in the job market. We'll see what people think about that. And then, of course, we get Jobs Thursday this week because Friday's a holiday. And right now, we're looking at 110,000, but that may change as we get these additional data points between now and then. The three-month average has been 188,000, if you can believe that, and that is likely to come down a little bit if we get that 110,000, but it's still a strong number, and no change in the 4.3% unemployment rate. The question is really, though, average hourly earnings. They're expected to tick up just a little bit. And average hourly earnings have been, as you can see there, falling below CPI inflation, about 3.4% the last month, and then CPI inflation last month, 4.2%. So Americans are falling behind on that, and that has some implications in two areas, both in the economic area. Stronger hiring would help, but it raises inflation questions if we start raising those average hourly earnings. But if we don't, with earnings falling behind, you've got an issue for candidates running for office this fall, because affordability is not a hoax. People are really feeling it at this point. So the data we're getting this week, starting today, really going to matter going forward.
Yeah, Michael McKee, thank you so much. Really looking out for that quits rate, too, which has been key to really understanding just how much people feel comfortable saying, sayonara, let's check out some other place. Lauren Seidel-Baker of ITR Economics writing, the current job market stalemate of low hire, low fire is likely to transition to a more moderate hire, low fire mode later this year and into mid-2027. Tepid enthusiasm for recovery. Lauren joins us now for more. Lauren, thank you so much for being with us. So what makes you feel like we are on an upswing here, where there is going to be, I don't know about a tightening labor market, but certainly a more positive spin to it?
Yes. Really, as we look at labor market dynamics, employment is a lagging economic indicator. We look for consumer strength in these numbers, right? We're using it for so many other inputs, but at the end of the day, the employment numbers do tend to lag behind things like retail sales, some of these more macro indicators. So we have leading indicators here that are showing us last year's pessimism or uncertainty that was so elevated. That's really been keeping employers in this low hire, low fire mindset. And that's likely to lag through, I would say, the first half of this year. However, we've seen these metrics pick up, right? We're starting to see more optimism out there, especially on the business side of things. So that's why we're looking for, again, only tepid enthusiasm. This is not flipping a switch and seeing everything come roaring back to life in the second half, but we are seeing those early green shoots, those early signs of rise. That is what I'm expecting to start seeing coming through the labor data.
What kind of jobs? Is this going to be World Cup concession stands jobs, or is this going to be data center build-out jobs? Is this going to be people in financial centers? I mean, how important is the mix of jobs getting created to you?
The mix is critical. What we saw, especially in the past, let's say 18 months, was really jobs concentrated in non-macro driver sectors. So by that, I mean things like education, healthcare, things that just don't tend to correlate to that macro cycle. And they're really not the drivers of job creation. Now, we're increasingly starting to see more jobs in things like transportation, wholesale trade. Those are a little bit more fundamental to our economy. But if we stay in this kind of government and healthcare sector as the only job creators out there, that's very unbalanced.
John's not here, so I'm going to ask the question. If there's a moderate hire, low fire, the individuals that are moving to new jobs, can they ask for higher wages?
Yes, and I think they will have to. They know what cost of living is doing. As Michael mentioned, the affordability constraints are very real across a broad swath of our consumer base. And so I think employers are going to have to budget for higher wages. We at ITR Economics do see inflation picking up, not continuing to cool down. And that's going to be a bigger part of the equation here. Now, for the consumer, really that critical metric is real income, so inflation-adjusted incomes. If we do, in fact, see wages continue to outpace inflation, I think we're at a tipping point right now where that isn't quite the case. That could be a real risk to the macro outlook.
A wage price spiral? Is that the risk you're thinking of? That potentially an issue for the Fed?
I certainly hope not. I don't think we're getting to that point. Again, inflation is very broad-based in this cycle. It's not just energy prices. It's not just all of those tariffs that we are so fond of talking about. but really these broader implications. There's a lot of liquidity out there, money supply ticking back up, right? We see these more fundamental drivers, not to mention things like energy prices. You mentioned those data centers. They are just driving rates up, not only for data centers, but for residential rates as well, for other businesses. So I think there's going to be a continued margin squeeze. And the question for me, especially as we get closer to 2027, is just how much of those price hike the consumer is going to still be willing to accept.
Well, we have seen the consumer to be incredibly resilient, whether it is higher energy prices earlier this year with electricity costs, higher energy prices at the gasoline pump. We just heard Mike McKee talk about affordability, but the fact of the matter is consumers continue to be resilient. Are you seeing parts, though, of the consumer cohort that is actually struggling right now?
Never count the U.S. consumer out. However, in this macro environment, yes, we hear about that K-shaped economy just so frequently. And that really is the case here. The bottom end not doing quite so well. They are feeling the pinch. They naturally do get hit harder by some of these trends we're talking about, like higher inflation, especially with those non-discretionary purchases. But middle to upper income earners, they're actually doing quite well right now. They're, first of all, sitting on real wealth effects, things like my home being worth more than it was, my stock portfolio doing very well, as you quoted in the numbers earlier. And it turns out that it's those middle to upper income earners that really drive the bulk of retail spending. The consumer, at the end of the day, drives 2/3 of gross domestic product. So as that especially upper income earner goes, so will go our economy.
I'm just wondering, Lauren, I know that right now we're hearing commentary coming from the Sintra conference, and they're talking about inflation, they're talking about the risks, they're talking about oil prices, but they're also talking a lot about AI, not necessarily as a CapEx boom, but in terms of concentration risk with respect to markets and how this could become a financial risk that really does torpedo economic growth. How much are you watching some of the market moves tied to AI and the connection between the economic trajectory in the United States?
So if AI and data centers are a bubble, I don't think that bubble is bursting immediately. Really what I'm looking for as a macro driver is, can AI make us better? Can we actually see better productivity? Thus far, there are some tentative signs that we are seeing an upward tilt there, but I think the jury is still out. It's just too soon. The effects are not grand enough. And if you go back and compare this to the gains that we made in, say, the 90s with the advent of the personal computer, the internet, that's where we really see what a shift in technology can do. So I'm thinking of AI as just the next iteration. Yes, some companies will be able to harness it. That will help them. Again, I mentioned this margin squeeze. That's going to be a very real differentiator for firms out there. And if these companies are willing to invest in AI, and not just invest in a throw money at the problem kind of way, but really use AI to solve a problem, that's where I think we're going to see the winners.
Lauren Seidel-Baker of ITR Economics, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Venezuelan opposition leader Maria Corina Machado is trying to return to her country to help with reconstruction efforts after 2 earthquakes last week. She says she was unable to return because the government closed its airspace in an effort to block her arrival. Despite being one of 23 underwriters, South Korea's Mirai Asset Securities received no stock allocation in SpaceX's IPO. Sources telling us here at Bloomberg the issue was a misunderstanding over how orders were supposed to be submitted. The company is now apologizing to clients and being inspected by local regulators. Paraguay delivering the biggest upset so far in the World Cup, sending 4-time champions Germany home in a dramatic penalty shootout after they finished at 1 goal each following extra time. It was Germany's first appearance in the knockout round since they last won the tournament in 2014. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. I have to say, it's incredibly dramatic when it comes to shootout, but it feels deeply unsatisfying because ultimately, after all that work, all the domination of Germany in the first half, and nothing, right? And there's sort of this feeling of just interpersonal rivalries and internal angst that you can feel with all of the potential kickers.
Oh my God, yeah. I mean, I grew up playing soccer. I played for most of my life. You run around for 90 minutes. It comes to a shootout and you lose. It is so upsetting. I think today is actually now a national holiday in Paraguay because of this huge win.
Congratulations to Paraguay. Up next, setting you up for the day ahead, plus David Rubenstein of the Carlyle Group, as Fed Chair Kevin Warsh takes his new policy regime on tour over to Sintra, Portugal, which really looks beautiful. This is Bloomberg Surveillance. Good morning.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
I don't know that anything dramatic will happen between now and year end. The amount of money sloshing around the system, all the capex that's going on in the US and globally will start to accelerate growth and inflation pressures, and the Fed will have to come back in next year and hike rates once or twice. This is not a dramatic hiking cycle.
That was Bob Michael of JP Morgan Asset Management. The debate seems to be not necessarily what the Fed will do this year. A lot of people think maybe a hike, but more likely on hold. It's next year. Is it going to be a hike or is it going to be a cut? Right now in markets, you can see a fading of the optimism earlier this morning, although S&P futures just about unchanged. Two-year yields 4.12% up, nearly 2 basis points. Brent crude has been fluctuating around all morning, just essentially flat at $73 on Brent. And you can see that Japanese yen continuing to weaken. The weakest level is going back to 1986. A question over to you, Bank of Japan. What you going to do? Counting down to the opening bell. Here's a trading diary for the week ahead. At 10 a.m. Eastern, JOLTS data and consumer confidence. After the close, Nike earnings. How goes the turnaround that hasn't really led to any kind of pop in the shares this year? Wednesday, ISM and ADP data, plus Fed Chair Kevin Warsh What does he stand for? What will he say? He will be speaking in Sintra, Portugal, Thursday. The June payrolls report, and on Friday, you get a day off for the 4th of July, the U.S. Independence Day. Looking ahead to the Fed Chair's international debut, Kevin Warsh taking the stage tomorrow in Sintra, Portugal, alongside global central bankers. David Rubenstein of Carlyle joins us now. David, thank you so much for being with us. Always great to get your thoughts. How much are you looking at this moment as an inflationary one that requires higher rates as a result of some of the dynamism that we're seeing in other pockets of the economy?
Clearly, the ECB has raised rates recently, and other central banks around the world are raising rates. But Kevin Warsh clearly has a mandate not to increase rates all that much. And I think President Trump is not looking to him as somebody who's going to raise rates very much. The most recent meeting, the Fed did not raise rates. And I suspect that Kevin Warsh will wait as long as he can before raising rates. President Trump has a lot of confidence in Kevin Warsh, more than he did, for whatever reason, in Jay Powell. So I think Kevin Warsh can raise rates if he needs to, but I think he'll get less criticism from President Trump. But I think he would prefer to hold off doing that for quite some time if possible.
David, do you think that he needs to? Do you think that right now the inflationary pressures that you're seeing coming from AI, whether it's in portfolio companies, whether it's in just business more broadly, are something that is going to be sticky and requiring of a policy move?
There are inflationary pressures coming out of the war in Iran, for sure. Oil prices have been up for a while, and while they probably are going to recede, I do think there's some residual inflation, but I suspect that the Federal Reserve Board can wait another quarter or so before deciding it needs to raise rates. And I'm not saying it will have to, but Kevin Warsh is a very smart person. He's got the president's confidence. Unfortunately, Jay Powell did not have the president's confidence, though I thought he did a good job. But Kevin Warsh, I think, was going to have much more leeway to do what he wants to do than Jay Powell did.
David, when you say clearly has a mandate not to raise rates, you mean he clearly has a mandate from the President of the United States? Are you then insinuating that you don't think he's truly independent?
Well, I think he is independent, and I think he's very strong-willed, and he's a very smart person. He's got a lot of experience. He's been on the Fed before. But I think it's the kind of situation where President Trump relies on him more than he probably does on Jay Powell. He's known him for a longer period of time. He's known his family for a long period of time. And I just think he's going to give him more leeway. That doesn't mean that Kevin Warsh is not going to raise rates. I suspect he'll do what the numbers indicate he should be doing. And I do think he will effectively control the Federal Reserve process. And what he wants to do, I think the Federal Reserve will go along with.
What do you make of his performance thus far? No dot on the dot plot. He's not going to give forward guidance. He has these 5 task force that, maybe by the end of the year we'll have an understanding of what they decide to report out. Do you think this is the right approach?
Well, remember, Alan Greenspan was chairman of the Fed for 18 years, unfortunately just passed away, and he did not give the kind of guidance that Jay Powell did. Ben Bernanke gave some guidance, but not as much as Jay Powell did. So it's not as if the Federal Reserve has always given the kind of guidance that Jay Powell did. I do think Kevin Warsh thinks that the Fed should be a little bit less transparent, not be so open about what it's thinking, and I suspect you'll see less transparency and fewer press conferences than maybe Jay Powell had. I think Jay Powell did a very good job in explaining what the Fed was doing, but some people, obviously Kevin Warsh, one of them, think that the Fed should be a little bit less transparent.
David, we're talking about the central banking universe as this meeting takes place in Sintra, and they're talking as much about traditional economics as they are about AI stock valuations and concerns about what this does when it comes to systemic risk. As a business owner, as someone in markets, are you getting concerned about valuations getting ahead of how quickly we can deploy some of this technology in productive ways?
Enormous amounts of money is now going into AI and going into data centers. And the theory behind investing is you get your money back with a return. Whether you'll get your money back with a reasonable return on all the AI investments is unclear at this point because so much money is going into this area, and it's not clear when the returns will come back, if at all. So I do think there's reason for caution, but I don't think it's a concern right now that AI will be a bubble that will burst dramatically. I do think there's a lot of interest in AI, and I think for some time you're going to see a lot of investment dollars going into it. And I think a lot of them are justified because AI is clearly going to change the way we live and the way we deal with business, just the way the Internet did. Whether the Internet had a bubble or not at some point in time is something that you can say maybe it did. AI could have a little bubble at some point, but right now I think the markets are still fairly resolved that AI will be a pretty good thing to invest in. And there may be at some point in time, there might be some slight reduction in the values, but generally AI is here to stay, and enormous amounts of money are going to go into this area.
Yeah, something I'm sure that you talked about online and offline with Rick Wurster in your latest episode of Bloomberg Wealth, which we'll get into in a second. How much do you see AI and some of these large language models transforming the asset management industry, not just on the retail side, on the private asset side, in your business, what you're doing?
Well, AI is here. They're going to change everything. For example, in the investment world, AI models are being used to assess whether a deal is a good deal or a stock is a good deal. The models will get perfected over a period of time. But I do know that some private equity firms are beginning to look at AI as a help in making decisions about whether to proceed with certain investments or not. I know my own firm, in certain areas, we have used AI quite extensively to help us speed up the decisions that are about to be made. For example, if you're looking at a large portfolio of investments, and you can make the decision about whether they're good or not much more rapidly with using AI technology.
This is something that I think Anne-Marie wants to know about, which sports teams you're going to be using AI to purchase next, or whether you're going to be advising the Knicks. Is that right?
Well, David, I know that you recently were at an NBA meeting and gifted the Declaration of Independence replica. I'm not going to nudge you about the Orioles, but if you were Mr. Dolan, what would you do right now with the New York Knicks?
I think I have enough problems dealing with my own baseball team and challenges, so I'm not going to give any advice to anybody else. I think each person should deal with their own situation, and I'm hardly one to give advice at this point. But I'm optimistic that baseball is going to be more and more popular increasingly, and I do think that that Major League Baseball will thrive the remainder of this season, and I'm quite optimistic about the attendance at Major League Baseball games and the fan viewership. So each owner has to deal with their problems themselves or their challenges themselves, and I'm not one here to give advice to others.
David Rubenstein, you're a legend, and it's always wonderful to speak with you. David Rubenstein of the Carlyle Group. Do not miss David's conversation with Charles Schwab, President and Chief Executive Officer Rick Wurster on Bloomberg Wealth tonight at 9 p.m. Eastern, right here on Bloomberg Television. A key conversation at a time of transformation in the financial industries, especially given what we've talked about throughout the show, AMH, which is essentially retail investors having a much more powerful seat at the table and a much more active one.
I think really interesting, David's talking about there that he's using it in his own portfolios, figuring out how quickly you should make an investment and how AI is speeding up decision-making, that whole entire process that sometimes can take weeks or months. How short is that actually becoming now for investors?
Yeah, it's here to stay. Just question of valuation and just where people are seeing the potential profits and return therein. Coming up tomorrow, do not miss this. Brian Levitt of Invesco, Libby Cantrell of PIMCO, Andrew Hollenhorst of Citi, and Jim Bianco of Bianco Research. I think Jonathan Farrell will come back from his visit to Sintra. I think that he did take the ticket, and then he will join us back again tomorrow because evidently the short junket was enough for him. Right now, we are seeing markets just rolling over a touch. From New York, this was Bloomberg Surveillance. Good morning.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable.
artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Going a whole lot of nowhere on this, the last day of the quarter. 30 minutes ago into the start of trading, I'm Danny Berger. Matt Miller is out. Bloomberg Open Interest starts right now. Coming up, stocks are on track for their best quarter in 6 years, and chip stocks lead the charge. Meanwhile, the yen hits a 4-decade low as HSBC flags a stronger dollar as a major pain trade ahead. And oil heads for a quarterly drop ahead of another round of peace talks in Doha. Well, the most loved and recently disliked child of this equity market has been chip stocks. It doesn't matter what they've been doing over the past week and over the past month. Chip stocks are still headed for their best quarter ever. It's the AI trade, no surprises there. But now investors are wondering how much further the rally can go as we've seen those chip prices surge. Nvidia's up 0.5% today, Micron down 0.5%, SanDisk that's up 1.7%. And by the way, SK Hynix has done their file to apply for an IPO. So they haven't applied for a U.S. IPO yet, but they have filed. Let's talk more about this story because it's the main driver over the past quarter. Let's head over to the desk because sitting there, joining us now, it's Mandeep Singh, our Bloomberg Intelligence Global Head of Tech Coverage. Mandeep, again, it does feel remarkable considering that chip stocks have had a wobble over the past few weeks, and yet here we are headed for the best quarter ever.
Well, I think it's partly explained by the backlog that these companies see, whether it's NVIDIA or the customers of NVIDIA, which are the hyperscalers. I mean, we are talking about $2 trillion of combined backlog for the hyperscalers. And, you know, everyone questions the CapEx increases and how far we have to go. But you have to keep in mind that these companies have commitments. And look, you could say some of these commitments may not come to fruition, but as it stands now, everyone has visibility to revenue growth, which is what they're guiding to, and that's what's driving, you know, the spend. So to my mind, you know, this party keeps going until someone like Meta, which doesn't have a backlog, says, I'm not spending anymore.
Do you think we might be getting closer to that point, or how far away might that point be if it ever comes?
Well, so Meta has a core ads business, which seems to have accelerated partly because of their AI spend. And they are consuming a lot of this AI infrastructure themselves. So from that perspective, as long as they maintain that healthy top-line growth, I think market will be willing to wait for that agentic AI revenue to show up eventually. But if that slows down, I think they will come under pressure to slow down their capex.
But Mandeep, I know we have like 1.5 months to go until SpaceX reports their earnings, but you and the team have just put together your earnings model for SpaceX. What are your expectations? What are you starting to dig out of this company and when it actually might be profitable?
I mean, the 2 compute deals that they signed right during the roadshow, you know, with Google and Anthropic, those were huge in the context of scaling the AI infrastructure business. And now the Cursor acquisition, the $60 billion they're paying, we think they can actually scale it up to get to a combined ex-AI revenue of around $100 billion by 2030. But really, right now, it's going to be more compute rentals. Eventually, it'll be Cursor coding agent and API sales. And if they are able to execute on that acquisition, they have a path to profitability, which is what we are showcasing in the model.
All right, Mandeep, great research. I'm sure we'll see you same time, same place tomorrow morning, too. Mandeep Singh from Bloomberg Intelligence. Now, another theme top of mind today in markets is the historic slide we're seeing in the yen. The yen now trading at its weakest against the dollar in about 4 decades, leaving traders looking for Japan's next line in the sand for the currency. Bloomberg's Enda Current joins us from Washington. And Enda, this, even though we did get some jawboning from officials, but it feels like a slow bleed. It's certainly not volatile, but here we are at a really weak level.
It does feel like it's going in one direction, Danny. A lot of focus, as you say, in terms of what Japan can do about this, how will they respond. They've had some jawboning from the finance ministry. The question is whether or not they intervene again by running down their reserves to buy the Japanese yen in an attempt to support it. They've done that before. Back around April time, they spent around $70 billion. Expectations are they probably will step in again to intervene, Danny. But the question becomes how effective that will be. Usually there is an immediate market impact for sure. The yen snaps back. But that rally kind of fades out over time because the underlying issues that are causing this decline haven't gone away, and that is the interest rate differential story, the price of oil imports that are priced in dollars, worries about Japanese debt levels, and none of those issues are going to go away in the near term, certainly won't be fixed by intervention.
I was going to say, I mean, how much of this is, you mentioned some of them there, but how big of the dollar and dollar strength is just a driver of this, especially after some of the hawkish repricing from the FOMC meeting. And we're going to hear from Kevin Warsh tomorrow, and notably, Ueda will not be on that Sintra panel. Does fighting it from the Japan side even help at a moment when the dollar continues to strengthen, Enda?
Well, that's right, Danny. So much of this story is dollar strength. Not all of it, as I said. There are some Japanese-specific issues. But take one example. Japan imports a lot of oil. They have to pay for that in dollars. The dollar is more expensive right now. That's hurting them. You look at the interest rate differential between Japan and the Fed. Even though Japan has hiked rates to the highest level in 30-odd years, they're not yet at a level that some people feel they should be that would offer enough support to the currency. And then you look at what's going on with the Fed. We had that very hawkish message from the Fed a couple of weeks ago. Half the FOMC seeing an interest rate hike this year. Chairman Warsh talking about price stability. And yes, we do have Chairman Warsh speaking tomorrow at ECB forum. It will be interesting to see if he doubles down on the hawkish message there. Then we get jobs data in the US on Friday. They're supposed to be a pretty good set of numbers. So it's all leaning towards an ongoing hawkish Fed, strong dollar. That clearly won't help the yen.
I would say that jobs data is on Thursday. I hope you're not working Friday, Enda. It's 4th of July. Come on.
Quite right, Danny. Excuse me.
Enda, thank you so much. Enda Curran from our DC team. And yes, we will be getting jobs on Thursday. I go back to Ian Lingen, who said, you know, we probably could have just done this thing in July 10th. Why did we need to do it a day before? So sorry you don't get an early holiday. Let's turn to oil, though. Brent is trading at $73 a barrel ahead of another round of peace talks in Doha today. U.S. envoys Jared Kushner and Steve Witkoff are expected to attend the talks. President Trump spoke yesterday.
The meeting in Doha is going to be perhaps important, perhaps not. We're going to find out. But we're winning militarily. It's almost won militarily, I would say. And it's really very simple. It's the denuclearization of Iran. We don't want them to have a nuclear weapon, and they're not going to have a nuclear weapon. And they've agreed to that, in all fairness.
Bloomberg Washington correspondent Tyler Kendall joins us now. Tyler, what are we expecting out of Doha?
Well, Danny, at this point, we can actually confirm that both Special Envoy Steve Witkoff alongside the president's son-in-law Jared Kushner have now landed in Doha. But we heard from Qatari mediators saying that these will not be direct negotiations. This is going to be indirect talks through the mediators, as Iran's foreign ministry earlier today says that there are still, quote, serious challenges to just implementing the memorandum of understanding, which first needs to be in place before we get to those serious negotiations around what potential curbs to Iran's nuclear program looks like. Because at this point, all the focus remains on the Strait of Hormuz, as overnight we got another reaffirming that Iran wants to maintain its grip over the waterway. We heard from a top Iranian official say that there are still plans to work with Oman on instituting essentially a structure to oversee the Strait of Hormuz. But importantly, this official went further, saying that whether or not Oman participates with them doesn't matter. Iran is going to pursue this anyway. It's going to be something to watch really closely as we start to see more commercial shippers gain confidence when it comes to the Strait of Hormuz. But importantly, they're using that corridor that hugs the coast of Oman, much to Iran's dismay. So this is going to keep coming up as one of those key contentious points. But data analyzed overnight shows us that at least 24 commercial ships with the potential to carry about 11 million barrels of oil were able to successfully transit through yesterday. Danny, at this point, this is being described as those technical negotiations. We're going to have to see where they go from here, because I will point out that President Trump is highlighting some of that domestic pressure to actually get a breakthrough in these talks. Just yesterday, he highlighted that threat against gasoline retailers, and we heard it reiterated this morning, actually within the last hour, from the U.S. Treasury Secretary Scott Bessent, who said that he hopes that gasoline retailers will be, quote, good actors as the administration wants to see those prices come down further.
Tyler, while we have you, the president celebrated what he called his Supreme Court win, especially when it comes to the FTC and allowing him to remove officials from independent agencies, and maybe they're less independent now. We also had the Lisa Cook ruling. What are we expecting? What's left on the docket for the Supreme Court that they're likely to get through today, Tyler?
So, Danny, today is the last day of the term. We are waiting on 4 very contentious and highly consequential cases, but there is a lot of focus on the case for birthright citizenship and the Trump administration's bid to end automatic birthright citizenship through this executive order that the president signed into law on his very first day in office. This is absolutely critical to the president's immigration agenda. However, Danny, he himself has indicated that he doesn't think that the court is going to go his way. We saw this wariness from the justices during the oral arguments back in April. In fact, the Chief Justice John Roberts said that the administration's legal argument here was, quote, quirky. We'll see where it ends up going. The administration says that the citizenship clause of the 14th Amendment should not be applied so broadly to apply to children of undocumented immigrants, whereas those challengers, including the ACLU, have maintained that this is a long-standing legal precedent. Danny, has really big implications, could impact the nearly 255,000 children that are born to undocumented immigrants in this country each year.
Hey, Tyler, thank you very much. And we'll see you in about an hour's time and look at what the Supreme Court gives us. Bloomberg's Tyler Kendall in Washington. Let's get a check on your markets. 20 minutes to go until the start of your cash trade. We started the future session higher, and those gains started to wear out. Again, it is the last day of the quarter of the month. You might get some weird window dressing and some rebalancing, but here we stand, little change on what's set to be the best quarter in quite a few years, despite a not-so-great month, especially for the Mag 7. 10-year yields are higher by a basis point as Brent crude chugs just a tiny bit higher. We are above $73 a barrel. Let's take a look at some of the single names moving this morning. With that is Isabel Lee. Isabel.
Hi, Dana. Let's take a look at some single stocks moving right now. We're looking at Comcast shares are higher by almost 3%. We have Deutsche Bank and Rosenblatt Securities upgrading the stock to buy. This comes after the planned spinoff of its media business. So analysts say that this could really help with the strategic planning of the company, the strategic flexibility, and could also set Comcast up for more media deals. Although some analysts also say that NBC Universal might prove to be the more attractive target. We're also looking at Merck and AbbVie. So you see shares here down by nearly 0.8% for Merck, and AbbVie, you're looking at around 0.3% lower. So we're looking at this stock because this comes after a bipartisan group of lawmakers, according to Reuters, opened national security investigations into the drug makers. So Reuters saying they're investigating whether chemical trials conducted in China help fuel the country's military capabilities. And lastly, we're looking at Digital Realty. This is a data center. So again, data center is what we're talking about. So they're buying Blackstone's stake in 3 data centers across Northern Virginia for $3.5 billion. So Northern Virginia, as we know, Danny, is really becoming a hotspot for data centers.
And it is my home. And
yes.
Yeah, it's where I was born. And I honestly talk to people all the time who hate it, that don't want those data centers.
We should go on a field trip. Maybe you can take me around.
Yeah, we can stay at my parents' place. They would love that. Isabel, thank you very much. We'll catch up with you after this commercial break. But also coming up, Nike reports earnings after the bell. Is CEO Elliott Hill's turnaround plans finally starting to pay off? We'll cover that next. You're watching Bloomberg Open Interest.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Now to high interest, a look at what's making headlines around the world. With that is Isabel. Hey, Isabel.
Hi, Diana. We're looking at New York City. Their new pied-à-terre tax takes effect tomorrow. So this is hitting second homes above key value thresholds with surcharges that can reach 6.5% of assessed value. So owners are exploring ways to avoid the tax by transferring properties to LLCs or trusts, renting them out, or selling. But lawmakers say that the loopholes are limited and the penalties for dodging the tax are steep. And Susquehanna Investment Group saying it lost more than $70 million in an alleged insider trading scheme linked to China's crackdown on cross-border brokerages. So the firm is suing 100 unidentified defendants, claiming they used non-public information to make over $100 million in profits. The allegations have not been proven in court. And Paraguay declaring a national holiday after it beat 4-time World Cup champion Germany in a penalty shootout. Paraguay's president announced a surprise day of as massive celebrations erupted across the country. Paraguay now faces the winner of France and Sweden on Saturday for a spot in the quarterfinals. I don't really watch World Cup, Danny, but I know that you do.
It was so good. I watched every moment of this game. Germany has never, literally in the history of the World Cup, never lost on penalties. So this was the first time ever. So Paraguay should be celebrating. But Isabel, I don't know if you would know this, but France is like insanely good. They're likely to win the whole thing. And so they're probably going to play France next. So they should be celebrating now.
You're clearly a fan.
just a little bit. I was like covered in rain at the England game this past weekend.
Oh, wow.
That's how dedicated I am. I'll wait through the rain. Isabel, thank you very much. We'll catch up with you in just a little bit. By the way, related to the World Cup, Nike is going to be reporting earnings after the bell today. They obviously have some more visibility with the various sponsorships they've been doing. But investors are going to be looking for signs that CEO Elliott Hill, that his turnaround is taking hold, along with any updates on China. And yes, the World Cup. Bloomberg Intelligence senior retail analyst Poonam Goyal joins us now. Poonam, great to see you again. What are you expecting from Nike today?
You know, the focus is really going to be all on guidance. We're not expecting anything momentous. The turnaround is underway, especially in North America. So expecting positive sales there, low single-digit increase, though the rest of the world is going to be down, notably China down in the high teens. So a lot of work still needs to be done. We want to hear what the look ahead is. What is the fiscal 2027 look for Nike, the first quarter? And then on tariffs, tariff refunds are coming in, and Nike has alluded to a benefit that it will expect in the back half of the calendar year. So how much of a benefit will that be, and where are those savings going to be invested? Back in price, they had taken price up, or elsewhere?
Can we just stay on China for a moment, Poonam? What continues to be the headache in the region? Is it just local competitors that have come in? Is it something different? How do they wrestle market share back from the country?
So there's a lot of things that they need to fix in China. First is inventory, the same issue they've had in North America, which there's just too much unwanted old inventory that's not resonating with the customers. They need to clear all that out. That's step number one. Step number two is in the process of clearing out this inventory and the missteps that have caused the brand to tarnish in China, the brand is now viewed as a discount brand. And Nike, as we know here, is not a discount athleisure brand. So they need to rebuild brand heat and brand perception. As those things come into hand in hand and they improve the product flow with new product, which is resonating, they could start a turnaround there. But it's not going to happen overnight. It will take, we think, at least 12 months.
They did announce last week that they're changing the CFO. They have a new CFO who was previously at CVS and Lowe's. The prior one, or the one outgoing one, is still leading this earnings call. Poonam, should that signal anything to markets?
You know, I think the CFO change is notable, but at the same time, I don't think that's the job that's responsible for the turnaround. It'll help with capital allocation. It'll help kind of ground Nike in its strategy. But I think the real execution comes from Elliott Hill and his team to really drive innovation, speed, and bring brand heat back into the market, which will depend on endorsements and products largely.
So is the World Cup just a big win for them, Poonam, or too early to say so far?
It's still too early to say, but, you know, they are sponsoring 6 of the teams, and so is Adidas. It's a neck-to-neck battle between really the two of them, and regardless of who takes it home, I think just the brand perception that they're building through this tournament is big enough, and the product launches that are coming through is going to drive their momentum in soccer. That doesn't mean that Adidas is going to lose out on it in any way. I think they're both going to gain share through the World Cup.
I still think it is absolutely nuts that like every brand independently decided to do shoes that were literally like the color that I'm wearing. That's been one of the interesting things. Hey, Poonam, so great to catch up with you. I'm sure we'll talk after earnings to get your take. Poonam Goyal of Bloomberg Intelligence. Coming up, North Star's Nimrit Kong joins me as the first half of 2026 comes to a close after a huge quarter, the best ever for chip stocks. That's on the other side of this break. You're watching Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
When it comes to hyperscalers, look, it's an arms race. That's why the question is, like, can they actually cut CapEx? They can't. In other words, like, you're diving into the deep end of the pool. Because if they cut back, then they go behind others in line that will clearly go ahead of them. Anthropic, OpenAI, ultimately, if they go public, they'll just have more and more cash. And I think that's the reality right now. And to those, the bears will be like, oh, it's spending to nowhere. It's the opposite. I mean, you're essentially building out a new economy for consumers, enterprises, and for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Wedbush analyst Dan Ives on the AI spending narrative. Let's bring in Northstar Chief Investment Officer Nimrit Kang. Nimrit, great to see you on the last day of a quarter that has been remarkably strong. Best quarter ever for chip stocks, for the index itself. Best quarterly performance in 6 years when the index was bouncing back from a pandemic. It does, though, seem to be that some of the momentum has been taken out recently, especially with the Mag 7 declining 10% this month. How are you thinking about where we go from here?
Yeah, Danny, it's really about, we're seeing two different things happen here in AI. There's rationality that's happening, which is the AI story is becoming broad-based. It's spreading into the economy. We're seeing companies not exposed to AI also starting to see benefit in their earnings, looking at almost close to 15% last quarter, similar pace this quarter. So that's really good. The other side is the market is saying the hyperscalers are not going to make money on their investments, but the companies that are selling them chips are continuing to go do well. So that's a little bit of irrationality that we see which doesn't square. We would say, the AI story has legs to run because it's supported by earnings, and the earnings momentum is likely getting broad-based from here.
All right, Nimrit, stick around. We're going to talk more after the opening bell. That's Nimrit Kang. And a quick check on your markets ahead of that opening bell. And we're not doing a lot. We're slightly weaker, but ever so slightly. Again, it is quarter end, it is month end, so you tend to get some weirdsies in this market as we rebalance after a very, very strong quarter, a less strong month. We were down in the S&P by nearly 2%, but still, 10-year yields, those stand just below 4.4% as Brent crude stays steady at $73 a barrel and 20 cents ahead of talks in Doha. On the other side of this break, your opening bell.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until the midterm election.
Hear it first on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Seconds to go until the start of trading. You're watching Bloomberg Open Interest. I'm Danny Berger. The end of a quarter, the best one in 6 years. Even better for the chip stocks, their best quarter ever. We remain unchanged this morning. What a snoozy Tuesday, but there's still a lot to play for in today's trade. Dow Jones also little change too. Ringing the bell at the New York Stock Exchange is JP Morgan celebrating this, the last day of Pride Month. I'm going to be honest, when Matt does this, he usually has the returns of every single bank memorized. My brain cannot do that. But I will say that JP Morgan has returned over 100% in the past 5 years. The same cannot be said for this company, Happen Bank, which has only returned 12% in that same time period. You maybe have not heard of Happen Bank because they just rebranded and changed their ticker, which is why they're down at the NASDAQ. They used to be Lending Club, which that I've heard of. I mean, look, I'm not a brand expert, but I don't know why you would change your name if you have a brand that people know. But Happen Club, they're trying to appeal to high net worth individuals, apparently. So you do you, Happen Bank. Here at the market open, Nvidia's up 0.4%. Micron down down now 0.6%, while SanDisk is up 1.8%. Again, it's the end of the quarter, so the trades are a little bit odd. They're not trading as like a monolith, which is pretty interesting. But chip stocks did just record their best quarter ever. But a real question to how much further the surge can go. And let's bring it back in, North Star Chief Investment Officer Nimrit Kang, because Nimrit, you were just talking about this idea, this disconnect that the market says that the hyperscalers might not get a return on investment, but the things that they're spending on, i.e. chip stocks, are doing well. I just wonder if there is any concern for you that the hyperscalers at some point, if they keep getting punished by markets, will start to curb some of the spending they're doing, or if the mantra will continue to be the risk is underspending, not overspending.
Right. I think it is a circular logic. Your previous speaker pointed out, the hyperscalers have such an incentive to spend because it is a winner take all market in some ways. We've seen that happen over and over again with search, with internet, with cloud. So they want to be there. But I think one thing that's missed is these are vertically integrated enterprises. So take example for Alphabet. It's not just spending, it's spending, but also feeding so many of its own businesses. They own the Silicon as well. They have distribution, and now they're at 24 times. Similar for Microsoft at 21 times, owns the distribution, doesn't have a model, but that can be easily fixed. So there is a lot of circularity to that, but the big disconnect is how can hyperscalers continue to spend without seeing a reward or return for what they're spending on, and yet their suppliers continue to win? That just doesn't make any sense.
The spending that they're doing, Nimrit, so for now, the equity market, maybe a little bit of wobbles, but still allowing things to happen like a SpaceX IPO or SK Hynix coming over to list here. We'll see how that happens. These bond markets, the type of issuance we're seeing is remarkable. It has been fueled by tech. I asked our internal AI model about what it's been year to date. IG, $1.1 trillion through the first half. That's already surpassed the full year totals for 2019, 2022, and 2023, and on pace to etch in a new record itself since 2025. High yield, something similar, $213 billion in the first half. So that puts it also on pace to exceed some of the banner years we've seen in the past. Nimrit, do you expect that to change at all? Or are these funding markets going to remain wide and open for the hyperscalers and all these AI-related companies to continue to issue debt?
The experience is the markets remain open until they don't, right? And that's where one of the things that we worry about is the strong correlations between the equity and the corporate debt markets that we're seeing now that were not true, let's say, even 5-10 years ago. So you used to have the corporate investment grade as a diversifier in a way to your equity exposures. Now you're basically taking the same exposure all the way through, and that is a little bit of concern. That's why it is, incumbent upon people like me to make sure we know what we're buying when we are buying into some of these different bond funds and ETFs and corporate grade funds.
Does it change the attractiveness? Obviously, these funds that you're referring to still are underweight tech, especially compared to the equity market. They still are heavy finance and financial firms. But does the profile and the interest and the diversification properties of putting bonds, of pairing that with equities change as you do start to get a steady tick up of weighting towards tech companies?
Yeah. So I think that ultimately it comes down to if you're playing at different parts of the same capital structure, you're not getting that diversification. I think the one way to think about it, Danny, is yes, all of this works when we are, the market is still very positive on the AI build out. All of this works. When it sours on that, you're not going to see the kind of benefits that you need to see from your fixed income holdings. That's how we would think about it. I hear your point. They're still underweight versus the equity exposures, but we're not looking for them to match the equity exposure. That's not the intent. The intent is to offer a diversified benefit. You talked about financials. So many of the financials are involved in funding this infrastructure boom. So I'm not really sure that we're going to get the benefits that we're looking for or we have historically relied on.
Nimrit, I was just looking at earnings expectations from the sell side. If you look bottom up, basically what they're targeting would imply something like a 20% rally through year end for the S&P 500. Plenty of the sell side has targets that are above 8,000. What are you expecting? I know you don't give a price target, but I just wonder how bullish or not you're seeing through the end of 2026.
Yeah. Where we're bullish in is the diffusion of the AI into the rest of the economy. One of the things that we watch very closely is the rail traffic. Danny, the rail traffic is now finally picking up 5% in the first few months of, now we're ending June, which is very positive. That's telling you that all the momentum that we've seen, all the talk we've seen of data center construction build up, that's finally translating into, movement of goods across the United States, getting the materials to these data centers. So that's all very positive. And there's a huge trickle down effect that's also happening. And that we see in retail. And, that's the other part of the rail traffic that's been strong is intermodal related to retail. And all this wealth effect from people who have benefited from the equity markets are continuing to support the retail spending as well.
Hey, Nimrit, we're going to have to end it there. Thank you so much for joining. Great to see you this morning, North Star's Nimrit Kong. Let's get a check on your equity market. That's going a whole lot of nowhere, but good news, it is slightly higher now. It was slightly lower. The breadth ain't great, though. Majority stocks are down 361, are trading to the downside. So some of these individual names that we're looking at, NVIDIA adding the most points, not because it's having a huge rally, but it's really just because it is such a large stock. So adding 8 points to the S&P, which is only up 5 points so far this morning. Most of the chip makers are having a good day. AMD SanDisk, Lam Research. Intel is up there too. To the downside, you have Eli Lilly, Alphabet, Meta, Procter & Gamble, IBM, but still some of these Mag 7s really struggling to get any sort of gain. They have corrected in the month past with an equity index that's down by about 2% as a whole. But again, the quarter still looks good, even with the most recent wobble over the past month. So you have some of these more kind of bond proxy and safety stocks, to just be frank, at the bottom. Real estate, utilities, consumer staples, those not doing well, as infotech is the top returning sector. But again, that's largely NVIDIA. If NVIDIA's up and the chip stocks are up, so too will tech. Coming up, we're going to talk more about chip stocks, sky-high prices for memory chips. Traders are assessing the staying power of that rally. We're going to catch up with Ed Ludlow next, also on some data center deals that have just hit the market. You're watching Bloomberg Open Interest.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
A check on your markets this morning, and we do go to a rally thanks to NVIDIA's gain and some of the chip makers. Not a whole lot, though. We are headed for a very strong quarter. We're going to get into that in just a moment. The Philadelphia Semiconductor Index is up 1.5% to end the quarter, with Brent crude little change, just above $73 a barrel. Let's get you some top calls now. Here with that is Bloomberg's Isabel Lee with what the sell side is saying this morning. Isabel.
Hi, Danny. First up, Oppenheimer. It's turning bearish on big banks, cutting Goldman Sachs, Morgan Stanley, Citigroup, and Bank of America. The firm says that these banks are highly exposed to swings in sentiments, and it worries that the market is not pricing in the risk of another fear-driven downturn. If you're looking at a screen, they're all in the red. So Oppenheimer prefers alternative assets like Ares, Blackstone, and KKR. Next up, you're looking at, yes, that's why they're green on the screen. So next up, we're looking at Daiwa. The firm upgraded Honeywell after its aerospace spinoff. The stock is enjoying a little pop there, up by 1.3%. So the firm pointed to solid earnings, growth potential, and a more focused portfolio. And finally, we're looking at Piper Sandler. They're double upgrading Block, but I guess the stock is not reacting because it's down by 1.3%. Piper Sandler said that investors are underestimating the company's earnings potential. The firm says double-digit gross profit and AI-powered efficiencies will help boost margins over time. Maybe the stock later will react, Danny, but sometimes you do get that inverse reaction. Danny.
Isabel, thank you very much. Always a bummer for the analysts. It's like, why didn't my call work better? We'll catch up with you a little bit later in the show. Isabel Lee there. Now, it has been a huge quarter for tech. Chip stocks in particular had their best quarter ever due to insatiable demand for AI technology. There has been a lot of recent volatility, though. Now investors are wondering, is this still a super cycle or the start of a choppier run? Let's bring in Bloomberg Tech host Ed Ludlow. Ed, I have to say, it is remarkable for them to log the best quarter ever, despite the fact that they were down last week for the worst sell-off since that Liberation Day sell-off. I just wonder, does it seem like we're on shaky ground for these chip stocks now?
You know, the way that we frame it in the Bloomberg story is really interesting, that, you know, it's 82% gain in the quarter and 95% gain year to date, but we're only halfway through the year. It's definitely a different wave of momentum. So this is kind of part two of the AI wave of this decade, where memory and storage have led those gains, Seagate, Micron, etc. It has not been NVIDIA and the other computer or AI accelerator providers that have driven this part of it. What's interesting is, like, there's also a cautionary tale in the data. I don't know if you guys have the longer term chart that you can put back again, but, you know, this is the best quarter ever. But if you go back to the March quarter of the year 2000, it was a kind of similar story, that semiconductors would kind of have infinite momentum because of the advent of the internet. And that was like peak dot-com bubble. But the belief at the time was that people would buy computers and there would be growth in computer markets forever and ever. And that just, of course, didn't happen. So there's a long way to run in the second half of 2026. And capital expenditure growth is where people watch for to try and decide if that continues.
I also just wonder, as sort of a sentiment check for this market and where we are, how big of a deal SK Hynix is going to be. They applied to file for a NASDAQ IPO, so like the application to do the application, but it is going to be one of these biggest ever listings, Ed, at a moment where a lot of listings are coming to market.
So there's like two parts of the story, though. SK needs money so that they can increase fab capacity for memory. SK dominates high bandwidth memory. I think they have almost 60% market share. But what's really interesting about what you just said, right now the SOX is trading at something like 25 or 26 times forward earnings. Historically, it's more like 15 to 19. So we're not like that far off kind of the norm. But one reason that SK is looking at listing US shares and having ADRs is that they traded a valuation discount to Micron, which is actually pretty reasonably priced. SK is basically saying to itself, like, if we give ourselves some exposure to the American investor, like, will we get the credit that we think we're due on the valuation and close that gap to peers Micron and Samsung, given that they are the main beneficiaries of this trade right now? But also, again, go back to capital expenditures. There's a big distinction between CapEx receivers and CapEx deployers. And, you know, it's just logical that the memory names would be big beneficiaries of continued CapEx growth.
Ed, elsewhere, just in this ecosystem, there was a story about Blackstone offloading the stake in 3 of their Northern Virginia data centers. I mean, this has been interesting because they've held this for less than 3 years, I believe. And just the returns, I think, are going to be interesting on these various deals. I wonder, you know, what you're looking for, especially because this is a region. I mean, it's a region I'm from, but there's been an intense political backlash to building data centers in Virginia.
So from Blackstone's perspective, this is very much monetizing the stake and getting returns rather than exiting that market altogether or exiting even the partnership that was put in place. Essentially, like, the deal structure is that Digital Realty pays them cash, like $1 billion, but also $2.3 billion of their in stock that Blackstone then goes and sells immediately. It is absolutely true that is data center land over there. And that, you know, as we get towards the midterms, that either the NIMBY movement or however you want to put it, there's a general PR problem that the data center industry has with Americans, because they feel the pain of it and not yet the benefit. And there's a long-term academic debate on how deflationary a big data center build-out could be if the bigger companies take the capital burden. But right now, this is just Blackstone playing a market that it identified quite early. And is getting a healthy return on those initial investments. Even if, I think you said 3 years, right? It's been a pretty short horizon for returns.
And it's something John Gray has talked about, basically saying that Blackstone is an AI company now. And if you want to buy AI companies, you should be buying Blackstone. But just to get back to the politics of it, Ed.
Yeah.
This idea of it bringing jobs, because I know that this is something the governor of Virginia himself, an ex-private capital guy at Carlyle, has talked about. I mean, what is the reality? Don't these things at the end of the day, sure, you maybe need thousands to build it, but then it's like some HVAC people tinkering around when all is said and done?
Yes. Yeah, you need an army, a workforce to build it, not to operate it. You know, and actually the design of the modern data center is all about like ultra efficiency, making it as easy for as few people as possible to swap in and out trays, etc. But what's really interesting is why we track the utility data on data centers that are contracted to be built, those that have actually been built, and those that are being cancelled, right? So like, you know, that's the economic story, that there's potential economic gain and jobs. But a lot of these projects, there have been no shovels in the ground at all. And so, like, that's one area that people are frustrated with, again, with the near-term energy inflation impact that those that are coming online are having in zip codes like the one Blackstone's operating in.
Hey, Ed, thank you very much for all of that. Really looking forward to Bloomberg Tech. Airs at 11 a.m. with host Ed Ludlow. Coming up, the hedge fund industry is booming, and Izzy Englander's Millennium is placing its bet on the next wave of talent. We'll have the latest moves coming up. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome back to Open Interest. Let's get a check on your equity market about 20 minutes into your trading day, and we move higher on this, the last day of the quarter. We're up by 0.75% for the NASDAQ. The S&P goes up about a fifth of a percent. The Russell 2000, despite the fact it's been outperforming this quarter and this month, it starts to decline. But again, it's the quarter end, so you get some rotations, you get some window dressing, all of that good stuff. The Max 7 in tech is having a pretty good day. And then the dollar versus the yen. The yen looking at one of the weakest levels in 4 decades. This slow bleed weaker. We've already got job voting. Will the BOJ do anything? Notably, Ueda will not be at Sintra at that big central banker panel that we're going to get tomorrow. tomorrow. Micron is in the red still, down 0.1%. Intel's and a lot of the other chip makers are doing well, though. That's up 2.5%. And Rocket Lab, that's also trading higher by 1%, making an acquisition yesterday, trying to be vertically integrated when it comes to the world of space. And speaking of which, SpaceX, slightly negative this morning. Let's talk about hedge funds. Money is pouring back into them, with more than a half of investors planning to increase their allocations. Just one sign of that momentum. Izzy Englander's Millennium backing a new quant startup founded by former Citadel researcher Paul Dew. Joining us now is Bloomberg's chief hedge fund correspondent, Nishan Kumar, who reported on this story. Nishan, we can talk about the overall trends in just a moment, but walk us through exactly what Millennium is betting on here.
So Millennium has been one of the most prolific backers of not only traders internally, but going out and scooping up talent and hedge funds externally as well, either exclusively or writing big checks to startups or the funds in existence. So, and this has been the trend. The biggest hedge funds don't just want to hire the smartest people anymore. They are increasingly acting like, I can say, venture capitalist, writing these billion-dollar checks to talented traders to build their own businesses outside the walls of Millenniums and many such firms right now.
What's the logic of doing that versus when you have a pod shop? Like, aren't they kind of effectively the same when they're running their own little pot of money, whether they're internally or externally?
They are, but not every talent is willing to come in-house if they already run their successful businesses. It all boils down to the war for talent that has reached a point where, hiring alone no longer works. Top traders are expensive. They are tied up in, years and months of non-competes. And the biggest hedge funds have more capital than they can possibly deploy with internal talent. So they are taking the next best option, backing talented managers on the outside instead.
The fact that they have so much money, Nishan, this is what I was talking about in the intro, that your story highlights this Bank of America data in allocators, and 51% of them saying that they want to increase their exposure to hedge funds, which is the biggest of the asset classes listed here. What is it about 2026 that hedge funds are back in vogue and are popular than so many of their other financial peers?
Well, you can blame it on frothy markets, if you call it frothy. Equity markets at peak, there are so many troubles across the world. So hedge funds, at least theoretically, they can be a good hiding place if you are anticipating some kind of troubles ahead. And that's what we have seen, like the biggest asset managers, biggest pension funds, sovereign wealth funds. They are tweaking their portfolio. So even 1% move in favor of hedge funds is a big amount. And this is coming at a time where, hedge funds are no longer taking money. So you call it Millennium, Citadel, D-Shaw, most of the large hedge funds, they are not actively raising capital. So where do they deploy this money? And that's the biggest challenge and problem. There is no capacity in the hedge fund space, at least with the bigger firms, to take in another $10 billion.
All things considered, probably a good problem to have. Nishan, thank you so much for joining. Excellent story. I highly recommend everyone go read it. That's Bloomberg's Nishan Kumar. Coming up in the next hour, Joanne Feeney of Advisors Capital. She shares her top picks as we close out the quarter. Plus, we're going to hear from the CEO of Chuck E. Cheese, Scott Drake. The E stands for entertainment, if you did not know. And then we head to Sintra for a conversation with ECB policymaker Ollie Ren. That's coming up in hour 2 of Open Interest.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
ABC News. I'm Sherry Preston. This hour, the Supreme Court is handing down the final rulings of its term. The biggest case, whether President Trump's executive order denying birthright citizenship to children born to undocumented immigrants or those in the country temporarily. Another big case involves trans women in sports, says ABC's Karen Waugh.
The justices are set to rule on whether states can ban transgender girls from playing on girls' sports teams. 15-year-old Becky Pepper Jackson sued to overturn West Virginia's ban.
I've been a girl forever, and playing on the guys' team is going backwards.
Competition fair, but Becky's family says she never went through male puberty and has no physical advantage.
A federal judge in Washington today is hearing arguments on the Trump administration's ban on transgender service members as well. Indirect but not face-to-face talks taking place in Doha over a permanent ceasefire in Iran. One big sticking point, the Strait of Hormuz, including ridding it of mines. ABC News contributor and former Defense Department official Mick Mulroy says of the Iranians,
they simply don't have the equipment nor the know-how. They could contribute because they're the ones that actually put the mines in the strait in the first place. Expertise in finding them, but it's clear they don't want to have any other involvement in the strait. They view this as their biggest benefit for this entire war. They could control a key waterway, 21% of the world's energy supply in perpetuity now.
Advice from emergency room doctor Trevor Lewis on surviving the blisteringly hot temperatures across much of the country this week.
If you're going to be out in the warm weather, hydrate first. Try to stay ahead. So drink maybe 12 to 16 ounces of fluid before you go out and maybe 6 ounces every 20, 30 minutes.
At least 160 million Americans are under some sort of heat advisory. You're listening to ABC News. Tom Kean Jr., the New Jersey Republican who's been away from Congress for almost 4 months, returning to the public eye. He is expected to reemerge in public in Congress after months of speculation about the unspecified medical condition he says has kept him away from Washington. Supermodel Bella Hadid saying on social media posts that she's been struggling with a flare-up of Lyme disease, which she's had since she was 16. ABC News medical contributor Dr. Alok Patel says as the weather gets warmer, tick bites are on the rise.
It's so important to pay attention to any possible symptoms of Lyme disease or any tick-borne illness, which at first may seem something subtle, like flu-like symptoms, muscle aches, a headache, or even extreme fatigue.
Philadelphia's famous Rocky Balboa statue on the steps of the public library that Rocky ran up in the movie is being replaced by the statue of a real boxer from Philly, Joe Frazier. His son Derek was there as the statue was unveiled.
His home is somewhere where I know people will actually be able to see him and be able to actually appreciate who Joe Frazier is.
And what of the guy who played Rocky Balboa? Philadelphia Mayor Sherelle Parker says he's cool with it.
When I shared with Sylvester Stallone that we were moving Joe Frazier here, Sylvester Stallone said that is what is supposed to happen.
The Rocky statue is being moved inside the Philadelphia Museum of Art. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Bloomberg Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube. We're streaming live on Bloomberg.com as well. Scarlett Fu out today on assignment. Not to worry. Alexis Christopher sitting in for Scarlett for the next 2 hours. Alexis, thanks for joining us.
I just popped over one
seat. Yes, from the surveillance seat to
exactly.
the Bloomberg intelligence seat there. So here we go. It is a day where we're getting more Supreme Court decisions. We're going to have June Grasso.
Busy day.
Exactly. June Grasso, host of Bloomberg Law. Leon Fresco, partner at Holland the Knight, joining us here to break down some of these Supreme Court decisions coming up. Miles Miller, Bloomberg News senior reporter, will continue our Supreme Court coverage as well. Aaron McLaughlin, senior economist at the Conference Board, to talk about the consumer confidence data, which came out. I'm just looking at it right now on the Bloomberg screen, coming in a little bit weaker than expected. Jonathan Panikoff, senior director at the Atlantic Council's Scowcroft Middle East Security Initiative, will get the latest on what's happening out there in Iran. Andrew Grant, Bloomberg NEF head of intelligent mobility, will talk to us about BNEF's long-term electric vehicle outlook. That's printed down. We'll see how they're seeing the EV market develop going forward. So we got a lot coming up over the next couple hours. Let's kick it off at John Tucker, NE Bloomberg Business Flash. John.
All right, guys, thanks a lot. And let's start off with data, because this just coming across the U.S. job openings. Little changed in May. This is the JOLTS job opening labor turnover survey. So it does suggest labor demand remains at this point pretty stable alongside the recent pickup in payroll growth. And also from the Conference Board, consumer confidence up in June. So you had falling gas prices as the U.S. and Iran agreed to peace talks, but it came in less than expectations. Still up, though. Major averages at this point, they are up. Semiconductors among the best performers. And I'll say it again, the Philadelphia Semiconductor Stock Exchange, the Stock Exchange Index, that is wrapping up the best quarter ever. And this morning, the stock's up close to 3%. The best performing stock in the S&P 500, Air Products and Chemicals, up over 9%. They're scrapping plans to develop a multi-billion-dollar project in Louisiana that would have produced hydrogen. Meantime, John Stolfus said Oppenheimer says the backdrop for stocks pretty positive.
We'll have to see the way the jobs number looks at the end of the week, or well, on Thursday, a little bit early this week. But we have to say things are still remarkably good, and I think the operative word remains resilient.
Right now, the S&P 500, 23 points higher, 74.64. The Dow at an intraday record. Anything in the green today is a record, up 18 points. 52,193 right now. And the NASDAQ Composite Index up 190 points. That is a rise of 0.75%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alexis and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alexis Christopher sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. It is Supreme Court Day. We do have one decision. Red headline crossing the Bloomberg terminal. Supreme Court lets states ban trans athletes from female teams. So that's just one of 4 we expect in terms of decisions from the Supreme Court, and we'll bring that to you as they come. As John was reporting, kind of got a little bit of a lift to the market here. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
Well, we have to start off with Concentrix. That's ticker. Bloomberg Intelligence may have put it best. They said that this print reinforced concerns that AI is shrinking demand for Concentrix core business faster than the higher value AI services that are expanding.
This is a call center company, right?
Yes.
Where they have, I guess, human beings pick up the phone to deal with customer service calls. And I can see that might be come under threat from AI. You brought along a winner, AeroVironment. Kind of rolls off the tongue, doesn't it? What's going on there?
Yes, that's ticker AVAV. Also some earnings news here. It is jumping about 23% most intraday in about a year. And that's after the defense company reported fourth quarter results that topped expectations. Citizens writing that the largely positive results really helped answer questions about those key demand signals for the company. And the print is also moving some of its peers higher as well. Unusual Machines and Kratos Defense are also up.
One more, AbbVax.
Yes, AbbVax, that's ticker ABVX, currently surging about 38% most intraday, also in more than a year. That's after the biotech's data update for its bowel disease pill helped to dispel some of investors' safety concerns. Just earlier this month, this stock plunged about 40% after some patients in the trial got cancer while taking the pill. This data update shows that those cancer cases seen in the study were in line with ranges expected in patients that have ulcerative colitis. And Piper Sandler says that this data update should put to rest some of those concerns and also make it potentially a best-in-class drug.
All right, Avalon Purnell, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. It is Supreme Court Day, the last day, I believe, for Supreme Court decisions this term. We have one of 4 has been released. Supreme Court lets states ban trans athletes from female teams. Let's break it down. June Grasso, host of Bloomberg Law. June, what do you make of this? Was this an expected decision from the Supreme Court?
Yes, very much so expected. So, just last year, the Supreme Court allowed Tennessee to ban the procedures that allow trans people to transition. So that was allowed. And, the LGBTQ community hasn't won a case at the Supreme Court, and there have been many since 2020 in the Bostock case, which was a case where Justice Neil Gorsuch was the critical vote there. So this was expected, and the question is just how broad or narrow it is. Even during the oral arguments, the liberal justices, instead of doing a straight-on argument, were basically trying to argue to limit what was going on here. And in point of fact, this case, one of the plaintiffs in this case no longer plays sports and is just off the map as far as this is concerned. But the justices would not throw out the case anyway. Would not throw the case out, and so we have these 2 states that have this law, similar to 27 other states, about 27 other states. And the question is also whether this goes far enough to affect the states that have laws that allow transgender women and girls to play in sports. And the Trump administration is fighting that as well, because they're fighting in lower courts at this point. So it hasn't gotten up to the Supreme Court. So it all depends on the way you analyze it, as you probably learned all these days of Supreme Court opinions, and whether they analyze it based on, strict scrutiny or intermediate scrutiny. And so, it's just very much expected. I said I would have fallen off my chair if this came out any other way.
I think a lot of folks are with you on that, June. But so we're talking about West Virginia and Idaho here, right? Those are the two states.
Yeah, but the states have. I mean, it's a law that's similar in 27 other states, so it's not as if their laws is any different from
And I think what we're waiting on here, for another case would be birthright citizenship. What's the background of that case, and how do you think how does the market think the court's going to?
The market, I don't know. I can tell you how.
Okay.
I can tell you how it's going to. It should come out.
Okay.
But so that started because President Trump, I don't know if it was his first day in office or early on, issued an executive order that said that birthright citizenship is not allowed anymore, basically. Okay. And birthright citizenship has been around for more than 100 years. Where there was a Supreme Court case 100 years ago, where a Chinese national. So he was born outside of the United States, but he was a naturalized citizen, and he left the country to go to China. When he came back in, they tried to stop him from coming back in. In fact, his grandson was at the oral arguments. It was kind of interesting. So that's a very, that case has been established for a long time. And so what most people expect is that the Supreme Court is going to affirm birthright citizenship. The Trump administration wants to make it that you can only get citizenship if you're a green card holder or a U.S. citizen. So that would eliminate what we have now, which is anyone who's born on U.S. soil is a U.S. citizen. So that would eliminate a lot of people. I think it's about 250,000 people maybe a year, babies born that way. So it's considered one of the biggest cases of the term. But again, it's a case where if they didn't affirm birthright citizenship, people would be shocked, sort of like the tariffs case. If they had, allowed those tariffs to go through, people would have been shocked. And I think that the same thing holds for birthright citizenship. Everyone is expecting that executive order is going to be struck down.
Yeah, I mean, if it were to be in favor of the Trump administration, it would, in essence, redefine what it means to be an American.
Yes, that's right. That's what's on the line here. And during the oral arguments, it appeared that the justices were going to rule against the Trump administration. There are two justices that I don't know whether they ever have ruled against the Trump administration. Maybe in the tariffs case, that's Justice Alito and Justice Thomas. So you can expect that even in this kind of case, there might be dissenting opinions.
And you know what's interesting? A lot of the justices themselves, if you look back at their family histories, they're profoundly shaped by the idea of birthright citizenship,
including Justice Alito.
Right.
So, but Justice Sotomayor is the person who really has sort of been I don't want to say emotional, but very, very concerned about these attempts by the Trump administration to hold back immigration rights. And there hasn't been a case this term where immigrants have won their cases. They've all repeatedly lost, both in the regular docket and on the emergency docket. So you had any kind of case you can think of. And what the justices did is they allowed the Trump administration, the whole idea is that the executive branch is the one that should be dealing with immigration issues and things like that because it involves international affairs. So they really let the Trump administration do whatever they want, from TPS last week, where they're allowed to, take away temporary protected status from Haitians and Syrians, and that probably goes for the rest of the more than 1 million people who are here on that kind of status. So it's been a bad term for immigrants' rights.
How has this court kind of performed this term, and has it broken primarily along ideological political divides, or has it been more independent than maybe we thought? Or
I just got a note that the Wong Kim Ark case, he was actually born in the USA, so I correct myself there. Thanks, Eric Larson. It's the facts of these, after you've done so many in a space of time, the facts sort of get murky. So I'm sorry about your question was how they've performed.
Yeah, just kind of.
So, what is striking is that there have been so many 6-3 decisions in this term. Last week they surpassed the total number of 6-3 decisions in all of the last term. And there are so many repeatedly. And I think what the chief has done is, and that shows a divide, and not only a liberal conservative divide, but now since all the conservative justices are Republican appointees and all the liberal justices are Democratic appointees, it shows a political divide, which the justices tell you is not there, but is so obvious in their decisions and in the oral arguments. So, I mean, I think that this term is proving to be a term that shows the political divide on the court, despite the fact that you have the justices repeatedly saying, at least the conservative justices, there is no political, we're not politicians in robes.
Right. All right, we want to bring in to join this discussion Leon Fresco. He's a partner at Holland and Knight. Leon, as we await this birthright citizenship case, what are the key issues from your perspective, and how do you think the Supreme Court should rule, will rule? How do you think about that?
Well, I think the most interesting issue is actually going to be not whether the concept of birthright citizenship is upheld, but the manner in which it's upheld. I think we'll say that the Trump administration's executive order is unlawful, but the question will be why. And if they say it's because of the Constitution, then that will mean that no future Congress or anything, or, Congress plus the president could change any of the laws related to citizenship. But if they say it's because of the 1952 codification using the same language that the Constitution uses, with the understanding at that time that people who were born here were citizens, then that would leave room for a future Congress. Now, albeit Congress doesn't basically pass laws anymore, but nevertheless, a future Congress could pass a law that would then change how citizenship is conferred to people born in the United States. And so that will be interesting to see. Will they foreclose this issue forever as a matter of the Constitution, or will they say that Congress has a role to play in deciding who of the people that are born here gets to actually have birthright citizenship?
Yeah, that's a great point to highlight, Leon. And June, I just want to get your thoughts on that. And also, regardless of the outcome of this decision today, could it still be legally complicated and have far-reaching implications, even if they do uphold birthright citizenship?
If they do uphold birthright citizenship? Well, I think if they do uphold birthright citizenship, there'll be less consequences than if they don't uphold birthright citizenship. But I'll just ask Leon. Leon, how likely do you think it is that they're going to uphold birthright citizenship? I think we've discussed this so many times.
Yes, I think it's very likely that they will strike the executive order. But again, how they do it will be the question. But then also, I do think there will be some ramifications. The Trump administration has already tried to limit in many different forms legal immigration. They may just try because, they need to sort of feed the raw meat desire to say, well, you know what? If you're a child of a U.S. citizen, and you are born here, if you're a child who's born here and you got birthright citizenship only because you were born here, we're not going to let you petition for any family members to come in the country. And that might be the next area of litigation. I've heard that that's something they have cooked up and in store ready if they lose this. So I would see that as a potential
Leon has
situation
the inside
here.
track on what's happening. He was the former head of the Office of Civil Immigration Litigation in the Obama administration, and I find that Leon knows what's going on before it actually goes on. Leon, what I'd like you to do is explain, because I was trying to explain it and you do it much better, the fact that why you think that this term, the immigrants' rights cases, immigrants have lost every single time, and why you think that's happening.
I think there's two reasons. One, I think that the court, at least the 6 members of the court, were factually influenced or affected by what they thought were excesses during the Biden administration. And they believed that the Trump administration needed to have some leeway to be able to deal with what they thought were excesses. But I think ideologically and thematically, there was this history that began in the late 1800s, early 1900s, where the courts used to say, hey, on immigration, leave us out of it. This is an issue that has too many cross-cutting currents with political questions, with foreign policy questions, the kinds of things we never review. So why do you want us reviewing it? Then in the 50s, between the 50s and the early teens, that was sort of an escalation of judicial review. But it seems like now, as the court has gotten more conservative, they're returning back to this historical role of saying, look, leave us out of it. If you don't like something going on in immigration, resort to the political branches. But we're not going to take a role in saying that the president can or can't do things with regard to immigration. And that's going to have large effects in the future, both ways, for both administrations. So we'll see what happens in a future Democratic administration. But this leeway that they're giving President Trump is going to be very hard to dial back regardless of who the president is.
So, Leon, what is the state of legal and illegal immigration into this country? I don't see any TV reporting of people crossing the border anymore. What is the status of people coming up from South America? Is it effectively stopped?
Well, so at the moment, there's a executive order which says if you cross the border illegally and try to apply for asylum, you will be banned from doing so, because it's two orders that work in tandem. One is an order saying anybody who tries to come in illegally is banned, which is kind of a weird order. But then there's a second order which says we have the discretion to decide who can get asylum. And so people who've been banned by this executive order can't get asylum. That is under review. The D.C. Circuit en banc is finally going to review that. But I think that'll be in the Supreme Court next term to decide whether you actually can close the entire country down to asylum. But that has been closed for the last 2 years. For the end of the Biden administration, actually, Biden had started this closing process, and the Trump administration really intensified it. And so that's what's happened. But if the Supreme Court says, no, the statutes say what they say, you can't just ban the whole world from ever applying for asylum in America, then we're going to have this reopening again. But at the moment, it's closed because of this. And then in concert with legal immigration, you have bans from 39 countries abroad where they can't get a visa of any kind. We've seen this for the World Cup. We've seen family members of players and people who work for teams not being able to get in. So you've seen this manifest in fans not being able to get in. And then you also have, even for people who are already here, for applications for renewal of different statuses, they are currently basically being put into a dustbin where they're not being adjudicated. And there's a lot of lawsuits about that. And those will be very interesting, as they might make their way up to the Supreme Court next term as well, whether the administration can just, for people who are already here, take their application and throw it into a dustbin.
All right, Leon, thank you so much. Leon Fresco from Holland and Knight, who's joining us, talking to us about, we are still awaiting the birthright citizenship curve, but we thank Leon for a couple of minutes of his time here. We did get another Supreme Court decision. The Supreme Court voids political party spending caps. This looks like a win for the Republican Party.
Yes, again, no surprise here.
Okay.
So the conservative justices on this court have never seen a limit on campaign finance of any kind that they liked.
Okay.
So ever since Citizens United, which is the case that started it all, they've been against these kind of limits. And they always say, as they do here, that it's limits on political parties' coordinated expenditures violate the First Amendment. So this is another one that's expected, again, 6-3 down ideological lines. And these cases, it's so funny because you'll say, well, I can't tell from and most legal experts, you can't really tell from the oral arguments what's going to happen. But you know what? 8 times out of 10, you can't tell what's going to happen from the oral arguments. And this is one of those cases where it was just obvious what was going to happen. And the fact that they even took it made it obvious that they were going to eliminate any limits. So
June, this takes effect immediately, meaning that this would impact the midterm elections?
Yeah, it would impact the midterm elections. It's about political parties and being able to coordinate their expenditures with the actual candidates. So it's a little bit in the weeds, but I suspect that it would just happen immediately. Some of these things, they go back to the lower court, and I'm not sure if this would be sent back to the lower court. It might be. I don't see. I haven't read it through or read it at all. So we'll have to see what happens. But this is just so expected, and every time they take a campaign finance case, I want to say, don't even bother doing the oral arguments. Why bother? We know which way you're coming out on this.
I'll tell you, the winners here, if you're looking for it in the stock market, TV station owners, because that just means more and more TV advertising. And we've seen on political years just a surge in advertising.
And they say that this term, the Republicans may benefit from this, but next term it might be different. So it just depends on, so it's not necessarily a Republican versus Democratic win, but it's just that this particular term, I think the Republicans have more money in those places that count.
All right, Jude, thank you so much. We're going to ask you to just, you're free to go now, but when we get this report,
we may ask you back. Shall return.
We may ask you back. June Grasso, legal analyst for Bloomberg. We appreciate that. All right, let's get a little bit of a reset here in the marketplace. We go to John Tucker for Bloomberg Business Flash.
All right, at the end of the best quarter in 6 years, stocks, they are higher. The Dow at record again. Chip makers extending their surge. The semiconductor index up close to 3%. Are call centers under threat from AI? Well, that seems to be the thinking. Concentrix cutting its revenue outlook, warning that some of its customers cutting back spending. So that's exacerbating worries among analysts that the industry faces a severe threat from new AI tools. Solar technology stocks, they're climbing on reports the FCC is drafting a ban on foreign inverters. And yet another reason not to cut interest rates, a third straight JOLTS report exceeding estimates. You have the two-year yield, which is more policy reactive right now, up 2 basis points, 4.12. The 10's up 2 at 4.39. The Dow up 85 points, 52,269. That's an intraday record. The S&P 500 31 points higher, 74.72 on the index, and the Nasdaq 100 356 points higher. This is a rise of 1.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alexis and Paul.
And of course, we're going to get that jobs report, the monthly jobs report on Thursday, because the markets are closed Friday, in observance of the 4th of July holiday.
Absolutely, and we'll be ready for it on Thursday here. So we got Alexis Christophorus. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. We got some economic data here today. We're still on Supreme Court watch because we're still waiting for a couple more decisions here. So when that happens, we will bring it to you, and we'll have some good voices to help us figure out what's going on, led by June Grasso, host of Bloomberg Law. Let's go to this economic data. The Conference Board came out. Confidence, 91.2 was the reading. The consensus was 94.4. So that's a little bit disappointment. But it's better than last month, which was revised down to 90.6 here. So maybe some lower gas help there. Erin McLaughlin, she's a senior economist at the Conference Board. Erin, what do you make of some of the data you guys put out today?
Hi, Paul. Well, it is ticked up a little bit. Consumer confidence up 0.6%. And we're really thinking that the consumer was feeling some optimism because gas prices have been trending down for 6 weeks. Our consumer confidence survey was taken June 1st through 23rd. So they felt some optimism with the Iran war, perhaps getting a deal coming to the end. So we think that that's really what helped the survey.
Yeah, gas prices down 12% in just the past month now, at around $3.85, I believe, a gallon for a gallon of unleaded.
Very good.
So after spending quite a bit of time above $4 a gallon. Erin, tell us about how folks are feeling when it comes to 6 months from now, because I know you also look at expectations for what's happening in the not too distant future. Are people feeling more optimistic about the future?
They are. So our expectations index went up 3%. And that is looking, asking consumers to look forward 6% from, 6 months from now. And, I think that this speaks to the consumer being very, very resilient. And they don't imagine that things are going to get worse, perhaps in 6 months. And so we don't anticipate any big changes in that. And overall, you know, the what we saw in the consumer confidence index is typical to what it's been the last year or so overall.
So when you think about consumer confidence, what are the key drivers there, Aaron, for your model as it relates to maybe employment, inflation outlook, things like that?
Right. So with the present situation, they are sort of measuring business and labor market conditions. And same thing for themselves when they think about their own employment. And I will say that's really the only sort of negative that's coming up, is that consumers are thinking that the labor market, that maybe there aren't as many jobs that are going to be open in the future. It might be a little bit more difficult to get a job. So that is sort of the negative that's sort of coming through.
Because, yeah, I mean, Aaron, you were just talking about your measure of expectations actually rising 3%. I think that's a pretty big jump. But the indicator of present conditions actually fell. And is it concern over jobs that sort of led that drop?
Yes, it is. So consumers felt, you know, that they see that business conditions and labor market conditions are a little bit weaker. And that could be them speaking to higher prices and also labor market conditions. It's also interesting to see that consumers do expect higher interest rates over the next 12 months. And that is something that we ask. And so that's 61.5% expect in 12 months that interest rates could be higher. So I think the consumers know that inflation is persistent. They hear that, they understand it, and they see it themselves at the grocery store, at the gas pump, and with their own utilities.
Aaron, thank you so much. We appreciate it. Aaron McLaughlin, Senior Economist at the Conference Board. Red headline crossing the Bloomberg terminal. Here you go. Supreme Court strikes down Trump's birthright citizenship curbs. And I think that's kind of in line with expectations.
As expected. We've been talking about it now for weeks and months. Yeah, June Grasso's back with us. June, what, I mean, I know as you're trying to sort of read these headlines as they're coming through yourself, you said it was expected. What else can you glean from this?
So, I mean, the thing is that this has been, there is a case exactly on point, which I was talking about before, which is the one Ark case, where person was born in the United States to Chinese parents, and he left the country, and they tried to stop him from coming back in. So since that time, the question has been considered settled. And this is called, what the issue is in this case is, are you subject to the jurisdiction of the United States if you were born to someone, let's say, with a green card or someone who is here illegally? And just, it's been settled for so long. And that's why during the oral arguments, I mean, Justice Kagan brought up the fact that the Trump side was using things like a speech at Lincoln's funeral to, you know, to try to substantiate their argument. I mean, before this, you really hadn't heard that much about birthright citizenship being, you know, unconstitutional. So it would have taken the Supreme Court a lot to come here and say, no, we're overturning that 100-year-old law, which they've overturned a 90-year-old decision yesterday. So, I mean, they could do it, and they have done things like that. So, but still, it would have taken a lot. And also, just as Alexa said before, it goes to the concept of being an American citizen, and what does that mean? And also, how would it, some of the justices said, how would this work in practicality? Do you give birth to a baby, you bring your, you know, birth certificate or your passport with you, and then, I mean, how would it work logically?
Would it have been retroactive or to children born after the decision? I guess we don't know.
They say that it wouldn't have been retroactive, but the people who were fighting it said, you know, how can you say that? It might have been. I mean, right. The law, think about what's been happening for all these years with the Dreamers who were, I mean, they're still, people agree that they should get citizenship, but still there's no path for them to get citizenship. And they're all
been so
living
long.
In this. Yeah, really, you would think. So imagine what would happen if all of a sudden you said, okay, no baby born here is an American citizen. I mean, it would really cause an upheaval. I've got to say, though, that Trump today, I saw that he, on his Truth Social, said there are other ways to do this, which is, I mean, and they've tried. By the way, Lindsey Graham, years ago, you know, offered a birthright citizenship elimination bill. And it has happened, but, you know, to get support in the Congress, well, to get support for anything in the Congress right now, but especially that, would be very unpopular because most Americans, according to polls, believe in this. Well, it's the way it's the way we've always understood it. So
I want to welcome back Leon Fresco. He's an immigration attorney at Holland and Knight. So, Leon, we did get the headline, the news that the Supreme Court strikes down Trump's birthright citizenship curbs. Do we know whether it strikes it down at the case level, the case law level, or does it go towards back to the Constitution saying, hey, this is in the Constitution?
I am shocked because there are justices who are willing to say it's actually in the Constitution, and that's the end of the story there, that people who are born, even if their parents are unlawfully here, are quote unquote subject to the jurisdiction of the United States. And that means that now, unless some future Supreme Court
to Truth Social, and he said Trump's efforts to reverse birthright citizenship may succeed with or without the Supreme Court. I mean, what could he do at this point? I would think his hands are tied. So what are the avenues he might take?
I think what they will do is they will try to limit the kinds of things that people have access to when they are the children who are born here in the United States of undocumented people. So, for instance, there's a law that says that if you are born here when you turn 21, you can petition for your parents to get green cards. I think they will try to say, no, we're not going to process those applications, or we will refuse them. And I think they will try to do things like that to try to gum up the works, basically say, we're going to make it as hard as possible to reward this situation of someone being born here and being given all of the categories of citizenship. But at the end, citizenship is citizenship. And I think that all of those will just have collateral challenges. But I do think they will try to say, look, we're doing other things to shrink the package of benefit that accompanies being someone who's born to it.
Do you think they might step on health care? Because that's a given right as a citizen. If you're a newborn here to immigrants and now you are a U.S. citizen, I'd imagine you'd still be able to get your health care for your child.
Every one of those things that is accompanied to a citizen be a right ultimately, but does that mean that the Trump administration won't try to find ways to say, hey, if your parents are this, you can't get this, and try to, but like I say, diminish the package of what someone who's born here to undocumented parents can get? I think they will try. I just don't think any of those efforts will ultimately be successful after litigation.
So, Leon, what do you think about the split here? It's 6-3, but there are so many concurrences and dissenting in part and concurring in part. Are you surprised that there were 3 justices? That would be Alito is no surprise, Thomas is no surprise, and Gorsuch, I don't know. Those are the 3 most, I would say, conservative members of the court. Is it surprised that even on this, they would dissent?
I am a little bit surprised because at the end of the day, I think if you were an honest sort of, and I call the honest judge, the AI judge who you say, okay, if I was a textualist who looked at history and thought that those were the 2 most important things, which is what usually the conservative justices say there are, how do I write this opinion? You would be essentially almost ethically sanctioned for saying that a president could write an executive order that overcame the Constitution. It wouldn't make any sense. So I do think you have to look at this again as people trying to say there are logical realities 2026 that may not have existed when the Constitution, or actually whatever, when the 14th Amendment was drafted. And then in 1952, which is that now we have all this birth tourism, and we have other downstream effects from people being born here, undocumented foreign nationals. But at the end, I mean, the Constitution says what it says. You either are a textualist or you are. And I mean, if you're going to say that people who are undocumented are not subject to the jurisdiction of the United States, then the first thing I would do as a criminal defense lawyer is try to free every undocumented person from prison and say, hey, they all have diplomatic immunity. What are you doing? Get my client out of here. So it just doesn't make any sense.
And, well, this was a case that President Trump was really behind. In fact, he attended part of the oral arguments because he walked out after the
and wasn't that the first time ever a president had done something like that?
Yes, the first time ever. And, everyone, I'm sure I talked to Leon about this, was like, don't go, Mr. President, don't go. You don't want to go there and try to show that your presence is going to influence them. That's really kind of insulting to the justices. But I remember during the oral arguments, as that the Chief Justice, the Solicitor General, was making his arguments, and he said, "It's a new world, Your Honors." And the Chief Justice said, "It may be a new world, but it's the same old Constitution."
Exactly.
So, imagine if on the 250th anniversary of the country, they came down with an opinion that said, "No, we're changing what it means to be an American." It would have been scandalous. And I'll just note that the Chief Justice wrote this opinion, and you will notice that in the major opinions, the Chief Justice saves it for himself, because for those who don't know, what happens in these things is that if the Chief Justice is in the majority, he gets to decide who will write the opinion. And whoever is in the minority, if let's say a liberal justice is the one in the majority, they will get to decide who how the decision is written. So that's why a lot of the times you see the major dissents by Justice Sotomayor, who's the senior, most liberal justice, and then the Chief Justice gets to decide when he's in the majority, which, he is in all these major cases so far that we've seen in the last couple of days. So that's why yesterday he announced both decisions. So that's just an interesting point about he gets to sort of shape what the court is saying.
Sure. Leon, as an immigration attorney, how does this change kind of your life, your practice going forward of all? What does it just take it off that table? Now I can focus on other aspects?
Well, I think it doesn't obviously change the status quo, because the Trump executive order was enjoined, but what it does do is it prevents a huge apocalypse from happening, which is that there were possibilities that there were going to be all of these kids in quasi statuses. Because the problem is, the way they were going to define this was going to be that if you had to have one parent who was either a citizen or a green card holder. And so you could say, well, an undocumented person. But there's a lot of people here on work visas and investor visas, where they're here, they've invested in a company, they're going to spend their whole life here. What are those kids? And all of those kids would have been potentially nationless. And that would have been a huge problem. And so that luckily has been averted.
So, Leon, let me ask you this, because we've seen recently that there has been some tension, let's say, among the justices. We've had justices, giving speeches or talking in Q&A sessions and criticizing not naming them, criticizing them. We had Justice Sotomayor seems to be involved in quite a few of these. She said something that she had to apologize to, or decided to apologize to, Justice Kavanaugh about those what are called immigration stops. They were calling them Kavanaugh stops. And then we had last week Justice Sotomayor reading a dissent from the bench, and it was a very impassioned dissent on an immigration case. And apparently Justice Alito was surprised that she was reading a dissent from the bench. And then a few days ago, the Supreme Court said that Justice Alito had been notified. There was just a misunderstanding. But one wonders what's happening on the court.
I definitely think, especially on these immigration issues, which is where that happened on the asylum metering case, which was, could the government restrict people applying for asylum through the ports of entry from doing that? Justice Sotomayor was talking about the possibility of people dying and actually sort of linking Justice Alito's jurisprudence to unnecessary deaths along the border. I just think all of these cases, there's a reason birthright citizenship was one of the last cases, this is personal to people. This isn't just whether a tariff is going to be collected or whether some part of the bankruptcy code should be interpreted one way or the other, which are all important cases, mind you. But this is about people and the lives of people. And I just think people are really taking these things personally.
Yep. Leon, thank you so much for joining us. We really appreciate getting your insight. Leon Fresco is an immigration attorney with Holland and Knight, Washington, D.C. office. Let's go down to D.C. Tyler Kendall joins us, Bloomberg News Washington correspondent here. Big day from the Supreme Court. Tyler, what's the feeling in D.C. and from this White House, particularly on the birthright case?
Well, Paul, as you well know, the Supreme Court really rejected a central plank of President Trump's immigration agenda, but it wasn't necessarily surprising. In fact, President Trump going into today basically said that he didn't think that the justices were going to come down on his side. That doesn't mean, though, that he didn't get some other immigration wins from this court earlier in the term, but this was really a focal point considering that President Trump had signed this executive order seeking to restrict automatic birthright citizenship on his very first day in office. He is starting to put out some posts on Truth Social. We haven't heard on this specific case yet, but I would I think, take an educated guess that they're probably not too happy with how this ultimately shook out, because you had a pretty staunch opinion come out here written by the Chief Justice John Roberts, who also sided with the liberals in the other cases that came down against the Trump administration earlier this week that centered on the Trump administration's argument that these 5 words in the Citizenship Clause of the 14th Amendment, that if you are born in the U.S. and, quote, subject to the jurisdiction thereof, then you are a citizen. You're given birthright citizenship. And we saw John Roberts really highlight this. You'll recall back when this case was argued in April, he said that the administration's legal argument was, quote, quirky, and it seems like they upheld that today.
Tyler, thanks so much. We know you're busy down there in D.C. Tyler Kendall, she's Washington correspondent for Bloomberg News down in Washington, D.C. Let's get a little bit of a reset here out for these markets. We can do that with the Bloomberg Business Flash and John Tucker.
Yeah, we are rallying. Stocks pushing higher. The Dow at another record right now. Chip makers are extending their surge. The Philadelphia Stock Exchange Semiconductor Index, the SOX, right now 3% higher. Technology best performing major industry group in the S&P 500. Then the economic stuff. The JOLTS report today suggesting a stable labor market, and that has yields higher on the idea that there isn't much reason to cut interest rates. Of course, the big economic report of the week comes Thursday. Non-farms payroll. We'll also get various measures of prices paid. And meantime, economist David Rosenberg of Rosenberg Research says inflation isn't that much of a problem.
I'm looking at this as a real fundamental disinflationary thrust, because in decades past, with all these multiple shocks, inflation would be closer to 5-6%, and here we're fretting with 3% plus.
The Dow up 104 points, 52,290. Yeah, an intraday record. S&P 500, 29 points higher, 7470 on the index. The Nasdaq Composite Index up 225 points. That is a rise of 0.9%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alexis and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alexis Christophers, she's sitting in for Scarlet Fu today. Scar will be back tomorrow. Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube today. Supreme Court Day. Let's summarize what we have here. Number one, the Supreme Court strikes down Trump's birthright citizenship ban, or curbs. That is the big one from this morning. Number two, Supreme Court voids political party spending caps in GOP win. And third, Supreme Court lets states ban trans athletes from female teams. We're joined by June Grasso. She's a legal analyst for Bloomberg here. How do you think the court performed here? I mean, is it kind of in line with expectations by and large, right?
Today was in line with expectations. And I think what happens is the Chief Justice, we've had years past where these major decisions that were really controversial came down on the last day. In fact, several of the years past. Well, this year, I think the Chief Justice has sort of decided where the opinions are going to go and set them out differently, so we don't have a huge surprise and a huge controversial decision on the last day and the justices go on vacation with everyone saying, oh, that controversial decision, blah, blah, blah. So I think that he sort of set it up differently. But one thing, so now the decisions are all in. So now the next thing is, the question is, will either of the senior conservative justices retire, either Clarence Thomas or Justice Alito? And there's been word that, Justice Alito might retire. Often they announce it from the bench. Now, I understand that he wasn't even he didn't read any opinion or anything, any dissent from the bench today, so he wasn't there. But they have announced it afterwards.
Alito was not there. Okay.
I'm saying that I think that's the case. I'm trying to read on a blog to see if he was there, but I think certainly he didn't have anything to read today. So, but Kennedy did announce it after the decisions were out. So we still have to wait a little bit, but perhaps.
So that would mean that President Trump would be able to continue to shape the Supreme Court.
Well, I would say that it's too soon to, from the midterms. However, remember Amy Coney Barrett, they squeezed in her nomination in record time. Mitch McConnell, after saying that, they couldn't put in Merrick Garland's because it was too close and they'd have to wait until he squeezed hers in so that Trump has 3 nominees on the court, which is a lot. And you see what it's done. It's really changed these decisions from having a conservative majority to conservative supermajority. And no wonder Justice Sotomayor is in distress, it seems, because, it's these controversial cases are, a lot of them, most of them are 6-2, 6-3, and it's a surprise when they're not. So look, even today you had some dissents on this, and that's
right.
Incredible.
So what's next for the Supreme Court?
That's what I want to know. When do we know what the other cases are going to be taking?
There are some cases that are, and I haven't been concentrating on this
Yes.
yet. I have to be concentrating on that. I have to, figure out all these facts in these cases. No, so that's something that I'll probably do on the Bloomberg Law Show maybe next week. So they have already decided some cases that are coming up. I mean, there's a case involving Catholic education. I mean, so they've already decided some cases coming up, and they decide, as the cases come up. But we'll know more. I mean, over the summer, we'll have a better handle on what the cases are. And they keep on deciding cases as they go along. And this summer, though they have complained about this, actually. I don't think any of us has 3 months off for the vacation. But they have complained about the fact that even during their summer vacations, you have the emergency docket, which has been so hot with the Trump administration, making, everything's an emergency. So they may be working over the summer.
Can't they just say no? Can't they just
say no? I don't know. They can say no. Well, to some things, I think they feel they can't say no. But, of course they can say no. I mean, a lot of the cases that they take, they used to take many, many more cases and decide many more cases than they do now. So, they can, but on certain things, you'll hear, experts say, well, they really have to do this. And they only need 4 votes to decide. So, to take a case on the regular docket. So, we'll see what happens and how it shapes up. But it always ends up that there are some controversial cases on the court's calendar.
Right.
So
June's got lots of homework. We're going to let you get to it.
I'll have to talk to Greg Storin.
All right, very good. June, thank you so much for joining us. We really appreciate you being in studio and helping us walk through all these cases.
Retires.
Oh, boy.
Oh, boy, really?
This is new.
Well, maybe you can't leave.
Yeah, we'll see.
NPR is reporting that?
Yeah.
Okay.
Okay. All right,
Well, we're gonna look into that for folks here, and before we. Yep, NPR is reporting Justice Alito retires from the Supreme Court, which would have far-reaching implications for the makeup of this court, because this would be happening during President Trump's administration.
Yeah, he would get 4, and the people that have been the going. Dialogue has been, some of the people that they're thinking of appointing are very, very, very conservative.
Are there actual names out there that we know?
Yeah, I mean, there are. I mean, James Ho, I know, is one that's been mentioned on the Fifth Circuit. There are a couple of justices on the Fifth Circuit, which is the most conservative circuit in the country, that have been mentioned as possible nominees. The question is whether they'll be able to push this through. So that's, by the way, that still hasn't been confirmed, that NPR.
Was this, if he were to announce his retirement, would that be perceived? Was that surprise or no?
Well, it's, as I said, it's been rumored, but still surprising, because he's, not that old for a Supreme Court justice. Clarence Thomas has been there much longer than he has, and he's come to the point in his career where finally, after being, in dissent so much, he's on the majority side and able to,
He's 76. So we say that's not too old for a Supreme Court justice, right? Yeah.
No.
Look at Ruth Bader Ginsburg was in there forever and a day.
Well, Ruth Bader Ginsburg stayed a little too long in most people's, but yeah, they I mean, all right. A lot of the justices don't retire. In fact, they just, they
because they get to say when they want to retire.
Yes,
is that how it goes?
Exactly.
Okay.
There's nothing. There's no limits, and that's one of the things that some advocates for Supreme Court reform have been saying, is that there should be term limits on the justices. But no,
wasn't the Biden administration fighting for that? Some administration wanted that.
They did what's called, like, they had a conference set up or a commission set up to study it, and the commissions always come out and say, yes, that's a good idea if they're a commission appointed by a liberal.
Sure.
Yeah, and so. I mean, that's true of all federal judges. There is no there's a time when you can take senior status, but you can stay on the bench for, I mean, we have Reagan appointees that are still on the bench, and so
it's a job for life if you want it.
All right, so is the timing here, how should we think about the timing? Is it perhaps the Trump administration saying, hey, listen, we've got both houses of Congress here. If we're ever going to replace anybody, it's got to be before the midterms?
I just want to say that according to SCOTUS blog, it's a mistake, and they're taking it down.
NPR, okay, very good.
You know what happens? I mean,
Wow.
you know that I mean, I don't know if people know this, but you'll write stories in advance, like an outline of a story, and then later on you'll fill it in, or especially like this has happened with obituaries before the regular news, where all of a sudden something comes out and someone's pressed the wrong button, and an obituary that was written and is waiting.
All right.
It's a fat finger moment here on Alito, Justice Alito.
All right, so NPR reports are being questioned now, so we'll hold off on that. So, but at some point, this will be a story, maybe today, maybe at some point in the future, for a couple of these Supreme Court justices.
We'll see if on the prediction markets what they're saying.
There you go. We've got to check Kalshi.
Yeah, exactly.
All right. Thanks.
All right. So, June, thank you.
You think you can go now?
We think we're staying off the clock. Why not? Let's not get paid. Very good. So we got a busy day from the Supreme Court here. And we'll keep an eye on that, and we'll see if there's any validity.
And let's not forget, it's the last day of the quarter. Gosh, what a quarter it's been for this market. And the Dow is at a record high at the moment.
Yeah, absolutely. So we've got a little bit of green on the screen here, but let's get a reset yet again with John Tucker, any Bloomberg Business Flash. John, what do you have for us?
Well, let's go right back to the chip stocks, ending their best quarter ever, and that's helping power the overall market. And again, I'll just go back to the SOX index, the Philadelphia Stock Exchange Semiconductor Index, up now 2.8%. More signs also of resilience in the U.S. economy. This comes ahead of Thursday's all-important jobs report. We've got the JOLTS survey, job openings, little change for the month of May. So that does suggest labor demand remains stable alongside a recent pickup in payroll growth. So this is another reason not to cut interest rates. The 2-year yield, which is more policy reactive, up 2 basis points. That's at 4.13. The 10s up 2 at 4.4%. Meantime, Seema Shah at Principal Global Investors says, you know what, stock market gains should be a little more muted from here.
Valuations are very stretched. You have central banks which are shifting to a more hawkish attitude, and certainly the global easing cycle, to our mind, seems to be very firmly over. So against that kind of backdrop, you're likely to see magnitude of returns a little bit diminished.
Right now, shares of NVIDIA, they're up 1.2%. One of the worst performers, Concentrix, those shares is 17% lower. Now, overall, the Dow Jones Industrial Average, another intraday record, 77 points higher right now, up close to 0.2%. Never seen this before, 52,268. The S&P 500, 26 points higher. That's up 0.3%, 74.67 on the index. And the NASDAQ, 100, 306 points higher. This is a 1% gain right now. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Alexis and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alexis Christopher sitting in for Scarlett Fu on a busy day.
Three decisions from the Supreme Court before they go off for summer break.
Absolutely. Again, just to go back to that Justice Alito story, NPR reported that Justice Alito retires from the Supreme Court. We now believe that to be inaccurate. So we're waiting for further reporting from Bloomberg News and other sources. So we just want to go there. Let's take a look at what's happening out there in the marketplace. John was telling us we got some broad gains in the U.S. equity markets here. But let's take a look at some of the stocks on the move today. We can do that with Ladonna Heinrich from Bloomberg News. So, Ladonna, what are you looking at today in the marketplace?
It's so hard to pay attention to anything else besides all of the Supreme Court news and the back and forth. But I am looking at strategy, formerly known as MicroStrategy. That's ticker MSTR, which I like to refer to as Mr. And the shares are dropping again. Analysts are cutting their price targets because this company, which we sometimes refer to as a Bitcoin treasury company, has been declining in recent weeks, in recent months, as Bitcoin has been declining. And so strategy is really shifting its own strategy. Seriously, no pun intended. This is why I also like to just refer to it as MicroStrategy, because it can be a little bit confusing. But it did unveil a very sweeping overhaul of its financing model. It said it may sell up to 1.25 billion of Bitcoin to bolster its cash reserves, and potentially repurchase some of its common and preferred shares. And so it's something that Michael Saylor, it's the person behind the company, had said he wouldn't do.
He would never do, which I think really started the big sell-off we saw, or the leg down that Bitcoin took. I mean, we've got Bitcoin today down another 3%, Paul. Now we're at $58,370.
A lot of people are underwater on their Bitcoin purchases.
Yeah.
A lot of people.
All right, what else did you bring us?
I'm taking a look at Air Products and Chemicals. That's ticker APD. This one is interesting to me because the company is scrapping plans to develop a multi-billion-dollar project in Louisiana. It would have produced hydrogen and captured carbon dioxide. It's just, I'm looking at this one because it's another sign of the times of how things are moving, what companies are interested in, what they're pulling back on in this regulatory environment.
Yeah, it just feels like, at least in this country, that a lot of the environmental stuff is definitely taking a back seat
during this administration, for sure.
Just a sign of the times.
Yeah, but I tell you, we were at an ESG conference several months ago, and it was a global conference, and the guests we had on were saying, the non-U.S. guests, international guests, were saying, the rest of the world's moving on with this ESG kind of stuff. In the U.S., if you want to play, great. If not, fine. We're not waiting for you.
We had a guest on yesterday, I think it was on Surveillance, saying they're not even calling it ESG anymore. Right. They're sort of moving away from that
sustainability,
moniker.
that kind of thing.
Yeah.
One more.
Looking at the Philadelphia Stock Exchange Semiconductor Index.
I like that you did this.
Yes, because it's such a good one, because we're closing out the quarter and it's soared some 80% in the second quarter. That puts it on track for its best quarter ever. It's up some 90% so far this year. For many obvious reasons, it's another sign of the times type of thing to take a look at. Rising again today. Last time I checked, it was up 3% or so. And, turbulence in chip stocks, nothing new. The group tends to be highly cyclical. There's very regular booms and busts. And we know what the latest run has been powered by.
There's an analyst over at State Street Global Markets wrote about IT. They said that it is one of the few strong and reliable earnings growth stories. So you'd have to think that, there are doubters out there who wonder how much longer can this AI-fueled rally continue. But there are a lot on the street who believe that it can. You just said it, chip stocks having their best quarter ever.
Right, exactly. The numbers are astounding, right? 80% for this quarter.
And the Philly Semiconductor Index up, I think, 94 or 95% so far this year.
If we weren't having a really wild day news-wise,
right,
I would point us to some of the 2X and 3X ETFs. Levered ETFs that track the index. We can save that one for tomorrow.
One of the first things I learned about the chip business is that it's very cyclical. And if you're an investor, you really have to be good at picking the cycles. Now I'm wondering, has the AI thing kind of muted the volatility, the cyclicality of the business? And maybe it's less cyclical going forward. I don't know.
That's a good point. Does time not really matter much anymore?
I think analysts would disagree, because they are still pointing to overall this industry being the booms and the busts.
Well, we're going to know a lot more in a couple of weeks, because earnings season will start.
My gosh,
right?
Well, see, my thing, when we had a problem with high egg prices, I said make more chickens.
Oh, right.
And now, and then we have high beef prices. I'm like, make more cows.
Just grow more cows.
And I've been told that's not as easy as the chicken thing.
Right.
Now with all the memory and the chips, just make more fabs. Apparently, that's not an easy thing to do. It takes years and years to build these plants to build these.
The capacity is a big story going forward.
Yeah,
right,
so apparently
absolutely.
it's not an easy fix, and this demand is just extraordinary. So Vildana, thank you so much. We appreciate it. Vildana Hayek giving us the movers and shakers out there in the marketplace. It's a podcast as well here, so stock movers, go check it out on the marketplace here. Let's talk about Nike. They're going to be reporting some earnings here. They've got a turnaround. I think it's been a lot bumpier than they thought, than a lot of investors thought. I'm a Nike, endorser. I wear my Nikes all over the place. But apparently there's a lot more competition out there. Poonam Goyal joins us, senior U.S. e-commerce and retail analyst at Bloomberg Intelligence. Poonam, give us the latest on the Nike story. Where is the company these days?
The company is still under a turnaround. North America is back on its feet. We're expecting positive sales when they report this evening. However, the rest of the world is not, notably China, where we're expecting a high teens sales decline when they report. The China focus is the largest focus when they report earnings. When will China turn is the biggest question. We don't think it'll turn anytime soon, but we do think that they'll make progress over their fiscal 2027 year, and hopefully in 12 months, it will be in the same place as North America is today.
Poonam, talk to us about Nike as it pertains to the World Cup. Are they still sort of the force they once were when it comes to this sport?
So they are, I'd say they're on equal grounds with Adidas, with the exception that Adidas has the ball. So they do have some elevation to Nike when it comes to the World Cup. When you think of Nike, World Cup has become more adjacent to when you think of Nike than I'd say it was in the past, where you would associate Nike more with basketball. Adidas has definitely lost some share over the prior years before the current CEO to Nike. Right now, I'd say they're neck and neck, and they're definitely still in the game.
What is the issue for Nike in China? What's going on over there?
So there's a lot happening in China that they need to fix. The first thing that they need to fix is the inventory. There's too much inventory on the floor in China. They need to do exactly what they did in the US, which is clear that inventory, get it out of the market, and then bring in more new inventory that resonates with the consumer, that's seen to be more what the consumer wants. How they do that in the US, when they did that, they did it more through their direct-to-consumer channels, which is probably the right approach. And the second thing that they need to do is cut back on the discounting. For the longest time in China, Nike has been seen as a discount brand, and that's not the case here. When we think of Nike, we do not think of a discount athleisure brand. So they need to turn that image, and they need to use local endorsers, local athletes, local celebrities to bring the brand heat back into the China marketplace with the new products that they launch.
Poonam, I'm looking at year-to-date numbers for Nike, and they're not pretty. Down 36%, one-year return down 42%. The stock is down more than 1% here ahead of its earnings after the bell. What do investors need to hear from this company to start to turn the stock around and get people to want to buy again?
I think China, it's a China story. The turnaround is taking a lot longer than anyone has expected. It is true that they turned the biggest ship around, which is North America, but China is their most profitable region. And there is no line in sight on when China will improve. It's still very early days. We're awaiting their investor day in the fall to really get a better idea of their own outline for the next 3 to 5 years. I think right now the question is, will they still have that investor day? So there's two things that I'm looking for when they report today: update on China and an update on their investor day. They just hired a new CFO. So will that, investors are asking, will they still have their analyst day?
Has Nike lost its mojo in terms of product development, knowing what's hip, what will sell, all that kind of stuff that I think a lot of people associate with the brand?
I don't think it's that Nike's lost its mojo. I think that Nike has allowed competition to encroach in their space, and now they have to win it back, whereas before they just had it. So they definitely are pressing the pedal on innovation. We do see that what they're launching is working and it's doing really well. They just have to move faster.
Who are some of their biggest who do they have deals with right now in terms of endorsements, Nike? Do you know?
So they have you know, their biggest franchise is still the Jordan franchise, right?
Sure.
So we know that's the biggest. Caitlin Clark, I think it's the one name that's new to them, and I think it's an interesting one because it helps them gain momentum in the women's category. So when you think of Nike, it's profoundly been a men's business. You know, lots of endorsers across the men's lineup, basketball, etc. So having Caitlin Clark added to their roster, I think, is a nice win for them. Also, Kim Kardashian, right, with the Skims brand. So that line that they partnered with Nike on, I think these are some new and great partnerships that will help them not just gain visibility in the sportswear market, but also with women, like an area where there is no large lead that Nike has like it has in the men's world.
Right. You know, you were talking about letting the competition sort of encroach. And Paul, you and I were talking about OG Anunoby on the Knicks wearing Skechers during that pivotal moment, right, in Game 4. I mean, now you've got another brand in there, I guess, Poonam, that maybe Nike didn't see coming. Oh boy, now we have to compete against Skechers.
I'll tell you, I definitely didn't see that coming. It was definitely, when I saw that, I thought, wow, Skechers did it. I think Skechers is in the value lineup, right? So when you think of Skechers, I'd say it competes with Nike's shoes that are priced under $100. But when you think of the Nike's premium line, like the Pegasus Premium and others, they do have a stronger foot there. And I do think that as long as they continue to push innovation and not fall back like they did in the past, I think Nike still has mind share amongst the consumers. When we run our biannual survey on sneakers, Nike's still the top preferred sneaker brand of choice amongst consumers.
So, you know what we don't talk to you much about anymore, Poonam, and we used to talk to you a lot about it, is tariffs. Is that just in the rearview mirror for your retailers? Have they kind of just figured it out and it's all kind of in the soup right now?
So they figured it out, but the nice thing, Paul, and what we're watching for in earnings is the refunds. So the refunds are starting to come in. And Nike quietly in its CFO announcement also announced that it'll get a benefit from refunds, a one-time benefit. We don't know the amount yet, so that's another thing that we'll be watching for. But we do expect retailers in the back half to start talking about these IEEPA refunds and what they plan to do with that cash. Are they going to reinvest it in the business? Are they going to give it back to the consumers? Because as we know, Nike did raise prices due to tariffs. So do the prices go back to the consumer or do they get reinvested into innovation?
Yeah, only a handful of companies have actually come out and said, yeah, we'll give some of that back to the consumer. Most of them are putting it back in the business.
Yeah, I don't know how you would do that.
Maybe in the way of cutting prices. I mean, I don't know if it would be like a retroactive payment to consumers, but maybe you lower prices. And so that's a consideration. But we'll see what Nike says.
All right, Poonam, thank you so much. Appreciate that. Poonam Goyal, she covers all the retail stuff for Bloomberg Intelligence. Yeah, so am I going to get a check in the mail for the Nikes I bought, a month ago or a couple months ago or something like that? I can't
don't know how they're going to.
You're expecting a tariff refund?
Yes.
Okay.
John's
For
over there
your
laughing in the
sneakers.
corner. Yeah.
Is that, all right, so I guess I'm not going to get my tariff refund.
The tariff refunds, I should say, for some of the small businesses that we're doing it, they have to sue. They have to hire an attorney and sue to get their tariff refunds. So they have figured out it's not even worth it.
Not even worth it.
Yeah.
Okay. I guess that makes sense, but unfortunately so makes sense.
You know what I just saw, speaking of the Knicks, I just saw the story. The winning ball from that Game 4 when OG tipped it in was going to go up for auction, and now it's not. Don't know why. Maybe OG wants the ball.
Yeah, I mean, that would have fetched, I would think.
That's the way the ball bounces.
There you go. All right, so we got some markets kind of going in our way here. Got a little bit of a move higher in the markets here, but I'm not going to make too much about it. But I'm just, the market's been looking at and geared off of energy prices. WTI crude oil sitting right at $70 a barrel. That's a lot better than $100, but it was trading, below $60 before.
Oh, yeah. Back to pre-war levels or near pre-war levels, at least.
Yeah. And, you wonder, I mean, Mike McClone, our commodity strategist for Bloomberg Intelligence, he thinks by the time we get to midterms, there could be in the 50s or maybe even the 40s. That's where he thinks supply and demand is in the marketplace. But others are saying, there's got to be some kind of Strait of Hormuz premium in the global price of oil.
Well, if Iran gets their way, for sure. And, we have seen a little bit of relief I was actually filling up the gas tank this weekend. $3.85 I was paying in parts of upstate New York.
So it's, but again, we were well below that pre-war, so it's got some more work to do there. And I don't think it's the station's gouging. I just think that's where the supply and demand is for the fuel right now. And it's summer, So people are driving, and they're driving a lot. So that's kind of where we're seeing it there. But we'll keep an eye on that. And Bitcoin is the story here. Tom from the Upper East Side asking for a quote here today. 58,100. You know, it kind of felt like there was support there at 60,000. We saw it bounce off there maybe a half a dozen times over the past month or so. But it's fallen through 60,000. Here we are at 58 and change. So we'll keep an eye on that. S&P 500 up 33 points. The Dow up 100 points. And the NASDAQ up 250 points. That's about almost 1% on the NASDAQ here. The VIX below 17. That gets your attention here, getting back to quiescent levels. 10-year Treasury yields up 3 basis points. We're now back to 4.40%.
Now, lots of decisions from the Supreme Court today. We just want to reiterate an earlier report from NPR saying that Justice Alito was retiring from the Supreme Court. They have now retracted that story. So no word from Alito on whether or not he is retiring now.
Ooh, that's bad for NPR. That's a bad piece of news right there. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Stocks wrapping up the best quarter in 6 years. And this quarter, by the way, the S&P 500 has the value has risen by $8 trillion. Nice. Little fun fact there. Semiconductor stocks powering ahead. The SOX, the semiconductor index, up 98% since the end of March. Some of the components in the SOX, Marvell today up 7%. Intel, that's a 6% pop today. Applied Materials up 6%. You get the picture. On the economic front, labor demand looks like it remaining stable. Job openings, the JOLTS survey, little changed in May. Available positions ticking up to 7.59 million. And that has yields higher on the idea that data really don't support anything like a rate cut. The S&P 500 up 36 points, 74.77 on the index. The Dow, intraday record, 134 points higher at 52,321. The NASDAQ 100 up 342 points. That's a rise of 1.1%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alexis and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alexis Christopher sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. Earnings continue to kind of trickle in here. Coming up after the close today, Constellation Brands. I think beverages, I think booze, all that kind of good stuff. They're reporting after the close today. Stocks off a couple of percent today. Flat on the year. It's got a market cap of about $23.5 billion. Ken Shea joins us here, Senior Consumer Products Analyst at Bloomberg Intelligence. Ken, remind us what Constellation Brands is and kind of what are you expecting after the close today?
Yeah, hi, Paul. Well, Constellation Brands is best known for its family of Modelo, Corona beers.
Yeah.
They've been slowly downsizing their wine and spirits division. Beer now comprises about 93% of their sales. So it's all about beer right now for this company.
It's so funny. We were just talking this morning on Surveillance about beer sales going through the roof in places like Massachusetts because of the World Cup. So I have to think that's that's a good thing for some of these beer companies. But overall, is Constellation Brands suffering from, I think what a lot of these alcohol companies are suffering from is just a change in consumer behavior, especially younger folks just not drinking as much as we've seen other generations do.
Yeah, I think you're right, Alexis. That's certainly a big piece of it. It's hard to quantify how much of it is, but I think the companies are slowly conceding that demographic changes are occurring in this country. You know, Gen Z is not drinking as much as their parents. Illegal cannabis is now easily available in most places around the country. Ozempic and the GLP-1 drug users have cut back. All those things continue to pressure this industry. But also, you can't forget also the cumulative effect of inflation. I mean, beer prices have gone up pretty significantly over the last few years, to the point where a lot of beer drinkers are getting sticker shock when they go to pick up a 6-pack or a 12-pack or whatever. All those things are conspiring to put pressure on this industry, and we think this is going to be a quarter where the company will say, we're dealt with a challenging industry. We're doing well within this, tough group, but nevertheless, it's hard to overcome those kind of pressures.
Modelo and some of those beer brands that appeal to minority Hispanic community, how's that being impacted by the change in immigration?
Well, we're going to get a good barometer of that today. Over the last year or so, the immigration crackdowns